So London's going to see, I think, today probably some weakness when it comes to what we're seeing out of the oil trade. But Astra, I think Astra pivotal point. We're just talking to the CFO. But Eurostoxx 50 futures are up 1.1%. Futures a little bit. FTSE futures are a little bit of a laggard. Oil price DAX is up by 1.4% going into the session this morning. So there's a lot of positivity being priced into the European picture this morning, Anna.
Yeah, let's have a look at some of the individual stocks then in focus. You mentioned AstraZeneca. Let's start there. Perhaps the key line that we got from the CFO just moments ago then, Guy, was confirming that they are still targeting that big revenue number of 80 billion. So that's interesting, $80 billion sales target. So they're still targeting that. No upgrade to that, but that's still perhaps the top line, along with the key performance or strong performance in some of their oncology drugs. Vodafone in focus as well. Their largest market, Germany, they've seen their numbers coming in better than expected there on the service revenue growth side of things. So that is going to be something that perhaps will send things positive at the start of trade. And we'll also watch Argenx, the Dutch biotech business, expanding in immunology with an acquisition of more than $2 billion. So we'll watch that as well. Guy.
Okay, let's show you some numbers. Let's give you an idea of what's going on. It's expected to be a lot of green on the screen this morning. Let's see just how much there actually is. London is going to be a laggard. It's going to be an oil trade for the London market this morning, so it will not do as well. But Astra is going to be critical. I've seen calls flat. I've seen calls plus 2%, maybe even higher. So we'll see what effect that has in terms of the London performance. Stoxx 600 is up by 0.2%. Wait till we get Germany going. Wait till we get some of the more energy-focused markets going. I suspect you're going to see a bigger performance story coming through out of Europe. The euro's been up this morning. That's also a factor to bear in mind as well. The IBEX is up by, let's call it 1%. The AEX is only up by 0.3%. I'm curious to see what ASML does this morning. It is going ex-dividend, so just be aware of that when you look at the numbers on the screen in front of you. CAC's up by 9/9 now. We await the Germans. We'll get to them in just a moment. Anna, what does the sector story look like?
Yeah, let's have a look at where we are on the sector picture. And everything is moving higher, apart from for energy. And perhaps that makes a lot of sense because, well, it certainly makes a lot of sense with the oil price down by 7% this morning. So we've got an 89 handle on Brent. So as we've come into the London morning, the Brent price has continued to weaken, and that weakening has picked up. So we're down by 7% on the Brent price, which means that energy stocks are weaker by more than 2% as a whole. That is perhaps something that's going to weigh on some of the London market to some degree at least. So BP down by 3.8%. We've got Total Energies down by 2.7%. We've got Equinor down by 5.7%. So there's some substantial movers within that. And of course, the other side of that trade is that travel and leisure goes higher. So travel and leisure stocks up by 2.4% on a calmer weekend in terms of those attacks we'd seen between the US and Iran. Retail also an area of strength. Utilities is an area of underperformance, along with food, beverage and tobacco. So that's the picture on the sectors. If you look at the individual moves, you can see that energy story certainly to the downside, and Safran and SAP a mixed bag to the upside, Guy.
Yeah, the energy's up quite a little bit. We're going to see it reporting numbers a little bit later on, so there's things to look out for in the latter part of this session coming through. ASML's up by 0.6%. So we'll factor that into our thinking as well.
Absolutely. Let's talk to Patrick Armstrong, Chief Investment Officer over at Plurimi Wealth, who's with us this morning. Patrick, good to see you. I asked earlier, Becky Chin, how she keeps up with the volatility in oil prices, and you just need to have a portfolio that's going to work whatever the oil price is, and is that possible? How are you thinking about this big drop in oil prices this morning?
So we're overweight to oil and gas stocks, so it's going to be a bad day for us on that, but any bad day for energy stocks is usually a good day for everything else. So I view our oil and gas holdings as a bit of a geopolitical hedge that Ideally, we're not making money on them. Something's probably gone bad in Iran if we are making a lot of money on them, but I like them there as a ballast. That there's a lot of twists and turns, I think, in the Strait of Hormuz. It's not going to be clear sailing, unfortunately. They're not incredibly expensive. If we do see refining margins collapse, they'd be very expensive, but I do think we're in an environment where inventories have been drawn down to really low levels, and even if we do get a relatively open Strait of Hormuz, it is going to be a restocking phase that will support oil prices.
Okay, so this isn't something that even if we reopen the Strait goes away very quickly. And I know that we'll come on to talk about the AI trade and everything to do with technology, because I know we've got a lot to talk about there. But just lingering for a moment then on energy, I mean, how does this play out for your European asset allocation if we see oil prices, say they stay around $90? I mean, who knows, but that's where they are this morning.
I think that's a headwind for growth, but not terribly so. If you see a spike higher, that really hurts growth. It puts central banks in a very difficult position because they've got the inflation problem, but it is something that maybe they should be looking through because it's a transitory war-driven thing. So at $90 is at the high end. There's a geopolitical risk premium in there, but the good news for the economy would be below that. The bad news would be above that. I think that's the point where the economy can manage things without too many consequences.
So about chips.
Okay.
Have we reached peak chips?
I don't think so. I think we still have another 12 to 18 months ahead of us where demand significantly exceeds supply. You've seen CapEx from the high bandwidth memory companies, but that's 18 months before that comes on. I do think so. I don't think we're in a secular thing where you're going to have the data centers continue. I think there's probably going to eventually have to be some consolidation where there's some winners, somebody eventually gives up, but none of the hyperscalers are in a position where they can give up right now. So they all have to accelerate their spend. Even if they weren't planning to accelerate their spend, the higher prices is forcing more CapEx, and I think there's still a long runway ahead of us.
We're starting to see, there's a lot written on about this morning, that NAND prices are beginning to roll over. Like the Chinese are starting to come in. They reckon they may have the market kind of at equilibrium by somewhere around 2027. Like, is that the point we're heading for?
We'll probably get there. I don't think I'm picking up pennies in front of the steamroller right now, but it is something that you are going to see profits go from ridiculously strong. Like Micron's at 87.5% profit margin. I don't think we get to a thing where they get to zero again. I don't think that there's that kind of supply coming on. But demand is going to keep accelerating. Supply is going to catch up, and we're going to get into an environment where these companies are profitable, but not ridiculously profitable, and the multiples they trade at, I think they're very fair for peak earnings.
We're at peak earnings now?
I don't think so. I think we still have another 12 months ahead of us, and I think we're still seeing accelerating earnings because you charge what you want. The hyperscalers need it desperately, and they set the price.
Yeah, so we're still trying to work out where the profits accumulate within that particular supply chain, aren't we, Patrick, when it comes to the hyperscalers and all of the various types of chips? And you've clearly talked about HBM. What about other parts of the AI trade that are not quite so specifically AI? So I'm thinking of the infrastructure trades, grids, for example.
I think that's the same thing. It's just there's a scarcity there for electricity. So we've just added Siemens Energy to the portfolio this month. GE Vernovia is something we've got. It didn't... The demand backdrop that they outlined with their earnings was incredible. I think they had some missteps on company-specific issues, but it's an area where there's going to be huge pricing power. So the high bandwidth memory, electricity, the infrastructure, all of those come together, and I think we've got $1 trillion of spend on data centers. You want to be in the beneficiaries of that.
So what does the uptick in either profits or top line look like for those kinds of businesses versus what we've seen in the memory sector and the hyperscalers before that? You know, what kind of expectations should we have for grid and infrastructure companies and the way they can turn this theme into something impressive for investors?
Yeah, they're traditional value type companies, they're industrials, but you're getting well above 25% revenue growth, and that should translate into higher than that earnings growth. And I do think there's just as long, probably longer even on electricity, because it's not just data center demands, but that's the incremental driver of these things. So both those sectors don't look incredibly expensive. Both of those have very high growth. Equities as a whole are incredibly expensive. And the reason to be in equities is you want to buy the equities where the growth is being generated. That's the attraction of equities right now, that you've got 20% earnings growth over the next year. Consensus numbers are forecast at. You better be in the stocks that are generating and beating that if you are being in equity.
Is that easy to do right now?
Well, those two sectors right now are the two I like because they're incredibly high growth, and the multiples don't look demanding to me.
Why don't the multiple? So this is the big.
Because they are cyclical still. It does come back to you've got to price cyclical companies based on peak profits. They don't deserve a market multiple. But should Hynix be at 6 times earnings? Should Micron be at 9 times earnings? I think that's a bit too pessimistic, given that I think they have several quarters ahead of us of probably blowout numbers.
Equities are incredibly expensive.
Yeah.
How expensive? There's so much written at the moment about...
83% of the time, equities are cheaper than they are today on earnings, forecast 12-month earnings. 99% of the time, equities have been cheaper than they are on a price to sales. But that's probably justifiable because profit margins are unprecedentedly higher right now. So I think you've got to have the companies that are generating all-time high profit margins, all-time high earnings growth forecast. If you are going to pay the big multiples for equities, you want to, that's the draw basically of equities. So I think you've got to be positioned in the companies that are generating spectacular earnings and revenue growth.
And Patrick, in those forward earnings and those all those measures that you referenced, are we factoring in the right cost of capital? Should we be thinking about a higher cost of capital, given what people tell us around this desk about how the energy prices won't retreat back to where they were?
Yeah. So we've got the Fed this week. It does seem to be a live meeting. I don't think the Fed hikes this year, but the market's pricing in 1.5.
Not even September?
I don't think so, but we'll see. Warsh is making every meeting interesting because there's not much guidance, and there are people who want to hike, there are people who don't want to hike. I do think if you're hiking because of the Iran war, that's something you shouldn't do because you are getting the growth headwind from higher oil prices as well. And I think that'll be the narrative that stops the hikes happening because a lot of the inflation is coming through from oil prices. But yeah, it's very plausible. We do have higher cost of capital, and that changes things for the companies that have to borrow. So I'm not a big fan of the hyperscalers. They don't have free cash flow anymore. Oracle's got huge negative free cash flow. So companies that are built their business model where they have to borrow to fund it, those are the companies that are at risk.
What comes after? This is the we've got a few more quarters and then we get to peak. What comes after that?
An ROI boom for all of the users of AI. Is that what we would get to?
If you're on the hyperscalers, you believe this is productive spend and you're going to have incredible revenue growth and new products and innovation and productivity. That's the part of the equation that I'm not so sure about.
Okay, so you put hyperscalers over here in the I don't want them bucket. At the moment, you're in the I want to be in the picks and shovels, the businesses that are benefited. But you see that only for a few more quarters. So when you look ahead beyond a few more quarters,
well, I do. I don't think it does fall off a cliff. I think the hyperscalers continue to spend, but I think market forces will stop them accelerating their spend unless they've really monetized it and generating the cash flows. And I think that's where you don't get into a massive glut, but you don't have incredible pricing anymore. So it's still, Micron's a different company than it was 4 years ago because I do think we have a decade ahead of us where high bandwidth memory is going to be in high demand.
Sure.
Micron won't have a monopoly position and it is a commodity, but there will be profitable returns for these kind of companies rather than no returns, which you get to with commodity companies in the past. So I do think it's changing from supply demand going from boom to bust to where there is much more structural growth on the high bandwidth memory, the processing. The data centers continue, but not at the accelerating rate that we've seen over recent years.
Great to see you, Patrick. Always a pleasure. Genuinely interesting. Thank you very much indeed. Patrick Armstrong, Blue Wealth CIO. Let's take a look at what the core of Europe looks like this morning. Very strong growth, as you can see. Nestle on the right-hand side is understandably, after actually quite a lot of sort of volatility last week, doing nothing. Elsewhere, there's some strength in there. Look, tech's definitely on the front foot. ASML is up. LVMH is coming through with some numbers a little bit later on. The luxury, there's some really interesting pieces being written on the luxury space on the terminal this morning. Check them out. So that's what the picture looks like. Let's find out what else we are watching. Alex is here with some details.
Good morning, Guy. Well, do you know what? Let's start at the very top, as it were. Let's go outer space first. We're looking at SES, the Space Solutions, think satellites firm. They were given some breathing space, some industry incentive payments following a decision by the FCC in the US. We're seeing them up this morning around 5% in the green. So starting high, let's bring things a little back down to earth and look, of course, at oil. And we know across the energy sector, the weekend's easing tensions between Iran and the United States, that sort of pause in hostilities has seen oil prices this morning down. We're looking across here. You can see BP, quite sharply down among others. So red across the board when it comes to the energy majors here in Europe. That, of course, an extension of the geopolitical situation. And let's just turn finally to Vodafone. They beat analysts' estimates with the first quarter services revenue, particularly coming from Germany. That's the phone operator's largest market. They are up just over 3% this morning. So, yes, from space to geopolitics to the phones in people's pockets, that's a little bit of a snapshot of what's on the move out of the gates this morning.
Alex, thanks very much. Bloomberg's Alex Morgan there with a look at some of those stocks that are on the move this morning. Coming up, AstraZeneca, one of the companies in focus, reporting higher than expected profit, lifted by cancer treatments. We will dive into the numbers from the British drug giant. We were talking to the CFO. She confirmed the 2030 guidance. What's next for this business then? This is Bloomberg.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology, start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Tyler Kendall in Geneva, Switzerland, and this is Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine. Watch, listen, stream.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Every weekday from 3 to 5 Eastern.
Only on Bloomberg. Context changes everything.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
season is here.
There are earnings galore.
Some areas have done well. Equity trading has been an area of resilience.
Bloomberg is first to break the numbers.
Diving through the details of these earnings.
That is the weakest growth in more than 3 years.
With the smartest insights.
Are we seeing dislocations that point to something a little bit more severe?
If you look at where global growth expectations are, compare them to the start of the year, they're actually pretty similar.
But there is this uncertainty, and we haven't seen it in the results.
Continuing coverage on Bloomberg.
Our expectation is, between this decade will grow 5-6%. On a CAGR basis, and we will maintain that level of growth, which is sort of top quartile in the next decade as well. Products like Sony V, where we just announced the results, we need to continue to invest about 23-24% of revenue into R&D to not only get to 80, but continue 5% growth beyond 2030.
AstraZeneca's CFO, Aradhana Sarin, speaking to us just in the last hour. This after the company reported higher than expected profit, buoyed by cancer medicines. The drug maker also released promising results for an experimental treatment for gastric cancers, but disappointment in some other areas. Let's bring in Bloomberg health reporter Ashley Furlong with us to digest what we've heard from AstraZeneca this morning. Good morning to you, Ashley. So we heard Aradhana there talking about, R&D, talking about top-line growth, a lot of news lines in this. What stood out to you?
It's really a story of continued growth for their cancer medicines. And under Pascal Soriot, the company's really become a cancer drug powerhouse. But what the questions increasingly are about is whether that continued growth in cancer can sustain them into the post-2030. So they have this big target for $80 billion by 2030. Analysts are increasingly saying that's easily reachable. But the question is going to be after that. Can they maintain that growth? And we heard Aradhana earlier saying that she's very confident they can. Analysts are still on the fence. They haven't seen the numbers yet for that.
So what are we looking for here? What are the details we're looking for here?
So a big part of this is also going to be about their weight management pipeline, and so they have a large cardiovascular drug pipeline as well as weight management, and they're really trying to get into the obesity space. They have a whole lot of assets there, so that's going to be really important to the post-2030 outlook. Obviously, oncology, they need to sustain the growth. They've had a lot of really good partnerships. They have a partnership with Daiichi Sankyo, but we've seen results from today, which is from a drug that they developed in-house, which I think that they're really excited about, being able to show positive results from drugs that they've developed by themselves.
Can I ask you about how they communicate positive results to the market? Because did they come unstuck a little bit on this in the last 12 months or so with one particular drug? And we asked Aradhana about this, and she sort of said, we give you the top line, you've got to wait for the detail.
I think the issue is that AstraZeneca is so successful with clinical trials that when they have a trial failure, there's questions asked, what did you do wrong? And this is a part of, being a drug maker. There's trial failures all the time. But when AstraZeneca had that recent negative trial result, obviously another negative one today, that does hit sentiment harder than it would, I think, for another drug maker, which, more regularly posts bad results. So I think it's very much about that, and possibly also about some of the communication that they had around that trial. And investors, sort of thought it was a done deal when it really wasn't.
Stocks up around 1.5, being reasonably well received this morning, having a positive impact on the FTSE. Ashley, thank you very much indeed. Ashley Furlong, our health reporter. Let's talk about what's happening in the tech space. Huge week coming up in the tech space. Let's start off with what we've got today. The Chinese chipmaker CXMT soaring. I think that's, I don't quite know whether that sort of captures it. It's had an IPO this morning. It's a $9.8 billion IPO. The stock at one point I think was up kind of circa 500%. Yeah, just 500%. I
think that's soaring.
I think we call that soaring times 2 squared. Soaring squared. Investors certainly are flocking to the stock. Ahead of what is going to be a big week. We've got many of the hyperscalers reporting numbers this week. We've also got a memory chip story, which I think we're paying a great deal of attention to as well. Anthony Stevens has been writing about all of this. So let's put it all together. Let's start, Anthony, with CXMT. That was quite the IPO.
Yeah, this, to use your word, this IPO captures China's soaring ambitions in tech. It's their largest play thus far in the tech space in terms of IPOs, the second largest IPO of all time in China, and at the highs, it was China's biggest company. It's come off a little bit since. Now, what's interesting is how this thing was priced. It was priced to do well. China has been very reluctant to allow tech companies to price at adventurous valuations, like in the US, for example, to risk losing money for retail. So this deal was priced really well. It's trading really well. It was 200 times oversubscribed, which is kind of becoming the norm for China, but still stands out against the rest of the world. For example, that's 10x SpaceX's retail tranche, for example. This dynamic has really supported tech IPOs in China. We had a lot of double-digit gains, triple-digit gains, and most recently, like 200, 300% gains. So this is becoming normal, but given the scale of the IPO, it's massive. Why is this important? CXMT is a structurally important company to China. They produce the DRAM chips that their latest LLMs need. They don't have any domestic HBM. They cannot build it even if they wanted to. So CXMT and the DDR5 that CXMT provides is going to be absolutely pivotal to China's AI ambitions.
Okay, so CXMT is primarily a DRAM manufacturer, but you've been writing about NAND memory, Anthony, and how maybe this is a canary in a coal mine. Explain to us your thinking.
So we're at this moment in time where everyone is building out CapEx, whether it's the hyperscalers or the semiconductor manufacturers themselves. And this kind of CapEx has to meet increased demand. Now, so far, we have been very relaxed about that. The build-out of capacity has met pretty much unlimited demand. But there comes a point on the frontier where the increased supply starts to eat into the cyclicality of what you're producing. And the earliest signs that we've seen of that dynamic in the AI trade has been in NAND. NAND prices have started to stabilize. They're dropping a little bit. We have some analyst reports from sector specialists that maybe the backlog starts to clear in 2027, and you start to see a little bit of a demand-supply equilibrium. Now, investors have really materially repriced that. Kioxia, for example, is the poster child of that sector. That's off around 40% from the highs. At one point, that stock was Japan's largest stock by market cap. So you can see how euphoric people got at the top and how kind of morose they're getting as capacity comes on board. So this kind of AI trade, whether it's a cyclical or structural demand, is a really big question into the earnings season that we're heading into.
We're heading into the earnings season. We're kind of already in it, but we get a big kind of lump of it this week. Hyperscalers, what am I watching for?
It's an absolutely massive week, not just on the hyperscaler. So you have 4 out of 7 of the Mag 7. You have Samsung, you have Hynix, you have Kioxia, you have Teradyne, you have Qualcomm. It's insane. It's from front to back. The entire AI ecosystem tells you what they plan on doing with CapEx, what earnings look like, what demand looks like. And more importantly, as the dispersion within the AI trade picks up, it tells you these micro trends. Are you using more HBM? Are you using more DRAM? How are the chips fitting together? Where are the supply chain bottlenecks? These are the next step iterative questions that the AI trade investors are asking now, because the days of AI going up and down together are long past.
Yeah, and it's not all about all the picks and shovels. It's about one pick versus this shovel and what you make of all of those. Anthony, just briefly then, NVIDIA and the story there, lots of reports suggesting that they are considering supporting OpenAI as OpenAI makes commitments to SoftBank around a data center in Ohio, one of the world's largest. What does this tell us? Does it make us more concerned once again about the circular nature of these deals?
Yeah, it's a very ambitious piece of financial engineering, right? It's a backstop to the credit quality of OpenAI that allows the creator of this data center, SoftBank, to get better financial terms. Now, credit for SoftBank has been kind of weakening. CDS of SoftBank has been traveling higher. Hyperscaler CDS in general has been weakening, as there is concern about the viability of this CapEx build-out and the huge sums that are being raised in the debt markets to fund this build-out. So this kind of financial engineering is becoming more common. It's called a credit wrapper. It allows some of these cash-rich semiconductor companies that are earning money right now to bolster the balance sheet of their customers to allow these multi-year financing plans to continue. So whether we see more of this down the line remains to be seen.
Anthony, thanks very much. Bloomberg's Anthony Stevens with the latest on all of those tech themes ahead of a big tech earnings week. Coming up on this programme, what earnings in Europe's industrial sector reveal about the continent's AI build-out? We'll discuss that with Daniela Costa from Goldman Sachs next. This is Bloomberg.
Is back to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard,
Oh boy.
can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that. And the speed of the business has never moved faster.
My career might stop, but I'll still be driving something.
Probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
To the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
This is the opening trade this Monday morning. 30 minutes into today's session, we've got European equity markets firmly on the front foot this morning. In particular, the Xetra DAX up by 1.2%. The energy sector is by far and away the biggest losing sector today, but even that is not managing to take all of the gains away from, for example, the FTSE 100, which is up by 0.4%. So energy is by far and away the worst performing sector. There's only 1 or 2 sectors in negative territory, Guy. Broadly, all of the other sectors are in positive territory as we price in a much lower oil price. We've got a 90 handle thereabouts on Brent, and that obviously has a big impact on European companies and their cost base. What are you seeing?
You certainly see that in the internals. 454 stocks are up in the Stock 600 this morning, only 136 down. Some of those will be energy stocks, certainly some heavyweights there. Volume's reasonably good. Let's talk about some of the winners that we're watching. AstraZeneca, we had the CFO on the show a little bit earlier on. Market likes the numbers that we are seeing. Probably would have liked an upgrade to the outlook a little bit more, but nevertheless, happy with what we've got. The market's up by 1.6% on Astra. SES, this is to do with incentive payments, bandwidth incentive payments in the United States. It's up quite nicely. Inditex, I think that's an upgrade, up this morning by 3%. We get LVMH after the bell today in the luxury space. Watch out for that. Let's talk about Polish convenience stores. 7&I is backing away. It seems from Zabka Group that stock is down by 11%. I don't talk enough about Polish convenience companies. Shell, AP Møller Maersk, more straightforward. Both of these two companies obviously tied into what we're seeing out of the Middle East this weekend, a pause in fighting, though we are still seeing significant tension, particularly in the Red Sea this morning. AP Møller Maersk is down by 3%. Shell is down by 2% right now. Anna, what else are we watching?
Let's get an update on exactly those developments in the Middle East. Oil and gas prices are then dropping sharply this morning as the US and Iran hold fire after weeks of escalating tensions. The US military has held off strikes since late Friday without explanation or announcements, while the Tehran has signaled it was refraining from any retaliatory attacks and held talks with Oman over the Strait of Hormuz. Firefighters are battling wildfires for a 6th consecutive day in France and in Spain. More than 300,000 people have already been evacuated from those two countries, with another heat wave set to complicate efforts to fight the flames. French President Emmanuel Macron will hold a crisis cabinet meeting later today to discuss the response strategy. And back in markets, the CME Group is launching single stock futures today, giving investors a new way to bet on more than 50 of America's biggest companies without buying the shares. The contracts let traders hedge or speculate with leverage without the complexity of options. CME is betting the rise of retail trading will mean the product is a success after its original launch 24 years ago failed to take off. Guy.
Okay, let's turn back to some of the corporate news that we are watching. Nvidia is reportedly in talks to provide a guarantee of around $250 billion of financing for OpenAI. The Wall Street Journal says the deal should help OpenAI lease a 10-gigawatt data center hub that SoftBank, that wasn't good, is developing in southern Ohio. Jensen Huang spoke to Bloomberg's Ed Ludlow in San Francisco about the constraints on the semiconductor industry, which he believes will need to rapidly expand to meet AI demand.
The semiconductor industry has really changed. And the reason for that, because we used to build computers for people to use, and we're going to still continue to build incredible computers. These are now processing AIs for humans to collaborate with. But in the future, we also have AI agents and robots, and they're going to be using computers. So instead of just 1 billion people using computers, we're going to have 100 billion agents and billions of robots all using computers. The computer industry, the chip that's built on top of the chip industry, surely is not big enough. And so this is one of the realizations of the semiconductor industry, that now computers are built not just for people to use, but computers are being built for computers to use. My guess is that the semiconductor industry is probably going to have to be 10 times larger than it is today over the next decade or so. And so working with our partners in Korea and around the world to scale up the supply chain of semiconductors so that we're prepared for this AI future is really important.
That was, of course, the NVIDIA president and CEO, Jensen Huang, speaking to Bloomberg's Ed Ludlow. Let's now shift our attention from Asia to Europe's evolving AI build-out. Earnings from European industrials this week will give a key indicator on how companies are positioning themselves on the infrastructure side of the build-out. Joining us now, Daniela Costa, European Capital Goods Equity Research Head at Goldman Sachs. Good morning.
Good morning.
What should we be expecting?
So we have had so far a very good reporting season, actually. Almost more than 90% of the companies that have reported have beaten expectations on orders by a magnitude of about 10%, really one of the most positive seasons we have seen since the pandemic. And we expect more of a continuation of that as we enter this season. We have some of the bigger data center exposed companies like Schneider Electric and Prysmian reporting this week. And we are expecting to continue to see that strong trend of upgrades of outlooks.
How long does this continue for? Like, the data center build-out story just seems to go from strength to strength to strength. Do these companies just continue to benefit on an ongoing basis from that data center build-out?
I would say in the next 2 years, on an absolute basis, we do think we're going to continue to see very strong numbers. So this year, in the first half, for some of the companies we cover, we've seen triple-digit growth. Of course, the comparables are getting tougher and tougher, and the second derivative will be slowing down. But we still have double-digit growth and big numbers, about 30% on our CapEx trackers for next year. So a lot of that is capital that has already been committed for this build-out. I think then when we go further beyond that, we continue to see this industry strong, but it's more likely that we will also get into some points where we might see overcapacity in terms of the build-out of equipment.
Okay.
That's interesting, because I was going to say, is the strength that we're seeing in the likes of, well, the sector at least, that contains Schneider Electric, Prysmian, is the performance there attracting new entrants or causing other companies to try and step in and take on these companies within the electrical components space? What's the competitive environment look like?
Yeah, I mean, for now, everyone is seeing extremely strong growth, and I would say we are seeing the incumbents investing more and more in adding up the capacity. So this year and next, we still feel we are pretty tight. Let's take the example of fiber optics, for example. We see 10-15% under capacity, but we have seen an incredible amount of announcements. Some companies tripling up their capacity by the end of the decade. That obviously will balance things out, and when we look sort of beyond 2028, then the environment might change.
Yeah, what's the constraint on their growth, these electrical components businesses? What's the thing that means they can't grow faster than they are?
It takes time to build. A lot of these things sort of take 18, 24 months from when you make the capital decision to actually having it on the ground, then another year of homologating, testing factories, making sure the product is coming out all right.
So it's not. Is it construction per se, or is it, as you say, the testing phase? I'm just wondering, because we talked about the data center build out in the States and other places where actually a shortage of construction workers is part of the narrative there.
Yep, 100%. Construction has definitely been a bottleneck. Also specialized labor, manufacturing labor in the Western world, which is where a lot of this capex is happening, especially in the US, has been a bottleneck.
We think about some of this as being kind of AI related, but it's broader than that. It's broader than that, isn't it? It's electrification, which is in some ways potentially more sustainable. We are electrifying the global economy. It's part of that is AI, part of that is data center build out. But there's also just a general process of electrification that is underway. Does that make this sector more stable over the medium term?
Yeah, I think you touched an important point there, actually. So if we think about data centers, utilities is basically one of the big bottlenecks in terms of getting that capacity live. And the problem there existed before. We had aging grids in developed markets. So the two things go hand in hand. And clearly, I would say the utilities part of this build out is not just about data centers, about an aging grid, the need to have more interconnections, also energy security and the geopolitics tied to that. So in that sense, I would say at least the next 5 years, the whole electrification topic, we expect to be sort of growing on the high single digits.
And Daniela, what does the sector that you cover tell us about the global growth story? I mean, these are all really positive themes around data center build out and electrification. All of that sounds very structurally positive. What's happening cyclically? Are you getting any clues as to any areas of weakness, or just no, not at the moment?
That is the interesting thing, actually, this reporting season, because I would say over the last 15 months, we have had great news on data centers, but not on the rest. The cyclical parts were going through this stocking last year. China was weak. This year, the reporting season is actually strong more broadly than that. We have actually seen even truck companies showing positive results, exceeding expectations. But I would say the effect of this build-out, it's spreading. So data centers, semis, and utilities used to be about 20% in 2022 of world capital expenditure. Now they're 40, and they create probably an even bigger magnifying effect to the side of it. So it's spreading all over, and it's becoming more difficult to differentiate this build-out just from the broader capital goods. I would say where we're seeing weakness mainly is probably on the consumer side.
What's the macro read of all of this? Like, what are you? If I'm looking at all of these companies, what is it telling me about the global economy? What is it telling me about what is going on in terms of the durability of the growth rates that we're seeing at the moment? Yeah, we're seeing weakness on the consumer side. We've probably known that for a while. But how much momentum does this have?
Yeah, I mean, I would say, as I've mentioned, if we look at least at the next 4 years, we think CapEx is going to grow at high single digits. Even if you take out the data center specifically, it's still mid-single digits. Okay. Broadly double of what we've grown in the last 25 years. So this is really creating a big magnifying impact.
Do you think the market's valuing this stuff correctly? You look at the UK, it's full of industrial companies, yet it takes an American private equity company to come in and buy it to actually give it the kind of the valuation. Why are we still struggling to value some of this stuff?
I would say the UK is in a very specific niche. If we look at the European capital goods on average, we are now trading at a 40% premium to the stock 600 on 12-month forward PEs. We used to trade at half of that multiple. As I've said, sort of double the growth, double the multiple. If we keep this growth pace that I've suggested, I would say we're sort of fairly valued. There are pockets like the UK where there are other geopolitical things around that might impact. But I would say in general, industrials in Europe have re-rated on the back of these opportunities.
Yeah, and you've mentioned that you cover truck companies, which sometimes do give us some really interesting signals about the economy. I wonder if the story around self-driving, whether that is, what does that look like to you, and who benefits and loses from the parts of that truck ecosystem that you cover?
Yeah, I mean, this is a very, very emerging topic right now. I think where some of the truck OEMs are talking about in the U.S. launching the first autonomous trucks by the beginning of 2027. We haven't sort of really seen how the business model is exactly going to evolve. Probably you're not going to be selling a truck for the sake of just selling that one product. You're going to sell the whole mileage ecosystem. I think we will probably see less units of trucks, but more service, because the equipment is going to run 24/7, and with that, I think the companies that have the strongest market shares with the largest fleets in the U.S. that adopt this will see the benefits. But that's going to be a very interesting topic next year. But we haven't really seen the glimpses of it so far.
Daniela, very nice to see you. Thank you very much indeed for stopping by to see us. Daniela Costa, Head of European Capital Goods Equity Research, joining us from Goldman Sachs. Coming up, hundreds of thousands of people have been evacuated as wildfires spread in France and Spain. We're going to have the latest next. This is Bloomberg.
The productivity increase is not going to be marginal. I think it's going to be an order of magnitude. It's going to be significant. We're working on it internally, and we're really excited about it. I could see a world where an analyst who previously covered 20 stocks could cover 200 because they are maybe managing a fleet of agents that looks at all these stocks and tracks them. I could see a world where we're able to tackle a far greater number of top-of-funnel ideas and do a bit of work on them and more accurately pick what the best 15 to 20, best long ideas in a given year are. So I actually think it's going to reshape how we do things in the long term.
One of the things we struggle with is it's very easy to get siloed as an analyst, and these are the sectors I look at, these are the tools I rely on, these are the models I've built, and for us, we are spending more and more time as a research team collaborating around ideas with multiple people looking at sectors or trying to solve key questions or things in the market. And so the ability to have standard tools that we're all using to track lots of different things, to inform how the models are trained, will be super helpful, I think, in people being able to pick up someone else's work and say, I totally get this because it's in the same vocabulary that I do it myself.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg. Season is here.
There are earnings galore.
Some areas have done well. Equity trading has been an area of resilience. Bloomberg is first to break the numbers.
Diving through the details of these earnings.
That is the weakest growth in more than 3 years.
With the smartest insights.
Are we seeing dislocations that point to something a little bit more severe?
If you look at where global growth expectations are, compare them to the start of the year, they're actually pretty similar.
But there is this uncertainty, and we haven't seen it in the results.
Continuing coverage on Bloomberg.
Forty-seven minutes past the hour. Welcome back. You're watching the opening trade. This is what the equity situation looks like in Europe this morning. Positive. A little bit of dispersion. German market certainly having the best of it this morning. We are seeing the energy price being factored back in, but you've also got a corporate earnings story that looks fairly positive as well. So energy prices are lower, corporate earnings look fairly positive. Generally, that is translating into an up equity day. You can, whether it sustains or not remains to be seen, but the US futures picture at the moment also looks quite positive as well.
So that's the markets picture right now. In other news, more than 300,000 people have fled their homes in France and Spain as wildfires threatened the major cities of Madrid and Bordeaux, and as a new blaze erupted in eastern Spain. Let's bring in Bloomberg's Caroline Conan, who's in Paris and has been following these stories for us. Caroline, bring us up to speed with the latest.
Yes, so the massive wildfire in the southwest of France, in the Gironde region, is still not contained. It's still spreading towards the metropolis of Bordeaux, which has 265,000 inhabitants. Last night, the French Interior Minister, Laurent Nunez, was on French television saying, at the moment, we're not talking about the evacuation of Bordeaux, but we have to stay realistic. So he didn't rule it out either. The next hours for this fire are going to be very important because the temperatures at the moment are dropping. There is some light rain in the region, so the conditions over the next few hours may be a little bit more favorable in order to try and contain this fire. However, in just a couple of days, we're going to have another heat wave in France, so the window is very, very tight to contain this fire. So far, about 42,000 hectares have burnt in the region, a very wealthy tourist destination. That's, to give you a comparison, that's about 4 times the size of central Paris. In Spain, north of Madrid, you've got about 50,000 hectares burnt. That's a record in Spanish history for wildfire there. In France, more than 200,000 people have been evacuated so far. A lot of tourists, of course. You've got 8,000 people living there across the winter, more than 100,000 living there, going there during the summer. The airport of Bordeaux at the moment is still functioning, but the trains south of Bordeaux have been cancelled. So we'll monitor the situation over the next few hours. The next few hours are going to be very decisive to try and contain this fire to not spread any further.
President Emmanuel Macron is holding an emergency cabinet meeting today. What are they going to do? What can be achieved if the fires can't be brought under control? You talked about, I can't quite believe we're talking about the evacuation of Bordeaux. Are these things on the table? How significant could the next few days be?
Again, the evacuation of Bordeaux is not ruled out at the moment, but it's not on the table either, according to the Interior Ministry last night. So the situation over the next few hours will be very, very important. President Macron, of course, is holding this new cabinet meeting, this new crisis meeting today in just about 1 hour. The army already has been sent on location in order to help to contain this situation. situation over there was that the Tour de France arrival yesterday in Paris and the Tour de France final stage was actually cut short because a lot of the military forces are in the southwest of France, so they were not available in Paris to try and secure the arrival of the Tour de France cycling race. And of course, there will be political questions, there will be financial questions. It is too early, of course, to measure the cost of this massive fire in France. We know that about 240 houses have been burned, but as I was mentioning, more than 200,000 people have been evacuated. In fact, we heard from the finance minister just a few minutes ago who was saying that the insurance companies, the insurers, are going to pay for the cost of all these people who were evacuated, including the tourists who had to relocate in the region, who had to cross sometimes by boat the Bassin d'Arcachon in order to escape the Cap Ferret Peninsula, because there is only one road going to this peninsula, making the work of the firefighters very difficult, and the evacuations there, of course, very difficult. But there has been a lot of political questions. One thing very interesting for you, Guy, is that there's been a political debate about using the Airbus transport military plane, the A400M, as a water tanker. And in fact, Airbus has made some kind of removable kit in order to make this possible. This A400M, used as a water tanker, took days to be deployed in the southwest because at the moment it was in a testing phase, was supposed to not be in service until the end of July. And of course, the far left of Jean-Luc Mélenchon, the far right with Jordan Bardella have been criticizing the government about this plane. Why wasn't it used earlier? And finally, over the weekend, the Prime Minister Le Cornu has decided to use this A400M in order to help with the water tanker and the Canadair situation in the region. We'll have actually very interesting earnings interviews this week. We'll ask those questions. We'll have the Airbus CFO. We'll have the AXA CEO on Friday, one of Europe's biggest insurer, the biggest in France. So there will be a lot of questions here to be answered.
Okay, Caroline, thank you very much. Caroline Conan with the update on what's happening on the ground. No doubt the politics and the corporate story will continue to focus on this for some time. And let's look ahead to some of the other things we're watching for this week then. It is a really busy week. Today, still ahead, we have German IFO business confidence, that key important indicator about the state of the German economy. We have a big earnings day for Europe on Tuesday. Mercedes-Benz, Barclays, plus Boeing earnings, all of that happening on Tuesday. On Wednesday, we get the Fed rate decision. We get corporate earnings from Microsoft and Meta, Qualcomm, and SK Hynix. So it's not just US big tech. Thursday, we had a Bank of England rate decision, and we have results from Apple and Amazon and Samsung. So again, not just US big tech, it is global. And on Friday, BOJ rate decision plus Euro area CPI, Guy.
Okay, let's take a closer look at what we are watching in these markets. Mona Conningham, editor of the Bloomberg Markets Today, joins us now. Huge week coming up. Set us up for it. What are we looking for? What are the big kind of events that we should be paying attention to? Anna's just run through the list. But how's the market positioning?
Right, we do have a lot going on this week, and reminding you that this against the backdrop of fluctuating oil prices, huge amounts of uncertainty in geopolitics. The big events are going to be key central bank meetings. We've got the Federal Reserve on Wednesday. We've got the Bank of England on Thursday. And then, we've got the Bank of Japan as well. That is, there's various different factors going on. I think inflation is going to be a key one, particularly for the Fed and the Bank of England. There's been so much change since the last time that they met and the last time we had commentary. I think we're going to be looking for, is the resurging oil price going to impact inflation in a way that means that we are going to have a more hawkish bent? Will it give enough, particularly when you're looking at the UK situation, domestic inflation has actually been cooling. Does this disrupt that picture enough that we're actually going to see people leaning more towards further hikes faster? And in the case of the Fed, there is already a question about whether we would actually see a hike on Wednesday. At the moment, it looks more likely to be a hawkish hold, but there's certainly likely to be some dissent there. I think really what policymakers say and what that indicates about the path ahead is going to be crucial. And I think we could be talking about some quite different market bets by the end of the week.
Yeah, and the Fed, I mean, we've got a new Fed chairman who doesn't really want to say anything forward guidance-like, and so that makes things more complicated. Do you think that it's all about tech earnings? We've got some earnings out of the luxury sector in Europe as well, with LVMH coming up just today, I think, later on today. So what's the earnings story look like?
Yeah, so the earnings story, I would say, is there's a high bar. There's two things. One is technology, which you mentioned. You know, we've got, I think, 4 of the Magnificent 7 reporting this week. We've also got a couple of those key Korean tech companies, and there's a lot of focus on is the spending justified? You know, are the hyperscalers overvalued? I think there's a real concern about momentum there, and that's driving a lot of the equity sentiment globally. And then we also have earnings from a huge array of companies, including some key luxury stocks, like you mentioned, LVMH today. And there, I think the bar is quite high as well, as a slowdown in spending in that area. So,
Moana, thank you very much. Moana Conium, editor of the Bloomberg Markets Today blog. Still ahead, the team will be speaking to Clemens Fuest, who is, of course, the IFO Institute president. That's in just a few minutes' time, in fact, that on the German economy. This is Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 11 a.m. on the East Coast, 8 a.m. in the West. Only on Bloomberg Television. Context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield every Friday at 12 p.m. Eastern, right here on Bloomberg. Context changes everything.
Welcome to Bloomberg This Weekend.
Breaking news today from Wall Street to Washington.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology. Start demonstrating the utility.
Bloomberg Crypto, Tuesdays. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern every weekday morning at 6 a.m. Eastern, only on Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Every weekday from 3 to 5 Eastern.
Only on Bloomberg. Context changes everything.
Newsmakers and market movers. This is The Pulse.
Monday the 27th. Good morning. Welcome to the Pulse. I'm Guy Johnson in London. Let's talk about your top stories this morning. Oil under pressure as the US and Iran pause attacks for a second straight day. This after, of course, 2 weeks of strikes. Big tech firmly in focus with 4 of the Magnificent Seven set to report results this week after a sell-off sparked by AI spending concerns. And the British drug maker AstraZeneca reports higher than expected profits buoyed by a blockbuster set of cancer medicines. Let's take a quick look at what we are seeing when it comes to the cross-asset picture this morning. S&P futures positive, NASDAQ futures even more positive. The US 10-year 4.64. We've been at 4.7. Are we tracking to 5? Big week. Fed coming up. Euro dollar certainly benefiting from the lower energy prices this morning. 1.13. Let's call it 1.4 this morning. And as you can see, that lower energy price basically gives us a price of Brent at 91.09. We're down by circa 6%. Gas prices in Europe are down even more. Let's take a quick look at what we are seeing in terms of the equity market picture across Europe. Generally positive. Germany is outperforming, and that is certainly the picture that you can see with a bright green patch coming out of Germany. And that is actually where we are going to start our attention this morning, because the EFO survey is hitting the screens right now. We've also got commentary coming through from the ECB as well, pointing to rate hikes, further rate hikes still to come. But let me give you the headlines when it comes to what we are seeing with the July EFO expectation index and the business confidence index. The headline business confidence index comes through at 86.6. That is above estimates, which were at 86. So we are certainly seeing a better print there. The expectations index rises to 86.7. The estimate there was 84.8. So Germany's feeling better about itself. And the current assessment index, 86.5. The estimate there, 87.3. So near term, things are looking tough. The kind of the outlook, though, starts to improve. Net, a slightly better than anticipated number. Clemens Fust is the president of the EFO Institute and joins us now. Did I get the read right? Is that the picture we're looking at right now for the German economy?
I think it is. So current business is difficult. The situation is volatile. The situation in Iran, we don't know where it's going, but expectations for the coming months are improving, and this is coming from manufacturing, among other sectors, but manufacturing is exposed to these problems, to the geopolitical tensions, and nevertheless, companies are saying they do expect an improvement in the next half of the year.
Clemens, how much of this relates to energy? This looks like a fairly good number. The outlook number is improving. The current number is tricky. But we're seeing a lot of energy volatility at the moment. How is that impacting the numbers? Is this just a reflection of the energy outlook? Germany is obviously heavily energy intensive.
We do see the impact. If you look at the reading for the chemical industry in particular, it's bad. So the chemical industry is really affected. It's by far the most energy intensive sector. But in German manufacturing, there are sectors, and quite a lot of sectors, in fact, that are less energy intensive, and they seem to be less affected by this. Of course, they're indirectly affected through consumer confidence. At the same time, we see that incoming orders are improving, and it's not just domestic orders, it's export orders also. So the environment seems to be improving slightly, of course, starting from a very low level.
Clemens, the Chancellor, Friedrich Merz, promised a year of growth. Does this feel like a year of growth to you?
Well, we did expect, at the beginning of the year, we did expect a recovery. It's not a very dynamic recovery, but a slow recovery, and that was interrupted by the Iran war. And now the expectation is, yes, maybe the second year, if nothing unexpected happened, the second year may be one of growth, of recovery, but it's going very slow. It's still mostly driven by government demand. We see it in construction, building of roads, and similar things, train tracks. This is a sector where companies are saying, yes, we have incoming orders, it's working quite well, and that's driven by this debt-financed fiscal package. It is growth, but the growth will be weak, certainly below 1%.
But looking at the expectations index, should I assume that the second half is going to be better than the first?
It probably will. Companies have become more optimistic, and there are also some current numbers underpinning this. There is a slight increase in incoming orders, not just domestically, but also international orders. So the German manufacturing has been struggling regarding competitiveness, is under pressure by Chinese competition, but it seems that there is some consolidation now and companies have adjusted, so they are more confident regarding the second half of the year.
We're just getting some comments coming through. Casimir, I think, is the latest member of the Governing Council to make comments relating to the outlook for rates. The view there is the ECB will need to raise rates at least once more. Clemens, do you think the German economy needs rate hikes right now?
Germany is in this situation now where the growth is almost weakest in the Eurozone, but the ECB obviously looks at the Eurozone as a whole, and there are price pressures, and it looks like with the current conflict in the Persian Gulf, it looks like these price pressures are not going away. So there will be increasing pressure on the ECB, and I think for the Eurozone, a rate hike will be the right move. For the German economy in particular, it is more problematic. But as I said, the ECB has to look at the Eurozone as a whole.
Okay, but what impact do you think those rate hikes are going to have on the German economy? You call it problematic. If we see one more, two more rate hikes coming through, two more maybe a stretch, but what impact do you think a higher cost of money is going to have right now?
Yeah, it's going to affect construction. So in particular, construction of apartment and housing, it has been weak for some time, and this won't make it better. So this part of the economy will remain weak. We have a lot of spare capacity in manufacturing. So in that regard, a rate hike isn't appropriate, especially for the German economy, and it will maintain pressure, and it will have the effect that overall growth will remain subdued. So the German economy could certainly live without a rate hike and live better without a rate hike, but given price pressures, given that inflation is above the target, I think the ECB has very good reasons to hike at least once this year.
I was talking to a CEO of a large chemical company, coating company, AkzoNobel, a few days ago. Just talking to me about the belief that he has that basically we're dealing with permanently higher energy costs in Europe. Just looking ahead, further down the road, Clemens, how adaptable do you think the current German economy setup is to higher energy costs that are permanently embedded? Can Germany be competitive at these kinds of rates?
Well, I think it can, but at a lower level. We have already lost almost 20% of production, for instance, in the chemical industry. So to some extent, this adjustment has already taken place. The energy-intensive chemical industry, which is staying in Germany, has to have other comparative advantages. Otherwise, it wouldn't be able to stay. I think for the future, this means that the energy-intensive industry, the energy-intensive sectors will not be the ones driving growth in Germany. That has to come from other sectors. Automotive will not be driving growth either. So it will have to come from sectors like health, from sectors, maybe more service-oriented sectors, from certain less energy-intensive manufacturing sectors like building of machinery, optical equipment, electric equipment. So it will have to come from other sectors. So what's required in Germany is really structural change.
Yeah. What about defense? How big a driver do you think that's going to be?
Yeah, defense is part of this. Defense is the one sector where we do have a booming economy. We have successful startups, but also the established defense companies are expanding. The trouble is that the size, if you look at the size of the defense industry, it is small compared to the big sectors, to automotive and machinery. So it will take time before this will have a strong impact on the economy as a whole. But we do see some conversion. There are discussions discussions at Volkswagen of converting factories to produce defense goods. So this transition is going on, but defense is too small to save the German economy.
Clemens, always a great pleasure to catch up. Thank you for bringing us instant reaction to the data that you just delivered us. Clemens Fuss, the president of the IFO Economic Institute. Coming up, we'll go back to that energy story. Paul's dropping this morning. Bonds are certainly moving as a result of that. We're going to bring you the latest market reaction as the US pauses strikes on Iran. We'll do that next. This is Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Tyler Kendall in Geneva, Switzerland, and this is Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Ahmed, only on Bloomberg.
Thursday. The Bank of England makes its next interest rate decision, and investors will look to BOE Governor Andrew Bailey for signals on the rate path ahead.
Inflation is higher than we expected. Of course, now what we've got to do is get it back to 2%.
Join the opening trade team for live market reaction and analysis and on-the-ground coverage at the Bank of England. It all starts Thursday at 12:30 p.m. only on Bloomberg.
Good morning, 30 minutes past the hour. Welcome back. You are watching The Pulse. Let's talk about what we're seeing in terms of the energy markets this morning. Oil and gas prices sharply lower, with the United States and Iran holding fire after weeks of escalating tensions. The New York Times, though, has reported that President Trump held off on plans to escalate the conflict over the weekend, in part because of concerns around the fact that we could see the war draining supplies of U.S. air defense weapons, interceptors. But speaking to NBC's Meet the Press, the U.S. ambassador to the UN, Mike Waltz, pushed back on that idea.
I want to be crystal clear. The U.S. military, and I've verified this every which way, has everything that it needs to conduct this campaign as effectively as it needs to be. And I have to tell you, the people that are leaking this nonsense deserve to be in jail.
For more, Bloomberg Horizon's Middle East and Africa anchor Abir Abu Omar joining us now from Dubai. The markets certainly, Abir, if I look at the market reaction this morning, big drop in energy costs. Anything that signals that maybe we're going to get de-escalation enough to provide this. But how much de-escalation are we actually seeing here?
Good morning, Guy. Well, remember when the market did this the first time around, right? We saw Brent prices at around 120, 125, de-escalating to around $80 on the barrel. And then we saw this escalation over the past 13 days and then signs of de-escalation over the weekend. So in a nutshell, what happened was the U.S. over on Friday ended 13 consecutive nights of strikes against Iran. Now, this is important because we don't know why that is. Now, as you have mentioned in your intro, Guy, the New York Times has reported that this could be due to the U.S. running out of munition. And then Mike Waltz said that that is not true. President Trump, cited by the Wall Street Journal, also saying that the U.S. has more than plenty munition. Iran, over on Sunday, the army said that it will suspend attacks on the region and shipping in the Strait of Hormuz as a result of the U.S. halting its strikes there. We know that a delegation, an Iranian delegation, visited Oman over the weekend, where they both sides had discussed the movement in the Strait of Hormuz. We don't have a lot of clarity on what is happening there, what those discussions entailed. For the time being, the traffic in the Strait of Hormuz is still pretty much paralyzed. We have a parallel war that is happening between Saudi Arabia and the Houthis in Yemen, and that is also having a risk on traffic at the Red Sea, where Saudi Arabia has managed to move most of its crude since the beginning of the war. We continue to monitor the discussions and whether they're going to happen. But Guy, just one other thing that is incredibly important, and that is the deadline, August 16th, for the MOU, or the temporary ceasefire that was reached in June in Switzerland between Iran and the United States. That is coming very, very close. And we're not seeing any discussions happen over the 14 concessions that were part of that temporary ceasefire agreement. So something to keep an eye on. For the time being, the Strait of Hormuz is front and center in those discussions.
A bit. Just back up a little bit. I just want to talk more about what we are seeing with these talks that are taking place between Iran and Oman. What are they talking about there? Is it just the Strait, or do they go further?
Yeah, that's a good question. And again, we don't have a readout of what exactly was discussed between the two. We know that the deputy foreign ministers of both countries have met over the weekend. The Iranian delegation left back on Saturday. A slight sort of hint of what was discussed was just the Strait of Hormuz and Iran's assertion of dominance over the waterway. Now, we've spoken in the past, Guy, about both countries having some kind of mechanism to take control over the waterway in the period after the temporary ceasefire is over. We know that Iran is still very adamant on applying that mechanism, where it also charges fees to ships that are moving through the Strait of Hormuz. For the time being, there's no reason for us to believe that it wants to do anything different. And just something else to bear in mind is that while the United States has halted its attacks over Iran over the weekend or over on Friday, it still maintains its naval blockade and threatening ships that are daring to cross pathways that it has not laid out. Iran doing pretty much the same thing. So what we know out of that meeting for the time being and so far is that they just discussed the Strait of Hormuz and the shipments that are going through Iran in the aftermath of that meeting, saying that traffic continues to be paralyzed in the waterway.
Okay, Abir, thanks for the update. Greatly appreciate it. Abir Omar joining us out of Dubai. Sabita Subramanian, Chief Economist at Saracen & Partners, joining me around the table. Good morning.
Good morning. What
do I do with this kind of volatility? If you're an economist and you look at this, you're getting huge amounts of energy volatility. Consumers traditionally don't like, if you look at behavioral economics, don't like kind of volatility, but we're getting it on almost daily basis. Like almost got a sort of 7, 8, 9% swing in gas prices today. How does the European economy deal with that kind of volatility? If you're trying to manage the European economy, invest in the European economy, how do you deal with this kind of volatility?
I think if it was just volatility in prices, in energy prices, that's one shock. But I think the second volatility you're getting is in rates as well. And actually it's translating into actual investment decisions. So I think it's really difficult. I think at the end of the day, there's a volatility premium that gets baked into how people invest, how they consume. Volatility is a tax on growth. We shouldn't get away from that. And what we have seen is that as the volatility persists, we are getting sort of, as we see in Europe, the growth rates have really started to sort of come down as a result of all of this. So I think that's what the long run implications of volatility will be.
Is this something we're just going to have to get used to? Is this something you talk about baking it in? That implies some sort of degree of permanence.
Yeah, and I think, I think this is here to stay. I think the world that we are entering into is much more fragmented in terms of just trade. I think if you look into the future, we're going to start seeing more capital flows becoming more fragmented. We're starting to see the early signs of capital starting to behave very differently depending on where you are. I think today bond markets behave in a very synchronized fashion. They're all linked to US Treasuries. Yeah. But I think we're starting to see sort of markets starting to pull away. In the UK, the gilt market was very closely, linked to US Treasuries, and we're now starting to see a different premium in gilts. We're starting to see the long end of the Japanese bond market reflect Japanese political pressures. So I think capital will also start to fragment. And so this level of volatility and more country risk premium will start to build.
Okay, so you bring up US Treasuries. So let's talk about US Treasuries. Okay. The Fed this week. What do you... around a third chance of a rate hike this week. Do you think that's under or over?
I think it's overestimating it. Kevin Warsh has come out and said that he's not going to put a dot. So he really does not want to sort of show his hand. He's put out 5 task forces, and I think before we get the results of those task forces, some of which will be sort of presented at the Jackson Hole in August, before we get that, I do not believe that the Fed's actually going to sort of materially change its stance. I would say that on at this FOMC, we will get a couple of dissents, most likely. Lori Logan, the Federal Reserve President of Dallas, and Beth Hammock from Cleveland, they're both likely and have indicated that they would like to move preemptively against inflation.
If we don't, given all of that, looking ahead to the next meeting, the market's pricing just shy of 70%. Does that sound about right?
I think that's a little bit overestimating what the Fed is likely to do. There are 2 things to remember. The Fed says that the neutral rate for the U.S. is 3%. Interest rates today are somewhere around 3.65. So the Fed is actually plausibly saying, well, we're really restrictive already, even before we've got a supply shock coming through and being reflected in prices. So they're plausibly restrictive. Now, the real point is that actually these neutral rates are quite stale. I think we see this whole capex boom build out within the U.S. and actually growth and nominal growth is really very, very strong. So it is likely that the Fed is actually sort of optimizing to the wrong neutral levels. And so it's going to say, like, we're plausibly restricted, restrictive. We look through the supply shock and everything will be fine.
Okay. Plausibly restrictive. This doesn't look like an economy that is being restricted at the moment.
No, and I think, again, I just sort of, say something what Powell said. We'll know policy when it's restrictive based on what the economy is doing. Yeah. So in all honesty, I mean, the U.S. economy is growing at a nominal basis, at least at 5%. This is a very strong economy. We have CapEx building through. There is no sign of any sort of, abatement in the CapEx intensity of the economy, and it's going to only sort of increase further over the next coming years. So I think this is not an economy, as you look at it, that feels quite restricted in monetary policy and fiscal policy.
Bank of England?
Bank of England, to be honest, is actually quite restrictive. You can, as we've talked about, this volatility, sort of, ever since Brexit, we've had a higher risk premium across the economy, and actually, the underlying growth rates are lower in the UK, and so rates where they are slightly restrictive. And, investment is quite weak. Consumer spending is, not that great. So the only lever of growth is the government spending, which looks like, we're going to get a bit more of an impulse from that.
It's interesting, actually. Burnham this morning is talking about the fact that he needs to cut spending. He needs to tackle the welfare bill. You smile. Like, how realistic do we think this actually is? Is he saying the right things, but will he do the right things?
I think his policy sort of framework is, is being put together as we speak. I would expect that, yes, he understands that he needs to cut welfare spending, but that's only because he realizes that his degrees of freedom are materially curtailed by the bond market. I think we're all sort of slightly missing the point here. Everyone's incessantly focused on the budget constraints today. Are we within the fiscal rules? The reality is that if we don't have a growth model, we will not be within the fiscal rules next year and the year after. So it really is like, what is his vision for growth in the UK? And I think here, I don't necessarily, as of yet, see much of a credible plan. I think devolution, great. Maybe, in a few years' time, we'll get a bit more growth and efficiency from the economy. And beyond that, cutting VAT on electricity. These are all very small, sort of, I think, tinkering around the edges, addressing a cost of living issue, which is really being driven by things outside his control. It's energy prices, it's interest interest rates, none of which he has much control over. So it's really, you know, what is his vision for this economy where government spending is 45% of GDP today? You know, are we going to get to, you know, with more government, get to 50% of GDP?
We're already 5% above where we were pre-pandemic.
Exactly. So we're 5%. So the government's footprint in the economy has grown much larger. We're very dissatisfied with what the outcomes are. We are not growing. So I don't understand how we make this economy more dynamic without embracing more market-based measures to incentivize
But he doesn't like
growth.
Thatcher and he doesn't like neoliberalism. So there's, I don't know what the new model looks like.
Exactly. And I think this is really the question. You know, we have a 10-year growth plan that he's going to come out with, a vision for growth. Let's see whether he embraces the market.
Do you think the bank just sits there and waits for all of this?
I think every central bank in the world is just hoping to just sit there and wait for the supply shock to subside. The reality is they can't control supply shocks and they don't really, you know, so it's a question of are you plausibly restrictive? And I would say here the ECB has actually been more on the front foot. You know, it's basically, it's gone ahead. It's saying that our neutral rates are actually slightly higher as a result of what's happening in the world, and we will, you know, adjust as, you know, as things have evolved.
Sabita, nice to see you. Thank you very much indeed for coming to see us. Sabita Subrani, Chief Economist at Saracen and Partners. What are we going to do next? AstraZeneca out with numbers this morning. We'll talk and figure out exactly what is happening here. So a couple of things you need to know. Profit has beaten quite significantly. They've done really well in oncology. We had the CFO on Bloomberg Air a little bit earlier on, and she was painting a really positive picture, not just up to 2030, but beyond that. And the market seems to be responding fairly positively to that this morning, and that stock is having a positive impact on the FTSE 100. This is what European markets look like this morning, responding positively as well to the energy price story that we are seeing. Energy prices are lower. Look at the German market responding to that. Very strong performance coming through. Elsewhere, an underperformance maybe coming through from the FTSE. The reason for that, the energy stocks, though there are other stocks, and Astra is one of them that we're watching quite carefully. The CAC 40's quite interesting. The key number for the CAC 40 in some ways comes out a little bit later on today. LVMH will be out with numbers after the bell today, and we're going to watch those numbers very, very carefully. Anyway, we'll get back to AstraZeneca in just a moment. That's the European picture as we see it. This is Bloomberg.
We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is like very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake. While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
happened was you were up.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Welcome back. Let's talk about what is going on. The Chinese chip maker CXMT surging on its trading debut. We will talk about that in just a moment. In terms of the kind of main headlines that we're talking about this morning, there's a bunch of things you need to know. Oil is down. The reason for that, Iran and the US are pausing their attacks. You've got a tech story which you're watching very carefully. You've seen, as I just mentioned, a big IPO out in China, but you've got 4 of the 7 Mag 7 reporting this week. Keep an eye on that. You're also getting a lot of volatility around the energy, around the memory story, so we're watching that quite carefully as well. And we are continuing as well to watch the economic data come through, and we're watching that very carefully. There's some single stock stories that are definitely worth paying attention to. The British drug maker AstraZeneca reporting higher than expected profits, very much buoyed by its blockbuster cancer medicines, but it's looking ahead. Right, let's get back to where I was just a moment ago, and that is talking about what we're seeing in terms of the Chinese chip story. The Chinese chip maker CXMT surging on its trading debut overnight, this after a $9.8 billion IPO. Investors flocking to the stock ahead of a week of tech earnings, which will certainly test the AI trades. Anthony Stevens joins us now to talk about this. CXMT, not exactly priced for perfection, a big pop. I'm assuming that this is a mispricing by design.
Yeah, it is, right? The whole point of this AI boom in China, as far as the IPO market is concerned, is to further fund China's AI expansion. So these trades are being priced really well for retail to make money. This continues a pattern of AI trades doing really well in the Chinese market that goes back a couple of years now. And most of those results, those IPOs have been up around 100% or more. This includes other chip makers, memory device makers, and just generally silicon players in general. This sets the kind of tone for the IPOs to come, which include YMTC, which is one of CXMT's competition, Baidu's AI chip makers as well. So the whole tone of this industry now is to list and to get these big gains.
Okay, let's talk about what is happening stateside. A piece that I think caught everybody's attention in the Journal this morning, talking about what is going on with NVIDIA and OpenAI and how NVIDIA is going to help OpenAI lease a $500 billion data center. Circularity is the story here.
Yeah, look, there are two ways of looking at this. One is a financial engineering where you have the suppliers of the AI's chip trade really cashed up. They have money to deploy, and they are going to deploy that, helping their customers gain these data centers, put these data centers into place so that their demand for chips and chip materials can continue to grow. So that's kind of the bullish case. The cynical case is that this is a replacement for bond financing, where credit spreads and CDS are starting to move away from the hyperscalers and kind of crimp their fundraising abilities. So you have this kind of a debate in markets whether the circular financing is a legitimate use of these massive cash balances from chip makers, or an attempt to move some of this debt off balance sheet away from the bond market scrutiny and any kind of evaluation of the sustainability of this cash flow. Now, how that debate gets resolved is in the public markets by looking at CDS of the names that are listed on the CDS market. You're going to get a huge update on the sustainability of this CapEx in the earnings season that we are approaching.
Okay, 4 of the 7 are reporting this week. Mag 7, I'm talking here. What am I watching for? Give us the kind of the skinny on what are going to be the key things that the market focuses on.
Yeah, it's an extraordinary week for earnings season, given the fact that it's top to bottom of the AI trade. So you do have the 4 out of 7 on the Mag 7, as you said, but you also have a lot of suppliers in the US and in Asia. So you have Teradyne, you have Qualcomm, you have Seagate in the US, and in Asia you have Kioxia, you have Samsung, you have Hynix. Now those latter 3 names are pretty much, you know, the determinant of the future of the memory trade. For example, in Teradyne and in Seagate you have the testing and the hard disk space, and in the Mag 7 you have the demand for all of the above. And how aggressive is this capex going to be from the hyperscaler side, but also how aggressive is the capex going to be from the semiconductor manufacturing side? So how quickly is supply going to come in on all these chips to meet this hyperscaler demand? So you're getting a huge update in summer on the future of the trade. Now, this trade has come off so sharply in July that everyone is going to be watching. It's no longer the AI is up or AI is down market. We are entering July, at the end of July, into an extremely dispersed tech trade, and people are going to be paying very close attention to the small details in these results.
Yep. Winners and losers. Anthony, thank you very much indeed. Anthony Stevens on what we're seeing in terms of the tech trade. Let's go from technology to pharmaceuticals. AstraZeneca has reported higher than expected quarterly profits buoyed by its cancer medicines. The drug maker also released promising results for an experimental treatment for gastric cancers, but disappointment for a medicine to treat a rare blood disorder is also a factor here. Astra's CFO was on our air a little bit earlier on, telling us she's confident the company will meet its big sales goal.
When we had given that number for 80 billion, it was a stretch target. It still is a stretch target. At that time, consensus was at 67 billion for 2030.
Yep.
Now consensus is ahead of 80 billion. They're almost close to 81, 82 billion. So I think as time has gone on and we have de-risked more and more studies, people are getting comfortable that we will achieve the 80 billion.
Rana Saran, the CFO of AstraZeneca. Let's bring into the conversation Bloomberg's EMEA Healthcare and Consumer Team Leader, Deirdre Hipwell. These are strong numbers. The market generally appears to like it. They haven't raised the kind of the 80 billion target, which some would like to see, nevertheless. But is it beyond oncology? Is it beyond cancer? This is a company that is very strong in that space, but is there more to it than that?
Absolutely, they are very strong, and I think what we've seen today is they've slightly reassured the market, because obviously a few weeks ago they had a disappointment with a heart drug, which was rare for Astra, and the share reaction was quite marked. So I think today they've shown that they still have growth in their oncology pipeline, and that 80 billion revenue target by 2030 is looking increasingly easy for them to meet. The key will be obviously the focus on what comes after 2030, but we heard from the CFO, she's confident that they can achieve that.
So what are we looking for? Where should we be focusing our attention in terms of what the pipeline needs to deliver?
Well, oncology is obviously still a key focus, and they have some key readouts coming in, a lung cancer drug and a breast cancer drug later this year. But they are also developing a number of obesity assets, and as we know, that is a huge hot area in pharma right now. So they are hopeful that some of their assets will find a niche post-2030. And you remember, AstraZeneca has a very strong cardiovascular section, so they see some potential for combining some of their obesity assets with some of their cardiovascular treatments. So even though they're quite behind the market in terms of where Novo and Lilly are, they still think there's growth to come there.
Okay, great stuff. Certainly the market taking it reasonably well this morning. Reassured, maybe, is the way to look at this. Thank you very much indeed. Let's continue with the earnings story, but widen the lens a little bit. Big week ahead for Europe. The results are expected from, we've got a whole load of major banks coming through. You've got car makers, you've got some aerospace companies coming through, airlines, defence firms. It's all out there. Let's talk about what we've learned thus far, and therefore what the context is going into this week. Tim Craighead, Global Chief Content Officer at Bloomberg Intelligence, joins us now. So far, so good? What does the picture look? We're about a third through, aren't we?
Yeah, we're about a third through. Interesting to think about this coming week. We've got a whole another third coming just in the next 4.5 days. But so far, 50% beat, 30% miss. If I look at what our equity strategy team that just published a note on the terminal this morning have come up with, running about 12% in terms of earnings growth, which is slightly better than what was expected, but it is narrow. Pharma, financials, and semi-equipment, specifically ASML, have driven the lion's share of the growth. And some of those areas where there's been high expectation, electrification, energy transition, things along those lines, have failed to quite live up to expectations of some of the industrial and energy companies.
Okay, so that takes me on to kind of how has the market been reacting? I've seen some, on a daily basis, I'm getting some quite big moves either way.
It is amazing. And you think, year to date, we've had about a 10% positive revision to 2026 earnings for Europe. A big positive revision. So the bar is quite high going into earnings season. And thus far, if you beat sales or earnings, you've got a modest bump, 1% or so. It's a take no prisoner market, though, on the misses. You're down 3% or so if you miss on the top line, bottom line, or both. So it's definitely skewed towards the negative.
Towards the negative. So that's where the skew. What is interesting is you talk about that kind of earnings, the earnings outlook. The earnings outlook is incredibly positive at the moment. You look at the numbers and you have to sort of double check that actually you're looking at the right kinds of figures. What are the investor calls? What are the outlook statements telling us at the moment? And do they marry with those very high expectations that analysts are delivering?
I tell you, you think markets are at record levels. We've gone through tariffs. Now we have tariffs again. We have a Middle East crisis that won't quit, and yet stocks are at record levels. Managements quite often are trying to be cautiously optimistic, but still throw out some concerns. In the earnings calls thus far, however, our equity strategy team has a really interesting data science-driven sentiment index that they track. Record levels, highest since we've been out of the pandemic. Very positive on AI implementation, efficiencies, productivity, even revenue opportunities. They're not mentioning the supply chains proactively, but when asked, they do highlight that they're there, but they don't seem to be overly concerned. So it's been really interesting with positive skews on these calls.
Tim, thanks for the update. We'll continue to watch what we are seeing here and your analysis of it. Tim Craighead from Bloomberg Intelligence. Thank you very much indeed. Let's talk about some of the other stories we're watching this Monday morning. The US has said that the US is said to be pressing Mexico to bring its tariffs on Chinese steel and aluminium in line with Washington's tougher measures. While it represents a big ask from US trade officials, Bloomberg understands that Mexico is receptive to the proposal being discussed as part of the broader USMCA negotiations. Details including tariff rates and the affected products are under review with the aim of reaching an agreement, we think now, by the end of the year. And the UK Prime Minister Andy Burnham will host the Ukrainian President Volodymyr Zelensky as his first international visitor. Their meeting at a naval base is a sign of Britain's continued support for Ukraine and will allow UK officials to help Zelensky prepare for his meeting with the US President Donald Trump, which is now scheduled for later on this week. And the other story, of course, that we are watching so carefully this week, after this weekend, more than 300,000 people have fled their homes in France and Spain as wildfires threaten major cities of Madrid, Bordeaux, as new blazes erupt in eastern Spain as well. Let's bring in Bloomberg's Caroline Conan for an update. What does it look like this Monday morning, Caroline? The pictures over the weekend were harrowing.
Of course, on Friday, you had people flying by boat from the Cap Ferret Peninsula towards the Bassin d'Arcachon because the only road there was very congested with the firefighters trying to contain this massive wildfire that at the moment has burnt about 42,000 hectares in the southwest of France, in the Gironde region. That's about 4 times the size of central Paris. To give you an idea, in Spain, it's about 50,000 hectares outside of Madrid that have burned so far. It seems like in both places, however, the past few hours have been a little bit better. The conditions have been a bit more favorable. In Spain, they're saying that the evolution of the fire is positive but slow. In France, we expect some temperatures dropping and some light rain today. However, the window is going to be very, very tight. Today is going to be very decisive in France because the fire is not contained yet. It's still progressing towards Bordeaux, towards the metropolis that has 265,000 inhabitants. And the problem is that as soon as tomorrow, we expect the temperatures rising again and another heat wave coming in France over the next few days. So there are only a few hours left in order to try and contain this massive fire. Thousands, of course, of firefighters are struggling by air, by road to contain this fire. More than 200,000 people have been evacuated across the region because if you look at Lège Cap Ferret, for example, this very wealthy tourist destination, it has 8,000 inhabitants during the winter, but more than 100,000 tourists during summer. So a lot of these people have already been evacuated. At the moment, the airport of Bordeaux is still operating, but all the trains south of Bordeaux have been cancelled so far. We don't exactly know when they will be able to run again. The spokeswoman of the French government just a few minutes ago was trying to reassure, saying the evacuation of Bordeaux, of this metropolis, is not on the table quite yet. But last night we had the interior minister on TV who didn't rule it out.
Okay, so what do we expect to come out? Is it started already, this emergency cabinet meeting?
It has started in about the past 40 minutes or so, and we actually do expect a statement from the government, from the Élysée Palace, in the next few minutes. So we'll see exactly what comes out of this. At the moment, we heard from the finance minister, Roland Lescure, earlier this morning, who was saying that the insurance companies, the insurers will take up to 3 weeks of cost of relocating all these people who had to be evacuated from all these villages around Bordeaux and around the Bassin d'Arcachon. Of course, the cost for these insurance companies will be huge. That's one of the questions we'll be asking the AXA CEO, who's coming on Bloomberg TV exclusively this Friday morning for earnings. The French government, of course, has been a debate as well about the use of the Airbus A400M, this this military transport plane that can be converted into a water tanker and, of course, be much bigger than the current small Canadair water tankers that are being used across the region. It took actually days since the fire started last Wednesday in the region to deploy this A400M, and there was a lot of political reactions with Jean-Luc Mélenchon from the far left, Jordan Bardella from the far right, calling for the government to hurry and deploy this plane that was still being tested in order to be used and converted into a water tanker. So, of course, there will be a lot of discussions after this, political debates about how much it costs and what are the political consequences of these massive wildfires.
Yeah, it's a big plane, probably quite useful. Caroline, we're going to continue to monitor the situation very, very carefully. As you say, we're going to watch the outcome from this cabinet meeting and also what is happening on the ground. Bloomberg's Caroline Canan joining us from Paris. Coming up, we're going to talk the M&A story. M&A activity in Europe picking up. We're going to discuss what comes next. We'll do that after this short break. This is Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 11 a.m. on the East Coast, 8 a.m. in the West. Only on Bloomberg Television. Context changes everything.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine. Watch, listen, stream.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology. Start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
10 minutes at the top of the hour. Welcome back. Let's talk about the M&A story. Deal makers are on course to potentially pass the record M&A haul that they achieved back in 2021. Transaction values are up around 30% year on year to $2.6 trillion between January and June, that is. My next guest is from a law firm which was top of the Bloomberg rankings for 2025 deal volumes. Kem Iannacho is a partner at Latham & Watkins. Good morning.
Good morning, Guy. Thanks for having me.
Good year so far?
A really good year. Yeah, it's as you said, volumes of M&A transactions are down about 9% globally, which is a record low. More pronounced in Europe, down by about 14%. But what we've seen is an incredible increase in value. So $2.6 trillion of M&A value in the first half of the year, which, as you say, is over 30% up.
Yeah.
And I think the story of the first half of the year, and I think we'll see that continue into the second half, is this rise of the mega deal, these very significant strategic transactions that are being executed in what some commentators are calling a conviction cycle rather than a volume cycle. And I think we're going to continue to see that as the year progresses across a number of industries.
So why is that happening? Why are we not getting the bigger deal? Why are we getting the bigger deals but not the deals further down? Why are total volumes not up?
Yeah, very good question. So, look, I think when you look at the market, I think boards are realizing that the amount of management time and focus that it takes to do a $1 billion deal or a $2 billion deal is more or less the same as doing a $10 or $15 billion deal.
Right.
But when you look at the performance of those larger deals, there's a good argument that they have performed better in terms of realizing synergies, in terms of realizing better re-ratings of the combined businesses, and in terms of strategic alignment. So there's an argument that they perform better, you're spending the same amount of time on them. And so I think what boards and investors are seeing is that where they see these transformational opportunities, they're moving really decisively to capture them rather than spending their time on smaller transactions. And they're doing that in an environment from a financial and a regulatory perspective that's conducive to deal making. So if you look at financing, we're obviously not at interest rates around 2019, 2020 rates, but rates have come down. So when you combine that financing capability with the trillions of dollars of dry powder that private equity funds have available to invest, and the trillions of dollars of cash reserves that corporates have, it's a really good environment to do these and finance these big acquisitions. And from a regulatory perspective, I think what we're seeing is that regulators have been more receptive to remedies, so structural remedies like divestitures, behavioral remedies, as opposed to blocking deals outright.
I think Europe's becoming more open. For the last kind of 20 decades covering this, Europe has pushed back. Don't like big deals, don't like sort of quasi-monopolies, don't like sort of giants, want competition, push back hard. Do you think that... Do you think post-Draghi that mentality is beginning to shift a little bit?
I think the narrative is changing a bit. I think it's all part of this story around economic security and national security. Yeah. So if you look at what governments are doing across the continent, they're looking to protect domestic supply chains. They're looking to build national champions, whether that's in defense, whether that's in healthcare. And I think some of those priorities are overriding, perhaps, some of the priorities of the past. Okay. So the market is opening up. The regulatory environment, buyers are feeling more confident that they can navigate these complex deals through the regulators.
Okay. You talked about private equity just a moment ago.
Yep.
Private equity's got some tough vintages for a few years back that it needs to figure out what it's going to do with. You guys are big in private credit, you're big in restructuring, you're big in private equity as well. There's a lot of secondaries happening at the moment, and the market is really struggling to value assets. I'm a seller, I want X. If I'm a buyer, I want X minus Y. And that gap is massive still.
Yeah.
Any sense that that's closing? Any sense that you are going to see more deals coming down the road? What would be the catalyst for bringing those two sides together?
Yeah, it's a very good point. Look, secondaries has always been part of the ecosystem of private equity, but it's a much bigger part. There's about $118 billion worth of secondaries in the first half of the year, which is a record surpassed last year. There is estimated to be 30,000 unsold portfolio companies in private equity, and quite a significant proportion of those have been held for more than 6 years, 7 years.
So they get pushed into continuation funds and all kinds of other things.
They're getting pushed. You've got to remember the life cycle of a PE fund is about 10 years, so they're colliding against that life cycle. So this market has developed as part of the ecosystem that enables investors to receive liquidity. It allows managers to hold on to the assets and unlock that value in the future. Buyers can invest in more mature, understandable businesses rather than new funds and new opportunities. So it is part of the ecosystem now, and I think we'll continue to see it being part of that ecosystem. But what we're also seeing, I think, and we'll continue to see into the second half, is buyers and sellers having the confidence to get around the table and be creative around how they bridge that gap. So whether it's through earn-outs, whether it's through sellers rolling a proportion of their value into the next deal to get the deal over the line. And we're also seeing private equity doing more than just buyouts. They're investing minority stakes, they're doing structured equity. So the industry's pretty resilient, and it's finding ways of creating value for its investors.
Kem, great to see you. Thanks for stopping by to see us. We really appreciate it. Kem,
thanks very much.
Joining us from Latham and Watkins. Let's wrap things up. Quick look at what we're seeing in terms of the European picture this morning. You are certainly seeing a big reaction to what we're getting on the energy markets. Energy markets are down quite sharply. European gas is down very sharply today, but the Brent price is also very much softer. Look at the board in front of you, and it tells you kind of which part of the European economy is most energy dependent, and it is definitely Germany. Germany is reacting the most positively to all of this morning. The stock market there is up by 1.5%. Reasonably positive outlook from IFO as well coming through today. US futures are also very positive as well. We'll take a firm look at the tech space a little bit later on, but that's the picture you're looking at right now. So that wraps things up from Europe. I'm going to hand you over to the United States, and the brief is coming up next. This is Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Do you mind being called an ideological lunatic or a bunch of left-wing nut jobs?
I've been called worse things than that.
You'd think she owned the place.
23andMe, I think, is so incredibly valuable.
We're coming back. It had that kind of detective story feel to it. When you're hot on the trail of something, you know that it's very exciting. What magazines were you reading as a kid? I don't think I was reading magazines until I was in them. You are on the cover of all of these.
Oh, and there's many, many more, but we just don't have time.
Why should people trust you?
I don't think anybody should trust any company or entity completely with any of this.
It's very uncomfortable. Artificial intelligence is this force that is far bigger than we are.
I want to build better businesses around these brands.
The shock will never wear off.
So you're a brother and sister running one of the most powerful companies in the world. When you argue, who wins?
No one. The way I could see AI being banned or blocked is if something really went wrong. And if something really went wrong, then maybe it deserves to be.
So is it paradise ahead or Gattaca?
Maybe somewhere in the middle.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Every weekday from 3 to 5 Eastern.
Only on Bloomberg. Context changes everything.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
In New York City and 10 a.m. in London. Good morning, I'm Vonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Stocks and bonds gaining, oil dropping as Washington and Tehran pause attacks on each other for a 3rd straight night. This as investors look ahead to a busy week with a Fed decision and lots of tech earnings. And NVIDIA is said to be in talks to guarantee financial help for OpenAI to lease compute from a $500 billion data center. All right, let's get a Monday tech now on markets around the world. We'll start with Winnie Su in Hong Kong for the latest from Asia.
Yeah, good morning, Bonnie. Happy Monday. We are seeing a very nice rebound in Asian stocks today after that sell-off on Friday, with oil pressure continues to ease. And now, when you look below, lower down, it actually shows how investors remain quite cautious when it comes to the big earnings that we are waiting for when it comes to the U.S. tech earnings. And that is why for Japanese stocks, you are actually seeing gaming stocks leading the gains today, with chip makers continue to fall as investors look for opportunities away from these chip stocks. And similarly, when you look at the Kospi Index, South Korean's benchmark, it is up just slightly less than 1% after having fluctuated throughout the day. However, the key focus today really is that impressive debut from CXMT as you flip the board and see how this Chinese memory giant jumping 466% today on its trading day in Shanghai. Now, the company is, in fact, right now, the biggest, most valuable company onshore in onshore China, and as the 4th biggest DRAM company, we will see how it takes on this competition against its rivals, including Samsung Electronics, SK Hynix, and Micron.
And phenomenal retail interest as well. Winnie, thank you so much. That's Winnie Su there in Hong Kong. All right, let's get over to Europe now. A lot happening. Justina Lee, give us the summary.
Good morning, Vonnie. Now, we're seeing a lot of the similar moves in Europe as we've seen in the U.S. thanks to that drop in oil. You know, for instance, the Stocks Europe 600 is up 0.7%, led by a lot of those retail and travel and leisure names. Now, of course, we're also seeing big moves in the bond market, with the short end UK bond yields dropping nearly 6 basis points ahead of that BOE decision coming up later this week, and also a pretty big move in German 10-year bond yields, even though we did have an ECB kind of governing council member coming out and saying that a small pause in this conflict is not going to change the need for tighter policy settings. And we flipped the board here. Another big sigh of relief seen in the natural gas market. And now this is also being affected by the conflict in the Middle East. And we can see a pretty big move overnight, the biggest in more than a month, as kind of the pause in the conflict possibly allowing more movement through the strait of a lot of those LNG vessels. But you can see year to date, it's still a pretty big move up, and I think that's fueling a lot of the inflation concerns, especially ahead of winter, Bonnie.
Absolutely, and a Bank of England decision this week as well, Justina. That's Justina Lee in London. Well, she mentioned it, the big drop in oil. Apparently a couple of days of a pause between the US and Iran in terms of strikes is worth more than $10 on prompt month futures for Brent. So we're back below $90 a barrel, having topped 100 just at the end of last week. For WTI, we're around $83 a barrel. And as Justina said, down more than 7% on European gas futures. Though I will say at almost 59 euros per megawatt hour, that is still extraordinarily elevated. That's the backdrop for a week of massive earnings. Let's take a look at futures. Thursday is the biggest day, more than $10 trillion in earnings, and many of them tech earnings. Reporting on that particular day, we are starting off the week nicely after that chip sell-off at the end of last week. Nasdaq 100 futures pointing to a gain of more than 1.5%. Should note a couple of things from some strategists this morning. RBC's Laurie Calvasina is saying that profits are holding up despite a difficult macro backdrop. We also have a note out from Mike Wilson's team at Morgan Stanley suggesting that if the war is protracted, or if the Fed hikes this week, there could actually be some kind of consolidation or even a correction. To that end, let's look at yields, because we are off our highs of last week, but we are still elevated. So we're just below 4.30 on the 2-year yield. We're well above 4.60 still on the 10-year, and we're well above 5.10 on the 30-year yield. So again, still quite elevated, but at least at the front end, really only pricing in about not even a half an interest rate hike for this week. Let's get to some individual market movers now, pre-markets, with Chloe Melle in London.
Good morning, everybody. We are seeing 40 Biosciences up very strongly this morning after the Belgian biotech Argenx decided to buy it for $2.2 billion to expand its immunology portfolio, and we're seeing a huge jump there, almost 40%. Moving on, but staying within the pharmaceutical space, and we are here in London with AstraZeneca, which has reported a higher than expected profit thanks to very strong demand for its cancer medicines. And so this is an area that Astra has really focused on, and it seems to be paying off, and we're up about 1% this morning. And finally, Trip.com is in focus as well this morning after getting fined almost $800 million by China in an antitrust probe. But analysts are saying that this now removes a really big overhang on the stock that was really weighing on the shares, and so this explains this move up this morning for Trip.com, almost 4%.
Chloe, thank you so much. Chloe Melle will be back later in the hour. Also coming up this hour, we're going to catch up with Callum Pickering of Peel Hunt on a cloudy Fed outlook amid geopolitical uncertainties. Let's start right there. The Fed facing more pressure to hike rates as risks tied to the Middle East, tariffs and AI overshadow the tame June CPI report. Joining us now is Bloomberg's Jill Deesis. Jill, there's going to be some repricing either way, whether the Fed holds or hikes at this point, right?
Yes, Bonnie. I mean, look, I think that at this point, you're paying attention to some of these price pressures. I know that oil in particular has fallen back below $90 per barrel, but still, I mean, take into account the fact that you have seen those escalating tensions between the U.S. and Iran, particularly over the last, couple of weeks, and there's still some uncertainty about where that may go from here. So that does seem to be weighing into the calculus a little bit more here. I mean, back when we had that pretty cool June inflation print, you saw bets for a rate hike drop to as low as 10%. Now, I think as of last week, we were back up to about a 35% chance for a rate hike that we're pricing in at this point. So it does seem like even if you get a continued hold from the Fed this week, there might be some dissent that make this a really interesting picture this time.
At the end of last week, it looked like we were going to see a much more protracted war than we had thought. Suddenly, with oil down so much this week, things look a little bit rosier, Jill. How is the Fed supposed to read war risk?
I mean, how is anyone supposed to read war risk? I think that, when you're looking at the previous several months here, we've seen a lot of twists and turns in this conflict. We've seen, some pretty rapid escalation followed by a de-escalation. Maybe we're in a period now where we've got a couple of days where things that do seem like they've simmered down a bit. Maybe you see peace talks pick back up. But I think, if you're the Fed, you are sort of weighing in, not just the fact that we've got these price pressures of impacting energy, but also, a lot of other issues related to AI demand. I think that, you're going to have to kind of weigh whether or not there's at any point this year you need to raise rates. I think for the Fed in particular, when you're looking, later this year, it becomes a question of whether you raise rates now or you potentially look at something that's maybe maybe even butting up a little bit against the U.S. midterms, which might be a little bit more political than, Kevin Warsh, who's still pretty new in the position, wants to ultimately go here. So I think there's a lot of factors at play. And again, really difficult to kind of build in that risk around uncertainty with the Iran war. Again, we're in a bit of a cool down period now, but it's really difficult to say where things are ultimately going to go, even just a week or two from now.
Yeah, exactly. And also a little bit of relief on the employment front at the moment as well. And that could provide cover should the Fed actually do something. Jill, thank you so much. Bloomberg's Jill Desus there. In China, chipmaker CXMT soaring after a blockbuster IPO. Shares closing 466 higher, becoming the nation's largest onshore listed company. Bloomberg's Peter Elstrom joins us now for more. Peter, this is a phenomenal story. We've all been watching the China AI story, but percolating in the background has been that chip story. And CXMT is now the 4th largest DRAM maker in the world. How long before China is completely self-sufficient in chips?
Oh, that's a big question, Vonnie. In terms of the debut today, yeah, it was a very strong IPO for CXMT. As mentioned, they were up 466%. The company is now worth the equivalent of $488 billion, making it the most valuable onshore. And it's pretty close to the most valuable Chinese company out there. Tencent is just a bit ahead at just over $514 billion. So there's a small gap there. And with the prices of memory chips going the direction they are, it would not be surprising if you got another investor push to go ahead and get very close to Tencent. In terms of the broader question about their chip self-sufficiency, they do need chips from a number of different places. Obviously, they want to be able to buy the most advanced chips in areas like AI. Huawei is trying to make the equivalent of NVIDIA's accelerator chips, but they're quite a bit behind. CXMT is a very strong memory chip player. That's one of the reasons that Apple is trying to get their chips in addition to the memory chips that it gets from the big 3 players, Samsung, SK Hynix, and Micron outside of China. But it's a strong player. It's making a lot of progress at this point, and certainly it's getting a lot of government support too, because Beijing does have this goal of trying to build their own technology self-sufficiency, and semiconductors is sort of the foundation of that, to being able to build services on top of it, like AI and other products.
And phenomenally, the retail order book apparently was about 10 times the size of the SpaceX retail order book. Can I move to NVIDIA, because it's in talks to provide a financing guarantee now to help OpenAI lease compute from a $500 billion data center that SoftBank controls. So really just a great story for everybody on the surface, Peter, but it does bring up the circular financing question again.
It does. NVIDIA took some heat, especially last year, for these kinds of circular deals where it would provide financial support to a company that would then in turn buy chips from NVIDIA. We don't know the exact details of this so far, but certainly it has some echoes of that because OpenAI is an enormous purchaser of NVIDIA chips. OpenAI has been trying to figure out how they can build out compute in the United States. This is one of the bigger projects on the books right now. SoftBank is taking over this Ohio state. This is where Masayoshi Son announced with Donald Trump that there were ambitious plans to be able to build out this enormous data center. OpenAI wants to be able to use that data center compute capacity if it can. And one of the helpful supports is if NVIDIA is going to backstop $250 billion worth of the money needed for that project, it would make it easier for SoftBank to proceed with it, build it out, and then provide that to OpenAI. There are a couple other components to this too, though. NVIDIA is considering whether it should help OpenAI buy chips that it would use on that site to be able to run the data centers too. So there are some echoes of the circular financing that we saw last year in the AI industry. Certainly this is going to raise those concerns again. NVIDIA has said we need to build this compute capacity out so quickly that we need to find new ways of financing these sorts of things. So they believe this is a positive thing for the industry overall. We have to see how it plays out.
Yeah, and the amount for those chip purchases that you mentioned as well is a separate $350 billion. So we're talking huge sums of money. Peter, thank you so much. That is Bloomberg's Peter Elstrom. In the Middle East, tensions easing as the strikes between the US and Iran pause after almost 2 weeks. Talks do seem to be at a standstill, though, with Iran's foreign ministry spokesman saying earlier in a press conference it's possible that mediators share messages from the US side about current developments, but at the moment, we have no negotiations with the United States. Joining us now from Dubai is Bloomberg's Abir Abu Omar. Abir, I also saw earlier that Iran was basically saying the US doesn't get to decide when peace comes or when war happens. What is the stance of Iran at the moment?
Good morning, Vonnie. Yeah, well, you pretty much said it. A repetition of patterns we've been seeing over the past 48 hours or so, really. Now, this follows, Vonnie, a halting in the U.S. attacking Iran over on Friday. We don't have a reason for that. We don't understand why President Trump has stopped hitting Iran, but that follows 13 consecutive days of attacks against Iran, not just military targets, but also infrastructure, including bridges, for example, in Iran. Now, the New York Times did report earlier that this could be due to diminishing munition from the U.S. side. President Trump and Mike Waltz later on saying that no, the U.S. has plenty of munition, but nonetheless, Iran has suspended attacks in return of this on Sunday, saying that it will not attack as long as the U.S. does not attack. And Vonnie, just meanwhile, this is all happening. We don't have negotiations on the table, as you have just mentioned. The deadline for the MOUs that was reached in June in Switzerland is fast approaching. We're looking at August 16th, and all those 14 concessions that we've spoken about multiple times over the past couple of months or so are not being discussed. That includes President Trump's main goal of Iran's nuclear power. That includes the oil sanctions against Iran, the frozen assets, and the Strait of Hormuz. But for one thing, the Strait of Hormuz is the only thing that is being discussed. We understand that an Iranian delegation had visited Oman over the weekend, where the deputy foreign ministers of both countries had discussed the Strait of Hormuz and the movement, or the lack thereof, in the Strait of Hormuz, pretty much paralyzed at the moment, Vonnie. So what we're seeing is, again, this back and forth. For the time being, a sense of calmness. You're seeing Brent crude prices now actually below $90 on the barrel. Last week it had accelerated to above $100 on the barrel. So at least some positive news. But just one thing to keep in mind is that this hasn't ended, right? This could all unravel. There's a lot of uncertainty still around the situation, whether those negotiations are set to continue.
Pricing can happen very quickly. Abir, thank you so much. That's Bloomberg's Abir Abu Omar. Now to all the top stories trending on the terminal this morning. The CME is set to launch single stock futures today. This will allow investors to hedge or speculate on more than 50 of the largest U.S. companies. The contracts will be cash settled on the closing price of the stocks they're tied to. Trading will be open 23 hours a day, 5 days a week. SoftBank's $40 billion bridge loan for its stake in OpenAI has attracted a new group of 21 lenders. Bloomberg sources say the group has been allocated around $7 billion of the facility. Standard Chartered, First Abu Dhabi Bank, and Singapore's sovereign wealth fund, GIC, have taken a nearly $1 billion share. The companies declined to comment. Indonesia's central bank governor unexpectedly resigns, citing personal reasons. The country's currency, stocks, and bonds all fell after the news. The senior deputy governor will take over as acting governor. Coming up, we'll bring you part of our exclusive interview with NVIDIA's Jensen Huang next. This is Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Bloomberg Brief, I'm Bonnie Quinn in New York. Investors bracing for the busiest week for S&P 500 earnings, with Microsoft, Meta, Apple and Amazon all set to report, with the firm's AI spending plans at top of mind. Bloomberg's Ed Ludlow spoke with NVIDIA CEO Jensen Huang in an exclusive interview. Have a listen.
The semiconductor industry has really changed. And the reason for that, because we used to build computers for people to use, and we're going to still continue to build incredible computers. These are now processing AIs for humans to collaborate with. But in the future, we also have AI agents and robots, and they're going to be using computers. So instead of just 1 billion people using computers, we're going to have 100 billion agents and billions of robots all using computers. The computer industry, the chip that's built on top of the chip industry, surely is not big enough. And so this is one of the realizations of the semiconductor industry, that now computers are built not just for people to use, but computers are being built for computers to use. My guess is that the semiconductor industry is probably going to have to be 10 times larger than it is today over the next decade or so. And so working with our partners in Korea and around the world to scale up the supply chain of semiconductors so that we're prepared for this AI future is really important. This is the golden ages for Korea, as you know. Their semiconductor business is booming. Their industrial business is booming. You know, this is a country that has the ability to help the world build out the AI infrastructure. That they're incredibly adept at adopting new technologies, and is a really technologically forward-leaning society, and they love using AI. AI has really diffused throughout their society and their industry, and so this is a great time for them. We're announcing several things. We announced a big partnership with SK Group, where our companies are going to enter into a business partnership where we do over $500 billion of business with each other, whether it's consumption of and purchasing of memories or selling AI supercomputers to them as they scale out 2 gigawatts of AI factories. There's a whole bunch of other announcements. We're investing $1 billion in Naver to help. They're the Korea's leading AI cloud. They're going to scale up in Korea up to they're going to scale up 200 megawatts, I think it is, and they're going to expand across the world. In the case of China, they're producing more AI researchers than probably all of the world has, you know, in any given year. And so they're producing. If manufacturing intelligence is important, they manufacture the most important version of it, which is the researchers. And so this is an area, a country that's going to produce excellent AI technology. We ought to continue to learn from them, work with them. As you know, you're here in Silicon Valley, right here in San Francisco. The number of AI researchers here that came from China that are Chinese is really quite significant. And so, you know, we're really fortunate to have them here, and you know, we just got to keep on racing.
NVIDIA CEO Jensen Huang speaking exclusively to Bloomberg's Ed Ludlow. This is Bloomberg.
take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard.
Oh boy.
Can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that. And the speed of the business has never moved faster.
My career might stop. I'll still be driving some.
Yeah. Probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
For your front page news, and first up, the BBC reporting French President Emmanuel Macron has called a crisis cabinet meeting as wildfires close in on the southwestern city of Bordeaux. A heat wave is set to complicate efforts to tackle the expanding blaze. Tens of thousands have been evacuated. Next up, the New York Times reporting on the Berlin Pride event in which a woman was killed and another 29 people were injured. German authorities said police shot and killed the man suspected of the attack after he charged at officers with a weapon. And finally, the Financial Times reporting America's leading AI companies spent records lobbying Washington in recent months as they try to limit unfriendly regulation and shape U.S. rules around data centers. Coming up, Callum Pickering of Peel Hunt joins as price pressures mount ahead of the Fed's rate decision. This is Bloomberg.
Being called an ideological lunatic or a bunch of left-wing nut jobs?
You know, I've been called worse things than that.
You'd think she owned the place.
23andMe, I think, is so incredibly valuable. We're coming back.
It had that kind of detective story feel to it, you know, when you're hot on the trail of something, you know that it's very exciting.
What magazines were you reading as a kid?
I don't think I was reading magazines until I was in them.
You are on the cover of all of these.
Oh, and there's many, many more, but we just don't have time.
Why should people trust you?
I don't think anybody should trust any company or entity completely with any of this.
It's very uncomfortable. Artificial intelligence is this force that is far bigger than we are.
I want to build better businesses around these brands.
The shock will never wear off.
So you're a brother and sister running one of the most powerful companies in the world. When you argue, who wins?
No one. The way I could see AI being banned or blocked is if something really went wrong. And if something really went wrong, then maybe it deserves to be.
So is it Paradise Ahead or Gattaca?
Maybe somewhere in the middle.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
It's 5:30 a.m. in New York City, 10:30 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Stocks and bonds gaining, oil drops as Washington and Tehran pause attacks on each other for a third straight night. This as investors look ahead to a busy week with a Fed decision and lots of tech earnings. And NVIDIA is said to be in talks to guarantee financial aid for OpenAI to lease compute from a $500 billion data center controlled by SoftBank. All right, let's take a look at these markets, and wow, that is a drop for oil. We're now below $89 a barrel on Brent. We just continue to plummet. That's a shift of more than $13 a barrel just between Friday and Monday alone. We're down almost 9% now on that front month contract. We see that WTI is below $83 a barrel. Still pretty elevated for European gas futures, above 58 euros per megawatt hour, but that is still down 8% from where it was at the end of last week. That is providing a backdrop which could be positive for some asset classes, including equities and bonds. Let's take a look at futures, because we're also going to see a huge amount of earnings this week. And as Laurie Calvasina of RBC put it, companies have been defending their profits against what is a difficult macro backdrop, and we may be seeing weaker revenue beats, but nonetheless, they are seeming to beat the lingering pressure beneath the surface. As you can see, Nasdaq 100 futures looking to bounce back after Friday's chip sell-off, up more than 1.5%. And then yields-wise, we are, of course, waiting on the FOMC this week. We're down about 3 basis points on the 2-year, well, across the curve, really, the middle point of the curve, down more than that. But still, the 10-year yield at 4.63 and that 2-year just below 4.30. The 30-year yield elevated still at 5.12 and change. All right, let's get to some individual movers now. We'll go to London and Chloe Melly.
Good morning, Bonnie. This drop in oil prices that you were just mentioning is triggering this big relief rally across those tech stocks and AI-related stocks here in, well, over here in America. And we have got quite strong moves this morning, including Qualcomm, Meta, Microsoft, Amazon, all in the green this morning as this drop in oil prices gives some relief to those markets. Moving on to 40 Biosciences, which is jumping this morning in pre-market trading as it is getting bought by the Belgian biotech Argenx for $2.2 billion, and so that will expand the immunology portfolio for that company, and we're up very strongly there. And finally, let's end with a London company. We've got AstraZeneca also moving higher in London trading this morning after reporting higher than expected profit. It has really benefited from strong performance of its cancer medicines, which is an area that it has been trying to really expand in. This seems to be really paying off, and so we're up about 1.6%, 1.7% for AstraZeneca in London this morning.
Chloe, thank you so much. Chloe Melly there in London. Price pressures creeping back up amid geopolitical uncertainties. Markets now pricing in about a 30% chance of a Fed hike Wednesday, with nearly a full hike priced in by the September meeting. Of course, pricing is constantly changing. Joining us now is Callum Pickering, Chief Economist at Peel Hunt. Callum, if the Fed was at all inclined to hike this week, and there was a significant non-zero possibility of that happening, does this massive drop today in oil prices change that decision-making, even at the margin?
It probably does. If I'm at the Fed, I'm inclined to just hang off and just slightly hope that things resolve. For me, I actually don't see a very good argument for any central banks to do anything over the next few weeks. There are just too large a two-way risks. I think from the Fed's perspective and for other central banks, I think it's important to let markets entertain the idea that central banks could raise interest rates while holding out the hope that in the end you don't have to do all that much. Why let markets entertain the idea? First, you don't want to push back against that. Remember, they all made a mistake in 2022. That would look very bad indeed if they then had to go aggressive. But second, by allowing markets to entertain the prospect of hikes, you just get to a point where you introduce enough tightening into the system just to keep some price pressures under control a little.
Are we making it too complicated, though, Callum? If you think about it, the labour market is doing just fine according to the data, and we have to go off the data that we have. And inflation is still well above the Fed's targets and only coming down ever so slightly. I think the last report was really the first time we've really felt relief in some time. So why not hike?
I think we're always making it a little bit too complicated. I think that's a great point, especially economists like myself. I think there is an element to that. For me, we're in the business of guessing what the Fed will do rather than what it should do. In a way, you're right. Consider the scenario, the Fed says exactly as you mentioned, look, we have a dual mandate, the economy seems to be doing quite well, the labour market's tight, we're above. So just to provide some insurance, we're going to go 25, 50 basis points over the next couple of meetings and then we'll be done. My sense is the Fed is inclined to do as little as possible in order to not disturb what has been a very healthy economic upswing in the US, which, remember, importantly, has involved this big productivity and technology story. The last thing I think the Fed would want to do is put the economy to sleep, and so they're willing to tolerate a bit more inflation than they ordinarily ought to. The other thing to remember is, keep in mind, prices are signals. So those high price pressures that we see in the US, that pricing power for firms is also the incentive to hire more workers, to build on the land that's free, to extract the commodities, to produce the energy, to build out the tech. And so a little inflation, I think, is probably tolerable here.
Yeah. How concerning is that, though, on the other hand, because AI spending is obviously supporting growth right now, not just in the United States, but in China, Taiwan, Singapore, I mean, Korea, obviously. If there is a pullback in AI or some kind of a beginning of confidence drifting from the AI story, does that impact not just US growth, but global growth?
Okay, so I think there are two things here, and I would distinguish them. The one is, what happens if the positive reinforcing cycle in the US of elevated stock prices, which is coming through on the tech side, which is pushing up household net wealth, the fact that households in the US are spending every dollar they earn virtually, and this growth that's coming from it is allowing the US to finance a 7% federal deficit. What if that suddenly is undermined? That's, of course, a big problem, not just for the US and the global economy. There's a separate story, which for me is a benign one, which is what happens now as the world realizes that we're not in the innovation phase anymore of this technology, but we're in the diffusion phase. So if what we see is over time, the gradual narrowing of the valuation gap between the US and other markets as the global capital market does its job and it sends money to the sectors, the industries outside of the US that can use this technology, and so you get a rebalancing. If this bubble diffuses and doesn't pop, I think that's absolutely fine. I'm still in the second camp. What I think is quite interesting, though, is the muscle memory in markets, which is every time we worry about the war, and we just had a recent one, which of course has de-escalated in the last couple of days, there's a sudden scramble for dollars because commodities are priced in dollars, and the market goes back to this AI trade. So my point here is, if we get continued good news on the Middle East, I actually wouldn't be surprised if some of these tech companies come under pressure, the dollar weakens as the market then focuses on non-US companies, economies that can benefit from technology.
Callum, what more do you want to know about Kevin Warsh and how he's thinking at this next news conference? We know there is going to be one. We also know what we think we know about Kevin Warsh, but will there be anything that we can learn?
Okay, I think we are going to find out over the next couple of meetings if he's really, really disciplined in his mindset that he doesn't want to provide forward guidance for markets. And I think I said this actually on not your show, but on Bloomberg a month ago. I think that Warsh is going to be a Fed chair that economists like, but that markets don't like so much. Powell, his predecessors, Yellen, like to give markets clear forward guidance. In other words, steering interest rates. Walsh is happy to let the economic data speak for itself and then for the Fed to decide what it wants to do. And so this meeting, if we don't get much information, if he stays quiet, I think we're now in for a structural change in the way that markets have to think about the Fed. And so I expect to see lots of interesting notes about how economists interpret the data and how the Fed might react to it. So we're hoping for some signal this week. We might not get one.
Well, the other thing is that we've seen a couple of auctions that have been weak. They definitely haven't failed, but they've definitely been weak, and that's the longer end. We know that the short end is going to react to whatever the Fed does, but Kevin Walsh is likely to be looking at that, you know, beyond 5%, 30-year yield for it's, what is it, 28, 29 days now this year, and wondering what can be done about that, right, given the amount of debt that this country has. Is there going to be a plan for that at some point, or at least an effort at having that be in the transmission mechanism somehow too?
Well, look, that was my nervous laugh. We have far too much public debt across the advanced world. No incumbent government or any challenger is taking this seriously. Of course, the US gets the exorbitant privilege from the dollar, so I think it can sustain these deficits for a while. We're in a state of the world now where the relationship between the front end of the curve and the long end of the curve is abnormal. Typically, central banks raise interest rates at the front, they go up at the long, they cut them at the front, they go down at the long. But once you are starting to run into questions of inflation credibility commitment, fiscal credibility commitment, they can move in opposite directions. And so, in a strange way, if Walsh were really committed to pushing down the long end of the curve, he would want to tighten at the front end to drive down inflation expectations. The risk, of course, is if you do that too much, you then start to undermine the US economy, and then growth worries start to compound into these fiscal worries. What I would say is, I don't think the overall borrowing level matters for the US or other advanced economies nearly as much as inflation. And so I think there's actually quite a lot of headroom here that if central banks really started, including the Fed, wanted to be committed to drive down the long end, they would tighten at the front end, cure the inflation problem, and then we would see the curve flatten considerably.
All right, it's quite conceivable that that's what we'll see. Callum, thank you so much. Callum Pickering there of Peel Hunt this Fed week. Now to other top stories trending on the terminal this morning. The CME is set to launch single-stock futures today. This will allow investors hedge or speculate on more than 50 of the largest US companies. The contracts will be cash settled on the closing price of the stocks they're tied to. Trading will be open 23 hours a day, 5 days a week. SoftBank's $40 billion bridge loan for its stake in OpenAI has attracted a new group of 21 lenders. Bloomberg sources say the group has been allocated around $7 billion of the facility. Standard Chartered, First Abu Dhabi Bank, and Singapore's sovereign wealth fund GIC have taken a nearly $1 billion share. The companies declined to comment. A heat dome is gripping central U.S., pushing temperatures and power demand higher across the Great Plains, Midwest, and Mississippi River Valley. The heat and humidity will make temperatures feel as hot as 112 degrees Fahrenheit or 44 degrees Celsius. The heat dome should shift to the west by the weekend. Coming up, Middle East tensions ease. President Trump said to be giving some space to talks with Iran. We'll discuss next. This is Bloomberg.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
Anything we do in Africa is going to be more risky than the US. think the approach we want to take is how are we being compensated for that risk? And one of those is obviously going to be a valuation question. In our minds, valuation is a lot more attractive in Africa, even if we adjust for some of those Africa risks that a lot of Western investors see. So yes, in a lot of ways, you take some of those models that, as I said, might be more asset medium or asset heavy. There might be some more inherent risks. However, if we're saying we're adding some risk because of that kind of model, but we're now solving a core problem as opposed to maybe a nice to have solution in Africa, that might actually offset it. Where if you're solving something that people really absolutely need and can't live without, in a way that then that's a lot less risky. So again, we'd encourage investors to have a less binary view. In other words, the US isn't risky, Africa is risky. That's going to lead to a lot of complications down the road.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI. That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
The president is keeping all options on the table. I've spoken with the negotiators. I've spoken with Secretary Hegseth. What the president is doing right now, as we've seen all along, is giving some talks some space. Talks are ongoing. They're happening at every level, from the more technical aspect of it all the way to the highest levels, of course.
Tensions at least on pause in the Middle East as the US and Iran hold off strikes after almost 2 weeks of attacks, dragging crude prices lower. The Iranian Foreign Ministry saying earlier there's currently no negotiations ongoing with Washington. Bloomberg's Kasia Klimaszinska joins us now. So as usual, a little bit of conflicting views on either side. Kasia, what are we supposed to make of the US just halting strikes and this New York Times report that maybe it's because of diminishing munitions?
The good news is that we are starting the week with no attacks. Oil is down and stocks and bonds are up, and that's because US and Iran haven't been attacking each other for 3 consecutive days. Some members of the Trump administration are saying that there are talks ongoing. We haven't seen any details of those talks. And last time President Trump spoke, that was last week on Friday, he said that the US is locked and loaded and perhaps ready to enact a massive attack that hasn't come. And that's, again, for example, why the oil prices are sliding. But the main area of conflict, the Strait of Hormuz, is still there, and there is very little traffic going through, which is not what the U.S. likes. And then tomorrow we have Israeli Prime Minister Benjamin Netanyahu coming to the U.S. He will definitely bring the focus back on Iran. He has already told Fox News on Sunday that he will want President Trump to stay focused on Iran's nuclear program.
Yes, tell us what we should expect from this visit, why it's happening now, and if there are any other messages Netanyahu is going to be bringing.
It's very interesting because, in fact, President Trump and Prime Minister Benjamin Netanyahu didn't meet in person since this attack on Iran started in late February. The contact was, of course, over the phone, and definitely they were exchanging messages. But we know that the view of the two leaders on this war is different, in large part because perhaps President Trump is facing midterm elections in November, and Americans here at home don't want to pay more for gasoline. They don't want to pay more for groceries. So this affordability, the impact of this war is very much on President Trump's mind. But he will talk to Benjamin Netanyahu tomorrow. He will also meet other leaders. They are here in town for the funeral of Senator Lindsey Graham. So, for example, President Trump will also meet with Ukrainian leader Volodymyr Zelensky.
On the domestic front, we have now a replacement for Graham Plattner. Troy Jackson is the pick in Maine. Does he have a chance of beating Susan Collins for that seat?
very interesting race over in Maine, where Democrats are looking to pick up a Senate seat, which they really need if they want to take control of Senate in November. So they have a new candidate, Troy Jackson, a really interesting person. He used to be a Republican, but he turned progressive. Now his policies are expanding the healthcare and also increasing taxes on the wealthy. He is facing Susan Collins, a very experienced Republican who managed to defend her seat even as no Republican candidate for president won in Maine for 40 years. So we'll see what happens. Of course, there's still a lot of time between now and November, but Democrats have a new strong candidate, Troy Jackson, there, as you mentioned.
Yes, that was a bit of a saga. Kasia, thank you so much. Bloomberg's Kasia Klimashinska. Back into the Middle East now, where transits of key choke points are still well below normal. Traffic sparse in the Strait of Hormuz, with mostly smaller product tankers and bulk carriers crossing, according to data. Let's bring in Bloomberg's Alex Longley for more. The situation has been changing on a daily basis for shippers. Alex, what do we know exactly about who's getting through, whether they can go through with their radars on, if there's any secret crossings, or what exactly the situation is?
Well, it's still a very clouded picture, and as you say, there's a lot of factors driving whether or not ships are deciding to cross Hormuz at the moment. And really, talking to ship owners doing those voyages, it's something that changes hour by hour and day by day. Some days owners may feel comfortable transiting, other days they won't. And also the shipping fleet is now split between a sort of a cadre of ship owners who are kind of happy to take that risk as and when they see it appropriate, and others who simply won't go anywhere near Hormuz because of the risk of both attacks kicking off again, but also of mines in the waterway. So it's a very muddied situation at the moment. Traffic is clearly much lower than normal levels, but it really goes in fits and starts from day to day, depending on the security situation on the ground. And when we get kind of pauses, as we've seen over the last few days, you tend to see a bit of a pickup in traffic, but the wider picture is one of much lower volumes through Hormuz.
Alex, what about the Red Sea and the Bab el-Mandeb Straits? Is traffic, quote unquote, normal through there, given the Houthis' threats before the weekend?
No, I don't think it is normal. I think we're seeing a normal volume of oil leaving the sea, but not necessarily on the normal route. So we're seeing some ships diverting north and traveling through the Suez Canal in a bid to kind of avoid any potential attack from the Houthis. Remember, last week, the Yemeni militant group sent an email to ship owners saying, if you call it a Saudi port, we will consider you to be within our targeting range. And then later in the week, we kind of heard from Yemeni officials or from Houthi officials that might not be the case. Again, there's a kind of a mixed picture there, but ship owners, some ship owners erring on the side of caution, others, again, switching off, going through dark and appearing on the other side days later. So again, I think we're seeing a mixed bag here, but they're sort of the volumes of commodities being exported are normal. Some of them just might be taking a much longer route to get to market than they normally would. But it's a slightly different picture to the Strait of Hormuz, where commodity exports are clearly far reduced versus pre-war levels.
All right, Alex, thank you so much for the context. That's Bloomberg's Alex Longley. Turning to tech, Bloomberg learning that NVIDIA is in talks to provide a financing guarantee to help OpenAI lease compute from a $500 billion US data center controlled by SoftBank. Sources say early stages of negotiations signal NVIDIA could guarantee as much as $250 billion. Also, chips for $350 billion, so there's just money flying all over the place. Let's get the take now from Bloomberg's Neil Campling. Is this wise? Who benefits most from this, Neil?
Great question, Bonnie. I mean, this is just the latest example of NVIDIA investing in its own ecosystem to a degree. It's great for OpenAI because they probably haven't got a huge amount of cash available right now. But this will raise questions around the potential circular financing again, because NVIDIA has got strategic deals and then some other kind of more problematic vendor financing deals, perhaps, in terms of their whole ecosystem. Deals that they've got in terms of financing all stakes, OpenAI, CoreWeave, Anthropic, XAI, Lambda, and Mistral. I mean, the list goes on and on. So, it's going to raise as many questions as it answers, I think.
We'll see how the market reacts when the US session opens later. I want to ask you a little bit briefly about CXMT jumping more than 500%. Should we expect Chinese chips in the US market to overtake some of the US chip makers? Briefly, Neil?
It helps them in terms of raising cash. Obviously, it's great. It's great for their balance sheet, and they can spend more on the capex. I will just caution one thing here. is that as far as the technology is concerned, they're still about 3 years behind the technology capability of the likes of Micron and SK Hynix. You can't just buy your way to closing that gap. So, let's just be cautious here in terms of the type of chips that can come into the US market. They won't be leading edge. There won't be those HBM4 chips, for example.
All right, Neil, thank you so much. Neil Campling there with a big week ahead for tech. This is Bloomberg. To Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
The world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Now look at what's ahead this week. We have Treasury auctions on deck today for $69 billion worth of 2-year notes, $70 billion worth of 5-year notes. Then a marathon of rate decisions with the Fed Wednesday, with then the Bank of England on Thursday, followed by the Bank of Japan on Friday. And it's the busiest week for S&P 500 earnings, including Meta and Microsoft on Wednesday, Apple and Amazon on Thursday, Amazon on Friday. Here's your macro picture. It looks like we're going to bounce for the NASDAQ 100 after the chip sell-off last week. Brent crude trading now below $88 a barrel. That's it for Bloomberg Brief.
people would say that there's maybe a little bit of a bubble in AI. When you have companies with market caps of $5 trillion, you don't see any bubble there at all?
Whenever we have an acceleration in technology and people get excited about it, you have significant capital formation around new companies that are trying to capitalize on that opportunity. And, you know, we've seen this before through history, and you're seeing it now. It won't be a straight line. The opportunity set with AI is enormous. There will be winners and losers. And it's hard to pick the winners and losers now. And certainly a lot of the capital that's being deployed will not produce adequate returns, and a bunch of the capital that's being deployed will actually not produce any returns. But it's hard, it's hard to call the timing on these things. And the thing I'd point to just from a historical lens is in the fall of 1996, Alan Greenspan talked about irrational exuberance in stock markets, and the NASDAQ was at 1,300. And the NASDAQ peaked 3.5 years later at over 5,000. So, these things can go on for a long time, but ultimately, there are adjustments, there will be drawdowns, there'll be rebalancing, and just, it's hard to call it because the technology trend and the investment is real.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you the latest business news wherever and whenever it happens. I'm Scarlett Fu, reporting from America's biggest military shipyard. This is Bloomberg.
We'll start to get into the part of the programming where we pick some real winners and losers.
Hyperscalers will have to show more signs of pricing power and monetization.
A wide swath of the market has been largely overlooked by investors.
The pace of earnings is just not going to be what it was.
Money will rotate back into tech.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Monday, facing down a huge week. Mega cap tech lining up for the biggest week of earnings season. Just as the Kevin Walsh Fed is gearing up for a family fight, the Trump White House is hitting pause on striking Iran, sending stocks higher and oil down.
Yeah, so maybe not sending a signal for the rest of the week, but the headline roulette, the Mune music is looking better than expected today. As people say, 2 nights without strikes gives a sense that maybe negotiations are back on. And as Nathan Sheets of Citigroup said over the weekend, this leans into the idea that this administration does not want to kick up oil prices any higher ahead of the midterms, and that is the default position. Try to de-escalate this, giving people a sense that maybe that will happen. That said, we don't know how well inventories are doing and just how much of a glut or a lack thereof there is to cushion whatever may be ahead.
Make it day 3. Is it about diplomacy? Is it about something else? Not the midterms, maybe. It's about the ammo. According to reports over the weekend, it might be.
When it comes to the New York Times, Wall Street Journal, they're saying that there's a debate right now within the administration about depleting stockpiles of munitions, and that is why they had to hit this pause at a time when the president was foreshadowing that he wanted to go against and expand the targets that the United States was attacking on Iran.
Think about the week we've just had. Triple digits on crude, back into the 80s now. On Brent, 87 and down by some 9 percentage points. Think about the moves we've seen in the equity market. Bring up the board and look ahead to these mega cap tech earnings across Wednesday and Thursday. And think about this one name and the price action on Friday. Intel. Intel absolutely crushed it. And we were talking about it going into the opening bell on Friday. Watch how this trades. Got hammered going into the weekend. What does that tell you about price and positioning and about how high this bar is for some of those names?
Is it getting insurmountable given how much has already been baked in, given the fact that Intel performed really well immediately after earnings and then was down more than 7% on Friday, as people say, look, we're going to take some chips off the table, literally, excuse the pun, it is Monday. At this point, you have to wonder if the bar is incredibly high because of whether, just because the performance has been so good, or whether the bar is so high because of CapEx. And ultimately, people are getting a little bit of heartburn over the fact that they're spending trillions of dollars, and the amount just keeps going higher.
It's my favorite week of the quarter, I know. For most of you, it is yours as well. How do you rank it? We always talk about that coming into this week. How would you rank this week? What's top of the pile, the Fed or tech earnings? I think most people at the moment would lean slightly towards the tech earnings this week.
The tech story is the everything story. It is the U.S. productivity story. It is the dynamism in the U.S. economy. It is efficiency. It is inflation. It is the entire gains of the U.S. equity market so far over the past couple of years. If that is waning, that is going to be a game changer. It isn't so much, as you said before, exactly what the earnings are. It is exactly how the market responds to it. I want to know the total number of capex. How much does this keep climbing, and what is the intolerance of this by capital markets?
I'm going to go with the Fed because I would love to watch this family fight. And I want to see how Kevin Warsh addresses the press when a number of if they hold, when a number of individuals have come out and talked about the rationale for hiking rates right now.
Haven't got a massive move in the bond market this morning. You've seen that move in crude down by 9 to 10%. Let's call it around 10% lower. And at the front end of the yield curve, you're down 3 basis points, still around 430 on twos. That tells you a lot about the two-way risk into this meeting. Consensus overwhelmingly is hold. But there is this small margin of risk, this two-way risk that this new Fed chair has introduced to make this a live meeting.
Well, yeah, right now we've got more than a 30% chance that potentially they're going to hike rates on Wednesday. There's almost a certainty that they're going to hike rates on September. People will say, that market price isn't exactly a certainty. Goldman Sachs has come out and been pretty vociferous about this, that the bias is still to hold. That said, people are taking a look at the sticky factor and the impatience that Fed officials have with the idea that we just keep being well above that 2% target, and at what point can you just not use the T word or even imply the T word, even think the T word, or people are going to come after you?
Shut it down.
Yeah.
Back to that again. Shut down that word. 3 to 4 basis points lower across the yield curve this morning. The Fed meeting just a few days away. Coming up this hour, Seema Shah of Principal Asset Management heading into a big earnings week. We'll speak to the former Deputy National Security Advisor Victoria Coates as the US and Iran pause strikes, and Blake Gwynn of RBC expecting a hawkish hold from the Federal Reserve. We begin this hour with stocks bouncing back going into a big week for mega cap tech. Seema Shah of Principal Asset Management writing, there are already early signs that a rotation trade may be emerging, with the latest tech-led sell-off benefiting the financials. Seema joins us now for more. Seema, welcome. I believe it's 8 consecutive weeks of gains for the bank sector on the S&P 500. What is it about the tech sector that is so compromised heading into this earnings season?
Hi, John. Well, I think, we've been seeing over the last week or two since the earnings started that, look, they're delivering. They've got the strong earnings. But the market wants more than that. They want to see that the cash flow is not turning negative. They want to see return on investment, and that's really the main thing now. And so as a result, the mood is souring a little bit. It doesn't mean that the AI CapEx trade, the whole theme is finished by any means. We do believe very strongly that it's going to be very significant for global productivity growth and global businesses. But at this juncture, with these kind of valuations, I think there are other opportunities in the market which are worth looking at, and certainly financials, banks specifically are one of them.
Can we just sit on price and positioning as well? We mentioned Intel. Intel had fantastic numbers heading into the weekend. The stock was down at a close as of Friday. Seema, what did that tell you about price and positioning, and not just that name, but others as well in that sector?
Yeah, look, you can just look at the market right now. The positioning at the moment from the tech side is everyone wants it, but there needs to be more space to go, which is running out. So people are looking beyond and saying, look, we know that earnings growth is really strong, but can it really continue at this kind of pace? And are we nearing a bit of a peak? So that's where we're seeing the turn. And I think from the intel, from actually all of the companies that we've heard from the tech side recently, it is still the focus on CapEx. People don't want to see that additional push up in CapEx. They want to know some certainty that this is actually going to be realized, some kind of monetization of AI. And I think that's really the key narrative that investors are looking for right now when it comes to the tech sector.
One thing that Mike Wilson of Morgan Stanley came out over the weekend and was talking about is that some of the beneficiaries of the efficiencies of some of this technology are going to be the real winners, financials being among them. Some of the other areas like software that potentially could be disrupted the most by them could potentially also win. Do you agree with that?
Yeah, I think that's a really interesting perspective. And I certainly, when we're looking across the way that we've been investing over the last year or so, potentially longer, is really about thinking who are the beneficiaries. We know that the tech build out is going to be really key, but what are the suppliers? What is the supply chain towards that? And also, who are the people that are the companies that are going to be benefiting from a productivity side? And that's actually when you can look beyond the US, beyond South Korea, Taiwan, to other parts of the world, even including Europe, which do stand to be a beneficiary. So there are a world of opportunities, and particularly right now when there is investor interest starting to wane a little bit on tech, this is the time to be looking beyond your traditional winners that we've become accustomed to over the past year or so, and start thinking beyond into other segments of the market and other segments of the global market.
Where does oil fit into this equation? We're talking all about technology and this sort of secular sea change, and then you overlay the volatility that we're seeing in oil prices. Do you just ignore it because it's not something that you can really calculate?
No, you absolutely cannot ignore it. And, this is a real toss-up for investors. You started the hour talking about what's more important, the Fed or the tech earnings. And actually, I do think the Fed, in light of the move up in oil prices, is really key, because as we've been seeing the rotation take place in the last couple of weeks to other segments of the market, that has to be driven on a constructive economy. If you were to see a rise in rates over the next couple of months, particularly if the market starts to sit as a sequence of hikes, well, then that really would test that rotation that we're seeing in other segments of the market. So no, you cannot ignore it. It's very difficult to predict, but there has to be some kind of consideration there.
We're down almost 9% right now on Brent crude. What does the Fed do when it comes to oil that's acting like a yo-yo?
Well, this is one of the reasons, from our perspective, is that you cannot change rates this week. You have to stay on hold. Trying to make a decision based on a policy which can turn hour by hour doesn't make sense. Of course, the consideration is on core inflation, second round effect, but unfortunately, that's not going to come through for a couple of months. So to our minds, it makes sense to stand still. But given that this is coming into the week, 30% odds for market pricing is almost a bit of a toss-up for the Fed in that regard. So where we're looking is that there's very, very little margin for error in terms of where the inflation path goes from here. So it really is going to be a data-dependent, month-by-month process of looking how inflation is performing. And of course, the main thing being is where are the second-round effects coming through, if at all.
Seema, I think it's also worth stressing that oil is only one piece of the story, one piece of the puzzle for this Federal Reserve. And I think you can see that. That's a story in and of itself in today's price action, that you can have a move of 9% on crude and a move of 3 basis points on twos, which is nothing. Nothing. We're back at 430 on a 2-year after threatening to break through, 440 in the last week. 10s are still around 460. 30s are still well north of 5%. What is it about the yield curve right now that is just keeping things elevated for longer, regardless of this volatility in the crude price?
But one thing is just the level of oil. I mean, we're talking fine, it's a 9% move, but ultimately you're still looking at oil prices which are really, really elevated. So of course, from that perspective, if it were to stay at that level, then you're going to see through a feed through to core inflation, which is going to be really uncomfortable. But beyond that, the market is also just looking and saying, look, the economy is really strong. We saw from jobless claims last week falling to really low levels, that there is a chance that you're going to see a labour market tightening. So this is a number of things which are going into the decision. But certainly as we're looking to this week, to Wednesday's decision, at this stage, given that so much of the inflation outlook is driven by what's happening with the conflict, it seems a little bit too early to be making any concrete decisions on policy.
Seema, it's good to see you. Thank you. Seema Shah there of Principal Asset Management. We're tolerating this in financial markets and in the economy as well, at least so far. Since the war started as of Friday, 10-year yields were higher by something like 70 basis points. We've priced out cuts, we've priced in hikes, and look at the performance of financial markets and the real economy. The equal weight on the S&P over that period, slightly positive. Consensus growth expectations stood around 2% for GDP, and unemployment is getting closer to 4 and further away from 5. That tells you a lot about where people see financial markets going and how the economy is materializing as well since these twin shocks, both in crude and in rates.
And one thing people have pointed out is that actually there's been a very unexpected acceleration of the labor market over that period of time that people really had not anticipated and didn't make any sense given where oil prices were. It is counterintuitive and it is against history to see how much the labor market has recovered. I will say, just to sort of lean into the tech story for a second, it still is related to the tech story and issuance, because on one hand, it's also the economy being robust, but it's also a wealth transfer, people borrowing money and then investing it into the economy. Issuance is coming from the tech sector. It's also coming from the U.S. government with 2- and 5-year auctions today. It's just, this is a complicated story with a lot of different facets.
We're raising a lot of capital, fueling a lot of growth. We'll get into that later. Let's get you up to date on news worldwide with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Good morning, John. The U.S. pausing strikes against Iran for 3 straight nights now. U.S. Ambassador to the UN, Mike Walls, saying President Donald Trump is giving diplomacy, quote, some space. Iran also halting its retaliatory strikes and holding talks with Oman over the Strait of Hormuz. DeepSeek has put its fundraising plans on hold for now. Sources telling us here at Bloomberg the company's founder is frustrated over online posts by Chinese media that he reportedly made about a June funding round. The unverified reports say he discussed a reliance on NVIDIA chips and also China's lag in AI relative to the United States. Chinese chipmaker CXMT surging more than 460% in its trading debut. CXMT is China's largest producer of DRAM, the chips used in devices from servers to cameras. It ranks just behind SK Hynix, Samsung and Micron. And that is your Bloomberg Brief. John.
Vonnie, thank you. Thank you very much. More from Vonnie in about 30 minutes' time. Up next on the programme, easing tensions with Iran.
We're locked and loaded and ready to go, but we're talking to them, so I think while we're talking, we'll see what comes of it. Despite what everyone says about the election, I'm not in a hurry.
Up next, we'll catch up with the former Deputy National Security Advisor, Victoria Coates, live from New York City this morning. Good morning.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
What do they say? Decades where nothing happens and weeks where decades happen? Too much, maybe. But it's a big week ahead for financial markets. It looks like this. A Federal Reserve decision on Wednesday. Check out that earnings lineup. 4 names, almost 1/5 of the index. Crazy. Wednesday, Microsoft, Meta. Thursday, Apple, Amazon. That's your setup for this week. Those events right there. The pricing of it looks like this. Equity futures positive, a bounce by 1% on the S&P 500. On the NASDAQ, up by 1.6. Stocks up. Crude down, and crude once again in the driving seat this morning. Brent and WTI. Brent heading lower by more than 8%. 88 on Brent crude this morning, 83 on WTI. So what is that worth in the bond market? It's worth a couple of basis points. 2s now to 30s this morning. 2s down 2 or 3 basis points to just 4.30. That's not engineering a major rally heading into this Fed decision.
A lot of the increase in yields and, frankly, the increase in expectations from the Federal Reserve to raise rates came from something other than oil. Oil was a peripheral matter. Ultimately, the CPI and PPI that was softer than expected that we got 2 weeks ago gave people hope that maybe they wouldn't have to hike rates. The fact that we've had oil prices jack back up raises that prospect once again. Even an 8% decline this morning isn't going to change the minds and hearts of people who have been concerned about too high inflation for too long.
For some on this Fed, this is a feature, not a bug. This was by design, heading into this Fed meeting. Just a little bit of two-way risk, no hand-holding, it's over. The post-GFC experience where you got guidance to each and every meeting, that's finished with this new Fed chair.
Yeah, and ultimately, is it going to be a problem, or ultimately is it going to be a virtue, create some volatility to potentially suppress borrowing costs, suppress borrowing activity? That said, unclear exactly how long they have the luxury to keep going with this two-way risk, and at what point they've got to signal something, especially if the balance of risks really becomes clearer in the market.
Let's get to that move in crude. Brent crude down by more than 8%, under surveillance this morning, easing tensions with Iran.
Look, we're talking to them right now. I think they're getting more and more serious as the days go by, for maybe the obvious reason. We're locked and loaded and ready to go, but we're talking to them, so I think while we're talking, we'll see what comes of it. Despite what everyone says about the election, I'm not in a hurry.
So here's the latest this morning. The US and Iran holding attacks for a third straight night as the Trump administration says the naval blockade in the Strait of Hormuz remains in full effect.
Absolutely. And what's happening right now is that naval blockade remains in effect, but the strikes have stopped for a third straight night. And you asked the right question, Jonathan. Is this about diplomacy or depleting stockpiles? Potentially it's a bit of both. We've seen the president want to take the diplomatic route in the past, but there's reporting from the New York Times, from the Wall Street Journal, that the reason why they decided against what could have been a 2-week intensive campaign against Iran was because of depleting stockpiles as we enter, what are we in, 5th month of war right now. And that is where the concern is for this administration and potentially why they had to hit pause.
The knee-jerk reaction for the press down in Washington, D.C. is often the same. It's a home bias. It's about the elections. It's always about the elections. The president has pushed back against that continuously. And based on the initial action to begin with, you'd have to stress it probably might not be about the elections.
If he believes that he has an advantage going into this, and frankly, if there is a more existential question here, you have to imagine that there's something else at play, especially because he does seem to be losing patience, according to a number of different reports. This isn't just about munitions running out. This is about strategically what the actual attacks by this ammunition will do, given the fact that there aren't enough anti-aircraft missiles to really be defensive should this go on for a prolonged period of time. It's a risk calculus that's changed the longer and the faster they can deploy strikes in an AI era.
Let's build on this conversation. Joining us now is the former Deputy National Security Advisor, Victoria Coates. Victoria, always appreciate your insight and your perspective. Welcome back to the program. To what extent do you believe that U.S. stockpiles are shaping the president's approach to this conflict?
Well, good morning, Jonathan. I actually don't think that it's that big of a factor. I think we have plenty for this particular engagement. I think long term, this is an issue we have to deal with revitalizing our defense industrial base, making sure we're producing what we need, and also making sure our partners and allies, we can provide them with the licenses so they can provide additional stockpiles for us. So I think that's a longer term question. I think right now, actually, the thing that is giving the president a little bit of pause is, of all things, the funeral of Senator Lindsey Graham. We're going to have just a parade of world leaders coming to Washington over the next 48 hours for that event. And they're all going to come to the White House and meet with the president. And so I think what he's doing is giving that a chance to play out. He's going to hear what people have to say. It's really going to be kind of a unique circumstance here this week that'll give him the chance to sort of take the global temperature.
Victoria, though, that hasn't stopped him in the past. I was with the president in Ankara at NATO, where he decided to resume bombing Iran, and he was surrounded by world leaders and was not even in the Situation Room at the White House.
Oh no, I mean, this can play out different ways, but I think because we have this particular situation, we're going to have the Prime Minister of Israel, for example, we're going to have the President of Ukraine. Just a number of different voices. I just get the sense, Anne-Marie, that this is going to be a couple of days to kind of, as I said, take that global temperature. I mean, I don't think it discounts what happened in Ankara in any way.
Do you have a sense of where we are in terms of the DoD's level of stockpiles of anti-missile interceptors?
Interceptors, yeah. No, I mean, there's such... I mean, one of the things that's a little bit frustrating about this, there's such a wide range of these things. It's not like just like one kind of interceptor. There are large numbers of different ones. But I mean, one metric that I find helpful is, for example, the PAC-3s, which are the interceptors we use with our Patriot systems. We make about 60 of those a month. Right now, Ukraine, not anything happening in the Middle East, Ukraine fires off 70 a month. So that depletion is an issue. particularly for the Patriots. But as I said, we've got the Aegis systems, THAAD. I mean, you can go through the alphabet soup. So there are tons of different ones, and where one particular inventory is that's not in my skill set. But overall, I think we're fine. I think it's more of a long-term issue that we're looking at here.
They're still fighting on other fronts. We have the Houthis over the weekend going after Saudi Arabian energy installations. Where do you see that part of the conflict developing?
Right, and so for the Houthi went after a refinery installation for Saudi Arabia, and that's that can potentially be a real problem because you can have all the crude in the world if you can't refine it, if you can't turn it into gasoline or whatever other product you need, you can't drive it, you can't use it effectively. So that has to be watched. But the Saudis hit back pretty strongly against the Houthi. Important to remember, the Houthi are not 100 feet high. They're kind of Stone Age type people. That should be a manageable problem. And then the Saudis also have been quite ingenious, actually, about how they're moving around that problem. And they're starting to move a lot of their oil through the Suez Canal. So they're going up through the Red Sea rather than down to where the Houthi are. And it's been very interesting to me to see how, yes, the problems with Bab el-Mandeb and the Strait of Hormuz are bad, and they are influencing markets. But at the same time, that oil seems to almost squirt out of the Persian Gulf. It's finding alternate routes. And I think you will see that trend continue.
What's the best resolution in your mind right now? What do you think is a best case scenario that could potentially happen over the next couple of weeks?
I think the best case scenario is that we actually double down on the economic pressure on Iran. The reports coming out of the country continue to be quite dire about what is happening internally. And those are problems, Stephanie, that they can't fix. And so I would say keep that blockade on. I would say keep trying to find these alternate routes to make sure the energy that we need from the Persian Gulf as a global market keeps coming out. Keep our domestic production very, very strong, and just continue to build that pressure internally on Iran, because they at this point are in such a degraded state that they can't really even begin to start to rebuild absent a very large international sort of support system. So I would double down on Secretary Bessent's Operation Epic or Economic Fury. And I think that's where we're going to see the best progress.
Victoria, it's good to see you. Thank you. Victoria Coaster, the former Deputy National Security Advisor under the Trump administration. Crude this morning down 8%, back to about 89. It persists, both the volatility and the elevated levels, and that in and of itself is a pretty big problem for policymakers and for financial markets alike.
And the idea of the actual ammunition stockpiles is an important one, because it isn't just about whether they have the capacity to keep bombing. It's the question of what are the resources of a nation to protect itself should there be additional conflicts or some sort of flare-up.
Brent crude, 88.90 so far this morning. Up next, we'll catch up with Frank Lee of HSBC, with NVIDIA in talks to back an open AI data center. Plus, Yahara has your morning movers. Hyperscalers rising ahead of a massive week for mega-cap tech.
scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is like very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake. While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Stocks up, crude down. This is the take this morning. We're positive by 1% on the S&P 500. The story so far, the Nasdaq up by 1.6. Mega cap tech earnings just around the corner. 1/5 of the S&P 500, almost, across 4 names reporting Wednesday and Thursday. Epic. I love this week, together with a Fed decision in the mix as well. So that's the equity picture. Let's turn to the commodity story. Energy looks a little something like this. Brent and WTI getting hammered, down by 8%. 13 days of strikes. Turns into a 3-night break. We hit pause. Let's see what happens from here. But this is how the stage is set so far this morning. 83 on WTI. So you take a big move like that. Before today, we had a 30% plus rally. I think something like 33% higher on Brent for the month so far before these moves. And this is what you get back in the bond market. So yields were climbing, and now they dropped by 3 basis points. It's nothing, Bramo. 2s at 430, 10s north of 460.
There are other inflationary components that are going to be factoring to core PCE that we get later this week, and some of the data that we've gotten so far. We also have a whole host of issuance coming later today even. We've got $69 billion of 2-year notes. We've got $70 billion of 5-year notes. If yields go just a touch lower, just think about everything that's coming to meet that, and that's happening around the world. So this is a twofold story. On one hand, this is a Fed story, a Fed potentially ambiguous and potentially that's going to be live later this week. And we also have supply that continues to meet any kind of dip in yields with incredible bravado.
And we've got a big competition for capital in global markets right now as we count you down to the up and about. 3 hours away. Let's get you some single names, some morning movers. Yahara has more. Hey, Yahara.
Hi, John. We start with NVIDIA. Shares are up nearly 0.9% in the pre-market. Honor reporting that it is in talks to help back a massive AI data center project for OpenAI. The chipmaker could provide a financing guarantee of as much as $250 billion for the Ohio data center, and it just begins to also highlight the increasingly circular nature of the AI boom. And that makes today's move notable because investors have recently questioned how aggressively these hyperscalers and these chip makers have been spending on AI infrastructure, though we are seeing the broader tech trade move higher as well this morning. And that report is also helping the neo clouds this morning, like Nebius and CoreWeave, all up in the pre-market. And our analysts here at Bloomberg say that if NVIDIA is willing to back financing for these massive AI infrastructure projects, it does help ease concerns that the financing for the next wave of data centers could dry up. And so that is a positive sign for these names. And we end on the broader tech trade, as I said, moving higher in the pre-market as oil plunges and ahead of earnings from the likes of Amazon, Meta, and Microsoft later this week, as investors come into these results with a very different mindset than they have ahead of other earnings. As Alphabet showed us, strong AI growth alone may not be enough if it's also accompanied by bigger capex and negative cash flow, especially as we see elevated yields as of late, just highlighting how much more expensive that AI build-out could get, John.
Yahara, thank you. That was what was so notable, I think, about Alphabet last week. that we were told last earnings season, sure, you can hike up CapEx so long as you put up the growth numbers, so long as the numbers elsewhere are decent enough. And Alphabet put up decent numbers, beat expectations for cloud revenue growth. What more do you want? I think that's up more than 80% in something like the last 12 months, which is crazy, given how high the base was to have that kind of growth coming off that. But to your point, you said it repeatedly last week, negative free cash flow, too much CapEx, market's starting to push back. That's how high the bar is. What does perfect look like? I don't know. But we're going to find out later this week.
Or we're not, because ultimately nobody knows what's perfect, and that's the reason why you see the skepticism. There also is a question around accounting. The fact that a lot of people are watching the semiconductor manufacturers book the profits without necessarily the cost being put on the balance sheet of some of the hyperscalers yet until it's actually deployed. So there are all sorts of reasons why people are getting a little bit skittish about some of the volumes being mentioned.
On our raise out this morning, let's get to some top stories. The US pausing strikes against Iran for a third night after 13 straight days of attacks. Iranian state media saying the country is halting its retaliations as a result. Elsewhere, a blockbuster week ahead for big tech earnings. Meta, Microsoft reporting after the bell on Wednesday. Apple and Amazon on Thursday. The four companies accounting for over 17% of the S&P 500. And finally, Chinese chipmaker CXMT surging more than 460% in its trading debut in Shanghai. The company posting the second biggest IPO in China's history and becoming its largest onshore listed company as Beijing ramps up its push to secure AI independence.
It briefly surpassed Tencent, which is listed in Hong Kong as the most valuable company in China. This is a company that makes memory chips and actually makes most of its profits from selling lower-end chips, the DRAM, to consumer products companies. But they're benefiting from the increase in prices, and they are manufacturing some higher tech memory chips. It highlights the different fates for companies that are in different parts of the tech stack. Think about how different SpaceX IPO was versus this particular IPO. And it highlights how much people are chasing the next best thing. And ultimately, you're going to end up with more memory that gets produced to offset the shortage. So at what point does this suppress some of the costs?
I think it also highlights the fact that right now the United States has a moat around a lot of these memory chips and what is and is not export compliance. There's a lot of export controls on what China's actually able to get their hands on. So then you have this Chinese company with incredible amount of demand come to market. Well, that's why you see that insane percentage spike on the screen.
It shouldn't really work like that. That's called leaving money on the table, isn't it? Would you call that a good IPO? Like to have a move that large on the first day of trading?
I think good is an understatement.
Right.
I think it also highlights how much the retail portion of the IPO was a big part of that. It was 212 times oversubscribed, the retail portion, just to give you a sense. I mean, that's nothing compared to what we saw with SpaceX, which was 10 times oversubscribed. So 212 times oversubscribed, 10 times oversubscribed. It gives you a sense of how much interest there was.
Some big numbers. Let's stick with tech. NVIDIA ramping up investments in the AI ecosystem.
Open models are essential for innovation. It's necessary for sovereignty, company sovereignty. I see a future where the world uses tons of closed models. I encourage everybody, including my company, to use OpenAI and Claude and Cursor and Cognition and Perplexity. Use everything that you can because it's out of the cloud.
The company entering talks with OpenAI to help backstop the company's lease of a $500 billion US data center. Sources telling us here at Bloomberg the chipmaker may provide a guarantee of as much as $250 billion. Frank Lee of HSBC has a buy rating on NVIDIA and a $325 price target. Frank joins us now for more. Frank, welcome to the program. You've heard the word that's doing the rounds this morning, literally, circular. Frank, your response to that, how circular does this look? Is that a problem?
Yeah, I mean, I think this is not the first time we've seen it. But I think this is the first time we've seen the scale, right? I mean, NVIDIA has started to do deals with the neoclouds earlier, and so this is the first time. It shouldn't be a surprise, but the magnitude and the location, I mean, this is the size in one place. We've seen Broadcom do a similar backstop deal with OpenAI and Anthropic as well. So I think it's becoming more and more the norm, especially as people have questions about, you know, the free cash flow and the sustainability of funding the overall AI capex.
Frank, to that point, does that reveal just a little bit of weakness, some vulnerability in the AI ecosystem that NVIDIA even needs to do this?
Yeah, I think what you're seeing is that you are starting to see questions being asked. So just putting up a capex number like we've seen that has worked before in the past is not working in this market. Now, what is positive, though, is that if you look at even though Alphabet has turned free cash flow negative, the leverage and the debt for most of these hyperscalers are still relatively small. So I think you could see collectively the group able to fund somewhere about over $1 trillion next year and even more in 28, even if it means raising their debt to equity.
Frank, why is NVIDIA backing OpenAI's effort to secure this compute? Evidently, it was reported that several other big companies were interested in leasing this particular data center compute capacity, including Google, including Amazon. Why OpenAI and NVIDIA?
Well, I think if you look at, OpenAI has needed more, I think, help on funding. And you've seen that over the last 6 to 9 months. They've done other deals. And I think, in the case of NVIDIA, they need to make sure that the momentum of OpenAI stays there. I think you're seeing they've already started to commit to to neoclouds, but OpenAI is such a big benchmark and such a big representative of the overall AI trade that I think they need to make sure that they can keep this going. So I think that's why it makes sense for them to backstop pretty much a large company like OpenAI.
Is there any political aspect to this, Frank, considering that this particular data center is being fueled by a Japanese investment in the U.S. It was much heralded. It's on national-owned land in the United States, in Ohio, and comes with SoftBank's backing. So it's NVIDIA, SoftBank, the U.S. government. And can you sort of draw a line through this triangle and give us an understanding of what the backstory is?
Yeah, I think if you look at it, it seems to hit a lot of, or at least check a lot of benchmarks, right? You have politically Japanese sort of related investment now in the U.S. It's being put in Ohio and I think in the heartland of the U.S. And so I think it hits a lot of these check marks in terms of where the investment in the data center is collectively from many different parties and including more international flavor. So it just shows you, I think, the investment in the States is real, right? And it's a very large project.
Frank, are you surprised that the stock's not up more?
Well, I think, the thing is, it goes back to the fact that they have to put up this money. So how much does it drive the overall earnings upside from what's already in the, in people's expectations? That's still a big question mark. I think what this does solve is that, okay, funding problems, concerns, that seems to have gone away for the time being. And so I think that at least stems kind of the concerns that people have about keeping the AI trade alive. But how much does it add to NVIDIA's earnings? I think it's still very unclear right now, like how much incremental is it going to bring to revenues.
We were just talking about China's largest memory chip maker, CXMT, and the insane IPO it just had. What's your reaction to that?
Well, I think, because if you think about the memory trade, it's been one of the best spots to be in tech in the last 6 months. A lot of memory names have gone up almost, 5 to 10x, right? But China hasn't really had a company that has been in memory. And so this is the best way, I think, for investors in China to participate in the memory trade, right? And so I can see why the interest is so strong, because globally people have been able to invest in memory companies all over the world, but we haven't had one in China. Now the question is going to be, though, is are we near the peak of it? Because as you've seen some of the memory stocks outside of China, they've started seeing a pretty hard correction recently because of these long-term agreements. So what the question is, will we see perhaps this fade at some point in the China market after a strong day like this?
Frank, good to see you, buddy. Thank you. Frank Lee of HSBC. Strong kind of understates the move. That wasn't a typo, by the way. 465% plus for that particular name.
Yeah, and it does highlight how people want to get exposure to Chinese-specific technology. But the idea that it's the peak, or it marks the peak, or souring in stocks from SK Hynix to Samsung, highlights they could produce more. And what does that mean? It lowers the price and potentially the profit margin.
There's some of the tech stories so far this morning. The broader market doing better than good, bouncing back by 1% on the S&P 500. With an update on stories worldwide with your Bloomberg Brief, Vonnie has more. Hey, Vonnie.
Hey, John, thank you. In Europe, French and Spanish firefighters are battling wildfires for a 6th day. More than 300,000 people have been evacuated as the fires threaten cities including Madrid and Bordeaux. Temperatures are rising this week, and officials are saying the fires are creating their own microclimates. Israeli Prime Minister Benjamin Netanyahu is planning to meet with President Donald Trump at the White House tomorrow. Netanyahu is expected to push the president to keep a constant watch on Iran's nuclear program. Oil sinking as the U.S. pauses daily strikes against Iran. Brent tumbling below $90 a barrel. WTI and European natural gas also falling. And that is your Bloomberg Brief. Tom.
Bonnie, thanks for the update. Appreciate it. Up next on the program, gearing up for a live meeting.
Every meeting is a live meeting, depending on what needs to be done. But I don't expect that they will make a change. I do think there's not a small chance there could be dissents. We have heard some vocal people that are in favor of raising rates.
A two-day family fight. Exciting stuff down in Washington, D.C. Blake Gwynn of RBC joins us next, live from New York. You're watching Bloomberg Surveillance.
Look at the more successful economies in the region. The key to their success is continuity. But the way our Constitution is written, it actually encourages a lack of continuity. And that's a problem. The term for local government is 3 years. When I first became a congressman, it takes you a few months to learn the business and to make your connections, to network, etc. If, for example, you are not particularly favored in the majority, passing a law in a year and a half is not that easy to do. After about a year and a half, you already hear that there's somebody in your district beginning to campaign and is going to oppose you in the next election. So you have to go back to your district to take care of that. And how much work do you get done?
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
It's the bounce in equities this morning. We're 1% higher on the S&P 500. At the index level, the losses last week weren't great. We were down by 0.66%, I think, on the week on the S&P 500, which is not a major week of losses for the S&P. Within the index, there were some much bigger losses. Say Alphabet down 8% last week following earnings. Tesla down by 18% last week following earnings. Not great. The big spenders were punished. Increased capex at the likes of Tesla, the likes of Alphabet. But the guys who received the money weren't exactly rewarded. I think semis were up on the week by something like 1%. And Intel, it's like the banner, the headline for that sector right now, put up some great numbers, and that stock was down in Friday's session into the weekend.
It has raised the question, how high is the bar? It also raises the question about whether we're on the brink of a sea change, a rationalization in some of the spending. And we hear about it from corporate executives, about the token maxing turning to token rationalization, this idea suddenly people don't want to spend on this exact product. And if they do, they want to see the cheapest potential version that they can get. This, with a backdrop of an endless, insatiable appetite for capital, gives people a little bit of agita.
Setting the tone for this market this morning, this move in crude unwinding some of the gain of last week. Last week up 10%, the week before up 15% plus. This morning down 8. Let's call it 90 on Brent. Still a problem for many a policymaker out there. WTI around 83, including the Federal Reserve. So even with that move, you don't get a big turnaround in yields. And we saw this earlier this year. You had the big round trip on oil a few months ago, and yields didn't really retrace the move higher of the last 5 months, and they hold 430. We're down by 2 or 3 basis points. So let's just sit at the front end of the curve. I think that's a story not just for the US, it's a story for Europe and the ECB as well. One ECB official came out this week, just in the last 24 hours, and said that even with this story in crude, you still might have to hike interest rates one more time at the ECB.
Yeah, I mean, look, the ECB has another potential issue because it's the distillates, and that has a longer kind of runway than just the actual crude prices. But what this highlights is that crude traders can trade on a dime, policymakers can't. So how do they come up with some sort of longer-term forecast, given the fact that this conflict still hasn't ended?
Oil volatility is also inflationary. That is the title of Bank of America Global Research this morning. And they're saying that it's not just the level. Oil volatility can be inflationary if some prices go up with oil, but are reluctant to come back down. And that's the problem the Fed, the ECB, they're all going to have to deal with.
The Fed's two-day meeting starts tomorrow. Under Savannah's this morning, gearing up for a live meeting.
Every meeting is a live meeting, depending on what needs to be done. But I don't expect that they will make a change. I do think there's not a small chance there could be dissents. We have heard some vocal people that are in favor of raising rates. I don't think that there's necessarily the group yet that's ready to make that change.
So here's the latest this morning. The Federal Reserve preparing for a family fight ahead of the latest interest rate decision due on Wednesday. Blake Gwynn of RBC writing, July is only mostly dead, and there is a big difference between mostly dead and all dead. While we ultimately expect the Fed to deliver a hawkish hold, the door to a hike is still ajar. Blake joins us now for more. Blake, good morning. Enjoy the note. Mostly dead, not all dead. What's the difference between the two right now?
Well, that was a Princess Bride reference. I hope that didn't go without mentioning. I at least need to bring that up. You know, I think this is the first time I can really remember going into a meeting with this much uncertainty. You know, it just wasn't really in the nature of previous Feds, you know, to go into a meeting and do something that wasn't pretty much priced into the blackout. So this really is a live meeting. You know, I think it's tough to tell what they're going to do. I think they ultimately hold. But the risk that we do get a surprise is much, much higher, I think.
Is that by design?
Possibly, and I think that's what we don't know. I mean, we don't know how Warsh is going to run these things. I think he probably has a much higher comfort level surprising markets, just given some of his comments around not wanting to provide forward guidance. He has talked positively about this idea of surprising markets. Now, I don't think all of the committee members share that. We've heard from others that say, you know, there's no real benefit to surprising markets. But I think Warsh may feel that way, you know, that they don't want to telegraph these moves. So maybe we are in a new period where these blackout periods are going into meetings. We are going to be more back and forth rather than kind of locked into a decision, you know, 2 weeks ahead of time.
How long can he keep this uncertainty before he has to make a move?
That's a very good question. You know, I think he's been very steadfast in not providing forward guidance. It's just that umbrella of what he considers forward guidance seems to be extremely large. You know, I think of forward guidance much more like an I will statement. He seems to include if-then statements. You know, we've heard those if-then statements, the kind of framework guidance, if you want to call it that. We've seen that from Waller and others who, you know, coming into this meeting, he gave a very clear if-then statement. If we get a hot CPI, then we'll have to think about near-term hikes. Warsh so far has held off on that. I don't know if that's a long-term thing, or he is going to feel the need to start providing a little bit more once he gets his, you know, kind of feet on the ground.
Right now, people seem to be pricing in something like a 30%, 35% chance of a Fed rate hike, pricing in almost a complete rate hike by September. Will they start to price out rate hikes if there is no move, right? I mean, how long can hawkish jawboning actually do the trick of introducing uncertainty if there isn't a move, even on some pretty aggressive rhetoric?
I think they can hold on to it for a while, to be honest. You know, we have a call for the Fed to remain on hold for the rest of this year. That is very much conditional on seeing continued improvement in the labor markets, but more importantly, just continually price cuts into the curve and just keep rolling that forward and rolling that forward.
Do you think it's significant that he's holding a press conference? He said in the past that he'd only hold a press conference if he had something to say. Does he have something to say?
Yeah, I think markets made a little bit too much of those comments. Maybe that's something that comes out of the task force. I don't think they're making any changes for right now. I do think logistically it gets a little weird because now you have all this signal attached to whether or not you have a press conference. If he calls you guys, if he calls the press down to DC and says you all need to be ready, there's going to be all kinds of chatter about what are they announcing. Something big's happening because they called a press conference. So I think if it's ad hoc, you run into this problem of the signaling that's now attached to whether or not you're having or planning a press conference. So if they do decrease the frequency, I think it's much better to do something that's set on paper, like we're going to do every other go back to every other meeting or something like that, if they want to reduce the number. But this idea of ad hoc gets a little weird, and I think you add too much signaling value to whether or not we're having one.
Do you think he's going to have to defend the decision if there is dissenters?
I don't know that he really has to defend it. I think, if anything, what we've seen from him, with the hawkish dots is, I think he kind of likes having something to push the hawkishness off onto. If we do think he's still, in his first couple of meetings, does not want to see a lot of pressure from the White House for coming out, supporting hikes, or getting more hawkish, a very easy way to do that is kind of say, well, the committee, this is a committee decision. We've got these people that are hawkish over here. We kind of did that with the dots in some ways. I mean, he came out, he said, oh, I didn't submit a dot. We have very hawkish dots, but I didn't submit one. So in the same way, you have these dissenters who are kind of saying we'd rather hike. It gives you a nice kind of deflection there, I think.
Do you see a path for lower yields?
It's very, very difficult. I could think of probably 8, 9 credible stories for yields to move higher. It's very difficult to find more than 1 or 2, and most of those run through some kind of major equity correction or, actually heading into some type of recession.
You need some risk aversion or a growth scare.
Yeah, and that just seems very unlikely right now.
A decline in crude doesn't get it done.
You guys were saying in the lead-in here, you've got this kind of ratchet up, but then it doesn't really follow down. And even the last 2 weeks, as we've seen this re-escalation in Iran, yields have been trading almost in lockstep with oil. If you put those 2 charts on top of each other, they look almost identical. So they move up, but then when we see oil go back down, we don't really rally in yields.
They stay higher. Blake, thank you, appreciate it. That's been the dynamic over the last 5 months. Blake Gwynn there of RBC, far more sensitive to crude when crude rallies than when crude declines.
Yeah, and partly conditioned by experience. Look at what inflation has been doing. The fact that it was supposed to be decelerating. We were supposed to be getting back to 2%. And we saw a re-acceleration this year that makes people queasy when they've been saying that they are absolutely tied to the 2% target. And they haven't reached it for more than 5 years.
Yields this morning down 2 basis points, 2's around 430. Looking for a few dissents later this week, potentially. To Blake's point, maybe that does the Fed chair a bit of a favor under pressure from this administration.
Because imagine he's in a situation where he has to hike rates before the midterm election. He could say, well, I put off those hawks and those dissenters for months. I had no choice, but the committee was moving in this direction. I tried as best as I could. So it really just gives him a little bit of cover, potentially.
The press conference thing has become ridiculous, hasn't it? You go to a quarterly cadence, you go back to where we were before. They'll only hike if it's at a press conference meeting with forecasts.
But then if they want to hike, they can't hike at a regular meeting. I mean, either way, just have a press conference every time.
Up next, Lisa Shallard of Morgan Stanley, Tobin Marcus of Wolf Research, Amanda Lynham of Goldman, and Krishna Guha of Evercore, or just don't have any news conferences at all. Just put it all back in a bottle.
Yeah, and then just have other people talking. Shut it down! Jonathan Farrow.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation.
As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time
We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlet Fu, who's taking a closer look at drone companies. With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space.
Excellent reporting. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI. That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
The economy continues to prove resilient. I'm not sure a rate hike is the solution.
A bet on no cuts for this year is really a bet that you get continued weakness in inflation.
I still think it will come down to the data.
The market's not ruling out July, and honestly, neither are we.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the second hour of Bloomberg Surveillance starts right now, and your price action, your scores look like this. Here's the bounce from back-to-back weekly losses. The S&P up by 1%, the NASDAQ up by 1.6. In the bond market, small decline for yields, 2s out to 30s, 2s and 10s down 2 to 3 basis points, 2s around 430. Even with a move this large in crude, WTI and Brent down across the board. We're negative by close to 8%. Brent crude around 89, just south of 90, heading into this week. Right here, front and center, a Federal Reserve decision 2 days away, and then this lineup for big tech: Microsoft, Meta, Apple, and Amazon.
So you asked us to rank this in terms of whether you thought that the Fed or tech earnings were going to be more important, and I would say they speak to each other. Because ultimately the Fed has to consider whether AI is inflationary or eventually disinflationary, and how much capital markets are fomenting some of the inflation that we're seeing in the system that really goes outside of just the oil prices. This is a difficult conundrum to really unpack, especially because the market is kind of queasy about all the capital that they're raising and how expensive this is going to be. So whether the Fed leads or whether tech leads, we're going to get a whole host of information this week that potentially could color the remainder of this year.
And it's really hard at the moment when you have last week us talking about triple-digit crude and this week talking about Brent oil below $90 a barrel because the United States is on pause. But how quickly can that narrative shift? And to Bank of America's point, oil volatility is inflationary. If already products that oil bleeds into is going up because the oil price is going back and forth like a yo-yo, well, that product price is not going to come down nearly as fast, and that is what the ECB and the Fed are going to be dealing with.
It's worth pointing out, as you have done several times, we've now got 2 choke points, not 1. Plus, the cushion's getting smaller, and this move in crude this morning, it's unwinding some of that move. Very close to 90 still on Brent, which speaks to the limited price action in the bond market. Blake Gwynn of RBC was with us just moments ago. You'll see yields move tick for tick with the price of crude intraday when crude is moving high, but on the way back down, the bond market will just ignore it. And earlier this year was a perfect example of that.
Right now, you're seeing other inflationary pressures. You're also seeing, to your point, both of you that are making, distillates take a lot longer for prices to come down. I'm looking at diesel. The average diesel price in the U.S. still at the highest level going back to mid-June at $5.30. So you start looking at this, those still are going to be inflationary inputs down the line.
There's other fronts to watch as well, not just the two choke points when it comes to the Bab el-Mandeb Strait and the Strait of Hormuz. The fact that Iran is going after vessels in the Caspian Sea, and also China's crude imports this month are expected to edge higher. China has been putting a lid on how high prices can go because their imports have dropped. Well, now they're starting up again.
So what's the path to lower yields? Got a big competition for capital. Lisa's talking about it. Lots of debt being issued, lots of equity being issued as well. We've got lots of spending that's pushing up prices too. And you've got a market that's still 2 to 3% away from all-time highs. What is the path to lower yields here? Blake Gwynn, RBC, once again. 2 reasons you can get lower yields. I can only think of 2. His words, basically. 1, some risk aversion in markets, or 2, you start to price in a growth scare, and we don't see either right now.
And those two are connected because the wealth effect has helped really fuel a lot of the momentum that we've seen in the U.S. economy. Neither of these things are things that people want to see, nor are things that people have priced in, because there is one of the lowest probabilities of recession priced into this market in many, many years.
That Fed meeting, that decision, 2 days away. Coming up this hour, we'll catch up with Lisa Shallard of Morgan Stanley ahead of a blockbuster week for big tech. Tobin Marcus of Wolfe Research with crude easing as the US and Iran pause hostilities. And Krishna Guha of Evercore expecting Kevin Walsh and the Fed to stay on hold. We begin this hour with stocks rallying to kick off a crucial week for Wall Street. Lisa Shallard of Morgan Stanley writing, now is the time for risk management and patience, not greed. 8,300 remains our target in the year ahead, but the ride currently looks like a bumpy one. Lisa joins us now for more. Lisa, welcome to the program. I want to give you a shout out. Your words on chips, I think, were really important in the past few weeks. We saw some big companies come out with some big spending, and chips didn't rally big time at all. In fact, Intel sold off into the weekend, even on great numbers. Lisa, what is that validating for you?
Well, when the market stops rewarding good news, you have to pay attention because it signals that the narrative is changing. And right now for us, we're focused on this idea that more is no longer more. More CapEx spending actually is starting to worry the markets about when I get a return on investment and if we're going to get to a place of, in fact, overspending.
What position does that leave the likes of Meta, the likes of Microsoft, the likes of Amazon in this week?
It's very, very, very tough. I mean, I think that these guys have to be extraordinarily clear in articulating their forward guidance, in articulating their forward strategy, and beginning to articulate those paths to monetization. Obviously, our best guess is that the numbers for the current quarter are going to be exceedingly good. We know that, one of the hyperscaler compatriots, Alphabet, Google, reported last week, and you saw what the market did when, Google talked about, even yet higher spending. So I think that they need to be measured. They need to be precise in this guidance and what the incremental spend on CapEx is going to go towards and when folks can expect some positive return on that investment.
Lisa, you said it really well. This idea that when stocks don't perform as you'd expect, that signals a narrative shift. When you see stocks selling off in the face of good news, I wonder if you expect capital markets to start to materially push back on some of these companies. We're seeing it in the equity prices, but we're still seeing the big hyperscalers and others be able to raise huge amounts of money in debt and equity markets. Do you think that anything could change that in the next couple of months?
I don't know that it's going to change in the next couple of months, but we are seeing, the market start to vote with its feet. We just talked about the stock prices. Another thing to talk about is some of the spread widening that we've seen in some of the investment grade debt issuance in the space. I know that for a long time, Oracle's CDS spreads have been a indicator on everyone's screen, on everyone's Bloomberg screen, the first thing that they look at in the morning. And so, I do think that the market is going to start to vote here about excess, about negative free cash flow, and about anxiety around the different paths to monetization.
There's a question people keep asking, where do you hide in this time of volatility? Is it the bond market? Well, bond markets have also been somewhat volatile, especially on the long end of the yield curve. Is it in sectors that could potentially benefit from some of the AI adoption and the efficiencies that could come to fruition? How do you see the landscape?
Yeah, so our strategy in this latest bout of volatility has been very much to play defense and play the AI beneficiary story. So we are moving into some of the energy names, some of the utility names. We've used REITs. Healthcare has been an interesting place to hide out, and we've even nibbled at consumer staples. So doing a little bit more rebalancing inside the portfolio, taking profits from some of the areas like semiconductors and reallocating and balancing the more defensive income-oriented parts of our equity portfolios.
Talking about that volatility, in your latest note, you say, as we were going to print, Brent is back to $99 a barrel. Well, this morning, we're below 90. I think the oil market has been humbling when it comes to how to deal with it on Wall Street. What are you telling investors? How do you think about this? Because it's incredibly difficult to predict, because the president one day is forecasting intensive strikes and then the next day pulling back.
Yeah, well, I think you said it best, right? Which is we have to observe that we don't know the answer on oil prices on any given day, but we do know that it is producing extraordinary volatility in the bond market, where the MOVE index is at a 2-month high. And what that tells us is that we're going to get a reset in some of the term premium in the curve, which means that those longer duration bonds are probably going to hang up there. Jonathan noted that some of this correlation between bond yields and oil has kind of not been symmetric, meaning the bonds are happy to go up with the price of oil, but they're not coming down with the price of oil. And I think that that's a market that is voting that structurally there is a higher bias around oil prices and this geopolitical uncertainty.
So in this moment, how hard is it for officials around the world, central bank officials, to look through the oil price shock?
I think it's impossible. I think that understanding when these hostilities end, how we're going to continue to cushion the blow of these constrained supplies. We've noted before that, the strategic petroleum reserves during the first 3 months of this conflict were extraordinarily helpful. The reduction in China's imports, extraordinarily helpful. But those drawdowns in inventories cannot last forever. And at some point, demand is going to come back into this market, whether the supply is there or not.
Lisa, it's good to see you. Really thoughtful stuff over the last month. Thank you. Been tracking your note every week. Lisa Shallett there of Morgan Stanley with the latest. You have to take note, take away from that conversation, when parts of this market stop rewarding good news.
And we can see that right now, that is exactly what's happening. As Lisa said, it's not just the equity market, it's in the bond market as well, where you have the spreads on longer-term investment grade hyperscaler debt actually widening to levels that are akin to where junk bonds are trading. So there is definitely pushback. Whether it actually hampers their ambitions to keep building out some of this tech capacity, unclear.
I can think of one of those issues that might have been labelled junk to begin with anyway, but was labelled IG.
Which one? Oracle?
I think you all know.
Which one?
Which one that might be. That a big IPO.
SpaceX? Right. I mean, all of them are widening, but yeah, this is the whole idea of,
it was issued as IG and started trading as something else.
Well, it was 40-year Mars debt.
Wider than its BBB rated peers, let's put it that way.
I mean, look, there clearly has been a re-rating in the debt market. How much this has to do with just duration, because it has been disproportionately longer term bonds. How much this has to do with true pushback. It's a little bit of both.
High yield spreads a little wider over the last 2 weeks. Still sub 300 basis points, I think, in spread, Bramo, but moving in the wrong direction.
Just slightly, starting to give a little bit of pushback to what we've seen over the past couple of weeks, but not as exactly pricing in, screaming recession, still incredibly tight levels.
Amanda Lynham of Goldman with us in about 18 minutes' time. Look out for that conversation in just a moment. Let's give you an update on news worldwide this morning with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John, thank you. The U.S. is pressing Mexico to align its tariffs on Chinese steel and aluminum with Washington's tougher measures. Sources telling us here at Bloomberg that Mexico is receptive to the proposal being discussed as part of the broader USMCA negotiations. CME is launching single stock futures today, allowing traders to hedge or speculate on more than 50 of the largest U.S. companies. The contracts will be cash settled on the closing price of the stocks they're tied to. Trading will be open 23 hours a day, 5 days a week. NVIDIA CEO Jensen Huang says China has a leg up on the U.S. when it comes to AI.
My expectation is that China and the United States will continue to advance AI. In the case of China, they're producing more AI researchers than probably all of the world has, in any given year. And so they're producing, if manufacturing intelligence is important, they manufacture the most important version of it, which is the researchers.
Huang also telling our Ed Ludlow that this is the golden age for Korea. And that is your Bloomberg brief. John.
Vonnie, thank you. More from Vonnie in about 30 minutes. Up next on the programme, hostilities on hold.
We're locked and loaded and ready to go, but we're talking to them, so I think while we're talking, we'll see what comes of it. Despite what everyone says about the election, I'm not in a hurry.
Up next, we'll catch up with Tobin Marcus of Wolf Research, live from New York City this morning. Good morning. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television. Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Back-to-back weekly losses on the S&P 500 for the first time since March. This morning, your bounce. We're up by 1% on the S&P. On the Nasdaq, up by 1.5. On the Russell, up by 1.2. It is the everything rally, the bond market rallying too. Yields are lower across the curve, but only by a few basis points. 2s, 10s, and 30s down by something like 2 basis points at the front end of the curve. That tells you a lot about expectations this week, I think, and beyond this week, that there is some two-way risk for this Federal Reserve through the summer, even with this move in crude. WTI and Brent this morning, down by 7, 8%, whatever it is right now. Brent crude at 89, call it 90. That move alone does not shape the story at the Federal Reserve. So much more is happening with financial markets and the global economy.
People have been really surprised by the fact that even as crude prices went up significantly so far this year, you've seen a reacceleration in the labor market. So that's taken the concern about the labor market off the table for the Federal Reserve. And as you get more oil price volatility, it has incurred a significant tailwind to inflationary pressures. That puts the Fed in the hot seat, regardless of the near-term price action in oil from day to day.
Crude this morning down on Brent and WTI. That Fed meeting starts tomorrow, concludes on Wednesday. Overwhelmingly, the consensus is no change. But there is just a small amount of two-way risk introduced by design, I think, from a new Fed chair that is open to this, just killing the hand-holding of the post-GFC era.
He's been quiet. A lot of people have been very vocal, and the Lori Logans and Beth Hammocks of the world are saying, we have a clear problem with inflation and we need to do something. So clearly they've introduced two-way risk, and he has introduced the other way risk by just simply remaining mum.
Wednesday, 2 p.m., when we get that statement, go to the bottom of the statement. I think we're all expecting to see some dissent if they keep interest rates unchanged. Under surveillance this morning, hostilities on hold.
Look, we're talking to them right now. I think they're getting more and more serious as the days go by, for maybe the obvious reason. We're locked and loaded and ready to go, but we're talking to them, so I think while we're talking, we'll see what comes of it. Despite what everyone says about the election, I'm not in a hurry.
So here's the latest this morning. The US and Iran pausing strikes for a third straight night. The Trump administration denying reports the break-in attacks is due to falling stockpiles of air defense missiles.
That's right. When it comes to what's going on, when it comes to Iran, we have seen this before. The president has taken pauses, but we've seen actual diplomatic discussions. Right now, the reporting is really lending hand to the fact that we've just have depleted too many of our munitions, and they're concerned, especially when it comes to the Patriot missile system. At the same time, we also have the fact that this president potentially is a little bit nervous as well as where oil prices were. Near $100 a barrel is when we decided to take this tactical pause. So there's a lot of potential issues going into this decision. But one thing is for sure, there is still a conflict right now when it comes to the Strait of Hormuz in the Middle East. No vessels are getting through the Strait of Hormuz. And the discussions Iran is having right now, they say with Oman, is just about of control of the waterway.
So which one is it right now? You've got markets, you've got midterms. I think they're one and two are the same thing right now. One informs the other to some extent. And then you've got stockpiles. And stockpiles have lingered as a reason, an issue shaping how we approach this particular conflict. It's lingered for the last 5 months.
And it's not exactly a question of whether they have enough munitions to actually keep going. There was a Wall Street Journal article that I thought was really telling about General Dan Kane, going to the White House and saying, look, longer term, there are low inventories, in particular of air defense interceptors, and that longer term, this could present a problem for the United States, and even in the medium term, should there be a conflagration in the region or anywhere else. At a certain point, that is a risk that is weighing on the side of maybe not taking action, especially if there isn't a clear outcome that can be accomplished.
Tobin Marcus of Wolf Research writing the following. He says a durable diplomatic off-ramp is even harder to envision this time. We wouldn't fault anyone who prefers to tune this all out. They're not alone. But we do suspect it'll get worse before it gets better. They're not alone is my words, not Tobin's, though I'm sure he agrees. Tobin, welcome to the program. It's important for us in financial markets to try and get an understanding of what this president is sensitive to and what might shape outcomes in the Middle East. This is the reporting from the New York Times. Among the worries is that expanded hostilities could dangerously drain the diminished stockpile of air defense munitions in the Middle East. Tobin, how much weight should we put on that reporting over the weekend?
I think it's a very significant consideration, and one that we've been talking about since May, if not before, as a factor that could cause a de-escalation. In mid-May, before we got what I think was the sort of final turn towards the negotiation of the MOU, we were flagging both spiking bond yields, which then topped out around 4.67 on the 10-year, levels that we've breached and are still near even after the rally yesterday, and the depleting stockpile of air defense munitions is two things that could essentially force some kind of a durable diplomatic turn, a de-escalation, a deal. And I think those two factors are still very, very live and are driving a lot of what we saw at the end of last week.
But alive for how long, Tobin, until the president decides that it's time to escalate? Or do you actually see a diplomatic off-ramp at this moment?
Well, yeah, it's easy to just stop shooting, which is what both sides have done for now. I think, Iran tellingly is saying they're going to stop strikes on U.S. bases as long as the U.S. strikes stop. But I don't see any indication that they're going to stop strikes on ships if necessary to try and force them to accept their leadership in the Strait. So I mean, we already saw the best attempt to finesse the differences between the U.S. and Iran on control of the Strait of Hormuz in the MOU, and it immediately fell apart. So it is challenging for me to see what a permanent solution could look like unless the U.S. just becomes willing to accept Iran's assertion of control over the strait. And thus far, we really have not been doing that.
There's other reports out, especially about late Senator Lindsey Graham, and this footage that's now starting to come out from a documentary he was filming. And he allegedly told Jake Sullivan that he did not believe Trump's envoys, Jared Kushner and Steve Witkoff, could manage the negotiations because of what he considered conflict of interest. Do we have the right personnel at the table?
Well, it's been a very kind of multifactorial process all through the diplomatic track. We have these multiple third countries mediating. The messages coming into the White House seem to be going not just through Witkoff and Kushner, but also through Rubio, through Vance, who's been, very frontally involved at various stages. So I don't really see any of the diplomatic challenges as being, just down to the composition of the negotiating team. I think basically the challenge is how far apart the two sides are substantively and whether or not they can come together absent more pain for one side or the other.
Tobin, this administration has seen a real loss in popularity as a result of the Iran war. At the same time, Democrats don't have a significant popularity when it comes to the view of how they would handle the situation of Iran. What is the Democratic proposal on how to extract the United States and create some sort of status quo in the region?
Oh, I certainly would not say that there is a kind of a cohesive Democratic strategy. At this point, I think the position from most Democratic leaders is the problem is that we're in this situation already. We starting this war was the mistake. At this point, there's no kind of clean or easy way out of it, which I think is true. If they have the luxury as the opposition party of just being able to point to the president and say, look at how badly he's managing this conflict. And I think that message is working just fine with voters. But, if, God forbid, we're still in the middle of this, 2.5 years from now, and a Democratic president comes in and has to try and uncrack the egg, I think that'll be really challenging.
How does this really factor into congressional support for increases in budgets, for creating some sort of backstop to support the military? I mean, this really raises some real questions operationally. It's one thing, and this happens every single cycle, whether it's Republicans or Democrats. If they don't like the policy, they won't vote for it. But at a certain point, how do you end up with some sort of cohesive policy that can gracefully extract the United States while also having the resources to restock the ammunition stockpiles?
Yeah, on the defense funding front, I think we're in for a relatively unexciting outcome. I mean, we've seen these very large numbers thrown around, the president proposing a total budget of $1.5 trillion. We're not going to come anywhere close to that. I think the base defense budget, we're going to get a basically status quo outcome and a low single-digit growth that's out of the bipartisan negotiations that will eventually kind of pick up in the Senate. Then they're using reconciliation to get through a really quite modest slug of money in the $60, $65 billion range. And I think that's all that they're going to get. I don't think that they're also going to get a bipartisan supplemental in addition to that reconciliation bill. I don't think they have the votes to move a bigger number through reconciliation. So, we can all see the problem now in terms of the defense industrial base, the adequacy of our munition stockpiles, but getting the funding to really structurally change that, I think will be very challenging.
Bowls of cereal just been thrown across trading floors the world over when Tobin Marcus said if we're talking about this in 2.5 years. Can you imagine? 2.5 years still talking about this?
I don't think anyone wants to imagine that, but I think
JCPOA took 20 months to
negotiate. Nobody wants to be doing this in 2.5 years.
But no, I know, but we didn't talk about it because it wasn't causing the price of oil to really shift around.
But we can be living in this status quo for a very long time.
Can we shut that down too?
Shut it down.
Shut it down.
Should I just call you Gordon?
Tobin, appreciate it. Thank you, so kinda. Tobin Marcus there, Wolf Research, 2.5 years of covering this.
John Ramsey.
For those of you that don't know, fantastic program with Gordon Ramsay. Right? They might not know what we're talking about, Brahma.
Thank you.
Shut it down.
weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Bringing you up to the minute news whenever and wherever it happens. I'm Chevrian in Seoul, and this is Bloomberg.
Equities bouncing back up by 0.9% on the S&P following the first back-to-back weekly loss on the S&P 500 since March. It's worth pointing out we have had a tech scare. We have not had a growth scare. If you strip down the big muscle of tech and look at the equal weight was up just about last week. If you look at the individual sectors, bank stocks don't rally for 8 consecutive weeks. We're going through a rough patch in the economy right now, so clearly we're not. Based on financial market pricing of that rough patch, there is no growth scare right now. And the bond market speaks to the same thing. 2s, 10s, and 30s. Yes, we've had a rate shock, if you can call it that. In the last 5 months, we've had a push higher on 2-year yields up to 4.30, comfortably above the policy rate of the Federal Reserve. But we've not had a growth scare. We've had an energy scare as well, but we've not had a growth scare. Crude this morning, Brent and WTI, down by 7 to 8% this morning, 89 on Brent. And these are the shocks we're working through, Brahma, the rolling shocks. You've had them in energy, lots of volatility. You've had them in the bond market. You've not had them in the outlook for growth just yet.
Part of it is because capital expenditures have just absolutely flooded this market with cash. And even if it isn't coming right now, at least in terms of stock price performance from the hyperscalers, you are seeing the efficiencies come from the deployers of AI. I keep going back to this Mike Wilson note. He said that he expects about 100 basis points of net margin expansion through 2027 as a result of adopting some of these AI technologies. So he's talking about software areas that have been left for dead, or banks or other companies. Are they willing to pay for it, though, at the levels that some of these hyperscalers are borrowing? And that anxiety you can see clearly under the surface.
They're issuing so much debt. We start this week, every single quarter. It's my favorite week. I know it is for many of you, too. You get all these tech earnings. You get the Federal Reserve decision. Sometimes you get a payrolls report in the mix as well. If things are really special, they're not this week. And we often ask, what's the most important event? Is it the earnings? Is it tech? Is it the data? I asked that question earlier this morning. I give credit to you for last week for pointing out the following. For the bond market, you might be able to make the argument that the tech results are just as important to the bond market, maybe more so, than the Federal Reserve.
I mean, right now, I'm looking at issuance so far this week. Just government issuance. $69 billion of 2-year notes and $70 billion of 5-year notes today. Tomorrow we get 7-year notes, $44 billion. And then you have to imagine that Alphabet and Meta and Microsoft and all of the other hyperscalers are going to come out after announcing their incredible plans for expansion and capital investment. And they're going to say, okay, we need to sell debt because we need to raise more money. So who's crowding out who, and how do you establish interest rates at a time where everybody has their hand out? And investors have the privilege of being able to say, we want more money if we're going to give you our cash.
Amanda Lynham of Goldman Sachs standing by to answer some of the questions on that issue in just a moment. As we count you down to the opening bell, 2 hours away, let's get you some single names for morning movers. Yahira has more. Hey, Yahira.
Hi, John. Well, ahead of those big tech earnings that you are talking about, we are seeing the entire AI tech trade moving higher this morning. And we start with the neo clouds. Nebius and CoreWeave are both higher. And it is on the back of this NVIDIA story. We're reporting that it's in talks to provide a $250 billion financing guarantee for an OpenAI data center in Ohio. But the bigger picture, what analysts are saying is that the move reinforces confidence in both demand for compute capacity and that the funding needed for the next wave of AI projects is there and moving forward. We are also seeing the chip stocks rebounding after last week's brutal sell-off with names like Intel and AMD up in the pre-market. Yes, helping this is easing tensions in the war with Iran, but the real catalyst will of course come later this week when the hyperscalers report. If Amazon, Meta, and Microsoft raise their CapEx spending, it will only reinforce this idea that demand for semis is still going strong. And we are also seeing Rocket Lab surging this morning, up nearly 5% on this news that the company won its largest ever launch contract, a $266 million deal with the U.S. Space Force. The contract includes 12 launches for the potential for 6 more. John?
Yahara, thank you. Thanks for the update. On our radar this morning, what about top stories? Crude prices easing as the US and Iran pause attacks for a third straight day. Washington's ambassador to the UN saying President Donald Trump is giving diplomacy, quote, some space after threatening to ramp up attacks. Elsewhere, the president heading to Michigan to visit testing grounds for General Motors and deliver remarks on the economy later on today. It comes as early voting for the August primary in the state gets underway. And finally, NVIDIA is in talks to back OpenAI with a financing guarantee of up to $250 billion. The deal would help the ChatGPT creator lease a massive data center in Ohio and adds to skepticism over circular financing fueling the AI boom.
So there are a lot of questions, more questions I would say than answers in this reporting. First of all, what does it mean to have a $250 billion backstop for OpenAI? It's not necessarily an investment. This comes after, remember, in September of last year when they had that $100 billion rolling commitment, letter of commitment to NVIDIA. To OpenAI. NVIDIA also has a $30 billion equity stake in OpenAI. And you take a step back and you wonder why OpenAI? A lot of different companies want to have compute power and want to have a lease with this particular data compute center. You start to wonder, is it too big to fail? Is it getting to the place where it is so important for so many different companies to preserve and to amplify that they are willing to continue to pour money into this company? I don't know the answer to this, but these are the questions that I have this morning.
I'll say this, I haven't started to wander, I've been wandering for quite a while.
Yes, well,
and I know I'm not alone.
Fair. But I think this only adds to that, because what is the purpose in having this company of all companies get the compute, given the fact that other companies have much more pressing and obvious needs for it?
Because they're a customer and they might IPO, and you made a great point earlier about the fact that this is in Ohio. This is a huge, important political objective also for this administration. And I believe it's this week that OpenAI executives will actually be at the White House at the same time that this president is considering, and his team, about how they can somehow take some sort of equity stake in a number of these companies, including OpenAI.
Yeah, the conversation is increasingly about sharing the gains.
Yep.
But perhaps it needs to be about sharing some of the burden.
Well, especially given the scope of some of these numbers. I mean, again, $250 billion sounds pretty crazy, ludicrous, wild, impressive, large. And then you start thinking that OpenAI has suggested that they need about $750 billion of spend on compute between now and 2030. I mean, these numbers are becoming incomprehensible.
It is very circular. We've said that a few times. Looking ahead to Bloomberg Tech, looking ahead to catching up with Ed Ludlow a little bit later after catching up with the NVIDIA boss going into the weekend. More on Jensen Huang later on this morning on Bloomberg TV. Let's stick with tech. 4 of the Mag 7 reporting earnings this week. Investors watching closely for clues on how hyperscalers will fund their AI ambitions. Amanda Lynham of Goldman Sachs estimating AI-related debt issuance has already reached nearly $490 billion this year, with no signs of it slowing down. Writing the following: we continue to expect a range of financing markets will ultimately be required to satisfy the multi-year funding needs related to the AI build-out. Amanda joins us now for more. Amanda, good morning. Good to see you.
Thank you for having me.
So we've seen increased supply, increased demands for capital. Are you starting to see evidence it's pushing up yields?
So it's a great question. I think on the margin, yes, but it's not the main driver for global fixed income investors. Obviously, sovereigns are a big part of a broader fixed income portfolio alongside corporates. If you have an influx of corporates, they're on the margin, that could create a competition for capital, but they are issuing at different parts of the curve. And I think that's an important consideration, is that a lot of the treasury supply has been towards the front end of the curve. A lot of the corporate supply has been towards the long end of the curve. So they aren't competing head to head. I think the bigger issue for credit investors is that there's a lot of focus on the hyperscaler debt issuance,
But as you alluded to, there's a broad array of supply coming from the broader tech ecosystem. And so when investors are thinking about not just issuer concentration constraints, but how much exposure do they want in the credit market to the broader AI theme if they already have equities, that's what's causing, I think, the more careful consideration.
To your point, they've been really tactical about where they issue on the curve, what currencies they issue in. We've seen that from Alphabet, a range of currencies. They've been very smart about it all year. Are we exhausting the creativity? Are we getting close to that limit?
Yeah. What has jumped out to us, actually, in that exercise where we kind of framed the AI debt issuance, which is actually harder than it sounds, by the way, what we noticed is that in Europe, the spreads had been holding in a little bit better. And when you dig under the surface, what you see is that AI-related supply hasn't been as elevated in Europe as it has in the US and other regions. And so the supply dynamic is really important to monitor. I think we still have some runway in 2026 and 2027. There's a lot of capacity. We estimate over $500 billion in the US IG market alone. Again, in Europe, there's room for AI-related supply to pick up. But say in the later years of this multi-year issuance cycle, this is why we expect the private markets to play a larger role, because you will start to bump up against market saturation constraints in our view.
So private markets will play a role down the line when maybe things aren't as rosy. Is that what you're suggesting?
Well, I think, first of all, there's $4.5 trillion of dry powder across the private markets, which is just an astonishing figure. So there's a lot of capital there. Typically, the private markets work best when the traditional markets aren't working the way that either folks want, or they are oversaturated, or they freeze up a bit. So private markets will charge for certainty and financing of execution. I think we should bake in a higher cost of capital. But I think there's broad demand, and you're already seeing it in the 2026 patterns, where some of these companies are actually choosing to issue in the private markets when they already have debt capacity in the US. So I think there will be kind of a natural evolution of, I almost think about it as a waterfall of capital markets depth. And so they'll exhaust kind of the obvious areas for capital markets depth, and then go to the other areas where the cost of capital may be a little bit higher because you're paying up for that certainty.
It's interesting to talk to different people who are analyzing the hyperscaler universe, because they say that rates going a little bit higher won't make a difference. 1 percentage point, 2 percentage point, and more expensive borrowing costs doesn't move the dial. At what point have investors internalized that and said, okay, then I want 1 or 2 percentage points more? And oh yeah, how about another percentage point? If it's existential for you, it's existential for me, and I need more money.
I think that's true. And I actually, if you look through the earnings commentary of what these companies have said, company after company have talked about investing with confidence. Some have even framed the returns on the capital in the high 20% range. So even if you bake in a higher cost of debt capital, on the margin, it's still incentivizing them to deploy. And it's very clear, I think, from credit investors that this spending is going ahead. These companies are committed to this. They believe that they have confidence to do it. The question for investors is, in our view, where specifically should you be taking this exposure, and at what price, especially because a lot of institutional investors have exposure on the equity side in the private markets. And so this is just a balance that we think we'll have to navigate, especially in the later years of this multi-year cycle.
Well, is this continuous, or do you think they're front-loading all the debt now for the build-out?
That's a fantastic question, because actually, if you look at cash flow from operations in 2025 and 2026, it's actually in excess of CapEx spend. So technically, if you just looked at the financials, they would have the cash on hand to do the spending, but they're issuing significantly anyway. So I do believe it's front-footed. That's probably prudent. I mean, that is prudent for a CFO or a treasurer if they know that there's this investment need coming down the pipe, that they would have the financing lined up to do it. But I do think that's notable, is that there's every reason to expect an acceleration in this, because the CapEx estimates per our own equity research analysts are only going to grow from here.
Hello, Alphabet. Felt like a front load earlier this year, right? On both the debt and equity side of things too.
And they timed it perfectly. I just wonder if they can convince everybody that they're front-loading it when they come out and increase their CapEx expenditure plans at every single earnings cycle. And that's what we saw at Alphabet's last earnings result, and that was part of the reason why you saw that pushback.
Amanda, just quickly, high yield spreads wider for 2 weeks. Should I care?
We should care. We actually flagged upside risk to our spread forecast last week. We're starting to feel like we're kind of hitting a tension point where the risks are skewed wider. It's been resilient. We're still tight. But I would be picking that.
What do you think that reflects?
A couple of things. Higher commodity inputs for borrowers, I think in general, higher cost of capital. And then we've just had this persistent left tail of borrowers that haven't improved along with the broader market. And so I think that's something, again, not super focused on the maturity walls, but I think anytime you have that left tail not participating, it gives us some pause.
Interesting. Amanda, thank you. Appreciate it. Amanda Lynham there of Goldman Sachs. Loved your question. It's the right question. I think you've seen that pushback. Just below average demand for the SpaceX debt. Bit of softness was at Amazon last couple of weeks, them too. Starting to see that pushback. Just build just a little bit, just on the margin.
If you have leverage, why not use it? And right now, investors have leverage. If everyone wants to borrow money, then investors should be able to demand a greater premium, and they're doing that. At what point does it become constrictive? At what point do you start to see that being baked into the valuations of some of these hyperscalers, that suddenly they have to actually pay interest expense? They are not treated as more creditworthy than the United States government.
Equity futures this morning on the S&P positive by 0.9%. Some people might think they are, but different debate.
That's fair. Okay, but they're
firmer this morning in the equity market. Lots of debt coming this week. You can see why Bramo's excited. Not about the Fed or the tech earnings, just tons of issuance throughout the week from the Treasury. Let's give you an update on stories worldwide this morning with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John. Thank you. 3 people were killed and at least 5 injured in a shooting in Seattle. The incident happened at a food festival near the Space Needle on Sunday. One suspect is in custody and another is still at large. He's not considered a public threat. NVIDIA is in talks to provide a financing guarantee of about $250 billion to OpenAI. The deal will help OpenAI lease a 10-gigawatt data center hub that SoftBank is developing in southern Ohio. DeepSeek put its latest fundraising plans on hold for now. Sources telling us here at Bloomberg the company's founder is frustrated over online posts by Chinese media that he reportedly made about a June fundraising round. The unverified reports say he discussed a reliance on NVIDIA chips and China's lag in AI relative to the US. And that is your Bloomberg brief. John.
Vonnie, thank you. More from Vonnie in 30 minutes' time. Up next on the programme, keeping a hike on the table.
Warsh has been nothing but clear that inflation is the Fed's #1 mandate.
He needs to do something, and we think 3 rate hikes is the way to start.
The market's not ruling out July, and honestly, neither are we.
Up next, Krishna Gua of Evercore from New York City. You're watching Bloomberg TV.
Is back to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard.
Oh boy.
Can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that. And the speed of the business has never moved faster.
My career might stop. I'll still be driving some.
Yeah. Probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets. Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Got a Monday morning bounce. Stocks are positive, bouncing back from a week of losses. Very small losses at the index level, still 2 to 3% away from record highs. We're down up by 0.9% on the S&P after being lower by a few tenths of 1% last week, down by a little more than a half. On the Nasdaq 100 this morning, up by 1.4. Big tech earnings season just around the corner. 4 big names, massive names reporting on Wednesday and Thursday, amounting to almost a fifth of the index, which is just wild, isn't it? Trillions and trillions of dollars of market cap. In the bond market, let's talk about some supply. Let's do this just for Lisa. 2s, 10s, and 30s this morning, lined up as follows, with 2s at about 430, 10s at about 460. Just bringing up the function on the Bloomberg to go through the numbers for you. Later this week, $69 billion of 2-year notes coming later on this afternoon, alongside $70 billion of 5-year notes. And tomorrow, some 7-year notes. And sometimes that 7-year can be a little bit sloppy, can't it, Bremo, in the years gone by?
It's true, just because it's not as common of an issuance as 2s, 5s, or 10s. I find this interesting. First of all, they're front-loading it ahead of the Fed FOMC meeting. They're scheduled in advance. Don't get too excited. But it's coming alongside a lot of competition. And so you start to wonder at what point you start to see yields going higher, not because of growth and inflation expectations, but just simply because of supply. So I'm watching these. I'm getting excited. What can I say?
The crowding out effect.
Yeah.
I'm right there with you. It's a race to raise capital.
Yeah, I think 2s and 5s are safer, but I think the long end, it's getting a little dicier.
Let's talk about this Federal Reserve. Under surveillance this morning, keeping a hike on the table.
It's all fun and games until the Fed has to pump the brakes.
Warsh has been nothing but clear that inflation is the Fed's #1 mandate.
He needs to do something, and we think 3 rate hikes is the way to start.
If you're Kevin Warsh, I think it's important to go hike when you can.
The market's not ruling out July, and honestly, neither are we.
So here's the latest this morning. Investors ramping up bets the Fed could hike interest rates this week as whip-soaring oil prices cloud the path forward. Krishna Gua of Evercore expecting Kevin Warsh and the Fed to remain on hold, writing, hiking now with no obvious preparation or context would invite rate overshooting. That would be a roll of the dice. Krishna joins us now for more. Krishna, welcome to the program. What kind of descent, if they do keep things on hold, are you and the team expecting?
So I think you would get at least 1 descent. We would guess 2 probably if Warsh keeps rates on hold this week.
Krishna, do you think that does the Fed chair a bit of a favor? That's part of the conversation we've had in the last week. Do you think that would help him out?
Yeah, certainly. Look, Warsh wants to indicate that he is in control. He doesn't want to look like he's being pushed around either way by other folks on the Fed. But having a message from the committee as a whole, including through dissents, that they're serious about inflation, and implicitly they will follow through on a September horizon if the data, war, and oil warrant it, could suit him quite well.
Krishna, if the Fed were to hike rates this week without proper preparation, in your view, what does an overshoot look like? Do you expect the market to price in 75 basis points of rate hikes or more? I mean, what is the ramification for markets?
So first of all, I think if we get a hike, the market will shoot first and ask questions later. It's dangerous to just fire a hike out without any kind of explanation of what your strategy is, what your context is, what you're aiming for. Of course, Warsh could try to put some guardrails around that, but that would require providing the kind of forward guidance that he disdains. He could certainly take a page from Powell's book, say, look, what we have in mind is a limited mid-cycle adjustment, 2 or 3 moves. That would help sort of, contain the market response. But of course, Warsh doesn't want to do that. And if he instead just says, look, it's a one-off decision, we'll make the next decision at the next meeting, I do think the market will price at least 2 or 3, probably 3 hikes. The problem is if he's really serious about getting inflation down a lot faster than would otherwise be the case, then he would have to raise rates by a lot more than 2 or 3 hikes. I don't think that's what he's got in mind, but the market would be left trying to figure out what is the plan here.
There is a school of thought, Krishna, that 1 or 2 rate hikes could potentially, just along the margins, dampen some of the capital markets activity and the risk-taking appetite to at least slow down the pace of issuance, the pace of some of the meat that's been going into the mill, the grist for the mill, to try to generate some of the AI-related inflation. Do you believe that that's true? I mean, do you think that that could be a motivation to raise rates just a couple of times and that it could be effective?
So I think that's a really interesting point. I do think that Walsh is interested in the idea that by injecting just a little bit more uncertainty into financial markets, he can, sort of push risk premium out a little bit and prevent excessive risk-taking in markets. I think that he does have some sympathy for that view. The question is, you've got to be careful you don't push that too far and do something that accidentally triggers a bigger market correction. You won't want to own that, certainly not early on in his tenure. The larger problem is that if you raise rates a few times at the front end, but it's clear it's only a few times, then what happens is that hits your low-end consumer on payday loans or extended on credit card debt. It hits your small businesses that are borrowing off of floating rate debt. It doesn't really have any effect at all on AI hyperscaler capex.
Krishna, do you think the fact that the president took a pause when it comes to Iran and you have Brent crude, WTI falling this morning is giving the Fed a little bit of breathing room?
So I think that is right. It was at least a fortuitously timed pause, shall we say, from the perspective of the Fed. It makes it easier for Walsh to explain if it is a hold, why it's a hold, and why that's still consistent with his intention to assert the Fed's credibility on price stability. But again, there's an irreducible level of uncertainty here because we have no strategy, no playbook from Walsh. So I can't take that probability to 0, even in today's better oil environment.
It's a new world. Krishna, appreciate it. Thank you. Krishna Guha there of Evercore. That speaks to the limited move we're seeing in the bond market this morning off the back of a pretty big move lower in crude.
Yeah, and this is a reason why people are looking at distillates, people are looking at the volatility, and people are saying, ultimately, the inflation is coming from myriad places, and they may have to respond this week.
I am getting messages, though, from viewers talking about the fact that hostilities did stop right before a Fed meeting. And potentially, does this give the hawks and the FOMC an excuse to pause their push for a hike right now? I don't know. I think there's a lot of factors right now that are probably influencing the president's decision. You talked about General Kane, where oil prices are, maybe a Fed meeting, but it is interesting timing.
My view would be as follows. If you were making an argument for higher interest rates based just on the price of crude, I don't think you had much of an argument to begin with. That's what I would suggest. So does this help them maybe on the margin? Possibly. But if your argument is collapsed for higher interest rates based on a 7-8% move on crude, I think you should maybe look for a new job.
On one day, nonetheless.
Right.
Which is why maybe you're not saying the same kind of
Tell us more about that meat in that mill. That's a new one.
All right, I can't do expressions.
Neither can I.
I know, and I keep trying. I once said, you can't beat a dead drum with a horse.
Yeah, that's a classic too. I'm here for it, Brown. We've got a long week ahead of us. Up next, we'll catch up with a big bear on Wall Street. I'm not sure Savita would call herself that, but she joins us next. Savita Subramaniam of Bank of America and a whole lot more.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, succession starts now.
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacqua. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Anything we do in Africa is going to be more risky than the U.S. I think the approach we want to take is how are we being compensated for that risk? And one of those is obviously going to be a valuation question. In our minds, valuation is a lot more attractive in Africa, even if we adjust for some of those Africa risks that a lot of Western investors see. So yes, in a lot of ways, you take some of those models that, as I said, might be more asset medium or asset heavy. There might be some more inherent risks. However, if we're saying we're adding some risk because of that kind of model, but we're now solving a core problem as opposed to maybe a nice to have solution in Africa, that might actually offset it. Where if you're solving something that people really absolutely need and can't live without, in a way that then that's a lot less risky. So again, we'd encourage investors to have a less binary view. In other words, the US isn't risky, Africa is risky. That's going to lead to a lot of complications down the road.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk. You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie. This is your opening trade.
Every trading day, only on Bloomberg.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
We'll start to get into the part of the programming where we pick some real winners and losers.
Hyperscalers will have to show more signs of pricing power and monetization.
A wide swath of the market has been largely overlooked by investors.
The pace of earnings is just not going to be what it was.
Money will rotate back into tech.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the third hour of Bloomberg Surveillance starts right now. 90 minutes out from the cash open, the opening bout just around the corner. Futures positive by 0.9 on the S&P, up by 1.4 on the Nasdaq. A rally in stocks, a rally in bonds. 2s, 10s, and 30s. Yields lower across the curve, just by a bit, down 2 basis points. The 2-year around 4.30. Off the back of this move in crude. WTI and Brent down across the board. Brent crude this morning down by more than 7%, $89 a barrel. As we shape up and line up to face down this week, what a week ahead. In many ways, I know it's not much of a promo for a show that's on every day this week, Monday through Friday, but the week begins on Wednesday. Federal Reserve decision Wednesday afternoon, and then the tech earnings begin. Microsoft, Meta, Apple, and Amazon.
So Wednesday is a big day. I will say that before then, you should also still tune in. Because there's a lot of things. Because you have, of course, Treasury auctions, and you've got other earnings as well from Coca-Cola and UPS and Ford and Visa. So you get a sense of the consumer. I could keep selling it all day long. Either way, it is going to be most important to see exactly what type of reaction to the tech earnings there is in markets. So far, we've seen a pretty disappointing one. And I go back to what Lisa Shallot of Morgan Stanley said, which is that is important. Pay attention because that signals a narrative shift. And right now, more is not more, in her words. If you keep borrowing money, if you keep wanting to raise your CapEx, this market is going to say, hold on a second, what are you spending it on? And we're not sure we want to be on board.
I think people appreciate the honesty sometimes, Bramo. You know, you don't need the clickbait. Sometimes you just say the week begins on Wednesday, the schedule is light over the next couple of days, then things really start to ramp up.
Okay, but let's say UPS comes out and says, nobody wants to ship anymore, and we're actually worried about the economy.
Then you've got a crisis.
Then people care. I mean, then it's like, suddenly people care. I mean, it might be an issue of a union or whatever, but like there are...
Is that what you're expecting from UPS?
There's about 35% of the S&P 500 reporting earnings, not just the hyperscalers.
There's a potential the week actually does start before Wednesday, though, and that'll be if the president decides to resume resumptions of attacks on Iran. We've been talking about these two choke points right now that are critical. Strait of Hormuz, no one's going through it. You have issues over the weekend between the Houthis and Saudi Arabia when it comes to the Red Sea, Bab el-Mandeb Strait, Caspian Sea, there's issues. China's starting to import a little bit more, and the president might decide after this weekend, after they paused, he might decide it's now time to resume. And then potentially you're going to have another huge spike in crude.
I've got the world's greatest piece of software in front of me. It doesn't have a crystal ball. I'm just saying, based on a schedule, anything can happen either side of that schedule, but based on the schedule, things are quiet until Wednesday.
Fine, I'll give that to you.
Okay.
Wednesday and Thursday, you've got about a fifth of the entire index report.
There you go. Can I pick up on the Lisa Shallett point? I think it's the most important point to this market. This was always going to be the issue. Earnings season, the bar for earnings season was always going to be sky high. We had a really positive earnings shock to start the year. The bar crept higher. In fact, it ramped higher coming into Q2. Can you meet it? Can you beat it? And even if you beat it, what do you learn about price and positioning? And I think Intel was just a really great example of a stock that had a run-up of 170%, something like that, into the earnings print. Earnings come out. You wake up that morning after the earnings have come out, the stock's up and everyone's saying, blowout numbers, fantastic figures. We sat around this table and we said, I remember a time when Intel would rally 10, 15, 20% over the last year off just a small kernel of good news. They had a fantastic quarter, the stock barely budged, and then it was lower into the close, into the weekend. And to Lisa's point, when markets stop rewarding good news, or parts of the market stops rewarding good news, Lisa Shallett is making the argument that the narrative's changed, and I think that's an important argument to make this morning.
Maybe markets have pre-rewarded some of these companies for good news that they're now delivering, and then they're selling the actual news, because Intel stock's up 150% so far this year. So they used to be able to rally 10% on really good news, but now they don't have the capacity to do so based on how much has been baked in. Question now is, how high is the bar to actually outperform? And ultimately, we don't know that answer.
The week begins on Wednesday. Now, it started right now. Coming up, we'll catch up with Savita Subramanian of Bank of America.
2 hours ago.
As a relief rally lifts markets. I wasn't here for it. I don't know who that was. Just somewhere else.
Evidently.
Tyler Radke of Citi joins us in a moment, saying investors should brace for higher capex from Microsoft. Lindsay Piegza of Stifel as a divided Fed gears up for a rate decision. We begin this hour with stocks kicking off the week higher ahead of a massive slate of tech earnings. Savita Subramanian of Bank of America has a street low 7,100 year-end price target on the S&P and writes the following: underlying earnings growth remains strong, but good results are no longer enough to move the needle in tech. Savita joins us now for more. Savita, welcome to the program. I'll start with a large question, and I imagine it involves a complex, long answer, and you'll have space for that. But why is the outlook for the index right now, in your mind, so compromised?
Yeah, lots of different reasons. But one is what we've been talking about, and what I've been listening to on the show so far. The good news for tech seems to be priced in. The companies are no longer rallying and outperforming on beats on earnings and revenues. In fact, they've sold off on earnings and revenues. We've had an environment where the rest of the market is actually pretty healthy, but I think it's all been obscured by the elephant in the room, which is mega cap tech. And the idea that these stocks are going to continue to lead us to new highs, I think is no longer the case. Look, I like tech. I think tech is the future, but I think right now we're in an air pocket, and we've been talking about this all year. You know, the idea that we're in an environment where we know that we know AI. We are bullish on AI. We know that companies are spending a ton of money. ISM is above 50, well above 50. You know, CapEx is strong. The economy is strong. Inflation is pretty healthy, maybe even overheating a little bit. But the idea that we're going to see that same leadership from the ballast of the market, I just think is very hard to paint. On top of that, you've got an environment where the consumer has been chugging along, defying all expectations, and maybe that continues. But this year, I think what we've seen so far is a little bit less bullish. So, for example, if you look at layoffs in January, They were primarily in high-paying jobs, in tech jobs. It's been an environment where the higher income cohort of the S&P, or sorry, of the U.S. economy is not necessarily feeling as healthy as they were a couple of years ago, whereas lower income is now getting a boost. So I think that's healthy in terms of broadening, but it's not necessarily, kind of the same story we've seen for the last 3 years.
Savita, I'm just curious, is your 7,100 expectation just that tech has further to sell off and the rest of the market can keep outperforming or chugging along here, but it won't be enough to offset those losses?
Yeah, exactly. And I think we've kind of seen that in certain weeks where you have really negative tech moves. You haven't necessarily seen the market hold up as well. Ideally, we get to the end of the year and we're at a point where the concentration risk in tech is lesser, and you can kind of set yourself up for a healthy 2027 in terms of broadening, in terms of kind of cyclicals just outperforming. But I think this year we're still in an environment where tech is contributing the lion's share of earnings. They're no longer rallying on good news. We're seeing CapEx penalized, and we talked about this earlier in the year as well. You're still in an environment where you're getting positive returns on your CapEx if you're a big tech company, but those returns are thinning. And the idea that we're going to pay such a high multiple for mega cap tech today is hard to sell if your returns on invested capital are actually starting to get depressed.
Savita, I just wonder, the sort of counter argument to this is what happened with Meta and Alphabet late last year when they announced a lot of CapEx and they were punished severely for it, and then they delivered these incredible earnings on an ongoing basis. And once again, their stocks outperformed. Why are we not set up in the same way? If people are just getting nervous and you still see companies delivering well beyond any expectations.
Yeah, I think that it's partly positioning, right? I mean, you look at when tech sells off, then you see a kind of comeback because investors are like, okay, these companies aren't broken. I still want them as core holdings in my portfolio. Maybe I'm going to add a little exposure. So I think liquidity has been a big driver of tech really holding up better than one might expect. Liquidity has been amazing. I mean, if you think about it, this year we've had pretty low levels of volatility in the market. We've had, a shock or two in terms of geopolitics, but the market has held up quite well. And I think that starts to change today, because if you think about inflows into equity markets, we're at a point where asset allocations are pretty healthy in equities, maybe not as healthy as they were in the tech bubble, but we've got, less cash sitting outside of equities, except for in retiree balance sheets. And I think the idea that you're going to continue to see that machine of cash risking up and going after tech stocks, that narrative to me just seems like it's less likely in the years to come. I do think there is one pocket of the market that is going to catch a very strong bid, and that is inflation-protected equity. And here's the idea. If I'm a retiree and I've got, like $7 trillion in cash just sitting there, it's been sitting there since the Fed started hiking interest rates, that cash right now has a negative real return. Cash is the worst place to be during periods of higher inflation. So retirees, I think, are going to start to look for inflation-protected income. Are they going to get it in tech? Not necessarily. I think they go back to things they used to own, like REITs and utilities, MLPs, kind of the yieldier cyclical areas of the market that can actually grow with inflation and keep up and return capital to retirees who need income, basically. So I think that's one area of the market that hasn't moved as much as it should. And that's where we would really be, very bullish. So I guess just to put a point on it, if you had to pick an index, it would be large cap value, yieldier, kind of cheaper stocks that offer some inflation protection.
Savita, appreciate the explanation. It's good to see you, as always. Savita Subramaniam there of Bank of America does not like the SPX as an index, market cap weighted, but there are reasons to like stocks and other things in other places.
And we've seen this, frankly, in the way that people have been voting, in the sense that the equal weight has done significantly better. And you've all actually seen the Russell 2000 outperform, even with rates higher. So why? And this is the reason why.
It's a tech scare. It's not a growth scare. That's the issue.
Problem is, can you get a tech scare without it infecting everything else?
Given the wealth channel, the importance of the wealth channel, yeah, that's a really important question.
And I think that that's one that increasingly people are going to have to look at.
Let's see what this morphs into. But right now, you've got a shock into bonds. You've had a shock into energy. We're just waiting to see if that materializes into a growth scare this Fed might have to respond to further down the line. That's what you've got to wait at the Fed as well, right? You can see reasons to hike now, but there might be people on the committee worried about things transpiring in the future that might give them a reason to cut. And you don't want to be that central bank that hikes and then cuts. No one wants to be that central bank.
Yeah, I mean, although if you're going to get rid of forward guidance, maybe you can get rid of any kind of consistent patterns. Hike one rate, have one meeting, cut the next. But you're right. Maybe people are looking ahead and saying, if there's going to be a tech sell-off, what are we going to do with that? You don't want to necessarily benchmark to the stock market, but the wealth transmission has become that much more powerful.
That and the amount of capex into this economy, it's become like one trade in the equity market and one engine in the economy. In some ways, I'm stretching the truth, of course. Let's get you an update on news elsewhere this morning with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John, thank you. The US pausing strikes against Iran for a third straight night. Washington's ambassador to the UN saying President Trump is giving diplomacy, quote, some space. Iran halting its retaliatory strikes and holding talks with Oman over the Strait of Hormuz. Israeli Prime Minister Benjamin Netanyahu plans to travel to New York to attend the UN General Assembly, despite a clash with New York City Mayor Mamdani over the International Criminal Court's warrants out for his arrest. Mamdani had called Netanyahu a war criminal and said he is not welcome in New York City. A dangerous heat dome is gripping the central United States, pushing temperatures and power demand higher across the plains, Midwest, and Mississippi River Valley. More than 100 million people are under extreme heat, with some areas expected to feel as hot as 116 degrees. That's your Bloomberg Brief. John.
Vonnie, thank you. Appreciate the update, Vonnie. Thank you. More from Vonnie in 30 minutes' time. Up next, the morning calls, plus Tyler Radke of Citi saying to expect big spending from Microsoft. Microsoft reporting in a few days' time. Live from New York City this morning. Good morning.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
The leverage and the debt for most of these hyperscalers are still relatively small. So I think you could see collectively the group able to fund somewhere about over $1 trillion next year and even more in 28, even if it means raising their debt to equity.
Frank Lee of HSBC on a tech story so far. So far this morning, the pushback sounds like this. This equity market has stopped rallying on good news. You've heard that from Savita Subramaniam of Bank of America moments ago. You heard that earlier on this morning from Lisa Shallett of Morgan Stanley. We've had good news. Earnings have been great. Earnings have been tremendous, fantastic for that matter. Alphabet, an example of that. But the worries are elsewhere on capex, cash flow, and price and positioning. This morning, we're higher by 0.8% on the S&P, bouncing back from a week of losses on the Nasdaq, higher by 1.3%, and tracking this move in crude, tick for tick, move for move. The move in crude looks like this: Brent back at 90. So we were down by close to 10%, now down only 6 or 7. The bond market has ignored most of the moves throughout this morning. So far, just shaking it off. Twos virtually unchanged. Yields still around 430 heading into this Fed meeting.
There are a lot of other reasons for people to be worried about inflation. Nonetheless, when you take a step back and you take a look at the week ahead and you talk about the performance of some of these shares in the wake of good earnings, you wonder if it would be different if oil prices were more stable. I'm serious, or if there is some sort of sense of a backdrop that is more amenable to these companies continuing to turn their capital expenditure wheel.
Yields this morning down a basis point or two. Some of those companies, some major companies reporting later this week. We'll talk about that in just a moment. Let's get you some morning calls. First up, Bed raising its price target on Intel, saying last week's results validate the turnaround strategy. Didn't help the stock. Stock is up this morning by 1%. Your second call from Needham raising its price target on TSMC, expecting a stronger foundry business with little competition. And your third and final call from Philips Securities, upgrading Alphabet to a buy, saying its AI ecosystem should support future growth. The name is bouncing back this morning from a week of losses. We're up by 1.3%. Let's stick with tech. NVIDIA said to be in talks to help OpenAI finance a massive data center in Ohio. Sources telling us here at Bloomberg the chip maker would backstop up to $250 billion. Fresh off an exclusive conversation with the NVIDIA CEO, Bloomberg's Ed Ludlow has more. Ed, good morning to you, sir. Fantastic exchange. What do you make of the news this morning?
Yeah, I mean, there are circular financing concerns. They're not universal, but essentially, NVIDIA is still helping to finance or backstop the biggest names that buy its chips. So what Bloomberg's reporting is two separate things in the Ohio case study. Basically, NVIDIA guarantees the leases, $250 billion, but also helps its customer OpenAI finance $350 billion worth of NVIDIA chip purchases. So in aggregate, that's a lot of money. Where NVIDIA basically runs as the bank. The reason I say it's not a universal concern about circular financing is, like, look, read Bloomberg Intelligence as one example. They actually see it as constructive for the data center space, because they're saying that NVIDIA gives everyone confidence. The banks themselves would be willing to lend against NVIDIA's name. It gets projects moving. It greases the wheels because NVIDIA's involved. But yeah, certainly NVIDIA doing business with itself, the story is back.
Just quickly, you've asked Jensen about this. I know you have. How does he respond to the question and that word circular?
Yeah, so every single time to date, the response has been, we do not contractually require the other party to use the financing to buy NVIDIA gear. They're free to go and buy the chips from whoever they want. In this specific case, remember, this is Bloomberg reporting, citing sources on the Ohio $350 billion of chips. We don't know if that's the case. NVIDIA didn't respond to a request for comment. None of the other parties did. Part of it's communication. So, like, on the SK number that came out Friday, when I was speaking to Jensen in San Francisco, I was like, explain the number. And he was like, well, it's $500 billion, but it encompasses everything we're going to spend and everything SK is going to spend. And net, the number's $500 billion. It doesn't really explain the direction of travel of the funding. And so, like, that's a part of the story, is like giving us some detail on who hands cash to who and in what increments and at what stages.
It's an important distinction. Ed, appreciate the clarity and looking forward to the coverage later on this morning. Bloomberg Tech, a few hours away with Bloomberg's Ed Ludlow. A few days away, a massive slate of earnings coming up, including from Microsoft. They report after the bell on Wednesday. Tyler Radke of Citi is bullish on the stock, and he writes the following: cloud and AI-related revenue streams can sustain double-digit growth, but the aggressive ramp in CapEx could hurt the longer-term trajectory. Tyler joins us now for more. Tyler, welcome to the program. A simple question, I guess. How does Microsoft avoid doing an Alphabet, given what we saw last week?
Yeah, certainly was a bit of a cautionary start to the mega cap tech earnings. But I think the big difference here is that Microsoft, in our view, is still going to remain free cash flow positive, right? And so that was one of the concerns. I mean, we are expecting some upward revisions to CapEx. We are above the consensus estimates, looking at about $260 billion of total CapEx for the full year FY27. But look, I think what makes us optimistic about this print, not only do you have the potential for their cloud Azure business to reaccelerate, but we actually think you get sort of a second leg to the AI story with Copilot. So we raised our Copilot numbers. We actually think the product is, after years of testing and selling it into the field, it's kind of hit that mainstream adoption cycle. And so we do think you kind of have two of their most important businesses bending the growth curve, reaccelerating. And so we do think that is a pretty positive development here, especially where shares are trading kind of near multi-year lows from a valuation perspective.
Tyler, this is where actually Morgan Stanley thinks that software-related companies could do really well in the wake of efficiencies that are created as a result of artificial intelligence. Are companies, though, the end customer of Microsoft, willing to pay extra for things like Copilot to offset the incredible costs that we see coming down the pike?
Yeah, I think you are seeing that. I mean, last quarter, they announced 15 million active Copilot seats. We think that number could be north of 20 million this quarter, so adding more than 5, potentially 10 million seats to that. And I think more importantly, one of the big developments you've seen over the last 90 days is this focus on right model for the right job, model efficiency, model routing. And as you think about Microsoft, they have their own AI models, some of which are actually powering Copilot. They've been reducing their internal spend on OpenAI and Anthropic, but they also support a full fleet of both proprietary frontier models as well as open source. And so I think companies don't want to be locked in, right? We're seeing these models leapfrog each other basically every release, every week. And so having somewhere centralized where you can run, both to the specialized models, but also the frontier, I think is very lucrative. In a lot of our survey work, Microsoft stands out as still the #1 kind of enterprise AI vendor from that perspective.
I'm sure Microsoft knows that you're not going to have a good response in markets if they announce a huge CapEx plan going forward that significantly exceeds expectations. Why would they? Is it still existential to keep spending at these levels?
Yeah, look, I don't think, in our view, right, I mean, you have a lot of large capital expenditures. Microsoft does not stand out as irresponsible in our view, right? You look at their CapEx as a percentage of revenue, you look at their ROIC relative to some others in the space, and look, last quarter, what did they tell you? 2 quarters ago, they said our Azure business would have been growing several points faster. Like, they are sold out for quarters, right? So it's not like a situation like we saw from Meta, where they have excess capacity that they're going to go and resell, right? So their core business, their revenue would be growing faster if they had this capacity. So in our view, this is not some speculative investment where the returns are unclear, where there's no real revenue, near-term revenue potential. So I do think it is in their best interest to spend. Conversely, if they were to come out and cut CapEx, I also think that would be viewed negatively, just because why would they be cutting CapEx when everyone else is raising?
Classic rock and a hard place. Tyler, thank you. Appreciate it, sir. Thanks for the coverage. Tyler Rackett there of Citi on Microsoft, reporting in a few days' time. Up next, we'll catch up with Lindsay Pietra of Stifel, with policymakers divided on whether to hike or hold. Plus, Yahira, has your morning move as a potential new deal between NVIDIA and OpenAI has those two names on the screen right now rallying in the pre-market.
9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
60 minutes out from the opening bell, stocks bouncing back from back-to-back weekly losses on the S&P and NASDAQ. We're up this morning by 0.8 on the S&P, up by 1.3 on the NASDAQ 100. In the bond market last week, 2s and 10s, double-digit gains on 2 and 10-year bond yields. This morning, declining by 1 basis point to 3 basis points lower. On a 2-year, 431. On a 10-year, around 464. Not a big rally in the bond market off the back of this move in crude. WTI and Brent crude this morning down by something like 6%, off the lows of the session and back into the 90s at $90 a barrel. 13 days of strikes and a 3-day pause, and some two-way risk to the week ahead for the situation in the Middle East.
Well, potentially what you're seeing as well is the Saudi Arabia coming out and talking about the fact that confirming what happened with the Houthis going after their energy installations. So even though we have the President of the United States hitting pause when it comes to the strikes on Iran, there's another choke point that the global energy market needs to deal with. Potentially that's why we're back in the 90s. But where this goes, it is anyone's guess from here. What we do know is that we are living on low level of inventories while the conflict is still brewing.
It speaks to the limited move you're seeing in the bond market. And bring up yields again, and you can see it. 2s out to 30s. You're seeing a pretty small move lower following a double-digit yield move on 2s and 10s through last week. Why? You kind of outlined what's happening with crude, volatile, uncertain, but also it's only one part of a much, much bigger story, and might not be the key part for many of the hawks on the committee that are making the argument to hike rates.
You even had some of the previously dovish members come out and talk about the AI inputs, the CapEx spend, and how much that's really gone into the inflation that we've seen. Also, you're seeing it in other areas as well. How do you distill the prices of oil in real time from the distillates that are the products that actually are considering continuing to have elevated pricing? It's very difficult, which is the reason why a lot of companies have been passing along the increasing costs, and thinking of airlines in particular, to offset those increased costs and the volatility in their bill. This is the reason why it's hard to really just overlook a one-day move.
Imagine unemployment was close to 4%, and the government came out and said, we're going to have a $1 trillion spending plan. Everyone would be like, where's it going to go? What are you going to buy? And then they say, we're going to do it for one sector. And people would start to worry about the kind of price pressure you'd see. We're basically seeing a $1 trillion spending plan come from a handful of tech companies doing the same thing with unemployment close to 4%. Is it any surprise that you're starting to see some price pressure build here, there, and everywhere when the economy was already in a decent place to begin with? Things are picking up again.
Why do you think your iPhone is getting more expensive? Because of the memory chips that other people are putting into it.
And Bramo, people are paying for them.
Exactly, because they have the extra wealth from their investments, and the wealth effect has been a huge driver of a lot of the reason why people keep spending. So it comes into the circle where you said it's the engine, it's the driver, it's absolutely everything when it comes to the trade of the U.S. economy this year.
All of the above, all of the above. Let's get you some single names, some morning movers. Yahara has more. Hey, Yahara.
Hi, John. We are seeing a rally across the tech trade ahead of those big tech earnings, and we start with the neoclouds. They are surging on a reporting that NVIDIA is considering a $250 billion financing guarantee for an OpenAI data center in Ohio. And bigger picture, the way our analysts here at Bloomberg put it, is that the reason the likes of Nebius and CoreWeave are higher is this reinforces confidence in both demand for compute capacity and that the funding for the next wave of AI data center projects is there and available. Turning to the chip sector, that is also staging a rebound this morning with names like Intel up 1% after a tough sell-off on Friday, even after it posted stellar earnings. Yes, easing tensions with Iran is helping this trade, but the real catalyst will come later this week when the hyperscalers report. And if Meta, Amazon, Microsoft raise their CapEx plans, it would signal that demand for these chips is going strong as part of that AI build-out. And we end on T-Wave Quantum. Those shares up 7.4% after the company announced a partnership with AT&T. And the idea here is that the telecom giant will use this quantum computing technology to help make its network more reliable, including spotting outages quicker. So hopefully all this means is better cell service for all of us. John?
Yara, thank you. Appreciate it. Appreciate that too. The Fed's two-day meeting kicking off tomorrow ahead of a rate decision on Wednesday. Mike McKee is down in Washington already, preparing for the major event a few days away. Mike, how live is this meeting for July?
Oh, it's definitely very live, John. We've got an economy that is strong. We've got AI that is growing like crazy. Just a few minutes ago, we got durable goods orders in, and while they come in lower than anticipated, up 0.3% compared to the 1.8% forecast, computers and electronic products up 3.1% in that report. So definitely some AI influence going on, and the Fed has been worried about AI inflation going forward. They're worried about a lot of things, but here are the reasons why they might do one thing or might do another. You want to look at reasons to hold. Even though we're seeing AI inflation, June CPI and PPI slowed, and the PCE is forecast to slow as well. That comes out the day after the Fed meeting, and what would it look like if they raised rates to fight inflation and then the next day their target inflation went down? Hiring has slowed, of course. Tariff inflation is fading. We got new tariffs last week, but they really don't change the percentage change in what people are going to have to pay. And the economy doesn't seem to be overheating. Atlanta Fed right now says 1.7% for the current quarter. But there are reasons to hike. The renewed war pushing prices higher again, especially for energy. They're down today, but they have been up, and gasoline prices are certainly up this morning. Inflation has been above target for 5 years now, and some members of the Fed saying that's way too long. We got to get serious about this. Financial conditions, if you look at it, are easy, and you've got all this borrowing going on in the AI world, and it's got to have some influence on overall asset prices. Are they too high? And also, the last one is, of course, that raising rates, Kevin Warsh would build his credibility in the markets. The question of whether he's a captive of the president would go away. If they don't do it tomorrow, or Wednesday rather, this is what's coming up. We've got 3 more FOMC meetings before the end of the year and Election Day on November 3rd, so that probably takes out one of those meetings. But they could set up for September if we see prices continue to rise for energy, and the expectation is we get inflation ahead. We get 2 more PCE reports, 2 more CPI reports, and 2 more PPI reports before we get to that September 16th meeting, so the Fed would have a lot more data, though whether or not Kevin Warsh wants to talk about what might happen ahead is still an open question.
Mike, I was ready for the weekend early last week. It sounds like you're ready for the end of the year already. Mike, appreciate it. Mike McKee down in Washington, D.C. Can we bring up that calendar again? Key dates for the Fed. This is what the president calls it, the easiest job on the planet, right?
Yep.
Isn't this what he calls it?
He
Right?
calls it, it's like
That's
flipping,
the year ahead. That's
it's
the year
like
ahead.
a coin toss, flipping a coin.
They've got a few more coin tosses to go. September, November, we've got the election. October, you got that meeting late October, then December. Brammer, you're looking forward to December 9th? Shut it down.
Shut it down. I'm looking forward to what we're going to see on Wednesday.
What
I think
does
it's going
the
to be
world look
fascinating.
like in December, right? Can you even think about that far out right now? I feel like I've been doing it week to week, day to day for the last 5 months.
We'll be 8% up, and we'll have just sort of a mild
call.
increase in rates, but the Fed will be on hold still by December 9th.
When I start to think about how this year has unfolded, I'm reminded that we were all off our holidays and the new year when Nicolas Maduro was captured.
Yes.
And then that was the tone that was set for the cadence of the news flow this year.
First quarter felt like a lifetime. Since the first quarter ended, blink of an eye. blink of an eye. Here we are at the end of July.
I feel like it's because we were supposed to have fun and we didn't really have it.
Something you were looking for, Bramo.
See, everyone comes in, they say, like, well, summer was supposed to happen and it never has. Like, the summer has been incredibly busy. Everybody who's come in has actually said that. Have you not heard that?
Yeah, I've heard the same thing. Yeah.
So there you go. So it's just gone by
underwater
very quickly.
Yeah, everyone is
and
in the
not
deep
underwater
end.
in the good way.
Lindsay Pieggs has been busy. She writes the following over at Stiefel. For policy, just as in politics, conflict often begets gridlock. As such, rates are likely to remain on hold, at least for some time longer. Lindsay joins us now for more. Lindsay, welcome to the programme. On hold then, but just describe what the debate might sound like that starts tomorrow and concludes on Wednesday.
Well, I think Mike really laid out a lot of the factors. When you look at the latest inflation data, the disinflation data, I think that clearly swings the pendulum into the dovish camp, giving them credence for the fact that price pressures may abate into the end of the year if we do see the impact of tariffs fall off, and if we can see some sort of normalization in the energy market. On the flip side, even with this recent cooling from peak levels, inflation is still double the Fed's intended target. And with the risk of upside pressure, further rising tensions overseas, resulting in additional upside pressure in energy costs, this puts the Fed, the more hawkish members, at an uneasy position that we should take this more aggressive action and reverse some of that policy easing that we saw into the end of last year. So as I suggested, this ongoing conflict, this clear divide between the hawkish and more dovish members is likely to result in policy simply remaining steady, on hold for the next several meetings.
Lindsay, what do you make of the point that Krishna Guha was making earlier, which is that the Fed were to hike rates at this meeting, that the market would price in 3 or 4 rate hikes immediately, that they would shoot first and ask questions later? Do you think that that's the likely path of travel? Should they move this week?
Well, I think it depends on the communication that accompanies that decision. But if there's a lack of communication and the Fed simply comes out, makes that aggressive move higher without any guidance, any forward guidance for what we can expect going forward, I think the market would anticipate that the Fed has shifted their line of thinking to the prospect that inflation is rising, it's not under control. And if that's the case, it would be unlikely that one rate hike would quell that concern and convince the committee that inflation was back on a pathway to that 2% target.
Lindsay, it's incredibly unusual, and you know this very well, that when you see an increase in energy prices to this degree in the face of a shock, that you get a sudden real expansion in the labor market, that you see a real acceleration in terms of job creation. How do you understand that? Because that is exactly what's happened this year, and it's incredibly unusual.
It is, because typically when we think about the economy, the fastest way to derail the U.S. consumer is by sustained heightened energy prices. And as a consumer-based economy, if the consumer isn't happy and healthy out in the marketplace spending, we can't expect much expansion or much growth then from the broader economy. But you're right, we're not necessarily seeing that. We're continuing to see this pressure at the pump, higher energy prices, but the economy is still expanding. Now, certainly not at an overly robust pace by any means, but we maintain this decent pace. And as we look out to the second quarter, we're likely to continue around this 2-ish% with still stable conditions in the labor market. Again, we have lost some momentum, but the average pace around 100,000 per month does suggest that the latest pathway of higher energy prices has not yet derailed the consumer or the broader economy.
Lindsay, do you expect dissenters this week?
I think it depends, again, on that rate decision. If for some reason we see the Fed come out and decide to make a policy move, absolutely, I would expect to see some dissensions. However, if we see the Fed take the more steady pathway, maintain the current level of policy as I expect, the dissents may be reined in if there is a very ample conversation around a potential move in one direction or the other down the line.
We've been having this conversation all morning, and Blake Gwynn of RBC was talking about it, that he actually thinks the dissenters, if they hold, could help Kevin Warsh. Do you think that gives him cover?
I think right now, Kevin Warsh very much would like to steer the monetary policy ship to a lower interest rate environment. But I think right now he recognizes that that's a more medium to longer term outcome. Given the level of inflation, given still the upside risks, I think at best, Warsh can expect to hold policy steady and along the way simply downplay any prospect for interest rate hikes, even if the conversation begins to move in that direction.
Lindsay, it's good to see you. It's great to get your reaction. You look ahead to this Fed decision. Lindsay Piegza of Stifel, in some ways reflecting the consensus view right now, which is unchanged. Hold. So where does the two-way risk come from? On the margin, it comes from the hawkish elements of the FOMC that's made a lot of noise coming into this meeting. I'm thinking of Beth Hammack, the Cleveland Fed president, with a LinkedIn statement going into the previous weekend, making her thoughts clear on things into the blackout period. It also comes from the lack of guidance from the Fed chair himself. This is the kind of move that he wants, the kind of mood on Wall Street that he wants, which is some two-way risk and get away from the hand-holding. And I think maybe it's more of the latter than it is the former right now. Typically, if a Federal Reserve moves and goes to hike interest rates, there would have been a piece in a Wall Street Journal earlier this week, right? There would have been a report, something indicating in the blackout period they were close to that, and that's not the world we live in anymore.
Well, interestingly, a lot of people say that that was actually the prior Fed chair's goal, and actually that's what he did in terms of the forward guidance, and that before that there wasn't the same kind of tradition of a story in the Wall Street Journal guiding the rest of the market. Question a lot of people are saying is, what purpose would it actually have right now? Would that actually dampen inflation? And I think that that is the answer. That just is less clear.
Yields this morning down a few basis points off the back of a sell-off in crude. Let's see if that holds. Let's give you an update on news elsewhere this morning with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John, thank you. Maine Democrats tapping former Republican Troy Jackson as their nominee for a pivotal Senate race. Jackson replaces Graham Plattner, who bowed out after rape allegations. A University of New Hampshire poll showing Jackson leading five-term GOP incumbent Susan Collins by 3 percentage points. Oil sinking as the U.S. pauses daily strikes against Iran. Brent tumbling and trading below $90 a barrel. WTI also falling along with European natural gas. And the CME is launching single stock futures today, allowing traders to hedge or speculate on more than 50 of the largest U.S. companies. The contracts will be cash settled on the closing price of the stocks they're tied to. Trading will be open 23 hours a day, 5 days a week. That's your Bloomberg Brief. John.
Vonnie, thank you very much for this morning. Appreciate it. Up next on the programme, we'll set you up for the day and a big week ahead. Plus, we'll catch up with Holly Liss of BTG Pactual as Wall Street awaits a crucial week of big tech earnings.
We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is like very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake.
While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
Every weekday, Bloomberg puts a spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
When the market stops rewarding good news, you have to pay attention because it signals that the narrative is changing. For us, we're focused on this idea that more is no longer more. More CapEx spending actually is starting to worry the markets about when I get a return on investment.
Lisa Shannon of Morgan Stanley, when the market stops rewarding good news, is that where this market is at this morning? Just bring up the week ahead. And let's look at those 4 tech names that report on Wednesday and on Thursday. You'll hear from the likes of Apple, Amazon, Microsoft, and Meta Wednesday through Thursday. How high is the bar for them? They're all different companies, of course, and Apple, of course, is an outlier in many ways compared to those names on the screen. But after the experience of Intel, following the experience of Samsung and others, you can pick others. Are we at this point where this market stopped rewarding good news because we are starting to learn more and more about price and positioning?
You know, it's really important that you mentioned Intel and Samsung when you were giving that narrative, because it isn't just the hyperscalers, it isn't just the spenders, as you pointed out many times. It's also the receivers of that capital also underperforming after reporting really good earnings. Does that just mean that in general people are souring on tech, that their tolerance for gains that have been so massive just isn't there anymore? Or is this something that just simply is a sort of risk-off move that's going to then reassert itself as risk-on later in the year?
And then potentially, how vulnerable is the market going to be to anything we hear from Kevin Warsh, the fact that we have these big tech earnings this week? I know we're on air Monday to Friday, but Wednesday's really when it starts. And also, I look forward to Wednesday because extra innings, when I get to watch you two do more hours.
Oh, nice. Nice, okay. That's a good way to start the week. You see Bramo's impressed face.
Well, come on. I love the extra innings you guys do.
It's kind of you, thanks. Do you want to join us?
I like watching.
You're busy?
I like being a viewer.
You're busy on Wednesday.
And, you know, I being in some thoughts.
Special coverage, 1:30 Eastern Time, with Anne-Marie, hosting solo, going into the Fed decision at 2 p.m. Eastern. Yeah, we'll watch from home. Okay. Stocks pushing higher this morning ahead of a massive week on Wall Street. We've got those big tech earnings and that Fed decision and special coverage of that Fed decision right here on Bloomberg TV. Lisa will be here. Tom will be here. I'll be here. Holly List of BTG Pactual joins us now for more. Holly, welcome to the program. That high bar for tech, let's just start there. We've heard from a series of guests this morning that are becoming increasingly convinced that because this market has run up so much, particularly the chip players and other tech names, that we're stopping rewarding good news. Do you share that view?
I don't necessarily share that view, John, because look at this morning. We see oil prices are down 6%, and the market is rallying. S&Ps are up, yields are down, the 10-year futures are up. So PPI come down at the last report that we had, at the 2 last reports we had last week. And if that continues, I think that's giving them the breathing room they need. And given that he's being a little bit less, he's being closer to the vest with his communications, that gives him actually a little bit more flexibility to move as the data dictates. And certainly oil prices are going to be one of those inputs that he's going to be looking at.
Can they look through these oil price moves that we're seeing? I've been saying it all morning. Oil's just moving like a yo-yo, literally. 10% moves sometimes from week to week.
Yo-yo is a good definition. It was up 15% 2 weeks ago, up 8% last week. Now we're already down 6% today. So I think what you need to look at is the general trend of it. These price moves higher have been very dramatic, but now we're starting to see them coming off just as easily. If we get that on a sustained basis, especially as we move into Labor Day in the U.S., then I think they're clearly going to take note of it. They're not going to be able to not take note of oil prices coming down.
It's volatile this morning. Holly, appreciate your input. Holly List there of BTG Pactual going against that Fed decision later this week, and the volatility in energy. Brent crude at the lows this morning, down by more than 9%. We got an 87 handle. We're back to about 90 right now, getting closer to 91 and down some 6 percentage points. The latest out the Middle East, a volatile situation.
Yeah, oil sites in Saudi Arabia, as we've been discussing all week, they were targeted by Houthis with drones. Saudi Arabia came out and says they intercepted a number of these drones that were going after energy facilities. Riyadh says the drones were launched by Iranian-backed militias from Iraqi territory, on top of the fact that the Houthis are also saying that they are targeting energy installations with drones. So you could see now, even though the Strait of Hormuz right now, the president's not targeting any of those assets, we have to worry about the conflict brewing on the other side when it comes to the Red Sea.
Yeah, Nathan Sheets of Citigroup actually had a really interesting note about the scenario as he tried to move away from just the near-term headlines, as all of us are trying to do. He said that in general, yes, there have been a huge drawdown of inventories, have been huge drawdowns, but there still are some high levels of inventories still available in pockets. That said, still sees the potential for $100 a barrel oil should this be as an escalation types of scenario, which they're not pricing it and people don't expect because of the midterms and because of some of these other considerations.
It's still Monday. Still Monday. Still Monday.
I think so, and I actually thought that today was part of the week, but evidently I've been told that Wednesday is the time to actually
the week starts Wednesday.
I think that
Let's ease into this.
It's the
Let's
warm-up.
ease into this.
You know, I think that some people, Coca-Cola,
UPS.
Who
were the others?
There are lots of them. I mean, this is a huge week, I can tell you.
Okay.
So tomorrow it's Visa, Coca-Cola, UPS.
Visa's one to watch.
Ford, Hilton. To the sort of how many people
how's the economy doing? What
Yeah.
we see in the financials, the banks, and I keep bringing this up, but banks have rallied for 8 consecutive weeks. I think they're up by 15% over that period. Haven't had a down week since May, I believe, for the banks. The banks doing better. There's a tech piece to that story. I know that, but if you're worried about the economy, that's not the place you'd be buying, and that's the place people are buying.
I keep going back to Capital One and the fact that their charge-offs went down so much that really fed into their profit margins. But we've heard from already American Express. People are spending.
I'm sold. I'll see you tomorrow morning.
Good. I'm so glad you're still going to come in.
I'll be here Friday too. All right. Just Wednesday and Thursday, big days. Coming up tomorrow to break it down, Cameron Dawson of New Edge Wealth, Stu Kaiser of Citi, the former Kansas City Fed President Thomas Honig, and Oksana Aronoff of JP Morgan Asset Management. From New York City this morning, good morning. This was Bloomberg Surveillance.
Being called an ideological lunatic or a bunch of left-wing nut jobs?
You know, I've been called worse things than that.
You'd think she owned the place.
23andMe, I think, is so incredibly valuable. We're coming back.
It had that kind of detective story feel to it. You know, when you're hot on the trail of something, you know that it's very exciting.
What magazines were you reading as a kid?
I don't think I was reading magazines until I was in them.
You are on the cover of all of these. Oh, and there's many, many more, but we just don't have time.
Why should people trust you?
I don't think anybody should trust any company or entity completely with any of this.
It's very uncomfortable. Artificial intelligence is this force that is far bigger than we are.
I want to build better businesses around these brands.
The shock will never wear off.
So you're a brother and sister running one of the most powerful companies in the world. When you argue, who wins?
No one. The way I could see AI being banned or blocked is if something really went wrong. And if something really went wrong, then maybe it deserves to be.
So is it Paradise ahead or Gattaca?
Maybe somewhere in the middle.
Look at the more successful economies in the region. The key to their success is continuity. But the way our Constitution is written, it actually encourages a lack of continuity. And that's a problem. The terms for local government is 3 years. When I first became a congressman, it takes you a few months to learn the business and to make your connections, to network, etc. If, for example, you are not particularly favored in the majority, passing a law in a year and a half is not that easy to do. After about a year and a half, you already hear that there's somebody in your district beginning to campaign and is going to oppose you in the next election. So you have to go back to your district to take care of that. And how much work do you get done?
Bringing you the latest business news wherever and whenever it happens. I'm Scarlett Fu, reporting from America's biggest military shipyard. This is Bloomberg.
Welcome to peak earnings week. It is just 30 minutes until the start of cash equity trade. I'm Danny Berger. Matt Miller still out. Bloomberg open interest starts right now. Coming up, NVIDIA revised fear of circular AI deals ahead of the biggest week for this earnings season. Fed officials head into a potentially contentious policy meeting as price pressures rebound. Meanwhile, geopolitical tensions ease. For now, oil drops as the U.S. and Iran hit pause on further strikes. All right, so we have quite a lot to watch today. So some of the stocks that we are looking out for, big tech is going to be earning. Tech alone, Apple, Amazon, Microsoft, and Meta are 17% of the S&P 500. $24 trillion worth of companies will be reporting in total this week. The index is also coming off of its first 2-week loss since March, so maybe that's a good thing. Maybe expectations are a little bit lower heading into these earnings as they had been. At the same time, NVIDIA working on a fresh round of AI infrastructure deals, potentially worth more than $750 billion, including $500 billion initiative with SK Hynix and a $250 billion data center project with OpenAI. NVIDIA CEO Jensen Huang spoke exclusively with Bloomberg Tech's Ed Ludlow on the future of computing.
We used to build computers for people to use, and we're going to still continue to build incredible computers. These are now processing AIs for humans to collaborate with. But in the future, we also have AI agents and robots, and they're going to be using computers. So instead of just a billion people using computers, we're going to have 100 billion agents and billions of robots all using computers. The computer industry, the chip that's built on top of the chip industry, surely is not big enough.
Ed Ludlow joins us now. Ed, excellent conversation. It's clear that Jensen has some large ambitions, and from this morning's news, they're not slowing down on spending to get themselves there.
Yeah, I mean, the status quo remains that demand vastly outpaces his industry's ability to supply. What Bloomberg's reporting is that NVIDIA is on the hook for about $750 billion of, let's call it, financing support. So the one from Friday was SK Hynix, $500 billion. But that's kind of an aggregated number where the $500 billion or $500 billion represents NVIDIA's commitment to buy memory chips from SK. It represents SK's commitment to buy computing systems from NVIDIA. And it represents a shared ambition to kind of build infrastructure in the region. OpenAI, what we're reporting is that NVIDIA is saying they will backstop, they will guarantee $250 billion of leases for the data center in Ohio. This is all according to sources. None of the companies involved have commented on it. And so you're right, $750 billion in total, but it doesn't even take into account the sort of part B of that story, which is NVIDIA financing OpenAI's purchase of NVIDIA chips of $350 billion. And that's where the concern on circular financing probably is more concentrated.
And for what it's worth, we have another NVIDIA investment just crossing the wire, Ed, making an investment in Safe Superintelligence, provide access to its Vera Rubin compute platform. So again, the spending does continue. Part of this, Ed, I just wonder, is getting around bottlenecks. How much of this, for example, is about OpenAI no longer having to rely on Microsoft, Amazon, and Oracle as they ramp up their own spending?
The safe superintelligence thing's really interesting.
Yeah, tell us more about that. I know it's going to be just your first take, but yeah.
So we don't know much about that startup. It's founded by Ilya Sutskever, part of the OpenAI alumni network. They're working on something to do with AI and finance and financial markets. But I'm going to look into it more. To answer your question, NVIDIA's argument to this point on circular financing is the reason it's not circular financing is there's no quid pro quo. NVIDIA is trying to grease the wheels, support the ecosystem, allow people to move more quickly to build the actual infrastructure, but they're not contractually required to buy NVIDIA gear. So if NVIDIA supports OpenAI, as an example, NVIDIA would say, okay, but you can also go and do business with AMD. Part of it as well is just like communication. So, we just explained the $750 billion headline from the circular financing story on the terminal. NVIDIA just came out and were like, we're going to do $500 billion with SK. But they didn't really say anything more than that. What does that even mean? Like, who's giving money to who? It's not really explained beyond what I did in that interview, which was like, it represents all of it. NVIDIA's hand into the pot, SK's contribution, and then things that they share. And there's a lot of confusion about that. People just want more detail.
Interesting, Ed. Looking forward to hearing more and hopefully hearing more detail on Bloomberg Tech that airs at 11 a.m. Ed Ludlow, thank you so much, host of Bloomberg Tech. The other big market-moving event this week, as if tech spending and earnings weren't enough for you, we also have the Fed, and markets are currently pricing in a 30% chance of an interest rate hike on Wednesday as renewed tensions in the Middle East send oil prices soaring again, overshadowed by a tamer than expected inflation prints for June. And we'll also get PCE this week, too. Bloomberg International Economics and Policy correspondent Michael McKee joins us live from Washington. Mike, I have seen some conspiracy theories swirling around that perhaps this administration has pulled back the reins on striking on Iran to give the Fed more breathing room and hope that they weren't hike. But how are we set up for the meeting this week?
Well, I heard that rumor this morning as well. Somebody asked me about it. I don't think there's any truth to that. It would be quite an effort to do something like that and to bet that the markets would go down, the oil markets would go down. They have, but that's still the open question as they go into the meeting, because at some point, something's got to be resolved, and until it is, there's a lot of uncertainty, which makes the main question, what happens with inflation going forward? As most of the members of the Fed have been telling us, you've got to tame CPI and tame PPI in the first month of the summer in June, and PCE, as you mentioned, comes out the day after the Fed. Do they want to raise rates and then have a lower inflation number the day after? That's an interesting question. The economy's slowing a little bit. Atlanta Fed says 1.7% for the current quarter so far, but financial conditions are still very easy, and we see that in all of the markets. Underlying inflation, slower growth, those are questions going forward, because even if you take out energy prices, inflation is still well above target. And then finally, there's uncertainty about this Warsh Fed. What are they going to do, and how are they going to do it, and what are they going to tell us about it? So that leaves open the possibility that we might see a rate increase. Probably not, but the two-year note yield has priced in a rate increase. Why that is? Well, it's not inflation, because you can see the break-even there is gone down in recent weeks, while the odds of a rate increase in the two-year space have gone up. A lot of people who follow this say it's probably because the budget's coming up and they're worried about what Treasury is going to have to offer to sell bonds under these circumstances. But still, the Fed does have that room to raise because the 2 years already priced it in. We do have also data coming up that would enable them to wait if they want until September. You get 2 CPIs, 2 PPIs. You also get 2 PCE reports, and you get 2 payroll reports before the next time the Fed meets. So there's a lot of information, a lot of reasons why they could hold off. But then what does Kevin Warsh say about it all in his press conference? That's going to be the real question at this point.
And what does he not say? I mean, what a better way to kind of say, I'm not giving you forward guidance than hiking this meeting and not telling you much about why or what happens next. Mike, we do get PCE, as you mentioned. This is the one that we know a lot of the inputs into it, so less of a surprise. So what are we expecting for the data itself?
Well, we're expecting both headline and core to tick down by a percentage point. In terms of the headline for a month over month is expected to be negative, a 1/10 of a point lower, which will push down the year-over-year numbers for headline and core significantly, but they're still way above the Fed's target. And that's going to be the argument for them is, do they look forward and say, we're not going to make more progress than this because we've already taken out energy? Or do they say, we're on the right road? That's the decision they're going to have to make, and it's probably going to be a very tight one, Danny. You know, even if they hold, there's expected to be a couple of dissents at least.
It's a fair point, and Mike, really looking forward to your coverage. Bloomberg's Michael McKee in Washington, D.C., ahead of the Fed decision. Let's turn down to one of the biggest impacts on that Fed decision, and that's what's happening in the Middle East. Brent falling below $91 a barrel after the U.S. and Iran held off on further attacks for a third straight night. Let's get the latest from Bloomberg Washington correspondent Tyler Kendall. Tyler, various reporting out there as to why attacks have been held off, from hopes from diplomacy to Washington's own weapons stockpile. What are we hearing at this moment?
Well, Danny, at this point, it feels like there is room being created for diplomacy, though the White House hasn't taken the threat of escalation off the table quite yet. We're getting a few different indications on what the U.S. right now is assessing as it tries to figure out exactly what the next step is going to be. We had this reporting from Axios over the weekend, for example, showing that the top commander in the Middle East, Admiral Brad Cooper, advised against further strikes, saying that they had reached their limit of effectiveness. And then this other reporting from the New York Times, which seemed to signal that the U.S. could be concerned about diminishing stockpiles. Our own analyst at Bloomberg Economics estimates that it takes between $30 and $45 million per day to just keep up the U.S. naval blockade, as one example, though this White House has maintained that they feel confident in their amount of stockpiles. And we heard from the U.S. ambassador to the UN, Mike Waltz, in an interview over the weekend, saying that President Trump still retains all options, though he did allude to the fact that it seems that talks are happening, he says, at both the more nuanced technical level as well as the leadership level. The issue is, at this point, even as the fighting has stalled, we're still seeing those disruptions in the Strait of Hormuz. New data out today from research from Kepler shows that over the weekend, on average, we saw between 6 and 12 vessels transit, but that's actually in line and matches the amount that was moving through when the U.S. was in its consecutive day of strikes. And Danny, knew this morning, Iranian state media saying that the IRGC forced at least 6 ships that were going through that U.S. coordinated route along the coast of Oman to turn around, just keeping that heightened fear among ship owners as the conflict still continues.
Tyler, thank you so much for that update. That's Bloomberg's Tyler Kendall in Washington. Let's get a check on your equity markets 20 minutes before your opening bell on a week that is monumental between a Fed decision and the busiest week for earnings. We are rebounding after 2 back-to-back losses for this S&P, the first since March. NASDAQ outperforms after the Mag 7 dragged down the overall indexes last week. Yields also come down 3 basis points, with energy moving lower. Brent crude trading just below $91 a barrel. Let's also look at some of the single-day movers on your radar this morning. With that is Bloomberg's Nora Melinda. Nora.
Hey, Danny. Jack Daniels owner Brown-Forman rejected a $15 billion takeover offer from Sazerac, with the board saying a merger would not align with their vision for the company. It would have been a 23% premium to Brown-Forman's valuation as of Friday's close. And up next, Ford gets an upgrade to buy at Jefferies ahead of earnings tomorrow afternoon. Analysts say management could raise guidance with market conditions healthy and the second quarter potentially a low point for sales volume. And finally, D-Wave Quantum expanded its computing deal with AT&T as the wireless carrier touts progress with its agentic AI tools. Details of the contract were not disclosed. Danny?
Nora, thank you very much. Nora Melinda with your morning movers. Coming up, investors now have another way to bet on the world's biggest stocks without trading a single share or using complicated options. We're going to have more on CME single stock futures next. You're watching Bloomberg Open Interest.
The global economic playbook is being rewritten and the levers of power are moving in real time.
To see where the world is headed, you have to look where the action is.
I'm Haslinda Amin in Singapore.
I'm Menika Doshi in Mumbai.
Welcome to Emerging the New Economy podcast.
Each month, we dive deep into how the world's most exciting rising economies are shaping the global future.
Join the conversation. Subscribe to Emerging on your favorite podcast platform today.
Western countries, all of them are cutting funding to Africa. And some of these programs were supported by funding coming from Western countries, like for human resources, for testing, for transportation of samples. And suddenly, African countries have to think how to fund money and to cover this gap. But it takes some time. And I think the combination of all of these factors are fueling this mistrust that we see at community level. We value the support we got and we are still getting from the US. And we think that if we continue to work together, and there is no reason for the US not to work with Africa CDC, Africa CDC is the leader in terms of public health in Africa.
Up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Let's get you some high-interest stories. A look at what's making headlines around the world. Chipmaker CXMT surged 466% in its Shanghai trading debut, becoming China's largest onshore listed company, now valued at $488 billion. The company posted the second biggest IPO in the country's history as Beijing ramps up its push to secure AI independence. Elsewhere in the world of AI, SoftBank's $40 billion bridge loan for its investment in OpenAI has attracted a new group of 21 lenders. Sources telling us that the new lenders have been allocated around $7 billion of the facility. Standard Chartered, First Abu Dhabi Bank, and Singapore's Sovereign Wealth Fund, GIC, have each taken a $1 billion share. And the CME is set to launch single stock futures today. This will allow investors to hedge or speculate on more than 50 of the largest U.S. companies. The contracts will be cash settled on the closing price of the stocks that they are tied to, and trading will be open 23 hours a day, 5 days a week. Let's discuss this story and more with Bloomberg finance reporter Catherine Doherty. Cato, the casino is open, it would seem.
Yes, this is another tool in the toolbox. They are going after retail investors, which is kind of moving away from CME's core audience. Think of institutional investors, these large firms that are trading in size. These are contracts that are going to be specifically tailored to the smaller audience, or I would say the smaller individual trader. And because it is targeted at this audience, this is giving CME yet another avenue to widen its own business into other areas, other arenas, but specifically for single stock futures, it's going to give institutional as well exposure to some of these hot stocks without actually owning the stocks themselves. It's allowing just another hedging tool in the toolbox. So it's another really big launch for the company. It seems like every week they're announcing another product.
And that would be about getting exposure to certain companies that they don't own, would seem especially useful, and you and the team write about this in the story for something like SpaceX, where
Exactly.
you maybe didn't even get the allocation you wanted.
Yes, so for retail investors that wanted to buy SpaceX stocks and weren't able to, they can now get exposure to a name like SpaceX. They're starting with 50 names, and it's the biggest, largest, most liquid names in the U.S. stock market, and that will give, again, it's a cost. This is a cash-settled product, so instead of owning the shares directly, you are still getting exposure and you're tracking the future price, and when it settles, you are getting that cash, but you're not actually changing stocks at any point. You're not owning the underlying stock.
You don't need to worry about Greeks and Vega and Delta and Gamma and all those things. Catherine,
Exactly.
the other story that you're reporting on this morning is Fanatics buying one of the brokerages, BGC. I think of Fanatics about selling jerseys, about different fan gear. This is about prediction markets. To what degree are they getting more into prediction markets than they are currently?
So Fanatics has been moving away, but keeping the core of, we have an audience of consumers, sports-related consumers specifically, and today's announcement is that they are buying a license from BGC to operate their own prediction market exchange. So because of that, they will be able to list prediction market contracts, yes or no. They're going to start with sports, so staying with their core audience, and expand eventually to other yes or no instances. It could be markets related, but right now, the deal today that they are announcing is that they're going to be operating their own venue. That gives them, again, more control. Right now, they do have prediction markets, but they work with Crypto.com. They use Crypto.com's exchange. So now that they have their own, that gives them a little bit more flexibility. It keeps all of their consumers in the same place. And for BGC, this is a partnership. So BGC is looking to bring some of the institutional interest in prediction markets and help with some of the pricing that goes on. So these firms are both acknowledging that with prediction markets, you need both retail and institutional interest for this market to grow. Right now, it's very much concentrated with retail participation. So with pricing, you need the institutional players to come in and help grow that market.
That's really interesting. I hadn't thought about that before, because presumably FanDuel, DraftKings are all retail. Because I was going to ask, how do you compete with them? They're already well-established names. Is the idea not to compete, that they have a different product because they are bringing in institutions?
This is a very competitive space, and when you think about Polymarket, Kalshi, coming out of the largest games that we have seen with the NBA Finals, coming out of the World Cup, sports is still dominating prediction markets. And so when you have Fanatics, FanDuel, other companies that tailor to the sports market, they're now trying to differentiate themselves. You need to find what is the edge, because if you are appealing to the retail audience, these consumers, you want to give them the incentive to come to your site, to come to your application. So Fanatics is betting that by adding their own new venue that they can, again, tailor to their audience, and then bringing on a new marketplace, this institutional marketplace, that's where BGC comes in, and they're trying to gain that edge by bringing something a little new, a new flavor to the prediction markets.
Really interesting, Catherine. Thank you so much for bringing us those stories. That's Bloomberg's Catherine Doherty. Coming up on the show, Citi Wealth's Kate Moore says she favors equities despite stretched valuations. She joins us next. This is Bloomberg Open Interest.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
Bringing you the latest geopolitical news whenever and wherever it happens. I'm David Gura on Salar de Uyuni in Bolivia, and this is Bloomberg.
From the world of politics geopolitics to the world of business. Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Citi Wealth leaning into equities as companies report healthy earnings growth. Chief Investment Officer Kate Moore says, in terms of our core portfolio positioning, we continue to favor a full allocation to equities with an overweight to U.S. large caps where fundamentals are most attractive. Let's bring Kate Moore in, Citi Wealth Chief Investment Officer. Kate, great to see you. I wonder how much of this investment, still going full out on equities, is just about that valuations still look attractive with us trading under a 20 forward times PE yet again, versus perhaps even if we weren't there and we hadn't sold off over the past 2 weeks, you would still be this bullish on equities.
Yeah, look, the thing that I love about equities so far in 2026 is that it's been earnings, not price, that has really kind of driven things. Like, look, everyone was concerned at the beginning of this year around multiples and around valuation. And this has been a recurrent concern. We continue to wring our hands as multiples have ground higher over the course of a number of years. But this year, because it's earnings and not multiples that are driving markets higher, and because the fundamentals continue to come in very strong, and we expect actually very solid reporting over the course of this week, that we feel more comfortable in continuing to add to positions, especially when there are bits of a pullback. I would note, though, of course, we've been in this trading range for the last couple months, and it's going to take a broader, array of investors to get comfortable with adding additional risk to really drive the markets up higher into year end. But we think that can happen as some of the worries that people have around geopolitics, inflation, rates, and AI sustainability fade.
All right, Kate, stick with us because we got to get through the opening bell first. Kate Moore, she's staying around as we head into your opening bell. Again, that's going to come in just under 5 minutes' time. Here's how your markets are shaping up ahead of that. A monumental week for both earnings and a Fed decision that's considered live. We are pricing in a third of a chance that we will get a hike. At the moment, NASDAQ outperforms after underperforming for much of the past 2 weeks. It's up 1 1/5% as the S&P goes up by 0.8%. Yields come in. That gives us some breathing room, not least for the Fed as well. And Brent crude just below $91 a barrel. Up next, it's your opening bell. You're watching Open Interest.
Being called an ideological lunatic or a bunch of left-wing nut jobs?
I've been called worse things than that.
You think she she owned the place.
23andMe, I think, is so incredibly valuable. We're coming back.
It had that kind of detective story feel to it, you know, when you're hot on the trail of something, you know that it's very exciting. What magazines were you reading as a kid? I don't think I was reading magazines until I was in them. You are on the cover of all of these.
Oh, and there's many, many more, but we just don't have time.
Why should people trust you?
I don't think anybody should trust any company or entity completely with any of this.
It's very uncomfortable. Artificial intelligence is this force that is far bigger than we are.
I want to build better businesses around these brands.
The shock will never wear off.
So you're a brother and sister running one of the most powerful companies in the world. When you argue, who wins?
No one. The way I could see AI being banned or blocked is if something really went wrong. And if something really went wrong, then maybe it deserves to be.
So is it Paradise ahead or Gattaca? Maybe somewhere in the middle.
When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need,
There's going to be now tons of tariff headlines until midterm elections.
hear it first on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Let's get your trading started. Moments away from your cash open trade. This is Bloomberg Open Interest. I'm Danny Berger, and it is a rebound to start your week after 2 consecutive weeks of declines, the first time since March. It's being led by tech this morning after tech led us downwards for most of the past 2 weeks, up more than 1%. Heading in to your opening bell as the S&P is up 0.8%. We've had a lot of charities ringing the New York Stock Exchange as of late. Today, it's the Catholic Charities of New York. We have the Most Reverend ringing the bell. Someone who's Catholic needs to message me and explain to me how titles work, because the Most Reverend is basically the coolest title I have ever heard. I want to know how I become the most anchor. Down at the NASDAQ, we have D-Wave. Kind of a coup for the NASDAQ. They were trading on the New York Stock Exchange. They've went over to the NASDAQ, so they're ringing the opening bell. They're down 14% year to date, but a great day for D-Wave. They're up 10%, or at least they were pre-market. I haven't checked since the market opened. Signing an agreement with AT&T. They do quantum computing, and they're giving AT&T expanded access for that. In terms of what's moving this morning, we are watching all of the big Mag 7 names that are going to be reporting their earnings this week. Apple, Amazon, Microsoft, and Meta. They are among the $24 trillion worth of S&P 500 companies that are going to be reporting this week, so that's the busiest of the earnings season. The index, though, is coming off that first back-to-back loss since March. At the same time, NVIDIA working on a fresh round of AI infrastructure deals, potentially worth more than $750 billion. That includes a $500 billion initiative with SK Hynix and a $250 billion data center with OpenAI. NVIDIA fluctuating between gains and losses as concerns of circular finance are thrust back into the fore. Let's bring in Citi Wealth Chief Investment Officer Kate Moore, who's still with us. Kate, I wonder how you're thinking about hyperscaler spending, NVIDIA spending, the circularity of it, and how this market is likely to continue to receive those numbers as we go through the rest of the earnings this week.
Look, I mean, amongst all the worries that we've had, again, over the course of 26, and this was sort of echo of the second half of 2025 as well, is this worry around, are companies spending too much? And if they're spending too much, how do we think about the return on investment? I mean, this is a consistent investor angst. What I will say, and we're going to get a lot of information about this over the course of the week, is we actually see no signs of any slowdown in overall CapEx. We got that from Alphabet last week, and a very clear message that the increase in spend is because of demand, that they're going to likely revise up their 2027 expectations for CapEx and spending. But something I just want to highlight here, we focus a lot on the CapEx in the AI and tech space, but actually overall investment in the economy is exceptionally strong. In fact, we got data this morning suggesting that momentum is very, very strong. So when we think about the investment cycle, it's not just AI and tech, but also the broadening out of the spending that's happening and how that's going to support both the macro and we think a widening array of fundamentals across industries.
So to what degree, though, is it outside of tech, Kate? Because the point has been made by Torsten Slok and others that it's an economy increasingly reliant on AI spend. Does the kind of figures you're seeing for this macroeconomy give you confidence that should we see a pullback on spending by some of these tech players, that this is an economy that will do okay and not slip into a recession?
Yeah, I'm not worried about the economy slipping into recession, but if we were to get either a pause, I don't think we're going to get a cut, but a pause in terms of overall CapEx spending, I do think that would be another shock to sentiment. We monitor sentiment, very closely, as well as positioning. That's a big part of our process. And, our readings now suggest that actually sentiment has slipped further over the last 2 weeks. So we're in kind of this summer doldrums, again, cycling through these worries around AI CapEx, geopolitics, inflation, et cetera. And I think, if we were to get any of these sort of shocks, whether it's around a broadening of the war or further challenges to energy supply, or the AI tech and CapEx spending backing off, I think we'd see another hit to sentiment. But I don't think it derails the economy. I mean, that's the important thing. In fact, one of the things we were talking about earlier this morning is how strong the economic surprises have been, not just in the back end of 2025, but throughout the course of 2026. You can say economists maybe have been conservative, but you can also say that the data has come in much stronger across almost every metric, on consumer side, on business side, and that activity we expect to continue into the back half of this year. So a very strong macro backdrop, but sentiment could take a hit further if there was any sort of talk around pausing or stabilization in terms of the CapEx landscape for AI.
Can we talk about that macro backdrop, Kate, especially as it relates to this week? This is a market that considers the meeting live from this new Fed chair, Kevin Warsh. What are your expectations, and could Fed hikes change some of your outlook?
Yeah, so our expectation is not that we're going to get a hike this week. Of course, it's not a zero probability event, and we see that, of course, getting priced into markets. A key message we've had over the course of this year has effectively been that inflation has been broad enough and persistent enough that even before the shocks from the Iran war, that the Fed was going to have to really consider more of a tightening bias rather than easing bias. And the market caught up and then sort of overshot on that front. And we think the most likely next move from the Fed is a hike, although the timing of that, again, doesn't seem likely this week. I think the important point here is when you strip out the energy effects, there is sort of broad-based goods inflation. And, we are now overshooting the Fed's target for over kind of 5.5 years. And I think Chair Warsh made this very clear in the June commentary and during the presser that they were very focused on that 2% target. And so I think it's unlikely that we would get any type of easing, but the tightening starting as soon as this week is not a high probability event in my mind.
Well, perhaps what Kevin Warsh needs to do is bring the long end down. He's concerned about the housing market and about financing. And this is a long end that has been drifting higher. Kate, for the 30-year yields, we are above 5.1%. Real yields are also incredibly high. Just for the price of a 30-year yield, it's been above 5% for the longest streak since 2008. Should that be impacting, or has it even been impacting risk assets at this point?
We've seen the relationship between bonds and equities actually break down considerably. And it's one of the reasons why we've shifted a little bit of our portfolio construction to look for diversifiers. Because, our expectation is that yields, particularly the long end, will stay elevated. I don't know that we get the 10-year creeping up to 5%. I think that's a psychologically important level, and people would likely be buyers at that point. But that the long end will remain elevated. And against that backdrop, we've also seen bonds not perform the way that we would historically want them to perform in periods of shock, right? We've had equities down and yields up in a couple of these shock moments, which also leads us to believe that we need to, really rethink our portfolio construction. One thing I would also note is we've heard a lot of officials and pundits discuss, the impact that these higher long end yields are having on government funding. We know the deficits are going up in the U.S. and around the rest of the world, and that's something that governments are really going to have to grapple with. To the extent that, the Fed and politicians discuss wanting to keep the long end anchored, they can try and jawbone it, but if the market is concerned around overall spending and the persistence of inflation, I think it's going to be really hard for them to do. So we've remained very short duration in terms of our portfolio, and I see very little reason to add duration in the near term.
Kate, the difference in correlation between fixed income, government bonds, and equities, can we extend this conversation to corporate bonds? Because later we're going to be talking to Carlyle's Akil Bansal, who oversees asset-backed financing, and is basically making the pitch that traditional fixed income corporate bonds don't give you diversification anymore. A 60-40 portfolio doesn't work because of all the tech issuance and just how highly correlated equities are now to credit. Are you seeing the same concern? Have you rethought at all about the place for traditional fixed income, specifically corporate credit, in a portfolio now?
Yeah, we prefer to take our risk in equities like over credit at this point, but of course that doesn't mean we have got rid of all of our credit exposure. The one thing I would flag here, and this is an important one, is I was making this point around valuations compressing over the course of 2026 as earnings have outpriced the price movement. But that has not happened in the credit space. Spreads are still incredibly tight. They're trading close to their 15-year tights. And there's been a little bit of a disconnect between the equity and corporate credit environment. So here's what I would say. You have to be very thoughtful, too, about where you allocate in credit because spreads remain really tight and don't reflect, the same types of, concerns that equities have reflected. And that, you're right, there continues to be some more overlap in terms of the sector exposure and the thematic exposure that you may be getting in credit. We're not at a point right now where we would say this is concerning. In fact, we think some of the companies that are issuing corporate credit are actually very high quality, and it can be, an interesting part of your overall credit portfolio. But it's something that bears watching. And as the tech and AI-related credit becomes a larger percentage of the overall market, we will have to ask ourselves how much overlap are we comfortable having between our credit and our equity exposure, but still biased towards equities over credit at this point.
Kate, always insightful. Wonderful to start the week with you. That's Citi's Kate Moore. Enjoy the rest of your week. Let's get a check on your equity markets about 10 minutes into your trading day, and we are pushing higher ahead of a very busy week, up 0.8%. That's 62 points, with the majority of stocks moving higher, so the breath is good today. The Mag 7, those companies that are reporting earnings coming up this week on Wednesday and Thursday, they're the ones doing the majority of the lifting for this equity index. Microsoft, Alphabet, Apple, Amazon, all of them moving higher alongside Meta. Also a good day for the banks. JP Morgan, Goldman are also in your top winners column. To the downside, again, it's this two sides of the same coin that keeps happening. On days where the hyperscalers are up, it feels like it's always the chip makers that are down. Lam Research, Applied Material, also a story coming out that China, they have a company that makes the equipment to make chips, is looking at selling it quite cheaply. So that's also hurting some of the lithography makers in Europe. Maybe that's also coming to today's session. Gas and oil players also down as the price of oil falls rather. So if you look at the various sectors, you will see that energy is faring the worst today, with Brent crude below $91 a barrel. There you go, down 1.2%. Communications does well because some of the Mag 7 names in their discretionary financials also having a good day, again rebounding after a back-to-back loss for this S&P 500. Coming up, we're going to dive deeper into tech, where AI spending is going to be the focus in the earnings we get this week. We look ahead. This is Bloomberg.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it. Wow. Everyone has a dream, and a lot of dreams are, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is, nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse, that doesn't mean that you come to the business world and you're going to be in the penthouse. Now, you don't start in the third floor or the lobby. You actually have to start in the basement.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Let's get you some top calls now. Here's Nora Melinda with some of the analyst action we're watching this morning. Nora.
Hey, Danny. First up, Jefferies upgrading Ford to buy, expecting the company to potentially raise its outlook when it reports second quarter earnings tomorrow. And next up, Piper Sandler downgrading Stellantis to underweight, saying it favors companies that are building next-generation machines using in-house expertise. And finally, Phillips Securities upgrading Alphabet to buy, pointing to the company's results last week that underscored AI strength. Those are your top calls. Danny?
Nora, thank you very much. Let's stick with tech, and AI spending remains in focus this week as we get more big tech earnings. NVIDIA CEO Jensen Huang spoke exclusively to Bloomberg about how the U.S. and China are approaching the AI race.
In the case of China, they're producing more AI researchers than probably all of the world has, in any given year. And so they're producing, if manufacturing intelligence is important, they manufacture the most important version of it, which is the researchers. And so this is an area, a country that's going to produce excellent AI technology.
Joining me now is Bloomberg Intelligence Head of Global Technology, Mandeep Singh. Mandeep, great to see you. So $750 billion of deals NVIDIA is inking. It's a lot, and it's into their customers like OpenAI and others, and we revived this fear of circular financing that's been floating out there in some shape or form for the past couple of years. How are you viewing this?
I mean, look, the numbers are getting very big for NVIDIA as well as for these model companies, Anthropic and OpenAI. When you look at the kind of spend they want to make, like there's no way they have the balance sheet like the hyperscalers to do it all themselves. So, vendors lease support, which is what NVIDIA seems to be doing for OpenAI. It's just one way for NVIDIA to make sure that they have an ecosystem. Even though all these companies are developing their own chips, I mean, whether it's the hyperscalers, even OpenAI, now it's developing its own chip. But NVIDIA wants to make sure that the build-out continues at this pace without a digestion period, because that's a big risk for NVIDIA is if things take a pause, even if it's for 6 months, that's not going to go very well for them.
So one of the bottlenecks continues to be memory, and in China we've had CXMT List, a Chinese memory chip maker, surging something like 500% after it IPOs, a huge amount. I mean, that's certainly not being priced like memory is still cyclical, but how difficult is it for a new entrant to come in and shake things up and actually gain market share, especially if they're a Chinese company?
I mean, in this case, it's really about Apple because they are the ones who have shown the intent that they want to diversify away from, the memory oligopoly of these three companies. And Apple doesn't need HBM right now. They need DRAM and, the traditional conventional memory, which is prices have gone through the roof because, we are supply constrained. So if Apple is able to qualify CXMT, that's a huge deal, for the entire memory complex because suddenly all the free cash flow that's generated by DRAM is things are gonna slow down, because the DRAM ASPs have been off the chart. So that's where Apple is the key player, and they're the ones who are looking to use CXMT in a big way.
And perhaps not surprising, the Wall Street Journal reporting over the weekend that Micron is pushing back on Apple's appeal to use chips from them. And just while we're on the subject of the China versus the AI race, Jensen Huang put out a letter that has some signatories on it of a lot of the big tech companies. He joined X for the first time, and he basically writes, my first post on X is about this appeal that we should have an open ecosystem. That's what he says. AI will transform every industry, power every company, be built by every country. This idea that we need open models, that they strengthen the safety and cybersecurity. There's been a lot of discussion about this online. I would just love to hear what your take was on this.
I mean, the three key companies that are missing in this list are OpenAI, Anthropic, and Google. And so what's at stake because everyone sees these three companies as the clear leaders when it comes to monetizing the models. And even a company like NVIDIA feels threatened that if they continue with the ramp, NVIDIA won't have the cloud that they have right now with the chips. So they want an open ecosystem and more fragmented model players as opposed to power being concentrated with these three companies. So it's really right now a race between which complex is able to run away with this market because it may very well turn out to be a duopoly or an oligopoly with the model companies if the open source is not at play here.
Right, Mandeep, thank you so much for joining. Always a joy to have you on. Mandeep Singh of Bloomberg Intelligence. Coming up on the show, the owner of Jack Daniels rejects Sazerac again. That's coming up next. We discuss this is Bloomberg Open Interest.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Bringing you the latest business news wherever and whenever it happens. I'm Scarlett Fu, reporting from America's biggest military shipyard. This is Bloomberg.
Welcome back to Bloomberg Open Interest. We are 20 minutes into your trading day, and it's an equity index that pushes higher on solid breath. Although we are off the highs of the NASDAQ, we're up about 0.75% for both the S&P and the NASDAQ. As small caps outperform, that's in large part thanks to yields coming down nearly 3 basis points for your 10-year yield at 4.65. That's in turn being helped by Brent crude dropping 6% as a firing between both the U.S. and Iran seemed to cease, not cease fire, to be clear, but at least the attacks on one another seem to have halted over the weekend. Elsewhere, in some of the individual moves, NVIDIA shares are lower by 2% as they can commit $750 billion worth of spending on various deals. Micron is higher. AT&T and D-Wave both pushing higher, much higher for D-Wave after they secure a deal with AT&T over providing computing, quantum computing. United Airlines also rallying off the back of oil prices coming in, and Brown-Forman up more than 1%. And the Jack Daniels maker, Brown-Forman, they have rejected a renewed $15 billion takeover offer from Sazerac, which was looking to add the iconic whiskey label to its portfolio, which already includes more than 500 brands. Here with more is Bloomberg's Red Brown. Red, why is Sazerac coming in? They've tried this before, and it didn't work. Why try to take another bite?
Yeah, I think the news that sort of kicked off with Brown-Forman earlier this year, Pernod obviously publicly announcing that they had talks with the company. I think if you're Sazerac, one of the few liquor companies in the world right now that is actually gaining ground, having sales success, if you see that, you know, kind of a crown jewel of the liquor industry, Jack Daniels, is potentially on the auction block, I think it's too good of an opportunity to turn down, which I think is also kind of underlying some of this conviction we see with multiple bids coming from Sazerac. They're clearly, they believe that they could bring value to this brand, revive this brand to some extent. So I think that's why we've seen their sort of continued persistence in making an offer.
And you could see maybe why they'd want to be sold. The price there over the past 5 years falling 64%. Is this company, though, up on the auction block if Brown-Forman and the controlling family continues to turn them away?
Yeah, I guess it depends on who's offering. It seems like, you know, we did some reporting earlier this year around the Pernod deal that, you know, the family that controls Brown-Forman was in favor of that deal. So it seemed like there was good momentum. It seemed like there was this sense that there's going to be something there. But Sazerac coming in with an improved offer from what Pernod was even able to give. And it's been, you know, no discussions at all. It seems like, given some of the reporting we were doing yesterday, that there has not been any sort of substantive conversation between these two parties.
I would say this feels like your classic company where you'd have an activist investor come in. It's consumer, it's underperformed, a clear M&A strategy. And I just wonder how much breathing room there even is for either shareholder or activist influence, just given the family's influence. How large is it for Brown-Forman?
Yeah, I mean, the family has a very tight grip on this company. I was going to say that was probably the reason that activist investors probably have not stepped in quite yet, is because it's at least one controlling group for the family. It's called Wolf Pen. They control 60% of the voting shares, the Class A shares. So it really does not allow for someone to come in and make any sort of significant moves, right? Everything basically needs to have family rubber stamp to change. So yeah, it's very unclear kind of where they go from
By
here.
the way, why has Brown-Forman in recent years been underperforming? Is it just more competition for the whiskey market?
It's complicated. It's kind of death by a thousand cuts. The industry overall is contracting, right? We hear a lot about sort of lower drinking consumption rates for some generations. There's the rise of...
You can say Gen Z, they're super uncool.
Yeah, they want to name names, but that's a factor. There's a lot of talk about cannabis, maybe stealing some market share from alcohol drinking on those occasions, things like that. But there's also a sense that there's particular problems with Brown-Forman, right? Like, they haven't made the best acquisitions in the past. Their portfolio is not very expansive. They're ready to drink, which is one of the categories that is growing really healthily. Right. Their portfolio is not very popular among people there. So there are certain things that Brown-Forman has done that is sort of also putting pressure on the stock. It's not just this industry story.
All right, Red, thank you so much for joining Bloomberg's Red Brown on the latest. And be sure to catch Bloomberg Deals every Wednesday, 12 p.m. New York time. Coming up, it's your Hour 2 of Open Interest. world's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation.
As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlett Fu, who's taking a closer look at drone companies. With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space.
Excellent reporting. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Preston. 3 dead, 4 hurt, and 1 person in custody. That's the nation's mass shooting in Seattle happening. ABC's Jeff Pogula with more.
This happened during the Bite of Seattle Food Festival. Gunfire erupted shortly after 6 p.m., causing the crowd to scatter. Witnesses describe a chaotic scene.
We saw a few people going to a building, so we went in there, and we went down the stairs, and we just hid in the garage.
A young child is among the wounded. Assistant Police Chief Tyrone Davis.
One of the 4 victims that was taken to the hospital was a toddler.
Detectives believe 2 people were shooting at each other. 1 suspect is in custody. Jeff Pogula, ABC News, Seattle.
Across the middle part of the country, extreme temperatures are building under another heat dome. Here's ABC meteorologist Leslie Lopez.
The heat index climbing up to about 108 degrees. We have that through Wichita. We have it to the south, all the way up to the Midwest, getting into areas of New Orleans even, down to 105 degrees. It's either a heat alert, a heat advisory, or a heat watch.
The extreme heat in Central Europe has helped wildfires grow and led to 300,000 evacuations in France and Spain. ABC's Marcus Moore is along the fire line in Spain.
The air is dry here, and there's a constant breeze. It's these exact conditions that are driving some of these fires right now. We're just west of Madrid right now, and this is as far as police are letting anyone go because they say parts of the Avila fire, the largest in this country's history, have flared back up again.
Fighting in Iran on hold as diplomatic efforts take place once again. Mediators say they have achieved progress in getting both sides back to the table.
Oil prices were down overnight thanks to that pause in attacks between the U.S. and Iran. Drivers here at home looking for relief, with gas prices in the last week rising an average of 12 cents to $4.11 per gallon.
ABC's Karen Waugh in Washington. The Odyssey continues captivating audiences. It's earned an estimated $639 million so far. You're listening to ABC News. Plymouth, Massachusetts, Lindsay Clancy's legal team is set to try to prove starting today that postpartum depression is what led her to strangle all 3 of her children. Clancy was a former labor and delivery nurse herself, and prosecutors say she carefully planned the killings, so she bears full responsibility for their deaths. Ukrainian President Volodymyr Zelensky set to meet with the new British Prime Minister today. Andy Burnham says it's to show unwavering support for Ukraine as he takes office. Drought, demand, and supply disruptions have helped push beef prices to record highs this summer. The government is now, however, dismissing fears about a parasitic larva in cattle to try and bring those prices down.
11 months ago, with the parasitic New World screwworm creeping toward Texas, Agriculture Secretary Brooke Rollins suspended imports of cattle from Mexico, saying at the time,
"Do we expect beef prices to continue to rise? Perhaps."
Despite the ban, the first screwworm was detected in the U.S. in June. But with beef prices at an all-time high, Rollins has lifted the ban on imports of Mexican cattle, starting with the port of entry in Douglas, Arizona, next month. Jim Ryan, ABC News.
Putting food on the table is taking money out of our savings. A new survey says nearly 1 in 5 American adults are dipping into savings just to pay for groceries, and more than 5% are being forced to use payday advance loans to buy food. The Urban Institute, which conducted the survey, says food costs are up 32% in 5 years. Sherry Preston, ABC News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals and the Bloomberg Business app.
Good Monday morning from the Bloomberg Interactive Broker Studio in New York City. We're streaming live on YouTube as well. Scarlett Fu and Paul Sweeney. This is the Bloomberg Intelligence program for the next 2 hours. Busy week coming up here. Lots of earnings, lots of tech earnings, lots of economic data as well, including the Fed to keep us busy. Stocks are higher here this morning on a little break into the war in Iran. Coming up, we're going to check in with Ed Ludlow, B-Tech anchor, on some of the top tech stories. He interviewed Jensen Huang just recently, so we'll get his thoughts there. Matt Stuckey, Chief Portfolio Manager covering the equities business for Northwestern Mutual, get his thoughts on these markets. Ellen Wald, she's the president of Transversal Consulting, one of our go-to voices on global oil, and we've got oil pulling back pretty solidly here. WTI crude below $84 per ounce. Tim Craighead, Bloomberg Intelligence Chief Global Content Officer, is going to give us his thoughts on some European equities and the ways, some of the ideas to play European stocks. So a lot coming up over the next couple of hours with a green tape right now. We got stocks trading higher. Let's go to John Tucker for that Bloomberg Business.
All right, guys, happy Monday. This Bloomberg Business Flash brought to you by IBKR. Trade, election, climate, and economic outcomes with IBKR prediction markets right alongside your stocks and options. Earn interest in your position and receive $1 per contract if you're right. Learn more at ibkr.com/predictions. Major averages, they are mixed right now. You have tech shares leading the way ahead of results from a handful of the mega caps. Investors also responding to the sharp drop in the price of crude oil. Brent down 7% right now, $90.25 a barrel. Christine will take a deeper dive on this in just a moment, but NVIDIA working on a fresh round of AI infrastructure deals. This is going to be the busiest week of the earnings season so far. We're going to hear from several of the biggest tech companies, including Amazon, Meta, Microsoft, and Apple. And the results are going to put AI spending right back in the spotlight. Another major event, the Fed's rate decision. That comes Wednesday. Market's still pricing around a 1 in 3 chance of an interest rate hike. Meantime, Lisa Shallett at Morgan Stanley says the narrative for big tech earnings, that is changing.
More CapEx spending actually is starting to worry the markets about when I get a return on investment and if we're going to get to a place of, in fact, overspending.
Right now, the S&P 500, 27 points higher, 74.39 in the index. The Dow up 430 points. The Nasdaq Composite Index, that is now up 89 points. And did a double take when I saw this. 4-figure monthly car payments, increasingly common reality for much of the country. According to Lending Tree, 1 in 10 auto loan borrowers in the U.S. now shell out over $1,000 or more a month for a vehicle.
Well, what's the average
Per
price?
car.
It's like over $50,000 right, for a car. Average.
It's insane.
Yeah.
Actually, my loan is like coming due, so it's just like I'll have no more car payments on the
That's exciting.
Flush.
Yeah, so it's, of course, I'll get into an accident or
Don't
the
say
engine will
that.
seize up and, there you go. Anyway, we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Scarlett and Paul.
All right, John Tucker, thank you so much. We appreciate that. Scarlett Fu, Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. As John was just reporting, we got some green on the screen. We'll take it here. Let's look at some of the stocks on the move today. We can do that with Christine Aquino, managing editor for Markets Live, joining us live here in our studio. Christine, what are you looking at?
All right, Paul, let's start with NVIDIA, of course. That share, ticker NVDA, shares are down more than 2.3% at the moment. And this is because a lot of its investments are once again reviving fears over circular funding. So the latest round of investment in infrastructure deals for AI that NVIDIA is involved in will be worth more than $750 billion. So that includes an initiative with SK Hynix's parent company worth more than $500 billion. They're also in discussions to provide a guarantee of as much as $250 billion to help OpenAI lease computing from a U.S. data center project. And then just this morning, we got news that they're also making an undisclosed investment in Safe Superintelligence, where they will provide access to their next generation Vera Rubin compute platform. And then SSI will provide AI research and technical insights. If you look at that story in that incredible graphic, all roads lead to NVIDIA and OpenAI.
That's what I wanted to highlight. Dina Bass and Winnie Shu have this Bloomberg News article, and if you have a terminal, go to it right now. It's one of the top read stories. I'm sure it's on Bloomberg.com, but it's got the graphics. It just shows all the circular deals. It is an awesome graphic just showing you all the companies, the dollar amounts, and it's like the only way you can make sense of it all. So,
yeah, absolutely.
Big plug for those guys.
But it makes you worried, right?
Oh,
because if something happens, if just if you pull one of the threads there, the whole thing feels like it could just kind of collapse.
Yeah, I was talking to a bond investor earlier on Tom Keene's surveillance show, and he says, that's a credit risk for them, all the circular deals. So it's almost like they have to do the credit analysis of the issuer, but also who the issuer is doing business with.
Yes.
So anyway,
that's a really good point.
Crazy stuff. What else you got?
All right, let's take a look at Ford Motor this morning. Those shares higher, ticker F, of course, and shares are up more than 2.8%, 2.9% at the moment now. And that's because we did get an upgrade from Jefferies, upgrading the stock to buy from hold before their second quarter earnings report on Tuesday after the bell. So Jefferies analysts saying that the second quarter is probably going to be the low point for volume and that management could raise guidance. And so they're looking at a price target upgrade as well to $17.50 a piece, from previously around, it would be around a 22% increase from their last close. Bloomberg Intelligence, of course, looking at the earnings, focusing particularly on the recovery in their F series, which will be key to their earnings performance moving forward, especially because Ford did announce a recall of more than 741,000 trucks and SUVs, which raises questions about quality control and risk from warranty costs. So I'm sure we'll hear about that and more from Ford after the bell when they report earnings on Tuesday.
And of course, we'll be covering that when it happens on the close and on Bloomberg Business Week. Next up,
taking a look at ExxonMobil as well this morning, Scarlett, of course, very much part and parcel of the oil story today. We know that Brent and WTI down more than 6%. And, we'll see how this bodes for ExxonMobil earnings. That's due on July 31st. Bloomberg Intelligence, though, saying that, ExxonMobil has enough of diversity in its upstream portfolio that appears positioned for long-term growth, even though there is a lot of geopolitical risk in the short term. And their strategy of restraining capital investment and generating greater synergies to maximize upstream growth is also going to be very helpful through this uncertain times. And so we'll see how those earnings results go. Once again, that's due on July 31st.
All right, Christina Aquino, thank you so much. Christina Aquino is managing editor of Markets Live. You can check out the blog on the terminal by typing MLIV GO on your Bloomberg terminal. For more conversations like this, subscribe to our Stock Movers Reports, 5-minute audio reports on the biggest winners and losers in the stock market. Stock Movers is available on Apple Podcasts, Spotify, or anywhere you listen. As we were just talking about, NVIDIA is working on a fresh round of AI infrastructure deals, potentially worth more than $750 billion, including an AI initiative with SK Hynix for almost $500 billion. The CEO of NVIDIA, Jensen Huang, spoke in an exclusive interview with Ed Ludlow about investing in South Korea. Take a listen.
This is the golden ages for Korea, as you know. Their semiconductor business is booming. Their industrial business is booming. You know, this is a country that has the ability to help the world build out the AI infrastructure. That they're incredibly adept at adopting new technologies, and is a really technologically forward-leaning society.
All right, that was NVIDIA's CEO Jensen Huang, and joining us now is BTech anchor Ed Ludlow. Ed, the numbers just keep coming, the investments just keep coming, the circular deals keep coming. What's the view of that type of structure as this AI infrastructure evolves? What's the feeling out in Silicon Valley about how this is evolving?
Part of the reason there is even a debate about it being circular or not is that there isn't a great explanation of what the numbers actually represent. So you've done the reporting about, you know, what Dean has written on the terminal on OpenAI. If we just take SK as a case study, it's $500 billion or $500 billion. And at some point in that conversation with Jensen, I just said, could you just explain what that number actually is? And he was like, well, sure. It's a number that represents what we, NVIDIA, are going to be buying from SK Hynix in memory chips, but it also represents what SK as a group, a conglomerate, will be spending on their own AI infrastructure, and then everything in between that we co-invest in. And there's like no real explanation of like, okay, so you're giving them dollars, or are they giving you dollars, or are you basically just tallying it up and calling it even at the end of the day? And that's a big part of it, right? That people just don't know the directional travel of those dollars. In the OpenAI case, what we're reporting is much more explicit, where, you know, NVIDIA is both guaranteeing and backstopping, but also providing financing for AI data centers that at the end of the day, they do use NVIDIA's technology. And that is by definition circular.
Okay, so going back to that deal or agreement or partnership with SK Hynix worth more than $500 billion, do we know if that ever actually happens? I mean, it's one thing to announce that you have these grand plans. It's another thing for the two companies to execute on it.
So it's over many years. It's over time, but there's no set deadline or time frame. It is literally bucket one, NVIDIA buying memory chips from SK Hynix. SK Hynix has 60% market share in high bandwidth memory. But SK Group, with SK Telecom underneath it, is a big deployer of data center capacity. And where do they buy their, not just GPUs, but their servers from? Now from NVIDIA. So it's a multi-year thing. It won't show up in any one company's one-year financials. But let me just be honest with you, Scarlett, about it. Jensen and NVIDIA, they like big round numbers. And it's really normal for them to announce it in that way.
What do you think Silicon Valley is going to be really listening for this week, Ed, when we get some of these big tech companies reporting on Wednesday and Thursday?
Yeah, so it was a really simple arrangement between Wall Street and the biggest technology companies to this point. The biggest technology companies had to say that they were going to spend more every year. CapEx would go up, and they needed to show top-line growth. And if they did that, I would be on the show with you the next morning, and there'd be green on the screen, and everything would be rosy. Now there's a lot more scrutiny. There needs to be much more evidence, not just top-line growth, that all of the rising CapEx results in something material. And we learned that lesson through Alphabet, right? So with Amazon, Microsoft in particular, but also Meta to a lesser extent, people want to say like, okay, I understand this metric about how people are using the AI that you've developed, not just that your sales are growing. You know, Alphabet showed really strong growth, but the market was still worried about the rising CapEx number.
Before we let you go, very quickly, there was a Chinese chip maker that made a debut, and in its debut, CXMT jumped, I'm looking at this, it looks like a typo, 466%?
Yeah, and now is mainland China's most valuable company overnight. What you need to know is CXMT is the #4 maker of memory chips, but it is the case study for China wanting its own domestic industry. It's the flagship for China finding a domestic hero. It has a long way to go to catch up, but the proceeds of this IPO will help it to establish memory manufacturing in China. And it's also an international success.
Right.
So those other memory names will be looking over their shoulder.
All right, Ed Ludlow, thank you so much. Ed Ludlow is host of BTech every weekday at 11 a.m. Eastern Time on Bloomberg Television. We have the S&P 500 gaining 0.25%, the NASDAQ up by about 0.1%. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom, with this Bloomberg Business Flash. 7 of the 11 major industry groups in the S&P 500, they're higher right now. It's communication services that's in the lead. That's home to Google parent Alphabet. Alphabet shares right now up 3.2%. And, of course, energy at the bottom of the heap as the price of oil falls over 6%. And Baker Hughes shares up 8% for the best performing individual stock in the index. The oilfield services firm reporting second quarter earnings per share that beat the average analyst estimate. Jersey Mike's Subs, the initial public offering has attracted institutional investor demand more than 10 times the available. It's a sandwich shop.
It's a good sandwich shop.
It's an expensive sandwich shop, but every sandwich is expensive these days. So
it's on track to price after the close on Wednesday. And the shares, they're going to start trading on the NYSE July 30th, the ticker symbol JMKE. Right now, the S&P 500 up 14 points, 74.26 on the index. The Dow up 400 points, 52,351, and the Nasdaq Composite Index 17 points higher right now. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Paul and Scarlett.
All right, John Tucker, thank you so much. Appreciate that. Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio in New York. I tell you, Dan Curtis on Bloomberg Television in London, he puts out these great notes throughout the day just about the market and what's going on. I steal from them totally, and I've got approval from him that I'm allowed to steal from him.
He makes it available for everyone. He's very generous.
He is. Here he's got, this is one I love today. It's the busiest week for S&P 500 earnings with $24 trillion reporting this week. Thursday, the biggest day, $10 trillion market cap. That's got Apple and Amazon. Wednesday, the second biggest day, about $7.7 trillion, Microsoft and Meta. So no matter how you slice it, big week for earnings, a big week for eco data as well. So that's why I'm in here for 5 days this week. So you know it's big. Matt Stuckey, Chief Portfolio Manager, covering the equities business for Northwestern Mutual Wealth. He's paying attention. He's out there in Milwaukee. This is their summer. They get like 4 days of summer, and then it's back to snow and ice and all that kind of stuff. Matt, thanks so much for joining us here. What are you taking away from earnings so far, and then maybe what are you looking for this week?
Oh, good morning, Paul. Yeah, we are enjoying the summer. It is a little hot here, but
right.
you know, I think we get a little bit more than just 4 days, 4 months. But you know, who's counting? Look, in terms of earnings, you know, some of the momentum that we saw in Q1 is clearly taking forward and demonstrating itself here in Q2. Albeit, you know, the bar is a little bit raised. You know, the overall kind of aggregate price index is up quite a bit, and that just, you know, increases the bar in terms of where companies need to clear to deliver a positive share price response. But you know, I think the important takeaway for me is that earnings revisions are going to continue to go higher, and that's been the fundamental support through a lot of this geopolitical uncertainty, is that earnings have continued to grind higher, and that's my big takeaway so far in this earnings season.
All right, earnings have continued to grind higher. The ones that are in focus this week are the rest of the hyperscalers. And I wonder if we're going to get a similar reaction to those results, you know, the CapEx announcements in particular, as we got to Alphabet's, which was kind of a want.
Yeah, that's a really good question. Look, I mean, I think that the same condition is still out there, that the world is short of compute and hyperscalers are going to spend what's necessary to bring it to life. You know, the tolerance, though, is changing as the funding sources has changed. So you know, we went from operating cash flow to debt markets now to equity market capital to finance this build out. And you know, that introduces, you know, increasing levels of skepticism naturally on the part of investors. I think that, you know, there is a limit to this. There is a limit in terms of how many executives are willing to let their stock start to move lower as a result of this spending. And I'm not sure if we're there yet, you know, given the response of Google, but we're a lot closer than we used to be. You know, the bar that Google set, in my opinion, was pretty high. You know, they talked about how, you know, quickly their cloud business is growing, but they're also, you know, demonstrated really strong margins. Incremental margins are north of 50%. That's a good result from a margin perspective. And so you can see the incentive on their part to spend aggressively to do more of this. That still wasn't good enough according to the eye of the market, though. And you know, that's a high bar that I think other hyperscalers are going to have to contemplate in setting guidance and capital allocation plans in 2027.
Switch gears here and talk about real estate. I had a real estate portfolio manager on Bloomberg Surveillance this morning, and just talking to us about the really good performance by a lot of the REIT sector, which I found surprising in a rising interest rate environment. But I know, Matt, you guys recently returned REITs to a neutral allocation. Talk to us about that.
Yeah, you know, this is a kind of an under the radar part of the market that, for the most part, been in the rearview mirror, you know, during all the struggles during the pandemic, and rightly so. This was kind of right in the bullseye in terms of the impact, at least in the shorter term, for kind of where vacancies were rising, where rents were starting to suffer a little bit, especially in the office market. But you know, a lot has changed since then, and what we're seeing fundamentally is that we've had, 3 or 4 years worth of decelerating construction starts, and the other side of that is a cycle that's inflecting positively, and that's what we're seeing today, where we're seeing rising cash flows from the assets that are already in the ground. And if you want to bring on new supply today, it's a much higher cost basis to do so. And so, to us, we like that as a real estate investor, is that inflation is on our side in this asset class. And from a portfolio construction standpoint, what we really like about it is that it starts to hedge both sides of the distribution around inflation. Now, we think, over time, inflation should come down, but if it doesn't, if we don't have that action from the central banks around the world to fight inflation, this is an asset class that protects against that outcome, where that inflation ultimately finds its way in rents that we would collect as investors.
How do you make room in your portfolio for REITs? What do you give up?
Yeah, so we allocated money away from a longer duration part of our fixed income exposure. And this brought our fixed income allocations back to neutral. And it was a way for us to still feel like we had duration expressed in our portfolio, but in more of an inflation hedged type of allocation, if that makes sense. And so really we plotted from longer duration fixed income over to real estate. And so, yes, it's still a longer duration in terms of our exposure, at least the way we think about it on the equity side, but with a little bit more of an inflation hedged exposure at the end of the day.
All right, Matt, thank you so much. Appreciate it as always. Matt Stuckey, he's the Chief Portfolio Manager, Northwestern Mutual Wealth, out there in Milwaukee, enjoying that nice summer out there. It's hot out there. I saw in the weather.
What's hot there?
The whole, middle part of the country, heat dome type thing. I think we had a couple of weeks ago.
Yeah.
They're getting
we had the Canadian wildfires on top of that, so that was really fun.
And they're getting some wildfires now coming down to Florida. They're saying...
You're joking.
No, I saw that. And they're starting to see it in the Panhandle already. Crazy weather out there. All right, let's get away from the AI talk. Let's go to the big take story out there. And it's a good one because it's a non-AI big take story here. It goes about the tin can industry here. And it goes to tariffs and protectionism. The industry's struggle, that's the tin can industry struggle, is a cautionary tale as the U.S. president tries to rebuild his protectionist regime. This story went deeply diving into the tin can business, which I don't even think about the tin can business, but apparently we make a lot of tin cans every year.
Yeah.
Sean Donna joins us here at Bloomberg News. He's a senior economics writer. Sean, talk to us about the tin can business in this country and how is it being impacted by tariffs?
Sure. Well, thanks for having me. Look, the tin can is this wonderful little case study that we can take into what has happened actually with tariffs and the results. I think when we talk about tariffs nowadays, we often talk about the promise that this will mean a return in manufacturing, the promise that lots of jobs will come with it eventually, that there'll be a huge amount of investment in the United States. And the tin cans are an example that should kind of give us a bit of pause when we hear some of those promises. And I dove into this because in March of 2018, Wilbur Ross went on TV, and this was right as they announced really the first Trump tariffs, which were the tariffs on steel. And the markets were going down, investors were nervous, and Wilbur Ross went on TV and he held up a Campbell soup can and he said, you know what? There's only 2.6 cents worth of steel in this, and these tariffs aren't really going to affect it and the price of this. And moreover, we're going to get tens of thousands of jobs and hundreds of millions of dollars in investment. Well, he went out that day and he bought a can of Campbell's, it was chicken noodle soup. And he said he went to his local 7-Eleven, bought it for $1.99. So I thought I'd do the same thing as Wilbur Ross. And I went out to my local 7-Eleven and I bought that can of chicken noodle soup and it would cost me $3.49, right? So that's not a surprise that in this kind of era of inflation, prices have gone up, but it's why the price has gone up. And part of the reason for that is there's a 50% tariff on the steel that is used to make tin cans. And then we started looking at, okay, has there been investment in making that steel that is used in tin cans? Well, the answer is no, actually, it's gone the opposite way. There were a dozen mills that made tin plate steel when Wilbur Ross held up that can. There's now 3 running in the United States. In 2018, the U.S. imported 50% of the steel that was used to make tin cans. Now it imports 80% of that steel just because domestic production has not gone anywhere. And we just haven't seen the jobs. There are now, in all of the steel mills in the United States, there are now only about 1,300 more people working in those mills than there were in 2018. So it's, it's one of those stories of, I think of it as a story of kind of unfulfilled promises,
right,
unintended consequences, and that, the promise of tariffs, what actually happens when they go. Now, this is just tin cans, right?
This is just tin
one
cans.
Small part of the can.
What is happening to those tin cans? Because they're made somewhat differently now than they were before, aren't they?
Yeah, well, this is really interesting. So I went up to the Can Corporation of America, which is just outside Allentown, Pennsylvania. And if you go there on the production line, they will tell you that they use roughly the same amount of steel that they did in 2018, and they turn out more cans. Why? Because that tin can that you're buying in the store is actually thinner than it used to be. They're actually reducing the amount of steel in each tin can to try and save on costs. So we've had some kind of innovation there. That steel is also, as I said before, it's more likely to be coming from overseas.
I love this stat here. Each year, Can Corporation and its 350 employees turn out just shy of 1 billion tin cans in 200 different sizes that are destined to be filled with everything from coffee to industrial adhesives.
I think about this, and I can't remember the last time I used a can opener because so much soup, for instance, broth, is always in the paper packaging now instead of tin cans.
Oh, no, I go Campbell's soup big time. Yes.
New Jersey products.
Yes.
That's why.
And if you talk to people in the can industry, they will kind of look at you very skeptically and say there's nothing quite like a tin can in terms of holding up and the ability to stack it and so on. But yeah, that has been one of the threats to the can industry, has been kind of alternative packaging. And some of that, which has been prompted by the higher cost of cans.
All right, great story.
Price side,
this is the Big Take story. You can see it on Bloomberg Terminal, and you can see it at Bloomberg.com/Big Take. Sean Donnan, senior economics writer for Bloomberg, talking about the tin can business. I didn't even really think about the tin can business, but
took it for granted.
I read this thing on the way up this morning, and I was like, yeah, that's interesting. More coming up. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Major averages, they've turned mixed. Kind of groping for direction. Semiconductor stocks under pressure. SanDisk, Western Digital, these are the two laggards right now in the S&P 500. And the earnings is going to get real intense this week. Microsoft, Meta, Amazon, Apple all open the books to investors this week. Spend and returned on that spend, that's going to continue to be a focus for investors. Oil prices softening after the U.S. Seems like it paused its two-week campaign of strikes against Iran. Right now, Brent crude 7% lower. We're at 89.99 a barrel. And then, oh yeah, there's a Fed meeting this week. Isabel Mateo said BNP Paribas says this week's policy meeting is unlikely to result in any shift.
Our base case remains that they also do nothing. However, there is a case to hike, and several of the FOMC members have been making it, and so it will probably be one of these good family fights that Kevin Walsh has been talking about.
S&P 500 down 19 points, 73.92. The Dow up 194 points at 52,140, and the Nasdaq Composite Index 180 points lower. Shake-up at Barrel de Cracker.
Oh, yeah.
Cracker Barrel Old Country Store has named David Deno, the company's new CEO, replacing Julie Massino, who fought to help the brand recover from all the backlash over the 2025.
Feels like scapegoating.
Rebranding.
Yeah.
Yep.
People just didn't.
They didn't take to it.
Mess with the cracker.
Exactly. A country boy breakfast, the country ham. And
nothing. I mean, the meals didn't change. They just sort of updated
It's the logo.
stores and the logo.
Yeah.
Whatever.
Just keep the biscuits and gravy, John.
Yeah, we check the markets for you. People don't like change. Right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash, Scarlett and Paul.
All right. Thank you so much, JT. You say people don't like change, but we're seeing a big change in oil prices, and you would think people would like that, except markets have turned lower. Equities are now...
Don't know why.
Yeah. S&P and NASDAQ are now both in the red, giving up earlier gains.
Yep.
I'm looking at WTI and Brent, and they're continuing to stay lower, down by about 6%. Brent is now at $90 a barrel. Last week, it got to over 100. I mean, touched 100. Yep. WTI is at $83 a barrel. Let's bring in Ellen Wald. She's president of Transversal Consulting. She's a senior fellow at the Atlantic Council. And Ellen, I'm confused because the surge in oil prices was tied to this resumption of fighting between the U.S. and Iran in the Middle East. And now, we've had 3 days of limited interaction, and that's enough to drive oil prices down this much. It feels like it's just a matter of time before it goes back up, because we also know this war isn't ending.
Exactly. You're not the only person who is surprised that the events that occurred between basically Friday to now have pushed oil prices down this much. I think that is probably a sign that it's not just geopolitical events. I mean, right now we have the same issues going on in the Strait of Hormuz that we've had for a while. There is a U.S. blockade. There's Iran also not letting ships through. We've got mines. Apparently another ship hit a mine and there was damaged over the weekend. We've also got issues in the Red Sea. The Houthis have threatened Saudi oil. We've seen a lot of tankers and other ships lose insurance coverage now. And so they're now having to add, they used to be going around Saudi Arabia, going into the Red Sea, picking up oil, coming out. That adds a little bit of time if you're going to Asia. Now they've got to go all the way around Africa, essentially, and pick up oil in the Mediterranean that's either gone through the Suez Canal or along a pipeline there. So they're adding a lot of time. We've got outages from Kazakhstan. They're outages, their oil is now down about half. They're only, exporting about half as much as they were. We have now reports just this morning of some damage to Saudi oil infrastructure. pressure along the east-west pipeline. Some pumping stations appear to be damaged. A refinery is damaged. We're waiting for more information, but all of this actually says that supply is down as opposed to up, and yet oil prices are down. And so it certainly seems like really what we should be seeing is an increase in oil prices, not a decline.
Ellen, if I'm Iran, don't I need the Strait of Hormuz open as much or more than anybody? Or do I have other ways to get my oil out of the country?
So they really have very few options to get their oil out of the country. It's not really feasible for them to ship it, by rail out the other side of the country. They're not set up to do that. So yes, they do need the Strait of Hormuz to be open. They need to be able to use the Strait of Hormuz. That's why, every time Iran before this incident would threaten to close the Strait of Hormuz, it was always kind of it didn't really make sense, because if they're going to not let anyone send oil out of the Strait of Hormuz, then Iran's oil would presumably be stuck as well. And so I think we've gotten to the point where they got some oil out. They've got this breathing room, and so they just don't see any reason to. They don't have the same kind of pressure on them to work out a solution.
How are the oil importers reacting? And I wonder if the way that they're reacting has any impact on oil prices and how they move.
So it's very interesting. What we've seen from China is that China is a big importer of Middle East oil. Now, if this conflict had happened, 20 years ago, we'd be in a very different situation, because back then the West, particularly the United States, was much more dependent on Middle Eastern oil. But now it's Asia, especially China, that's the big customer for this Middle Eastern oil. And so what we've seen is that China has cut their imports quite a bit since this started happening, and that's definitely given the market more breathing room. But this is not a situation that seems to be able to last forever. It's not necessarily due to major declines in consumption, for example. They're probably tapping some of their reserves, but this can't continue, go on indefinitely. And at some point, they are going to increase. They're going to increase their imports. They have increased it somewhat. That's what some of the early data is showing, but it's unclear whether that's going to hold, since there's been so much fluctuation in prices recently.
So what is Saudi Arabia doing here? Can they take care of their distribution through their pipeline, or do they need the Strait of Hormuz open? I'm just wondering about some of the neighbors in that part of the world. What kind of pressure they can put on both sides, Iran and the U.S.?
So Saudi Arabia is probably the best situation of any of the oil exporters in the Middle East. Not only are they blessed with incredible geography, which they have taken advantage of. I mean, they really, if you want to talk about being prepared for something like this, Aramco and the Saudis were very well prepared. They've got this east-west pipeline, so they can pump oil in one part of the country and ship it all the way across the country to basically their ports in the Red Sea, which was working great. Now, the pipelines aren't set up for the same capacity that they would normally be shipping out of the Persian Gulf, but they were able to maintain, sales. They were able to get oil to their customers, in terms of the contracts that they've already have in place. The problem now is that if these facilities are being attacked, then they're really potentially going to be hurt now. Plus, they can send oil out of the Red Sea, but if the Houthis are threatening them, then they've got to send it north to the Suez Canal. And the Suez Canal is not equipped to handle a fully laden, very large crude carrier. So that ship has got to either offload some oil, or they've got to split it into two smaller ships, because we do not want to see a repeat of getting a ship stuck in the Suez Canal.
No, you don't. Before we let you go, Ellen, just a final question. Does OPEC or OPEC Plus, which is OPEC and its allies, do they matter at all in everything we're talking about here?
It's a really good question. I actually argued recently that they don't. Essentially, they don't matter. There's really nothing they can do at this point that can help the situation. They've got to just wait it out until things open up, because there's really very little they can do. They can put through production increase after production increase, but at a certain point, there's just no more oil that they can increase, because if no one can ship it, then they've got to shut it in. So really, OPEC is in the same kind of waiting game.
Yeah, they don't solve the problem at its source, which is the transport of the oil, the movement of it. Ellen, thank you so much. Ellen Wald is president of Transversal Consulting, joining us to talk about the oil markets here with Brent down about 7%, $90 a barrel. This is a complete turnaround from what we saw earlier just last week as the U.S. pauses daily strikes against Iran for, I believe, a third straight day. There was almost 2 weeks of daily strikes that ravaged the oil market and got people really nervous. WTI off by 6% at 83.65 a barrel. This is Bloomberg Intelligence on Bloomberg Radio.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Scarlett Fu and Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well here. Right in the middle of earnings season. That's true for our good friends over in Europe. And, you know, we've seen a lot of price increases, whether it's tariff-related, commodity-related, and companies, by and large, have been able to pass those price increases on to customers. Will that continue in the second half as we think about profit margins? Tim Craighead, Global Chief Content Officer for Bloomberg Intelligence. He joins us. He's based there in London. So, Tim, what are we seeing the companies that you guys cover over there in Europe about cost increases and protecting margin, passing along to consumers? Where are we at this point?
So far, so good. If you look at the core of the earnings reports that have come through so far, Paul, had about a third of corporate Europe report. We've got another third coming this week, so it's a big week. as it is with you all. But so far, we've got, call it 50% beats, 30% misses. That's not the same sort of ratio that you'd normally see in the U.S., which tends to be more skewed to the positive. But this is a good earnings report for Europe. They don't play the game quite the same way in terms of beat and raise. But growth is tracking at about 12%, which is a little above expectation. I would say a lot of the growth has come from financials with higher profit margins, net interest income, pharmaceuticals, where we've had a couple of really good results, and semi-equipment. ASML, is a huge company over here, and they're clearly in a good position. So I would say good, but not extraordinary and narrow.
Okay. I mean, you mentioned ASML. It feels like that's the main tech name, if there are any at all. I feel like we only hear about ASML. So which is the sector that has the most growth prospects? I mean, which one do people get excited about? Do people have the highest conviction about the way that they would about the tech sector in the U.S.?
Yeah, I mean, it's interesting, Scarlett. The sort of techification, if I could be so bold as to make up a word, from a European construct is number one, certainly ASML. Don't forget, we do have SAP over here, which, is
software
massive
name.
company massive software name, but you know how software has been under pressure from the proverbial SaaS apocalypse. And we've got a couple of other semiconductor companies like STMicro and Infineon, but STMicro just laid an egg last week with a significant drop in share in the stock price after earnings. The real sort of broadening out here comes through the industrials. Think about companies like Siemens and Schneider Electric and ABB, and there's a whole raft of companies underneath of them that feed into the whole AI data center build out and the electrification of the economy, not only here, but globally. And that's the pseudo tech play over here, along with something like ASML.
Hey, Tim, when we had, early last year, when tariffs really came into play, there was a little bit of a rotation out of U.S. into some other parts of the world, most notably Europe here. Has that been a short-term trade? Is that money still there? Is it rotated back to the U.S.?
Yeah, I tell you, Paul, it's really interesting. There's a chart that inevitably I end up using when I'm meeting with clients that shows U.S., Europe, and emerging market indices, and then U.S. versus the world. And, you can go back 15 years and look at U.S. outperformance on a very consistent basis. And that came to a pretty abrupt end at the beginning of last year in advance of tariffs. And, for the past 18 months now, after an initial fall off where the U.S. underperformed on that trade to broaden out, as you alluded to, it's essentially been flat. And, you look right now, year to date, the Euro Stoxx 50 is up 8.5%. The S&P up 8%. NASDAQ up 7.3%. So, Europe's actually doing okay. And there continues to be a broadening out from a lot of the anecdotes that we hear talking to globally oriented institutional investors who are just very heavily weighted towards U.S. equities.
I like what you said about how European management doesn't play the same earnings game that American management does. Is that changing? I mean, has that started to change with the techification of Europe and the rest of the world?
The new buzz phrase. Yes and no. I think that there is sensitivity certainly to what evolves with the earnings reporting period, but there isn't the same maniacal focus on setting up the earnings expectation to beat a little bit that does happen quite seamlessly in the U.S. markets. Like I said, having this 50 versus 30 beat versus miss here is a pretty good ratio. I'd also say that if you look at that the tenor of, say, management comments on analyst calls. I think historically European managers can be pretty conservative.
Yeah.
They've gotten a bit more optimistic. It's interesting. Right. We do this management sentiment index, and it's actually the best sentiment in this earnings reporting period that we've had since the pandemic. So they're actually getting more positive.
Very good. Tim, thanks so much as always. Always appreciate a few minutes of your time. Tim Craighead, Global Chief Content Officer for Bloomberg Intelligence. He is based in London via Southwestern Virginia. Back in the day. This is Bloomberg.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
Concern about rising prices spooking investors.
What does renewables investment look like in the U.S.?
More tariff talk coming out of this administration.
Breaking market headlines and corporate news from across the globe.
The president wants lower interest rates. He wants a rate cut cycle.
How do you broaden out the AI play?
Are people just looking for something to worry about when it comes to China?
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals, and the Bloomberg Business app.
Good Monday morning. This is Bloomberg Intelligence, broadcasting live from the Bloomberg Interactive Brokers studio in Midtown Manhattan. We are also streaming live on YouTube. Paul Sweeney, Scarlett Fu, and John Tucker with you for the second hour. So the band is back together on this July Monday morning. A lot to get to because the Farnborough International Air Show ended, and we know that a lot of deals got made, more than 300 orders. George Ferguson, our senior aerospace, defense, and airlines analyst, will walk us through what it means for Boeing specifically. Laura Martin will be joining us as Meta gets ready to report earnings on Wednesday. She has a note out about how Meta, and there is a high cost of a bad culture perhaps taking place there. So that headline is certainly intriguing. We're also going to check in with Gene Goldman. He is CEO of Cetera on inflation expectations and the overall market volatility. We've got a Fed meeting this Wednesday. And we're also going to check in with Emily Harding. She is Vice President of the Defense and Security Department at the Center for Strategic and International Studies on the latest out of the Middle East. There hasn't been any U.S.-Iran fighting for about
3 days, right?
3 days, okay. And that's providing some relief to oil markets. Let's get over now to John Tucker for our Bloomberg Business Flash.
All right, Scarlett, thanks. The major averages mixed right now. Information technology, worst performing major industry group in the S&P 500, and that's where you find the semiconductors. The Philadelphia Stock Exchange Semiconductor Index, the SOX down over 4%. You have SanDisk, Coherent, and Western Digital, the laggards in the S&P 500. Actually, Workday, the best performing stock in the index, up close to 8%. This is application software. Some analysts have said it's undervalued. I'm going to do SpaceX real quick. Down another 4% today. So this extends the losses for a second straight day. And I checked the high was what, June 16th. Since June 16th, SpaceX shares are down 45%. Meantime, Cameron Dawson at New Edge Wealth says it's all eyes on earnings.
We get those big AI spenders this week with Microsoft, Amazon, and Meta, and that's all happening in the shadow of the reaction to Google's results last week. Google, of course, put up really strong numbers, but investors balked at the big CapEx bill that sent free cash flow negative for the quarter.
Right now, the S&P 500 is up close to 10 points, 74.22. The Dow Jones Industrial Average up 273 points, up about 0.5%. The Nasdaq Composite Index lower, down 4 points right now. No more empty nests. The share of young American adults living with their parents is near COVID lockdown highs, driven by, among other things, housing costs. Thrivent survey. These are the folks who came up with this figure. Letting a grown son or daughter move back into your house can cost roughly $1,500 a month. I'm going to say that is a real low estimate. Really low.
How do you know, John?
Let's just say I know. You know?
I think we all.
I also got my property tax bill today for the quarters.
You're not a happy boy.
You know, Gee willikers.
Well,
Anyway.
you get a mountaintop estate on the Jersey Shore.
Easy. They're going to raise it again. You talking it up like that.
Yesterday at lunch, we saw this young couple. They had 3 little kids, and they're just barely trying to hang on. The kids are going crazy, trying to feed them. And I said to the dad, this is what empty nesting looks like. You would just kick back, relax.
And then the grandkids move in.
Exactly.
We check the markets and other stuff right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash.
All right. Thank you so much, JT, for that check on
rising.
other stuff. It's always the other stuff that makes the morning. Let's check in to get a sense of the stocks that are on the move here on this mixed day in equities on this Monday morning. And for that, we have Jody LeGroux. She joins us now. Judy, what are you looking at? What catches your eye?
Good morning, Scarlett. First, let's start off with Baker Hughes, ticker BKR. The oil field services firm is rising as much as 9.5% on the day, but currently it's trading at about 6.8%. It's on track for its largest intraday jump in over a year, and this is coming after the company reported second quarter earnings that beat analyst estimates. And this beat was driven by an increase in industrial orders that doubled year over year. And the industrial and energy technology guidance was raised through 2028. Analysts at both Citi and Piper Sandler wrote that the conflict in the Middle East had a lower impact on margins and revenue than anticipated. And that's what drove really the earnings per share beat for this company.
All right, good day for them. Stock's up 6% today, up 33% year to date. What's next?
Sure. Next is Cracker Barrel, ticker CBRL. The stock is sliding as much as 6.3%. Right now, it's down about 4%. It's on track to reach the largest intraday drop in about 6 weeks. And this is a really complex story here. As many of you remember, Cracker Barrel had a redesign last year where they changed their logo and they basically had a big revamp that had a lot of backlash that came as a result of it. And in tandem with that, the CEO that oversaw all of that is stepping down, and that announcement was made today. David Dino will become the company's next CEO effective August 10th. And what was really interesting that the analysts really called this move by the company surprising. Citi specifically noted that Cracker Barrel appeared to be gaining some same-store sales momentum after the 2025 logo episode. And Bloomberg Intelligence noted that Dino's long-term success will hinge on whether he can attract talented executives to work with him in Lebanon, Tennessee, which is about 40 minutes east of Nashville.
As long as the biscuits and gravy are good, that's all I'm worried about.
Yeah.
Biscuits and
You
gravy.
don't care about the logo.
No, please. All right, how about Tyson Food?
Sure. So Tyson's Foods is climbing as much as 6.9%, and it is currently up about 6%. It's on track for its largest intraday increase in almost 3 months. This is coming after the U.S. Department of Agriculture said late Friday that the U.S. would resume cattle shipments from Mexico in an effort to ease the domestic shortage that has led to higher beef prices. And this is after more than a year-long ban was put in place to prevent the spread of what's called a New World screwworm, which is a parasitic fly that can kill cattle within days if left untreated. Barclays analyst wrote that this move will lower prices and called it a clear benefit for beef processors in America. JBS, ticker JBS, another meat processing company, is up as much as 8% on this news, its biggest jump in over 4 months. So Tyson Foods, ticker TSN for that.
I watched Dutton Ranch. I know all about the cattle industry.
Dutton Ranch.
Exactly.
That's the next line of business you're getting into.
Screwworm on that show?
No, they take care of that
no,
very
they took
quickly.
that plot line out.
Very quickly. So no, I know all about the ranching business. All right, thank you very much. We appreciate that. For more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Jody LeGroux with that report for us. We appreciate it. George Ferguson joins us here, Bloomberg Intelligence Aerospace and Airlines Analyst. George, you just got back from the big aerospace show in England. There were some headlines, but how would you characterize it? Were there big orders from airlines and the aerospace companies?
No, I'd characterize it as a little bit of a disappointment. So I think expectations were low going in. The backdrop isn't great right now, right? The price of fuel volatile, up heavily and volatile, which I guess is probably even the more scary word for airline executives. And given that backdrop, a war in Iran, war continuing in Europe, I think folks were sitting on their hands, not placing a lot of orders. What we did see was lessors place most of the orders, and typically lessors will come in at speculative points, right? They'll look to place orders in hopes that everyone kind of got it wrong here. This wasn't an inflection point. There's more demand for airplanes down the road. They'll place these orders, and then by the time they get delivery, kind of hope the market stronger than everybody thinks and more demand for airplanes.
Okay, so it's interesting that the orders were not as robust as people had anticipated when it looks like the airline industry is doing great. I mean, there's plenty of demand. Yeah. Ticket prices are up. I know fuel prices have increased, but it feels like airlines are passing that along to passengers and people are paying up for it. So how do we reconcile that?
Yeah, I mean, so there's a couple of ways to reconcile that. One, I would say backlogs are still pretty strong. So look, don't worry about the airframers' ability to build airplanes. The most important airplanes in their product portfolios, A320, 737, the narrow bodies, they have, they're into the next decade. When you place an order today, you're into the next decade for a lot of those before you're getting any deliveries. Also, the same is sort of true for the 787, A350. You're 6-7 years out, I think, before you got to get an airplane. So there's a lot in the backlog. A lot of orders have already been placed. But again, look, I think the airline's probably looking at that backlog thinking they should be regularly in to refresh those orders. And I think they're, again, sort of watching how the world develops here. They've not recovered all of the increased cost of fuel. They've started to recover, as we're seeing from the U.S. earnings season. So there's still more work to be done. I think the airline business, the marketplace, would have to be smaller at these higher fuel prices. I don't think these fuel prices will persist long term anyways, but I think they're watching that and trying to figure out where we go from here.
All right, George, hopefully at least you had a good time and some good parties and some good meals, because that's, at the end of the day, what these air shows are all about. George Ferguson, thank you very much. Appreciate it. George covers all the aerospace and airlines for Bloomberg Intelligence. Next, I want to bring in Laura Martin. She's a senior analyst at Needham & Company. She's out there in L.A. I've known Laura for decades. She's covered the media industry for decades. And what has characterized her work, from my perspective, is just the level of innovation in her research. She looks at companies and industries very differently than most of the street. And as an example, I'm going to say 25 years ago, maybe even more, she really put return on invested capital front and center for her research. And I didn't know anybody else doing that back in the day. And that was really unique, and that drove a lot of some really cool research back in the day. Now, I think she takes it one step further. She uses the ratings from Glassdoor, which kind of looks at the culture and values of its employees across her research coverage. And she says, you know what? If happy employees are valuable employees and they create shareholder value, and that's one of the metrics you should look at. Laura, thanks so much for joining us here. Talk to us about this research, and you guys highlighted Meta recently using this type of research.
Yeah, so what we're doing is we're looking at the fact that out of the 23 stocks we cover, Meta pays the most in stock-based compensation per employee. Both are metrics you can pull out of their public financials. So they're paying every single employee at Meta, which is like 70,000 people, $300,000 each. So presumably some people, like receptionists, don't get stock, which means they're probably paying people who do get stock $500,000 each in stock-based comp. So you say to yourself, why are they paying more, a lot more, than everybody else in big tech and in big cap? And when you look at the answer. Out of the 23 companies we cover, their ratings by employees today is a 2.8 out of 5, which is the lowest of all the companies we cover by a lot. Like Netflix is 4.4, Google 4.2, and Meta's down at 2.8. So
that's a huge difference.
One of the reasons they have to pay so much is because their culture and values are really low and horrible internally.
Okay, say more about this. What do we know about the culture and the values? I mean, you dug into all of this. What did you find?
So I think the problem is, the CEO is unimpeachable. He controls the company absolutely. And you've seen him pivot really rapidly from the metaverse. Oh, change the company name, but now we're firing all those people. Quest goggles were really in, vogue for a year, and now they're sort of getting left by the wayside. So now he's doing generative AI, but 3 weeks ago, he said, we're getting into the chip business and we're going to compete with NVIDIA. So I think just this strategic pivoting really demoralizes people and confuses them about what the strategic priorities are of the enterprise.
So the net result is to, I guess, attract and retain. They have to pay more. And in Silicon Valley, that means stock. That's not like Laura and I grew up in Wall Street where it was just cash, cash, cash. Out there, it's all stock. What's the long-term impact, do you think, on their equity value, their stock performance?
I think it means you have higher employee churn, and the people who churn are the people who can get the next job, which means they're good people. So they're leaving for OpenAI or Anthropic or Google. And so that makes, to get the new person to replace that churned out person is just more and more expensive. And that's bad for shareholders because it's dilutive to shareholders if you have to pay people more to attract them and retain them. So I think it's bad for both. I mean, both employees and Wall Street need stock prices to rise. So it's bad for both employees and Wall Street to have them have to give so much equity to attract and retain people, I think.
What does it mean for the company's ability to deliver on these new strategic initiatives? I mean, if Mark Zuckerberg is pivoting the company every 6 months, every year to something new, he's paying up for the talent, but can they execute if if there isn't that allegiance between company and employee the way you might find elsewhere?
Right, exactly. So one of the things he just said in a town hall that he's going to lease capacity. He just did a $10 billion leasing deal where he has built too much capacity because he said his AI initiatives aren't going as quickly as he had hoped. Well, that's exactly the answer to your question, that the employees are either infighting or it's unclear what priorities are. Things are happening slower despite the amount of money he's spending on talent.
Laura, you're one of, there's 72 buy ratings on this company, only 7 holds. You're one of them. Why is that?
Because I think he is destroying value by not having strategic focus. That I think he's got, Quest was about trying to go into competition with Apple. He's in the shopping business because he's trying to displace Amazon. Of course he does search because, right? So that he really is next to search, social and search. He is the #1 competitor to Google. And now he's going in the chip business, which competes with NVIDIA. So I feel like his strategy is reactionary and keeps going into business, sort of trying to compete with the incumbent winner take all participant. And I just think that won't work in the end. He's much smaller than many of these companies he's going into competition against. I just think it doesn't work in the end, I think.
All right, Laura, thank you so much. We appreciate getting some of your time. Laura Martin's a senior analyst at Needham & Company. I followed her research on the street for more than 25 years. It is rarely consensus. She's not afraid to go against the grain.
That was super interesting.
Yeah, and she really looks at things differently. So if for no other reason, that's why I think a lot of people value her research. We've got some headlines coming across the Bloomberg terminal. Trump to Axios. Military operations could return if talks fail. He's decided to pause U.S. strikes on Iran. Trump notes oil dropped. Stocks rose after pausing attacks. That's according to Axios, and we know that's important. Trump to Axios again. U.S. could return to military operations. So we know that financial markets have an impact on his decision making.
Absolutely, and we've seen the S&P 500 erase its gain, is now in the red right now. Oil prices remain lower because there is no conflict at the moment. There are no active fighting, but again, still higher than where they were before.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom with this Bloomberg Business Flash, brought to you by Golden Crest Metals. The inflation, tariffs, and volatility have some investors turning to gold for stability. Get a free gold and silver information guide and learn how to add metals to your IRA or 401k tax and penalty-free. Go to goldencrestmetals.com/guide. That's goldencrestmetals.com/guide. So setting the tone for markets today, sell-off in chip makers, and these tech jitters being revived, of course, ahead of the results from a handful of mega caps this week. Information technology, the home to the semiconductor stocks, that's among the worst performers among the major industry groups in the S&P 500. Worst performing industry group, energy, as oil prices, they decline right now by 6 to 7%. Then you have meat processing companies gaining as the U.S. expected to allow Mexican cattle imports to resume. S&P 500 right now, 2 points higher, 74.14 on the index. Dow Jones Industrial Average up 241 points, and the Nasdaq Composite Index is down 23 points right now. Hollywood production way down. You should know this is the Celebrity Lone Stone.
Odyssey? Are you talking about Odyssey or something else?
No, it's Hollywood produced nearly 100 fewer TV shows in the first half of this year.
Yes, the golden age of TV is over.
So this is the fourth year in a row of declines. Output down almost 50% from 2022. This is from the data tracker Luminate. Cable has suffered the steepest drop with a 47% decline.
Everyone needs to show an ROI on their streaming operation.
Yeah, and the state of California has to get aggressive again on keeping that stuff in LA because every other state's stealing their business because of their tax
Canada.
situation. Yeah.
Other countries.
New Jersey.
Jersey, baby. Netflix right in Monmouth County.
Yeah. If you go down 35 in Middletown, Route 35, the old food town there with the big evil clown.
Have you seen shows being filmed as you drive by?
They're filming it right there. So it's just like...
Is it like a modern day thing or is it an old time show?
No, it's the set is like a gas station. They built a gas station there.
Really?
In the giant parking lot. And I shouldn't tell this story, but they didn't like the backdrop. One of the neighbors' houses, the real houses on the street. So they went to the neighbor and they agreed to paint the guy's house for free.
Oh my God. And so the neighbor said, okay, done.
Yeah, why not? So, anyway, we checked you didn't hear from me.
Yeah.
The market's right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash, Scarlett and Paul.
I would say yes to
new
painting. Yeah.
Thank you. It's not like they can't afford
I was told by the owner of the property that these Hollywood people, as he put it, they spend money like it's going out of style. At least, for productions like that.
Absolutely. All right, very good there, John Tucker. It's Scarlett Field and Paul Sweeney live here in our Bloomberg Interactive Market. We got a mixed screen out there. It's got some gains and some losses. Gene Goldman, he's the CIO of Cetera. He joins us from Santa Monica, California. Shutters on the beach, my home away from home out there. Gene, what's your call here on these markets? We're smack dab in the middle of earnings season right here. Are you willing to take risk and continue to be long in this market? How are you thinking about it?
Sure, Paul, Scott, thanks for having me back on your show. So listen, volatility is back. I mean, today is a great example of this big surge in the market, the pullback. We have a very fragile market. So volatility is back, but what I think is that this time it has legitimate reasons. I mean, you saw the VIX. The VIX late March was, around 30. It's come down dramatically, but the conditions that drove the VIX higher have not been resolved. First of all, we have a fragile piece in the Middle East. You see what's going on in the last couple of days. History suggests that this pause we have, this 3-day pause, is going to be short-lived. Second of all, we have valuations and concentration really leaving no margin for error. High valuations, especially in a stretched market, it's pretty dangerous. And you think about this, the equity risk premium in the S&P 500 is negative. It's negative. You're not being paid to take risk above treasury yields. And third of all, the consumer is starting to break a bit. It's cracking beneath the surface. You look overall, the consumer data looks great, but if you segment it down into consumer by income, it's breaking up pretty fast, pretty quickly. So we expect volatility to pick up. We expect a pullback, maybe a correction. But again, it's a normal part of investing. And as we've said to you many times, a pullback, we are big dip buyers. I mean, there's so many reasons to be jumping in, taking advantage of any dip right now. Strong earnings, and good news out there.
All right, I'm looking at yields right now, and they are lower, but this is largely as we see oil prices come down. I mean, our U.S. Treasuries held hostage to oil once again. I thought that was only above a certain level.
Yeah, it definitely is. And I do think oil, if oil pulls back a bit, you'll see yields continue to come down a bit. But I think more importantly, it's just the Fed meeting, because the Fed is turning more hawkish. And you look at the 210 spread, the 210 spread has flattened dramatically. And that's the market saying, okay, we know the Fed is going to have to raise rates, probably not this week, probably in September, but this puts less inflation pressure on longer term yields. So we are feeling that yields are pretty attractive at these levels. You're being paid to buy treasuries, and we do think yields will come down a bit to take advantage.
So the only real technical analysis I know is I just type in the S&P 500 index and then do RSI for relative strength. And typically it says, hey, this market's oversold if it's 30 or below. It's overbought if it's at a level of 70 or higher. We're at 45 roughly, kind of right smack in the middle here. That kind of tells me maybe we're not overbought. How do you think about that, Gene?
I'm not sure. I mean, we've always learned in investing 101, look at fundamentals, valuations, and technicals. I'm not a big fan of technicals, but I know the RSI rules. One thing we're looking at is more the fundamental technical data. Like you look, for example, the average stock out there has about 19 longs relative to 1 short. So everyone is extremely bullish right now. The good news from the underlying market perspective, market breadth has been widening. Something we tweeted today is that value has outperformed growth now for the past 5 years. It's caught up to growth. Healthier markets, small caps are doing better, mid caps are doing better. So one of the positive reasons we do feel that if there's a dip, take advantage of it, because it's a healthier market and there's a lot of cash on the sideline and the economy is fairly resilient.
So why is it then that when it comes to this week's Fed meeting, the pricing in markets is for a 1 in 3 odd of a rate hike, excuse me?
That's a great point. I mean, I think if you look at the markets before the last payroll report, before the weaker CPI and PPI, there's a high probability of a July rate hike. And we've been saying July is not on the table because September comes after, Jackson Hole, and the Fed will have a new dot plot. Fed likes to make changes after Jackson Hole. We do think that this week, the tone will be very hawkish. Inflation's above expectations. We've seen a jump in energy prices, tariffs last week, but we don't think the Fed raises rates because 9 out of 19 are still divided. Course of the war remains uncertain, and just the inflation readings have been pretty benign, and this gives the Fed more time to look at the data. We do expect some surprises, though. We do expect a couple hawkish voter dissents. We're looking squarely at Hammock and Logan. I mean, both of them have really voiced concerns about higher oil prices and higher inflation ramifications. So we think it's going to be a hawkish tone, but the Fed does not raise rates at this week's meeting.
What's the AI play from your perspective, Gene? It's kind of evolved over these last 3-4 years. How do you guys think about it?
Yeah, I think AI, first of all, AI, it's the future. It's like electricity back in the 1890s. It's just going to be huge. It's going to be ginormous. But the thing to think about with AI, though, just like any tech issue, any tech bubble, there's always this continuum. Stage 1, semiconductors do well. So you think about the tech bubble, saw the semiconductors do well at first back in the 90s. Then the infrastructure, like the Cisco systems, doing pretty well. And then the next step of the AI bubble are the applications. Same thing with what we see right now. We see the market transitioning from AI to the infrastructure and now the application. How are you going to use AI to improve your profit margins? How are you going to drive profit margins, earnings growth? And we think that's where you want to target, like healthcare companies, for example, using AI. I think AI being implemented is going to be where we want to be on a go-forward basis.
Gene, how do you fit in alternatives into your portfolio? You want to overweight the U.S. Equities, you want to underweight international, but I'm curious about where alternatives fit into equities versus fixed income.
Sure. We run about $20 billion of assets in multiple portfolios. We have some pure passive, pure active. Some of our portfolios are incorporating liquid alternatives into our portfolios. What we generally speak is about 15 to 20% of equity exposure is being allocated to liquid alts. So, for example, today we're using a multi-manager. We're also using some infrastructure, some real estate as a way to have some investments that zig when the rest of the market is zagging. I think it's a good way to reduce volatility because historically speaking, markets have had a great return. If you look at the S&P, in the last 43 years, the market's been positive in 37 of the last 43 years. But in those years, the average intra-year loss is negative 14.2%. That's important. We want people to stick in the market. Yeah, there'll be some pullbacks, there'll be some corrections, but using alts as a way to mitigate some of the volatility to stay in for the longer game is what we want. That's why we use alternatives to mitigate that risk.
All right, Gene, thanks so much. Appreciate that. Gene Goldman, he's the CEO of Cetera. joining us on these markets here. We've got red and green on the screen. One of the big areas of the AI trade is just simply the infrastructure, building out this data center stuff, kind of get a sense of where we are today and where we're going to go going forward. We check in with Natalie Liman-Di-Brada. She is a Senior Associate U.S. Power for BNEF. Those are our folks that look at this energy transition on a global, holistic scale. She's joining us from London. Natalie, thanks so much for joining us here. Give us a sense of kind of where we are today in terms of this total installed data center capacity here in the U.S.
Yeah, thanks so much for having me. So BNF's latest forecast is that data centers will reach 118 gigawatts by 2030. That's more than double the data centers installed in 2025. To put that 118 gigawatts into perspective, that's about 30% more than the peak demand of the entire state of Texas. And in 2030, we estimate that data centers will consume about 12% of annual electricity in the US, more than double the 5% that they consume in 2025.
Where in the U.S. are we seeing this demand pick up the most?
Yeah, so we're not seeing it equally distributed, but rather clustered in data center hubs and markets. So data center typically cluster in areas where there's already kind of infrastructure, labor, connectivity, so it's easier for developers to continue to build. So we see most of project pipeline in existing hubs like Texas, Georgia, Virginia, Ohio, as well as developers trying to enter new markets where there might be more available power and land like Louisiana.
So what I'm understanding, and I know next to nothing about this whole issue, is one of the gating issues, or maybe two of the gating issues, is one, power, two, access to water. Talk to us about how that fits into your analysis.
I would say the number one challenge right now is power. Developers are always talking about speed to power. So one way that they're trying to accelerate those timelines is bringing power on site to those sites. BNF has tracked about 124 gigawatts of on-site gas, but most of these projects haven't started construction. We've seen mainly gas turbines as being the avenue of trying to kind of skip the lengthy interconnection queues. Once they are connected, they'll likely sell back that electricity to the grid. But for now, trying to get those turbines on site as quick as possible.
All right, Natalie, thank you so much. We appreciate that. As always, Natalie Liman-Di-Brada did a better job that time. Senior Associate for the U.S. Power Business for BNEF. Give me a couple times, I'll get it.
Oh yeah,
Liman-Di-Brada.
That was a really good overview of what's happening with data center power demand. Of course, it's a different story if you ask people who live in the communities where the data centers are being proposed.
Yes,
a lot of pushback.
Tom King pointed out early on that these things don't really create a lot of jobs. I mean, it's a warehouse. It's not
well,
like
for the guys who set them up, the electricians, right?
Yeah, but I mean, for the ongoing, it's not like they're going to bring lots of jobs, long-term jobs to a community, which is usually one of the economic incentives.
You give up a big footprint for it too.
Exactly right. So we'll keep an eye on that. S&P down 15 points, the Dow's up 140, NASDAQ down 115 points. We'll have more coming up. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom. This Bloomberg Business Flash. Major averages right now mixed to lower. NVIDIA, let me start there because it's one of the most active. It's down close to 5%. These circular investments, again, getting a lot of attention. NVIDIA's working on AI deals worth more than $750 billion, including a partnership with SK Hynix's parent to do more than $500 billion in business. And then you have the semiconductors. They're under pressure today. SanDisk, Coherent, Advanced Micro Devices, all the laggards in the S&P 500. The SOX index down right now 4.9%. And this is going to be the busiest week of the earnings season so far. We'll hear from the big tech companies, including Amazon, Meta Platforms, of Microsoft, and Apple. Seema Shah at Principal Global Investors says, you know what, as important as tech is to the earnings story, there are other opportunities.
Look, they're delivering. They've got the strong earnings. But the market wants more than that. They want to see that the cash flow is not turning negative. They want to see return on investment. And that's really the main thing now. And so as a result, the mood is souring a little bit. It doesn't mean that the AI CapEx trade, the whole theme is finished.
Right now, the S&P 500, 20 points lower, 73.92 on the index. The Dow's up 96 points at 52,042. The NASDAQ Composite Index is down 127 points, and that is down 0.5%. Again, oil is lower, Brent down 7%, WTI down over 6% at 83.35. You know, we have this obsession with protein, and meat's so expensive. You know, beef, that is. Why not do pork? Apparently pork has some sort of problem. Pork consumption hovering near a record low. And the problem apparently isn't price, it's perception. A lot of Americans think pork is dry and tough. So the industry, get ready for all these commercials, is trying to change that. They're rolling out pre-marinated cuts and ground pork products to make the other white meat easier to prepare.
They don't eat Chinese food then, because Chinese food is all about pork.
Yeah, but they, you know, slather it with all this other stuff.
Stir fry it.
Yeah.
Well,
Bacon.
Flavor.
Bacon. One of the
John Tucker is not a buyer of pork.
No, I love pork.
You
It's
do?
true. Yeah, no, I just
pork chops.
Pork chops, anything. You
Bacon?
know, the shake and bake thing Mom used to do. Nothing like that. But I confess, like, I put ketchup on my pork chops.
Oh.
So that helps. Anyway.
That helps. After Paul and I went, oh.
Yeah, we check the markets all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Gourmet John.
Yep, Gourmet John. All right. Thank you so much, John Tucker, for that Bloomberg Business Flash. Earlier this hour, we got some headlines out from the president saying that the U.S. paused its strikes on Iran to give talks a chance. He also, of course, did say that either the talks go fast or not at all. There's not much time for diplomacy. So as much as he said that he's giving talks a chance, he hedged it with the possibility that that could all change. And so what it means is that everything's kind of in flux. Everyone's just waiting and seeing what's going to happen. For now, though, the fact that there have not been any attacks for 3 straight nights has meant that oil prices have fallen. Let's bring in our next guest now. She is Emily Harding, and she is Vice President of the Defense and Security Department at the CSIS, joining us right now via Zoom. Emily, you heard what the president said. We know this 3 straight days of a pause in activity between the U.S. and Iran. How are you interpreting what's happening? What is the president not saying that we understand to be kind of the driver for all of this?
Yeah, so there's probably several things going on. First of all, we are running a little bit low on munitions, including the munitions that you need to defend U.S. presence in the region against Iranian attacks. Every time you shoot off a Patriot missile, that's a lot of money that you're spending on that missile, but they're very effective. So what you really don't want is to leave those positions exposed to Iranian attacks. A little bit of a pause will give us time perhaps to rebuild our stocks, to move more material into the region if we need it. Another thing that's going on is this on and off again negotiation with the Iranians and with the Omanis. I mean, it makes total sense that you would position yourself using military force and then come back to the negotiating table and say, okay, let's talk. Are we now ready to make concessions? The Iranians are really, really difficult negotiating partners. And so the more that the Trump administration can kind of signal to the Iranians that we're willing to keep fighting and they have to make concessions, the better off that we'll probably be in a long negotiation.
So, Emily, I guess one of the concerns for a lot of folks is we kind of went into this war looking to get a regime change. There's different parties, but it doesn't seem to be any regime change. The theocracy is still there. We're looking to get the enriched uranium so they can't build a bomb. That doesn't appear to have been achieved. What do you think the president's prepared to negotiate on at this point?
So his original goals that he laid out, I think, made a lot of sense militarily. There was a discussion for a little while about regime change, but then he sort of backed off on that because regime change is not the kind of goal that you can fulfill with military force. Instead, he was talking about the Navy and the nukes and then going after some of their capabilities in the Strait. And those we've pretty much accomplished. Sunk the Iranian Navy overall. We bombed their nuclear program. It's very hard for them to restart that program, although there's a caveat there and we are going to keep an eye on it. And then as you point out, some of the upper levels of Iranian leadership have in fact been killed or removed. So now we're dealing with sort of 2 steps down. Now, what I don't think the administration accounted for were a couple things. Number one, that second and third level Iranian leadership would be just as committed to the survival of the regime as the first level leadership was. There was never going to be a Venezuela solution for Iran. The other thing is that, yes, a lot of the nuclear material is buried under big piles of rubble now because we bombed those mountains, but there's not an easy way to go in and get it and ensure they can't reuse it elsewhere. We're also looking at new facilities like Pickaxe Mountain as a source of some concern. It's entirely possible they're trying to build up some of their nuclear program there. So what do we negotiate over? That. We negotiate about how they're going to go forward with any kind of enrichment. We would prefer they don't. We definitely want them to pledge again that they're never going to pursue the actual weaponization of that material. And then, of course, there's the Strait. We have, in fact, destroyed most of their Navy, but they continue to harass shipping trying to make their way through the Strait, and that has to stop.
Emily, do you think the odds of American boots on the ground have increased, decreased, not changed at all since the start of this conflict?
I would say decreased, but they were never very high. I mean, this administration very much wanted to avoid a boots on the ground conflict in the Middle East. I think they went into this thinking that they'd be able to accomplish all their goals from the air. I think if they had been listening to some of the experts, then maybe they would have been a little less sanguine about that as a possibility. But now I think they're realizing that they need to calibrate their expectations based on what they're really willing to commit to this fight. And I haven't seen much indication they're willing to commit boots on the ground. Now, you never want to rule it out. If you're the American president, you want to make clear to your opponent that we could defeat you with overwhelming military force if we chose to do it. And there's always that option. But I don't think there's really much of an appetite for that, especially not before the midterms in November.
That's kind of where I wanted to go, Emily. There is presumably a political cost for President Trump with this war, which how do you think he factors that into his decision making?
So it's an interesting question, and I wouldn't try to speculate on what's in the president's head. He does seem at times to really respond to some political pressures. He certainly seems to respond to economic pressures. I'm sure he's going to be very happy to see that oil prices are down today. But I think there have to be people whispering in his ear that if they lose the House and they lose the Senate in the fall, then the rest of his agenda, the last 2 years of his term, it's going to be much harder to execute on that if they have an unfriendly set of Democrats running the Hill. So they have to think a little bit about any Republican who's running for office being tied to the perceptions of the Iran war and certainly being tied to perceptions of high gas prices being a problem. So, I mean, it's a balancing act, right? You want to walk into that election saying, look how strong we are as America, look that we're winning this war. But at the same time, you don't want high gas prices. You don't want the kinds of pocketbook issues that are really going to affect the average American. And he does need that support on the Hill if he's going to get things done.
And I guess that begs just the final question here. What, if anything, would incentivize this president to really sit down and force a deal, any deal?
So it seems that he really does want a deal, that he absolutely wants to sit down with the Iranians and come to an agreement But the Iranians are very difficult to negotiate with. They're sort of infamous for coming to the table and then right when you think you've got a deal, sort of squeezing an extra little bit of value out of the negotiation, making extra demands or saying, oh, we didn't ever agree to that. We're going to do this differently. So really the challenge here isn't so much what Trump wants, it's what the Iranians are going to be willing to agree to and then stick to.
Very good. All right, Emily, thank you so much for that. We really appreciate it. Emily Harding, Vice President of the Defense and Security Department at the Center for Strategic and International Studies, giving us an update coming out of Iran. Right now, we want to turn to our exclusive conversation with NVIDIA CEO Jensen Huang. He spoke with Bloomberg's Ed Ludlow discussing a new accord with the SK Group to build new data centers on the Korean Peninsula and the future of the semiconductor and AI spaces. Let's take a listen.
This is the golden ages for Korea, as you know. Their semiconductor business is booming. Their industrial business is booming. You know, this is a country that has the ability to help the world build out the AI infrastructure, that they're incredibly adept at adopting new technologies, and is a really technologically forward-leaning society. And they love using AI. AI has really diffused throughout their society and their industry. And so this is a great time for them. We're announcing several things. We announced a big partnership with SK Group, where our companies are going to enter into a business partnership where we do over $500 billion of business with each other, whether it's consumption of and purchasing of memories or selling AI supercomputers to them as they scale out 2 gigawatts of AI factories. There's a whole bunch of other announcements. We're investing $1 billion in Naver to help. They're the Korea's leading AI cloud. They're going to scale up in Korea up to they're going to scale up 200 megawatts, I think it is, and they're going to expand across the world. And so we have a whole bunch of announcements that we're making today.
With the expanded SK relationship, there's also sort of more direct involvement with NVIDIA on the roadmap for HBM, future generations of HBM. Talk about that. You know, I remember you being on stage earlier this year saying 5 years ago we told our supply chain what was going to happen, and it did happen. And you gave some credit to the memory makers in going with you on that journey. But clearly you want to be involved in the direction of travel for future generations of HBM.
Yeah, we're working together on, of course, we started with HBM2, worked on HBM3, 3E, 4, 4E, and then beyond. And so we've got a whole roadmap of memories that we're working on together. It is also the case that the semiconductor industry has really changed. And the reason for that, because we used to build computers for people to use, and we're going to still continue to build incredible computers. These are now processing AIs for humans to collaborate with. But in the future, we also have AI agents and robots, and they're going to be using computers. So instead of just 1 billion people using computers, we're going to have 100 billion agents and billions of robots all using computers. The computer industry, the chip that's built on top of the chip industry, surely is not big enough. And so this is one of the realizations of the semiconductor industry, that now computers are built not just for people to use, but computers are being built for computers to use. My guess is that the semiconductor industry is probably going to have to be 10 times larger than it is today over the next decade or so. And so working with our partners in Korea and around the world to scale up the supply chain of semiconductors so that we're prepared for this AI future is really important.
All right, that was NVIDIA CEO Jensen Huang speaking with Bloomberg Technologies' Ed Ludlow. Some big numbers as usual when you talk to Mr. Huang in AI. Staying on tech, earnings season is upon us with many of the big tech companies reporting this week. I'm going to bring in Mandeep Singh. He's a global tech research head for Bloomberg Intelligence. All right, let's just go with Microsoft, Meta, and Amazon. I want to make sure I know what to look for or listen for on these calls. I want them to spend money because they're hyperscalers, but I also want them to show a return on that. Do I have that right?
Yes, you do. And look, we already have a reference from Alphabet last week. They reported 82% growth in their GCP cloud segment. So that's what I think Microsoft and Amazon are up against in their respective cloud segments. Meta, it's still ad-driven business. We just had the World Cup, so I expect them to do well in the quarter. but the bar is getting high for CapEx. So that's where it would be interesting who raises the CapEx and by what amount. I mean, Google raised their CapEx by 4% just for 2026 and said 2027 would be significantly higher.
Wow.
We don't, I mean, with Meta, I expect a 2027 guide as well because they guide much longer term than Alphabet.
When are we going to get to the point that we want it to peak and start coming down?
Well, right now, if you listen to Jensen's interview, $750 billion of deals. So he wants these companies to keep spending, keep raising their CapEx, and he's willing to backstop, especially the model providers like OpenAI or the Neo Clouds, because once you hit sort of a slowdown, then, the digestion phase will kick in, and that's not what these chip providers want. They want the growth to sustain so that the build out remains, and we are in a supply constrained environment where everything has a long lead time. They don't want things to pause. So from a chip provider perspective,
right. So I don't get. So he's talking his own book there.
He certainly is.
I want to listen to Microsoft, Amazon, Google. I want those guys driving the bus to say, this is how much we're going to invest because this is what we want to do with our products and services. And oh, Jensen, you're in a great position because we're going to buy a lot of chips from you.
Yeah.
But it's almost like he's driving the bus a little bit in terms of the narrative out there.
Because of the long lead times. At the end of the day, these things take a while due to the long lead times. So even though Microsoft may want to slow down, they don't have a choice because of how supply constrained the environment is and how much longer these companies would have to wait to get that supply if they were to pause. NVIDIA is deciding right now who gets what allocation. And tomorrow, if one company decides to slow down, they may get deprioritized, and someone else may get more allocation.
So NVIDIA directly competes against who?
I mean, it competes against Alphabet that makes its own TPUs.
Okay, Alphabet makes its own.
All these companies.
And AMD is another one?
AMDs. So all these.
I guess my question is, how much market, influence does NVIDIA have?
Just by the sheer market cap of the company, you can decide how much influence they have. They are still the largest market cap company out there, and they have that influence.
So if I'm Microsoft and I decide to scale back my CapEx to drive free cash flow because that's what my shareholders want, even if I'm Microsoft, I have to worry about upsetting NVIDIA?
Yes, because NVIDIA can allocate that chips that Microsoft was buying to someone else because of the fact that we are in a supply constrained environment where there's more demand than supply. So that supply can be allocated to other pockets of demand.
Ay, caramba. All right. So when are we going to get to the point where we got enough chips?
When there is more capacity. And
When's
right
that
now,
gonna be?
well, that's where the lead times kick in. So all these companies that have been investing in their own capacity, TSMC, Micron, they are saying it takes 2 years to get a fab up and running. I'm allocating all this CapEx, but I won't have any additional capacity, at least for the next 2 years. So what do you do if you are a customer that's buying those chips? You want to place your orders now.
Okay. 30 seconds left. Is there a reasonable scenario out there that this ends very poorly for the tech industry?
If the ROI is low in terms of monetizing these models and suddenly everything gets commoditized by the open rate models that OpenAI and Anthropic lose their ARR momentum, then this ends very badly.
Wow. When will we get a sense of that?
Well, right now, OpenAI and Anthropic have already exceeded $100 billion in revenue ARR just this year.
Yep.
That's the kind of growth we are talking about. So if there's a cliff, that will be due to the open source commoditization, and we're not there yet.
All right. I guess that's what I learned a little bit more today, so I'm getting there slowly but surely. I think I'm like most people out there. We're just drinking from a fire hose. Mandeep Singh, Total Global Tech Research Head. You know what's going on out there. That's why we appreciate getting some of your time, Bloomberg Intelligence. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. Your top stories, global business headlines, are coming up in just a moment, with the S&P down 13 points, the Dow up 83, and the NASDAQ down 104 points. It's been a wild morning here to the swings in the marketplace. WTI crude oil down $6, $83 and change. That's more like it. This is Bloomberg. Good morning.
From ABC News, I'm Michelle Franzen. In Seattle, police are investigating Sunday's shooting that killed 3 people and injured 4 others. Authorities say one suspect is in custody, and they're searching for a second suspect. Police say it started as a shootout between the 2 suspects. Here's ABC's Alex Stone on scene.
First responders rushing to the festival, attempting to revive 2 of the people who were shot. But both of those victims ultimately declared dead on scene. 4 other people, including a 2-year-old, were transported by firefighters to a local hospital after sustaining injuries. One of them later died. One suspect has been taken into custody. Police say another suspect is still on the loose.
In Germany, a 21-year-old suspect in the vehicle and machete attack at Tiergarten Park in Berlin is dead. Police say he was shot and killed during a confrontation following a manhunt. And they know that he was arrested in Lebanon last year for trying to join Islamic State. That, according to prosecutors in Germany. Certainly, the person has a history of criminal activity and association with extreme groups, they say. After 2 weeks of airstrikes between the U.S. and Iran, a pause in hostilities. ABC's Rachel Scott has more.
Sources tell me today that President Trump is now holding off on a major escalation against Iran to give way for diplomacy to reopen the Strait of Hormuz. I'm told the president was prepared to launch a series of strikes on Friday, but decided to hold off. Sources also say officials discussed the impact a major attack could have on the U.S.'s depleting stock of air defense interceptors.
Funeral services for the late Senator Lindsey Graham begin tomorrow and will take place over 2 days in Washington, D.C. and his home state of South Carolina. Israel's prime minister and Ukraine's president will attend and will also hold separate meetings with President Trump. Dry, hot conditions continue to fuel wildfires in parts of Spain and France. Hundreds of thousands of people under evacuation orders. You're listening to ABC News. OpenAI Chief Executive Sam Altman heads to the White House this week to seek approval for the company's most powerful model of AI yet. The meeting happening on the heels of a high-profile safety incident. Here's ABC's Sophie Flay.
The system, capable of solving an 80-year-old math problem, could also take on complex tasks for businesses and the government. But that same ability to act more independently is also raising safety concerns after OpenAI's system was able to hack into another AI platform called Hugging Face during a security test. Hugging Face's CEO calls the hack unprecedented.
The White House has created a voluntary process for AI companies to submit new models for safety reviews. The Agriculture Department lifts its ban on importing beef from Mexico.
11 months ago, with the parasitic New World screwworm creeping toward Texas, Agriculture Secretary Brooke Rollins suspended imports of cattle from Mexico, saying at the time,
"Do we expect beef prices to continue to rise? Perhaps."
Despite the ban, the first screwworm was detected in the U.S. in June. But with beef prices at an all-time high, Rollins has lifted the ban on imports of Mexican cattle, starting with the port of entry in Douglas, Arizona, next month. Jim Ryan, ABC News.
An investigation underway after more than a dozen campers at YMCA in New Jersey got sick at summer camp after allegedly consuming mushroom-laced edibles. They're in stable condition. Michelle Franzen, ABC News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
And with 99 days to the election, the president left for Michigan. Welcome to the Monday edition. As President Trump tries again to seize the issue of affordability, speaking to GM workers later today, just as oil prices begin falling with a pause in the war with Iran. We'll have analysis from our political panel. Jeannie Shanzano and Greta joins, and we'll get an update on the conflict and what the president is referring to deep talks now underway with Bloomberg's Dan Williams in town from Jerusalem as Benjamin Netanyahu arrives in the U.S. tonight. The Senate has a feed bag of legislation strapped on for this week. Only a couple days to go, as we'll discuss with Zach Cohen at Bloomberg Government. And we start, as always, on Wall Street. We turn to our friend Charlie Pellet. He's atop the tower at World Headquarters in New York. What's happening to our gains here, Charlie?
Unbelievable. We came in this morning. We saw stocks rip higher, oil prices selling off. So let's begin with what's going on with crude. Indeed, a major drop right now for West Texas Intermediate crude. We're at $83.26 a barrel, down 6.8%. Barrel of Brent down now by $7 a barrel to $89.66. So Brent back below 90. Brent down by 7.4%. But bottom line, we remain focused on those chip names. Semiconductors moving lower. The SOX, the Philadelphia Semiconductor Stock Index, down now by 3.6%. Bottom line, S&P giving up earlier gains, slumping now by 7 to 74.04. Right now, the S&P is lower. Little change, down about 0.1%. The Dow is holding on to gains. The Dow Jones Industrial Average up 116, up by about 0.2%. And NASDAQ lower by 0.3%. The NASDAQ 100 index down 0.6. To be sure, not all stocks lower. Small caps up by 0.2%. The 2-year 4.31%, with the 10-year 4.64%. Fed week, we've got the 30-year 5.13%. Gold up 0.6%, $4,078 the ounce. I mentioned the retreat for crude oil. Kelly Covely is senior investment analyst at Manning & Napier Advisors, and she says yes, while oil is coming down, there is still plenty of work to be done.
Even in the best case scenario where you have a diplomatic off-ramp, which again at this point is a little bit unlikely or seems far away, you can't get things back online that quickly. It takes time to reopen pipelines and refineries and rebuild damaged infrastructure.
Kelly Covely of Manning & Napier Advisors interviewed on Bloomberg Open Interest. And again, West Texas Intermediate crude, $83.27 a barrel, down 6.7%. Barrel of Brent, $89.65, down by 7.3%. Singer-songwriter Carly Simon has been diagnosed with Parkinson's. Recapping stocks lower, S&P down 9, down 0.1%. That, Joe Matthew, is a Bloomberg Business Flash.
I didn't hear that, Charlie. That's awful.
It's sad.
For letting us know.
Sad.
Charlie
I mean,
Pellet,
we all
really
grew up with Carly Simon.
Yeah, absolutely. And the impact of Parkinson's is heavy duty, and I feel for their family. Charlie Pellet will be back with more breaking news, more on the markets here. We'll see if this thing falls apart in probably about 15 minutes time. We'll check back in with Charlie periodically throughout the program, as we do every day on Balance of Power. Welcome to the Monday edition here on Bloomberg Radio. We're streaming live on YouTube. Search Bloomberg Business News Live. Unless you got the satellite radio in the car, we're Sirius XM channel 121. I bet Charlie's been to the Milford Proving Ground. That's where Donald Trump is headed today. President of the United States just touched down in Michigan a little while ago. As he prepares to address workers at GM, they're not going to a plant this time. They're going to a testing facility. And I can't wait to see the optics that come out of this. This is between GM's main hubs in Flint, Detroit, Lansing, and Pontiac. Milford is the oldest dedicated vehicle testing facility in the world, I read. 150 miles of track. And the president is going to be there for a drag race. This guy's getting a show. And I mean, wherever he goes, there's IndyCar in the driveway. Here at the White House today, it's going to be a drag race. Fast and furious, baby. And you know who's along for the ride? Tyler is with him. Tyler Kendall. Yeah, she's on Air Force One today. So we'll keep tabs on the trip. He's going to speak a little bit later on around Bloomberg Business Week time, and we'll be curious to hear what he has to say, meeting with Mary Barra and others. Milford Proving Ground. Of course, Iran is what everyone's going to be asking him about, and the president's been busy posting over the weekend some pretty interesting memes and animation. Did you see the one where he's on an oil rig with all the troops behind him? I don't know what that does to deep talks, as he suggests, that are underway right now, but we do have a pause. That's why oil prices are sharply lower. If you didn't hear Charlie, we're down 7% on WTI and Brent. 83 and 89. That's a different world than we were in on Friday. That same day, the president spoke to the White House Correspondents Association. Did you stay up for it? Tim was there live for the whole thing. This is like the longest dinner of anyone's lives, as the president spoke for over an hour and didn't have the nicest things to say to the people in the room. Some of it was funny, although as I read in the headlines, some of it bombed. And he did talk about the war with Iran. Listen.
So we've hit Iran very hard. Their Navy is gone. Their Air Force is gone. 250 jets, no longer. 159 boats, good boats. In fact, I said, why the hell didn't we keep them? We could have used them. But 159, but all at the bottom of the sea. They are talking to us right now. They'd love to make a deal. I don't think they're ready to. I don't think it's time yet, but I'm willing to listen.
Yet the pause continues, reporting from Axios that it was Admiral Brad Cooper, the top U.S. military commander in the Middle East, recommended stopping the bombing campaign around the Strait because it had reached the limit of effectiveness. What does that tell us about our options right now? I'm glad to say that we have a great correspondent, a great journalist, and a great thinker here with us today to get things started. It's somebody I'm normally speaking to from across the ocean on a Zoom connection for all of our benefit here, but he's in town because Benjamin Netanyahu's flying in tonight. He's going to be, you know this, right? He's going to Lindsey Graham's funeral tomorrow, and he's been looking for a meeting with President Trump for months. Looks like he'll get one. And the great Dan Williams is with us, our Jerusalem correspondent here at Bloomberg News. Great to see you in person.
Great to be
lovely
here.
To meet you literally seconds ago when you walked into the studio.
Likewise.
You know, whenever President Trump gets together with Benjamin Netanyahu, he usually gets a bit of a head of steam going about what's happening in Iran. He's also going to be walking out of the funeral for Lindsey Graham, who was the biggest war hawk we had when it came to Iran. You wonder how the psychology might change this week.
As I understand, they will meet in private, potentially away from the eye of the media, before those remembrances for Senator Graham.
I see.
This is their 8th meeting during this presidential term. Apparently, that's a record for this president, a president who really is a retail politician, likes meeting people. Netanyahu has set that record. Significantly, it's their first meeting since they went to war together against Iran on February 28th. And those waters have not been entirely calm. Obviously, a war being run out of two capitals, either side of the ocean, as you noted, in the far side of the world. There has been some disagreement, open feuding between them in recent weeks about the course of the war, the second front of the war in Lebanon. Now there's the pause in the latest flare-up, which Israel did not take part in. The big question is this the eye of the storm or is this the end of the storm? What Israel's opinion is about the chances of diplomacy to succeed and whether the Israelis are truly poised to jump back into the war if asked to by the United States.
I love the way you asked that, because if it's the eye of the storm, we were just talking last week about Karg Island again. And by the way, the president's putting Karg Island memes up on social media. So is the White House account. We were talking about Pickaxe Mountain and asking whether whether Israel would take part in that as they did in Midnight Hammer. Does Benjamin Netanyahu hope it's the eye of the storm?
I think so. I think he would like something conclusive here. He's hoping to see, in the absence of military action, a capitulation by the Iranians, at least on the core issue, which is their nuclear program, their remaining stockpiles of enriched uranium, any centrifuges they may have managed to secrete away in a place like Pickaxe Mountain, given recent reports. In the absence of that kind of capitulation, very dramatic for the Iranians, they don't appear anywhere close to being about to do that. I imagine he would counsel a return to war, or, as you noted, perhaps some very ambitious and very risky ground operations.
Yeah, because you wonder what would be, a clearing event here. What would be conclusive, I think was the word that you used, which is perfect for this instance. If he's hearing from Admiral Cooper that continued bombardment of the Strait has reached the point of diminishing returns.
Yes.
What does work?
Well, there's an extended target bank. There's also a question, as you noted, about interceptors when we spoke earlier. Can the U.S. really put up a defense if the Iranians fire off the extent, their full array of remaining missiles, drones, and the like? There's been some question about that.
Where would they fire them? At our ships? At Israel?
Exactly.
At Saudi Arabia?
U.S.-aligned armed powers, which have certainly been suffering
So it's a
recently.
regional...
For now, Israel has actually been outside the range deliberately by Iran of those attacks. The Iranians are very careful not to have drawn the Israelis in.
How about that?
Israel, it's my expectation the Israelis are braced to return to war. It's a cost the Israelis are willing to pay if that's what's required to achieve a conclusion here. The question is, can a conclusion be realistically achieved? Tomorrow, not coincidentally, will be 5 months exactly since this war began. The leaders will be meeting at the 5-month mark. I can't say for sure, but I'm fairly certain neither am expected to be here 5 months on. I think there was some expectation this war would be tidily managed within 2 months, with an uprising, an organic uprising within Iran, taking the place of outside military interference to bring down the regime. The regime is battered, but it appears to be standing strong and defiant. And indeed, it's sending out signals against Trump, which can only be irritating someone who's very sensitive to public affronts such as that.
It's interesting how no one is talking about a public uprising anymore, at least with any credibility. What we do have over the weekend is an assault on Saudi Arabia by Houthi rebels in Yemen. How concerned are you about this new front? How could it change the contours of what happens with Iran?
The Houthis have clout not just in terms of the weapons that they haven't fully used and now are appearing to use. They also have clout in terms of closing down the Bab el-Mandab Strait. Now, we know about Iran and the Strait of Hormuz.
Yes.
Bab el-Mandab is perhaps even more important for world maritime traffic because simply something to the order of 20% of cargo shipped around the world
Beyond
goes
oil.
through that strait.
Amazing.
Exactly. In Hormuz, it's really for energy cargo, energy exports, very important. Here is the full range of energy exports, shippers that want to avoid that risk, and here it would include Israeli shippers as well. Israel is not directly relevant to Hormuz, nor Hormuz to Israel. Perhaps this has allowed the Israelis to stay out of the recent flare-up. When it comes to Bab el-Mandab, basically any shippers who want to avoid that risk of piracy, of being fired upon, would have to circumnavigate Africa, the African continent. That adds 3 weeks onto a standard travel. We saw it to a degree during COVID, ramps up prices, really slows down world markets. That is something that I imagine would be seen as a casus belli by parties that may not have enjoyed perceiving this as a war so far.
Incredible. Just in our remaining moments, to what extent will this visit this week give Netanyahu credibility at home?
Much depends on the photo op. For now, it appears they're not planning to take press into the Oval Office. I wouldn't be surprised if that's changed at the last minute. However, keep in mind that despite their friendship, despite their very good working relationship until recently, Trump is not above joshing even his friends. And should he choose to voice some of the criticism he's been voicing in media interviews, in chats over the phone spontaneously to select journalists, to Netanyahu, to his face, live before the cameras as Israelis are watching back home, it may backfire. I'm also not sure if it's enough to take Netanyahu over the line, given his domestic problems ahead of that election.
So there's some risk here.
Yes.
This is going to be fascinating to watch. We're lucky that you're here for it. Dan Williams, great to see you, Dan. He's a force with us in town here in D.C. from Jerusalem, reporting for Bloomberg. I'm Joe Matthew. Great to have you along. The Monday edition. This is Bloomberg.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. Oil sells off. Stocks are lower. In fact, right now we are just about the lows of the day with the S&P below 7,400 right now, 73.98. It is down 0.2%. Stocks are falling. We got a rout in chip makers. The Dow, yes, higher, holding on to gains up by 115 points, up 0.2%. Likewise for the Russell 2000 index, up by 0.3%, but techs are selling off. NASDAQ 100 down 0.8%. NASDAQ Composite down 0.5%. 0.30%. Fed decision Wednesday. The 10-year, 4.64%, and the 30-year currently yielding 5.13%. Spot gold, $4,081 the ounce. The precious metal up 0.7%. West Texas Intermediate crude, major story there, now down 6.3% at $83.65 a barrel on WTI. Barrel of Brent just around $90, down now by almost 7%. So again, the Dow higher, the S&P, NASDAQ, they are both declining. The NASDAQ and NASDAQ 100 index declining. S&P down 0.2%. This week we'll be hearing from 4 of the Mag 7 names. Easy to remember. We got the M's on Wednesday. That'll be Microsoft and Meta Platforms. The A's on Thursday. That'll be Apple and Amazon. And right now we do have those stocks trading lower. Amazon shares down by 0.4%. Apple, though, higher by 1.4%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. And that, Joe Matthew, is a Bloomberg Business Flash.
All right, Charlie, thank you so much. We're suddenly feeling an allergy to AI again around here. So wait 5 minutes. We'll see what happens. In fact, Charlie will be back about 20 minutes, the voice of Wall Street. And as I remind you, the New York subway. I'll tell you what, we were talking about well, we talk every day about the data center issue. And it was Byron Donalds who was here last week talking about his bill to essentially create a closed circuit around data centers, get them off the grid, get their own water supply to keep people's bills from going up. You know, it's all about affordability around here. Maybe they should be taking a cue from GM, where the president's going to be today. He's flying to Michigan, as I told you, and he's going to the Milford Proving Ground to watch a drag race. They're putting a drag race on for him. Is Kid Rock going to be there? I wouldn't be surprised if he showed up. There's like 150 miles of track there. That's where they do all the testing. This is where the first vehicle rollover tests were conducted in the 1930s. Been there a long time. It's super cool. It has its own electrical substation. Listen to this, data centers, guys. Its own electrical substation, its own wastewater treatment facility, on-site fire and EMS staff, as well as on-site medical operating 24 hours a day, 365 days a year. NVIDIA, are we listening? They do more than that, by the way. There's like really cool stuff that goes, like Area 51 for cars. Engineers at Milford, this is GM's information, can simulate extreme environmental conditions, including temperatures ranging, I should say, from 40 degrees below 0 Fahrenheit to 130 degrees Fahrenheit. Altitudes from 700 feet below to 12,500 feet above sea level. Humidity from 10% to 90%. Wind speeds from 0 to 100 miles an hour. What the heck is the president in for here? He's gaggling right now on Air Force One. I told you he was touching down. He was taking off. He's talking right now to the reporters and says he wants to meet. Iran wants to meet, and we are meeting. Iran requested a meeting through surrogates. We'll see if that happens as we experience the pause that refreshes. One of the other big stories we're following today is the other end of Pennsylvania Avenue, if I can put it that way. Of course, Congress. House is gone. By the way, I should let you know, we're going to be talking with Hakeem Jeffries coming up at the top of the next hour, the Democratic leader of the House, with 99 days to go. Joining us here to talk affordability, exactly what the president wants to talk about today. And they've got a lot to do here. It's a full plate because everything the House just got done last week that we were talking about is now on its way to the Senate. And you know, John Thune wants to do things differently. You can hang on to your supplemental and your reconciliation. He says we need to fund the government first, and that's why he's going to be, it seems, pursuing a continuing resolution before we ever get to the other stuff. The question is how long the Pentagon will need to wait. We've got a lot of stuff to hash out here with Zach Cohen, the senior budget reporter at Bloomberg Government, steeped in all things Capitol Hill. Zach, I hope your summer's going well. It's great to have you back. There's such a grab bag here. It's a feed bag, as I said earlier, that I guess we'll start with the big stuff in government funding. John Thune doesn't see eye to eye on sequencing, on the schedule, or it seems just about anything else with Speaker Johnson right now. Will the Senate figure out how to advance this continuing resolution to keep the lights lit beyond the end of September?
I mean, that's the multi-billion-dollar question. Before the House went on its August recess, it did pass two measures that are now before the Senate. One is this stopgap bill that you're talking about. It's basically flat funding for the government from October 1st to December 4th. Remember, that October 1st deadline is usually the deadline by which lawmakers have to pass some sort of funding bill or there's a government shutdown. Lawmakers, and especially Republicans, are interested in trying to get that done early, so that way they take some of the pressure off in September before the midterm elections and avoid any even a threat of a shutdown during midterm elections where the defending majorities in both the House and the Senate. Now, the Senate has that bill and says, well, we're going to need to make some tweaks to it. The White House sent over a couple of requests. We're looking at those, some changes on the margins to what we would otherwise be flat funding for the rest of the current, or for the first part of the fiscal year. And then you have this budget resolution, basically a framework or a blueprint for a Republican-only bill. That would tackle some of the things that this White House wants in terms of supercharging funding for the military to make up some of the costs from the war with Iran, aids for farmers who have been struggling with rising gas prices and fertilizer prices as sort of inflation becomes the issue before voters in the midterms, as well as some funding for states to try to implement some of the stuff that's in the president's treasured Save America Act, which would require certain voter ID and citizenship verification requirements in order to go to the polls. All these things are on the docket for the next 2 weeks, the CR being the primary goal for, as you mentioned, Senate Majority Leader John Thune.
You know, Zach, I thought you had one of those cool Bloomberg virtual backdrops while you were talking, and then somebody walked right up behind you and threw something out. That was amazing. Let them all know they're on TV. All right, let's pick through these now. Can any of this get done? Will the CR be done before the Senate leaves town? Is that the hope? And then they come back around following recess to deal with reconciliation?
That seems the most likely scenario. Now, with that caveat being, the CR will need bipartisan support. In the Senate, it's subject to a 60-vote threshold, that famous filibuster that Trump, even as of today, was demanding that Republicans get rid of in order to pass some of these bills. That seems like an unlikely scenario, but that's the reality that Thune is dealing with here. And so you've got Senator Susan Collins, the chair of the Senate Appropriations Committee, and Patty Murray, who's the vice chair, the top Democrat, are negotiating some sort of bipartisan stopgap that would avoid a shutdown. Neither party wants this at this point. Neither party wants to be blamed for a shutdown going into the midterms, where they both have a really possible chance of holding on, of winning the House or even the Senate. And so that's the negotiation going on right now. And actually, the rhetoric has already shifted on the CR compared to some of the other funding bills that have been working their way very slowly through the Senate, whereas Republicans have been blaming Democrats for stalling that, and Democrats saying, we need some checks on runaway defense spending before we agree to move any funding bills. The CR is, for all intents and purposes, been a very bipartisan exercise so far. We'll see what text looks like in the next couple of days, maybe next week. But John Thune is holding the budget resolution in reserve because, as he was telling some of our colleagues last week, there aren't the votes to move the budget resolution. Democrats aren't to support it. You've got people like Collins, Lisa Murkowski, Mitch McConnell, Tom Tillis, who are, if not already on the record opposing this, certainly would vote against it. if it came to the floor. And that's a math problem for people like President Trump who want to see that measure moving.
I pictured John Thune. He's reading the paper this morning and spits the coffee out when he sees the president's post. John Thune, he writes, should not allow the United States Senate to leave town until it passes the Save America Act, or far better still, terminates the filibuster, all caps, where Republicans can then quickly pass everything they ever dreamed of, he says, including a full and deep-throated Save America Act, the budget, and the ever-looming debt-ceiling disaster. 1929, exclamation point. What got him on that? Then he writes, the Democrats will do it on day one and can't believe how lucky they got with this Senate leadership. Remember, stupidity always brings losing and death. President DJT. That last line, I don't know who he was talking to before he wrote this, Zach. Is John Thune in for losing and death?
Well, the filibuster has been something that Republicans have been defending for quite some time, as you can imagine. You think about going back to 2020, 2021, where there was this effort by Senate Democrats to change that 60-vote threshold so they could move some of their own election-related legislation through. And you had people like Joe Manchin and Kyrsten Sinema that could put the kibosh on that idea. And so does a future Democratic Senate come in with a stronger anti-filibuster majority and say, you know, we're tired of letting Republicans block all of our legislative initiatives and change the rules in a way that would be difficult, if not impossible, to undo in the future? There are certain exceptions already, like the budget resolution, the budget reconciliation process. They got the tax law through, the ICE funding through, but wholly abolishing the filibuster would be another thing entirely. And for Republicans, it's a quirk of Senate tradition that probably works in your favor. It's already been degraded so they can get judges through on a majority basis. They can get tax legislation through on a majority basis. The folks that want to keep the filibuster around recognize that the upside for them is probably not as dramatic as what the president would say, because should they do so, you can imagine what Democrats would do with the ability to bypass Republicans. You know, Mitch McConnell always likes to say, think about statehood for Puerto Rico, for instance, as a potential, warning against eliminating really one of the last vestiges of forced bipartisanship on Capitol Hill by changing this rule.
You've mentioned the name Mitch McConnell a couple times. I don't know if you're just trying to tease me into asking you, what the heck's going on here? When are we going to see him?
We just got the most recent update. If it hasn't hit the terminal yet, it should shortly. But the leader's been out for a couple of weeks or months now with an undisclosed illness, and the Office of the Attending Physician, basically Capitol Hill's doctor, has said he's not fit to return to work at this juncture. And that's really posed a problem for some of these funding bills. I had mentioned earlier the Senate kind of has ground to a halt on moving some of the annual funding bills. There are 12 in total. Both the House and the Senate have to agree to fully fund agencies going into each fiscal year, and typically they need this stopgap bill to give them a couple extra months of negotiation. But McConnell's a senior member of the Appropriations Committee. They just have not had the votes to move even Republican bills through the Senate Appropriations Committee because he's been absent. And obviously after the death of Lindsey Graham, there was also a brief interim where they had even less support on that panel until his sister, Senator Darlene Graham, was appointed to that seat. And so that's a math problem for Leader Thune as well. Maybe not on things like the budget resolution that McConnell is probably opposed to. He has said that he does not want to try to increase Pentagon funding via the budget reconciliation process because it essentially takes appropriators out of the mix. It creates one-time increases when they'd rather bake in steady, permanent increases to the Pentagon's budget.
Right, yeah. Hey, Zach, it's great to see you. Thanks for bringing us up to date. Zach Cohen, Bloomberg Government. I'm Joe Matthew in Washington. We'll assemble our panel next.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. We've got the S&P 500 index back in the green, barely up by 1 point right now. Little change. That is the key takeaway at this hour. Dow Industrials up 203 points. The Dow higher by 0.4%. NASDAQ down 33 for the NASDAQ Composite Index, a drop there of 0.1%. The NASDAQ 100 Index is down 0.4%. All of this with the SOX, the Philadelphia Stock Exchange Semiconductor Index, down now by 3.1%. We've also got West Texas Intermediate Crude tumbling now by just about 7.4%. 82.70 for a barrel of WTI, barrel of Brent, 88.93, a drop there of 8.1%. Federal Reserve policymakers will begin a two-day meeting tomorrow with a rate decision on Wednesday. Lindsay Piegza, chief economist at Stifel Nicolaus, and this morning on surveillance, she told us she sees policymakers remaining on hold for longer.
If there's a lack of communication and the Fed simply comes out, makes that aggressive move higher without any guidance, any forward guidance for what we can expect going forward, I think the market would anticipate that the Fed has shifted their line of thinking to the prospect that inflation is rising, it's not under control, and if that's the case, it would be unlikely that one rate hike would quell that concern.
Lindsay Piegza of Stifel Nicolaus interviewed on surveillance. And by the way, we'll have the Fed decision for you 2 p.m. Wall Street time Wednesday. Kevin Warsh's news conference 2:30 p.m. Wall Street time right here on Bloomberg. NVIDIA has committed to invest $5 billion in Ilya Sutskever's artificial intelligence startup, Safe Superintelligence Inc. Meanwhile, Cracker Barrel Old Country Store has named David Dino as the company's new CEO, replacing Julie Massino, who recently fought to help the brand recover from the mess a couple of years ago, the political backlash over its 2025 rebranding. Recapping, S&P 500 index just turning negative, down now by 2 points. I'm Charlie Pellet. That Joe Matthew is a Bloomberg Business Flash.
All right, Charlie, thank you, sir. He'll be back at the top of the hour with more on the markets. The great Charlie Pellet, 1 p.m. Eastern, as we welcome our global television audience to the conversation. Did they clear that with Trump at the Cracker Barrel? Remember the whole controversy over the old-timer mascot led to a boycott? They had to redo the whole thing, and it's been a while since we've heard that one. It was an interesting weekend for Hakeem Jeffries. He got out of Washington. He took off the suit. He went to Pennsylvania, stumped for some candidates, actually alongside Governor Josh Shapiro. And the issue they seized on as they got back out in the wild here, because, you know, the House is on recess now. It's time to get out, raise money, stump, get the message out for the midterms. Did you hear me say 99 today? 99 days left. 99 bottles of beer on the wall. And they're all talking about the same issue, affordability. The one that the president has at times called a Democrat hoax is exactly what he's going to be talking about today in Michigan. You heard me talking about the track over there. He's going to be at this GM proving ground, a testing facility where he's going to witness a drag race, hang out with Mary Barra, deliver remarks to workers, and it's going to be seizing upon the issue of affordability. That's exactly what Leader Jeffries was up to yesterday. And you can't hide from it. I mean, with 99 days to go, it's all anybody's talking about. What did I have for a gallon of gas? This is just today from AAA, $4.11. And if you are going to Michigan, it's $4.21, by the way. I was watching TV with Mrs. Matthew last evening, and they play the McDonald's commercials at night. So you want the breakfast in the morning. You see how they do that? They're like pouring maple syrup on everything. The eggs are flopping. It's like dinner time. They embed this in your mind so you wake up in the morning. And I noticed there's no more McDonald's dollar menu. It was the under $3 meal, the under $3 menu. That's, I guess, a sign of the times. Maybe President Trump will stop at McDonald's. He likes to do that. So I spoke with Hakeem Jeffries a short time ago. This is a long wind-up to let you know that we're going to have him with us here in about 15 minutes, and you'll hear our conversation. He's checking in from home, having just gotten back from Pennsylvania. We talked about the disparity in money, Never mind messaging, with many Democratic socialists winning around the country. We did talk about that, as well as Ken Martin's leadership at the DNC. And yes, once again, the money and the disparity between what we're seeing on the party level and the committee level, the DCCC. They're kicking out news releases, printing money on a regular basis because individual candidates are doing pretty well. Aaron Covey from Cook explained this pretty well for us the other day. It's the party that seems to be struggling, but if you ask Hakeem Jeffries, they are working successfully behind the scenes. Here's what he said.
What we have seen, Ken Martin's leadership, is Democrats winning races all across the country for the last 18 plus months. And the DNC has quietly been involved in a lot of those races where we have seen success. And so let's all, keep the main thing the main thing. I know that's what Ken Martin is doing, and he's focused on helping Democrats win elections all across America. And then all of us will figure out the path forward. But I think Ken Martin's term is 4 years, and there's no reason to believe at this point that he's going anywhere.
Okay. Why? Did you hear something? Our full conversation with Hakeem Jeffries will roll out after the top of the hour, right after Charlie checks the markets for us. Yeah, the under $3 menu just doesn't roll off the tongue like the dollar menu. And that's where we start with our political panel. Bloomberg Politics contributor Jeannie Shead Zaino is with us, by God, fresh off the weekend, our Democratic analyst. And, of course, Democracy Visiting Fellow at Harvard Kennedy School's Ash Center. Good to see you, Jeannie. Greta joins us here as well, Republican strategist and policy director at Brownstein Hyatt. We've got a great panel today, and I'd love to hear from both of you on this very issue, because you're both looking at each other from across the aisle, really talking about the same issue, and that's affordability. Jeannie, when you consider the president doing this again today, how does he move the dial on this? And if you're Hakeem Jeffries, how do you try to own that issue when Republicans constantly point us back to the Biden administration?
Yeah, I mean, I think a lot depends as Donald Trump goes out to Michigan. I guess he's already in the air, if I'm not mistaken, Joe. And you're going to a place where unemployment is 5%. That's among the highest in the country. Gas is $4.22 a gallon. The auto industry has lost 3,000 jobs since he took office. And he dissed their neighbor to the north, and the bridge is opening today. And you go and you look in Michigan, a lot of people are talking about his favorite word, tariffs, with frustration. And of course, you've got this YouGov poll out, which was utterly astonishing. 6 out of 10 Americans saying that the economy is going to get worse under Donald Trump. So he's going out there. The big trick for him is going to be something he doesn't like to do, which is stay on message. He likes to say affordability is a hoax. He's got a little bit of the sort of Joe Biden problem. You can't convince people of something they already feel. The economy is not good for people, so you can't tell them affordability is a hoax and things are great. You've got to go there and you've got to say, this is what we're going to do to make things better. Donald Trump doesn't want to do that, so I think we're going to hear a lot about communists when he goes out there, but I'm not sure that's what many people in Michigan are concerned about.
Well, he's going to be talking to auto workers. You're right, Jeannie, many of whom voted Trump. And Greta, Jeannie's right, too. The tariff story has been tough for General Motors. Mary Barra was just talking about it the other day, although I'll tell you what, the company's looking pretty good and the stock is doing well. The president could remind us of that. But if affordability is the issue, you're not really talking about the top of the K, right, Greta? What should be the president's posture today when it comes to this issue? He's suggested that they've won the war over affordability. I think he said we won on affordability, but this is persisting. We've got $4.21 today in Michigan.
Yeah, I think the president has a lot of success that he can speak about. I certainly think, the conversation around Democratic Socialists or communists is probably a pretty important one to have in Michigan right now, considering who is on the ballot and who has been leading in some of the polls up until the last Democratic candidate dropped out. So I do think there is a big contrast that he can make between Democratic policies and certainly what is important to voters and where the fringe part of the left is, really causing a lot of problems for the Hakeem Jeffries and Leader Schumer of the Democratic Party, who are trying to embrace that while also trying to talk about affordability in a way that allows for government takeover of a lot of services that have enjoyed capitalist success in this country.
Mm-hmm. Interesting. Jeannie, Greta's pointing to the Democratic primary in the Senate race in Michigan. And by the way, they're having a debate in like a couple of hours from now. I think this is the last one between Haley Stevens, your establishment candidate, representative who's been endorsed by establishment types here in Washington, like Chuck Schumer. And then you've got Abdul Al-Sayed, who does have a groundswell of support. And the outcome of this primary is going to be awfully important to midterm fortunes, I think we can argue, for Democrats, Jeannie. I did ask Hakeem Jeffries, and we'll have his answer coming up in about 10 minutes, but they're very careful about how they talk about this. You know, you don't even hear so much about a big tent party. The point is to not answer the question in many cases. And I'm wondering, Jeannie, if you think they're part of the solution.
Yeah, really political answers. I get it, Joe. You know, the latest poll I've seen, you have Haley Stevens up 7 points. That could change. Al-Sayed is a really, really good campaigner. But we did see on Friday, unexpectedly, Gretchen Whitmer, the governor of the state, endorse Haley Stevens. She was out on the trail with her, and Jim Clyburn over the weekend. This is a fight for Black voters in Michigan, and that's where Al-Sayed is also trying to appeal. So a lot of it is going to depend, and it does matter to Democratic prospects in the Senate. That's not to say Al-Sayed couldn't win if he gets the primary. If there's any year in which he could win, it would be this year. But it is a fight, and she does seem to have the upper hand at this point. But I don't understand avoiding the question. I think the enthusiasm you're seeing on the Democratic side is impressive and it's important. And I think we should want more of that. A lot of the Democratic socialists, of which Al-Sayed doesn't ascribe himself, they have really, really popular ideas about what they want to do if they get into office that the Democratic Party writ large can learn an awful lot from, whether it's Medicare for all, or many other things. And they also have the enthusiasm. So I think Democrats have to keep in mind, obviously they want to win the Senate, but they also have to keep in mind that there is a reason that this revolution, as Bernie Sanders calls it, has gotten so much excitement and energy. It's because people feel like they are not just talking against Donald Trump and against the Republican Party, but about what they want to do going forward. And that's incredibly attractive. And it's something the more moderate establishment Democrats can learn from.
Well, it brings us to the contest in Maine, of course, and I hope we have time to hear from both of you on this, Greta. Troy Jackson is the new Graham Plattner. At least that's what you want me to say, right? I saw some of the ads that are out today from those supporting Susan Collins, and every image has Troy Jackson in the frame with Graham Plattner. They're both saying nice things about each other, and the politics kind of don't even matter here. Is the job to make Troy Jackson a carbon copy of Graham Plattner?
I mean, I think Troy Jackson's own history with Graham Plattner would indicate that that is exactly what he is trying to do. He believes that Graham Plattner, despite being a anti-Semitic rapist, was a great candidate and ultimately wants to emulate his campaign strategy. So I do think that Troy, should he stay on the ballot, and there are some Republicans questioning whether, based on sore loser laws in Maine, he is even eligible to be on the ballot, will try to basically duplicate what Graham Plattner had begun. And I think that trying to embrace this Democratic Socialist side is certainly going to be part of that plan.
All right, man, I just went near a hot stove with that one. I know he's accused of sexual assault, but I mean, it's kind of, I don't know if it's responsible to call him an anti-Semitic rapist on the air. Jeannie, I've got about a minute here. How does Troy Jackson find his own identity?
You know, he is known. He's from the upper part of the state. He has served in office there at the state level. But I think he's got to do what he started doing this weekend, which is to ask the people of Maine, do you want another 6 years of Susan Collins? She's been there 30 years. She keeps expressing concern and yet voting for Donald Trump. And I think in this time period, that could be a winning message for him. But it's going to be tough. Collins is a tough candidate.
Yeah, no doubt. 99 days to go, guys. Are we ready yet? It just gets chippier from here. Hey, Greta, thank you. Jeannie, thank you. They will both be back in our second hour on the fastest show in politics. This is Balance of Power, live from Washington, only on Bloomberg.
From Washington, D.C., this is Balance of Power with Joe Matthew.
99 days to the midterms, and both parties reach for affordability. Welcome to the Monday edition as President Trump tries to seize on that issue once again in a visit to the swing state of Michigan today, just after Democratic House Leader Hakeem Jeffries tried the same in Pennsylvania. Coming up, we will bring you an exclusive conversation with Leader Jeffries, only here on Bloomberg TV and radio as we talk about the midterm cycle and the priorities for the Democratic Party with analysis from our political panel. Jeannie Shanzano and Greta Joins are with us for the hour, and we'll get an update on the war with Iran, what President Trump is calling deep talks now underway, with White House correspondent Jeff Mason and insights from Heather Conley at the American Enterprise Institute. It's all after a look at Wall Street. We start there right now with the markets and Charlie Pellet, who's live at World Headquarters in New York. Hey, Charlie.
Well, hello there, Joe Matthew. So often we see oil tumble and stocks rally. That's not happening today. Right now we have got the S&P 500 index down 18, a drop there of 0.2%. Massive sell-off in crude. Right now we have got West Texas Intermediate tumbling 7.2%. We're at 82.87 a barrel on WTI. Barrel of Brent below 90 at 89.21. Brent crude is down 7.8%. The culprit today, chip makers. We're seeing a sell-off in the VIX. The SOX today down by 4%. The VIX, by the way, holding below 20. But bottom line here, S&P is down 18, drop there of 0.2%. NASDAQ down 124, down 0.5. And the NASDAQ 100 index, full of those big tech names, down 0.8%. The 2-year at 4.31%, with the 10-year currently yielding 4.64%. And the 30-year currently at 5.12%. Gold is up $27 the ounce. Spot gold at $4,080 the ounce. Gold up 0.7, while West Texas Intermediate crude bears repeating. 82.81 a barrel. Right now, it is down by just about 7.3%. Big tech tumbling today ahead of earnings later in the week. Right now, we have shares of, among those tech names, Amazon down by 0.1%. It reports later in the week. Apple shares gaining now by 1.1%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. And that, Joe Matthew, is a Bloomberg Business Flash.
Okay, Charlie, thank you so much. He'll be back with more on the markets in just about 20 minutes' time as we keep tabs on the Monday trade, not looking quite as strong as it was this morning, despite the downturn in oil prices, this pause in strikes against Iran, pulling oil sharply lower today. As Charlie mentions, we're looking at losses of more than 7% WTI, almost 8% for Brent, back below $90 a barrel. Gas prices are a different matter as they continue to rise, and that's not a big shock the way these things work, with $4.11 averaging nationally today, according to AAA. In the state of Michigan, it's $4.21, and I mention that because that's where the president is going today to talk about affordability. He's going to be at a GM facility in Michigan, not in Detroit this time, but speaking to GM workers who are acutely aware of the president's tariff regime and, of course, the gas prices that they and GM's customers are all paying. Affordability was also the issue for Hakeem Jeffries, the Democratic leader in the House, as he marked 100 days to the midterms yesterday in the Lehigh Valley in Pennsylvania, joined by Governor Josh Shapiro and others, beating the drum on once again the issue of affordability. And with now 99 days to go to the election, I spent some time, a short time ago today, talking with Congressman Jeffries about the affordability issue, about Democratic strategies, about the money trail in this election cycle, and started by asking him about this very message and the one that the president will be speaking to, prices, and what Democrats have tried to do to bring them lower. Listen.
Well, life has gotten far too expensive under Donald Trump and the Republican-controlled Congress. Donald Trump promised to lower the high cost of living on day one, but what we've seen is that costs haven't gone down, of course, in America. Costs have gone up. Democrats have been focused on doing a variety of different things to push back aggressively against the policies that Republicans have jammed down our throats, which is making life more expensive. For instance, we're pushing back against the Trump tariffs, which have increased costs on everyday Americans by thousands of dollars per year in terms of increased groceries and goods and other household items. At the same period of time, Democrats are focused on ending Donald Trump's reckless war of choice in Iran, which has skyrocketed gas prices all across the country, while actually putting Iran in a stronger position than they were in prior to the war starting.
I want to get specific. If you, in fact, win the House, if you're the majority party in the House, what you might be able to do to address prices. And you talked about some ideas yesterday, including repealing what the president calls his one big beautiful bill. Is that the answer here? Is there more that Democrats have in mind?
Well, we want to make sure that health care is affordable to every single American. And there are several steps that we need to take, including repealing the Affordable Care Act tax, making sure that the Affordable Care Act tax credits actually are extended, and repealing, I should say, the Medicaid cuts in the one big ugly bill, which have created a situation where the health care of more than 14 million Americans is at risk.
How do you do that? Do you need to see the Senate turn Democratic as well to actually repeal what's been already put in place?
Well, here's the thing. We saw a couple of weeks ago the Congress be able to move a bipartisan bill forward on housing affordability that is designed to alleviate some of the cost pressures that exist from the housing market. And we got that bill into law over the objection of Donald Trump. So what is clear is that even in a context where Republicans have complete control of government, we've been able to move some things forward. Certainly, if we have the House and the House plus the Senate, we'll be in a stronger position to drive the affordability agenda forward.
You mentioned the president's war with Iran. We've already seen the House and the Senate pass war powers legislation. Leader Jeffries, presuming you take the gavel, knowing that the president has blown right through these war powers acts, is there anything else that you can do to put collars on this effort?
Well, we're going to continue to aggressively push the effort to push back against this reckless war of choice. It's deeply unpopular with the American people, and we have to sustain the intensity. Donald Trump has unfortunately got us involved in this situation without any plan, any objective, any clear exit strategy, and now the American people are clearly paying the price. One of the things we have to take a look at is the amount of taxpayer dollars that are being spent to fund Donald Trump's reckless war machine and effort in the Middle East. It's clear to us that the American people would much rather their taxpayer dollars being spent to make their life more affordable. That's why we're committed to lowering the cost of groceries, lowering the cost of gas, lowering the cost of housing, and making sure that healthcare is affordable for every single American.
How do you lower the cost of gas without ending the war, though? We're at $4.11. Mr. Leader, it's been suggested even by the president we eliminate the federal gas tax. Is that something that you would support?
The most significant thing that can be done right now to lower the price of gas for everyday Americans who are suffocating at the pump is to end Donald Trump's reckless war of choice in the Middle East. And we're going to continue to relentlessly make the case that that needs to happen.
Where are you on the gas tax, then? Is that something that should be removed, at least temporarily?
Well, the gas tax, of course, is something that's in place to help fund our desperately needed infrastructure on highways and beyond. Yeah. And so I think, it's something that the Republicans put it on the table. We'll have to evaluate it. But clearly the most significant thing that could...
Donald's the other day, the Republican from Florida who has a bill that wouldn't... Donald's the other day, the Republican from Florida who has a bill that wouldn't put on a moratorium, but would take data centers off the grid and would compel them to have their own water supply. How do you get to this in a way that makes voters happy?
Well, House Democrats have launched a commission on artificial intelligence and the innovation economy to thoughtfully engage with community-based organizations and groups, advocacy organizations, as well as industry stakeholders to try to evaluate the best possible path forward. But what is clear is that we have to put at the center of any effort making sure we're not doing anything to exacerbate the affordability crisis that everyday Americans are experiencing in every area of life. And that, of course, includes figuring out how to drive down utility costs and the cost of water for instance, bills, as opposed to, increasing the strain on the system in ways that would actually drive up costs. And so I think this has been a state-by-state effort up until this point, with states landing in a variety of different places in terms of approach. I do think in the new Congress, we're going to have to come together and think about how we can address many of these issues nationally.
Well, I'll tell you what, I'd love to ask you about some of the strokes behind this midterm cycle, which is what we're talking about with 99 days to go. And I can't walk into a room in Washington without hearing about the Save America Act. That's, of course, because of the amount of attention the president has paid to it. Leader Jeffries, were Republicans successful in salvaging this? Will it cost Democrats votes if it becomes law? Where are you on this? Have you talked to John Thune about it?
I haven't talked to John Thune, but he's made clear repeatedly that the so-called Save America Act, which is really all about voter suppression, is actually dead on arrival in the Senate, and there's nothing that Donald Trump can do about it. What's extraordinary to me is that he continues to actually waste time trying to rig the midterm election in a variety of different ways, as opposed to actually solving problems for everyday Americans, including the problems that he promised to address, like lowering the high cost of living on day one. And instead, of course, has done the opposite. He's made clear he thinks the affordability crisis is a hoax. Donald Trump has said very publicly he doesn't think about the personal financial situation of the American people. It's all very extraordinary. He's even said he loves the inflation. Now, our focus is going to be quite different, because it's clear people are paying too much at the gas pump. People are paying too much for food. People can't afford their rent or their mortgage. And that shouldn't be the case in America, the wealthiest country in the history of the world. We want to work together.
Do you expect troops at polling places? Leader Jeffries, I'm sorry to interrupt, but are we going to see ICE agents at polling places if Save America does not go into effect?
Certainly think the American people would outright reject that. And we are going to put together the largest voter protection effort in the history of the country. We know we won't see troops at polling places because the Supreme Court, in a 6-3 decision in December, has ripped away Donald Trump's efforts to try to actually federalize the National Guard. He does not have the power to do that. In terms of ICE agents, we're continuing to push for a ban on ICE agents showing up at sensitive locations. That includes polling sites, but it also includes schools, it includes hospitals, and it certainly includes houses of worship. The American people want to see immigration enforcement in this country that's fair, just, and humane.
I'm wondering where you're looking here as we consider the money in this midterm election cycle. There's been some tough reporting about the DNC, and you probably saw the write-up in the New York Times with a frustrated Chair Ken Martin throwing his phone in one scene. It was described as dysfunction and despair. Leader Jeffries, when you talk to the DCCC, though, they've got a lot of candidates who are outraising their Republican rivals. But the fact is, on the party level, there's a great disparity. And I'm wondering if you care, if history is at your back to a point where the money will not make a difference.
Well, we certainly need to continue to raise the resources necessary to both reelect all of our incredible frontline incumbents who are in the battleground districts across the nation, while making sure that our candidates who are trying to flip red seats blue have the ability to communicate their message. We're all fighting for an affordable America. That's what unites us. That is a very powerful narrative that we'll have available to us as we communicate with voters over the next 100 or so days. Now, as you pointed out, from a DCCC standpoint, we just recently reported outraising Republicans, our House counterparts. We've been competitive with them all cycle. And of course, some of the outside groups that work in support of House Democratic candidates have posted record-breaking numbers.
If you take the House, does Ken Martin keep his job?
Well, listen, I'm focused right now, I think we all are, including Ken Martin, on November 3rd. And under the DNC's partnership, what we have seen, Ken Martin's leadership, is Democrats winning races all across the country for the last 18 plus months. And the DNC has quietly been involved in a lot of those races where we have seen success. And so let's all, keep the main thing the main thing. I know that's what Ken Martin is doing, and he's focused on helping Democrats win elections all across America. And then all of us will figure out the path forward. But I think Ken Martin's term is 4 years, and there's no reason to believe at this point that he's going anywhere.
Okay, I appreciate your answering that. And I guess I'd wrap by asking you about some of those candidates who won in those races you point to were Democratic socialists. And there's been a big question about Big Tent. Leader Jeffries, you don't need me to tell you that. And I'm wondering if you see that as being part of the recipe to take the House in the midterm elections, or if a more moderate approach is the long-term success story for Democrats.
Our success is going to hinge on convincing the American people that as Democrats, we're fighting for an affordable America. We recognize the cost of living is way too high. Far too many people are working hard. They're playing by the rules, but they can't thrive. They can barely survive. People are drowning in this failed Trump economy, and we're committed to making a difference in all of the areas that matter. That's lowering grocery costs, lowering gas prices, lowering housing costs, and of course, making sure health care is affordable to every single American. Let me make sure as well to point out, look, I believe that the Democratic Party is at its strongest and America is at its strongest when we are a country focused on having a strong floor and no ceiling. Because in this country, you work very hard, right? You play by the rules. There should be no ceiling to the success that you can achieve for yourself, for your family, for your community. At the same period of time, America, the wealthiest country in the history of the world, should always have a strong floor. And we know what that looks like. That's Social Security, that's Medicare, that's Medicaid, that's the Affordable Care Act, that's veterans benefits, that's nutritional assistance. By the way, every single one of these things brought to you by your friendly neighborhood Democratic Party, designed to ensure that there's a strong floor for working class Americans, for middle class Americans, and for everyday Americans. And I think that at its core is what the Democratic Party has been about, is about, and will continue to be about into the future.
And the DSA helps to reinforce that floor?
Well, I mean, the DSA can speak for themselves. I'm not a part of the DSA. I'm not a member of the DSA. Okay. The DSA can speak to their particular platform. We've got 215 plus Democrats in the House of Representatives. And what I can tell you is that what unites all of us and our candidates out throughout the country who are working hard is that we're committed to actually making life more affordable for the American people.
Hakeem Jeffries, the Democratic leader in the U.S. House of Representatives, speaking with us exclusively today on Bloomberg TV and radio with 99 days to go until the midterm elections, as we assemble our political panel for their take on everything we just heard. Bloomberg Politics contributor Jeannie Sheehan Zaino is with us, our Democratic analyst and democracy visiting fellow at Harvard Kennedy School's Ash Center, alongside Republican strategist Greta Joins, policy director at Brownstein Hyatt. Great to have you both with us here, and I'd love to get your insights on the money to start here. Jeannie, we talked about the disparity between the committee level and the party level, where the DCCC can't seem to send out enough news releases to crow about individual candidates and campaigns raising money, as opposed to the DNC, with reporting over the weekend that I'm sure you saw in the New York Times, Ken Martin throwing his phone in anger, morale is heading lower. How do we rationalize these two?
Yeah, and I'm glad you talked about the disparity as it pertains to the difference between the party and the committees. A lot of this goes back to the decision by the Supreme Court in Citizens United. And so every time we hear about the Democratic Party not fundraising to the level it should be, having financial issues, all of which are true, that story in the New York Times was right on point and utterly, just frustrating. But the reality is those comparisons we're hearing are not to the Republican Party, but we're hearing to Donald Trump's own committee, which has about $401 million, an astonishing number. But when you compare, as we heard Hakeem Jeffries do, the DCCC to the Republican counterpart, they have outraised them. I agree these issues in the Democratic Party become much more important in the presidential term. In the midterm, they're not a great look, but they're not critically important because of so many structural changes in the way we run elections in this country, particularly as it pertains to money. So right now, I think Hakeem Jeffries is right to say the focus has to be on winning these, and then the DNC has to work its stuff out. It's not a good situation there, but it won't change what happens in the midterm.
From a campaign strategy standpoint, Greta, I'm wondering if you would choose between the fundamentals or the technicals. The RNC is swimming in cash. Do you go with the money, or do you wish you had the historical advantage in this midterm cycle that Democrats enjoy?
I mean, I certainly would love some of the historical nature of this and sort of where we've seen trend lines over the years. I do think fundraising is part of it, but given that so many campaigns are moving off of the traditionally more expensive broadcast news as their means by which to connect to voters and really focusing on more targeted online ads and streaming ads, money is not the be-all, end-all that it was. So I do think that, you know, this is all about using money effectively and appropriately. I mean, Kamala Harris spent God knows how much money, and it really came up short. So Republicans can't assume that this is a lock because of fundraising numbers.
And I think we can all argue that President Trump has done a pretty good job not spending his money as the master of free or earned media. Jeannie, what do you think of the to-do list here, some of which we talked about with Hakeem Jeffries? If Democrats actually take the House, never mind possibly the Senate, repealing the president's big, beautiful bill, as it's called, would be a tall order. Do you think that's within the realm?
I think it's within the realm. I think it would be very, very difficult. One thing we know about United States legislation is once it passes, it's very, very tough to pull back on. I mean, Republicans learned that when it came to Obamacare. So I don't think that talk of repeal is necessarily something that's going to be in the offing. And I think this is a challenge that Democrats have, because if they just take the House, or even if they take the Senate and the House, they still are facing a Republican control of the White House, which makes doing things beyond investigations that much more difficult for them. And that's where they're going to have to temper what they promise. They should not overpromise and underdeliver. And so that's where the Democratic Socialists come in, because they have been talking about things that might be more plausible in some ways as a positive step that can be taken, particularly at the state and local level.
Well, you know, one thing that did ring true to me, Greta, and you can give me your thoughts on this, the idea of extending Affordable Care Act tax credits. At the time when that was a hot and live issue, in the advancing of the president's big, beautiful bill, there were Republican members who joined us, many of them frontliners from states like Pennsylvania or New York, who were concerned about this. And you wonder if there'd be enough to band together with Democrats to get that done.
I mean, I think it's certainly possible. You know, I think there was a lot of talk when, you know, that was all, you know, very timely, but, you know, where it was the sky is falling. I think that the impacted number of individuals was smaller than initially anticipated. But I do think there is a desire to make the Affordable Care Act work as intended. And I think Republicans would certainly partner with Democrats to look at holistically the problems that exist and why healthcare costs since the passage of it have only gone up. They have not gotten any more affordable for Americans.
Yeah. I'll ask you quickly, as we're just about out of time here, the same question. Jeannie, do you think that Republicans can keep the House as long as the war in Iran is underway?
I think it's going to be very difficult. It's historically very difficult. It's very difficult in the context with Donald Trump's low approval ratings, the issue of the economy. He is underwater. I mentioned before that CBS YouGov poll, 6 out of 10 Americans say things are getting worse. And of course, the war, as you mentioned, which is weighing heavily. So if those things stay the same, and we are less than 100 days now, almost August, Joe, this becomes that much tougher. And you were probably just speaking to the next Speaker of the House of the U.S. Representatives, the third in line to the presidency, likely come January 2027, if all things remain the same and history is any guide.
What's your thought, Greta, with 30 seconds left? That's the one way that you're going to get gas prices down, is for this war to come to an end. Does that change Republicans' fortunes?
I mean, I think it certainly would, but I also think that it's really important to look when you compare and contrast this cycle to others, is that the universe of congressional districts that is in play is very small. And a lot of those districts now, after we're past redistricting, are much more close in numbers to where Republicans want to be than some of the previous cycles. So I do think it's possible for Republicans to keep the House, but staying on message and working with their popular party leaders will be important.
Great conversation, and thanks to both of you. Great panel. Greta Joins and Jeannie Shanzano. Thanks as well to Democratic leader Hakeem Jeffries for getting us started here with a great and exclusive conversation on Bloomberg. President Trump in the back of the jet. He was just talking to reporters on Air Force One. He bumped into Tyler Kendall, as a matter of fact. They just had an exchange on his way to Michigan, where he's going to be talking about affordability. And Bloomberg White House correspondent Jeff Mason will join us to talk about the mission for the president today and who he'll be speaking with. I'm Joe Matthew in Washington. Thanks for being with us. As we turn to Wall Street, we want to update the markets right now, as it's been a bit of a churn this afternoon. A little trouble keeping up the morning gains. Charlie Pellet joins us from World Headquarters in New York. Hey, Charlie.
Hi, thank you very much, Joe Matthew. Lows of the day, in fact, right now on the S&P 500 index, we got chip stocks lower, oil selling off. Let's begin with hydrocarbons, because West Texas Intermediate crude down 7.5% right now, 82.56 a barrel. Very often we see stocks rise as oil falls. Not the case today. A barrel of Brent crude, it is trading down now by 8.2%. Brent crude, 88.82 a barrel. S&P 500 index down 23, again underscoring lows of the day, down now by 0.3%. NASDAQ is down 0.6%. Tech selling off with the NASDAQ 100 index down now by 1%. The Dow holding onto a gain of 94 points, up by about 0.2%. A Fed decision coming up on Wednesday. The 2-year currently yielding 4.31%, with the 10-year 4.64%, and the 30-year 5.13%. Spot gold up 0.6%, $4,075 the ounce. Meat packers Tyson Foods and JBS both surging after the U.S. said it will resume cattle shipments from Mexico, easing a domestic shortage that has led to higher costs for their animals. Shares of Tyson Foods, they're rallying 7.2%. JBS up by 10%. That, Joe Matthew, is a Bloomberg Business Flash.
All right, Charlie, thank you so much. He'll be back in about 15 minutes with another check on Wall Street as we keep tabs on the Monday trade. And what's going to be a doozy of a week for earnings. We're talking Apple, Amazon, Meta. We came off, of course, a very difficult reaction to Alphabet earnings last week, and with so much sensitivity over the CapEx having to do with AI. We'll be listening very closely, and a lot of the late edition of Balance of Power will be focused on just that. We're focused on affordability right now as the president makes his way to Michigan. He's going to be speaking to GM workers and others at a GM vehicle testing facility a little bit later on in the day. And as we mentioned, if you're just joining us, we were speaking with Hakeem Jeffries, who was on the trail yesterday in Pennsylvania to talk about the same issue, affordability. With 100 days to go until the election day, we want to give you the view of the president and the administration on this, having just explored Leader Jeffries' points of view with Jeff Mason, Bloomberg White House correspondent, is with us in studio right now as the president flies to Michigan. It's great to see you, Jeff.
You too, Joe.
Affordability is an issue this president has struggled with, not only in the literal sense, but rhetorically. He frequently calls it a Democrat hoax. He has also said that we've won the war on affordability. What will be his message today?
I think just the fact that he's going out at all to talk about affordability is it's a reminder to me anyway that this was the tour that he was going to do all spring.
That's right.
Which didn't happen because of the war. And it is a vulnerability for him, absolutely, going into the midterms. I think his advisors want him to talk about it more. So, but you're right. Like even rhetorically, he hasn't been able to sell his message. And this is someone who's pretty good at messaging, Donald Trump, because he gets defensive about it and says affordability is a hoax, as you just said. Well, the truth is, polls show that Americans are concerned about high prices.
Sure.
And it's also a year and a half into his term, and you've got the tariffs, you've got the war that are directly tied to his policies. It's pretty hard for him to make the argument that this is just a hangover from Biden.
Yeah, he was a very effective messenger on this issue when he was on the campaign trail, of course, right?
Yeah.
And promised at the time, people say, what's your plan to get prices down? You were at all these rallies. He said, lower the price of gas and everything else will follow.
Yeah.
Gas is back up to $4.11 today. It's at $4.21 in the state of Michigan. And I think we've said pretty clearly, the only way around this, you can suspend the federal gas tax or do any number of things, drill. But knowing our refining capacity and our limitations there, the only real way to bring this down is to see an end of the war.
Yeah.
So is it about changing the messaging on the war then?
Good question. I mean, he has been asked directly by me and my colleagues about whether or not, how concerned he is about the price of fuel, and he's dismissive of that. He's also suggested that he doesn't care that much about the midterm elections, which, of course, his party does, but he has painted the war as a broader, more important goal. And that's a historical one for him. He wants to see himself as someone who's taken on the Iranians in a way that previous presidents have not. But that said, he has also, and he cited this before the last time the latest ceasefire started, he has also said he doesn't want to be a president who presides over a Great Depression. So he's clearly aware of the economic impacts and the political impacts related to that.
Probably encouraged by lower oil prices. This market still is hinging on what they think he is about to do.
Every day.
Which is amazing. We're down sharply, 7-8% crude oil.
Right.
Nothing really actually has changed. It's just been a pause, as we're calling it.
It's been a pause, and he foreshadowed that a little bit on Friday when I was talking to him in the Oval Office about whether or not he had made a decision to go forward with another massive strike, and he said he hadn't.
He seemed to want to turn you away from that idea almost.
I think he did. And I think he also, and that was the first time, at least, that I had heard him say talks have started again. And now we don't have a whole lot of details about those talks, but certainly the fact that he did not only launch another round of massive strikes over the weekend, they didn't even do any minor ones or smaller ones. There is, in fact, a pause. There may be multiple reasons for that. Munitions may be one of them, and another one of them may be that he wants to give a ceasefire or a peace agreement another try.
So what's today? We're going to Michigan. I've been reading about this amazing facility that GM has out there. This is where the first crash rollover tests were done. It's a proving ground, as it's called, 150 miles of track. This is where they test new technologies and so forth. They can simulate extreme weather conditions. And he's going to be watching a drag race.
Yeah.
What's that all about? Or what are the optics that are helping the president today?
To be clear, drag race in this case is referring to cars.
Okay, fine.
And cars. It's ahead of a race that he's bringing to Washington next month. Next month is August, right? For part of the 250th anniversary celebration.
Is there a tie-in to this thing today?
I don't know if it's a specific tie-in, but it's at least it's not unrelated.
A gearhead sort of afternoon.
Yeah,
Fast and Furious was the headline that jumped into my brain this morning.
I think that works.
He's not been real happy lately, has he?
Well, yeah, I think
his demeanor when you guys go into the Oval Office has been different over the past couple of weeks. As you can kind of see the impact of the war on him and the barrage of negative questions that he's hearing every day. Do you feel that or see that?
Our reporting certainly shows that he's boxed in by this war, and that is got to be frustrating to him, and you're seeing some of that frustration for sure. On the other hand, you're not seeing him, outlining a clear exit plan for this, which is something that we were asking all spring as well.
Yeah.
So, and that's sort of the interesting contrast between now and even the last, a month or so ago, which is he'll say this war isn't lasting very long compared to other wars historically, and yet he's not saying this is how we're going to get out of it. We've achieved our goals.
Well, of course, we can never get into his head. The fact of the matter is he says deep talks are underway, and maybe next time you join us, we'll have some real news on this.
Yeah.
It's great to see you, as always. Jeff Mason, of course, getting us started here on the Monday edition of Balance of Power. We'll be tracking the president's moves in Michigan, of course, and let you know how things go at the drag race. Those are still acceptable around here. I'm Joe Matthew in Washington. More on the war with Heather Conley from AEI coming up next, and only here on Bloomberg.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. We've got the S&P 500 index currently holding at just about the worst level of the day. We're seeing a sell-off in chip makers. That is sending stocks lower, overshadowing a decline in oil prices. Right now, West Texas Intermediate crude down 7.2%, 82.86 a barrel. Barrel of Brent just below 89 now. Brent crude down by 8.1%. The Dow is higher, up by 0.2%, up 107 points now. The S&P 500 index is down 0.3%, lower by 21, while NASDAQ is down 146 for the NASDAQ Composite Index. That is a drop right now of 0.6%. The Russell 2000 index of small cap shares is gaining 0.2%, but the Bloomberg Mag 7 index down 0.1%. Busy week for Mag 7 names this week. We will be hearing from Alphabet, Amazon, Meta Platforms, and Microsoft all this week. The stocks, as I mentioned, chip makers selling off. The stocks down by 4.1%. All of this with the 2-year currently yielding 4.32%, the 10-year 4.64%, and the 30-year 5.13%. Spot gold up 0.5%, $4,073 the ounce. Philip Morris is doubling investment in its Colorado Zinn manufacturing plant to shore up supply for the popular nicotine pouches that have come under threat from increased competition. Shares today of Philip Morris, they are trading higher by 1.3%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. And that, Joe Matthew, is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Interesting to see oil down so sharply, but stocks really aren't keying off of that, at least not on an index level, with the broad market trading lower today. We thought that there might be a bid under this market with some optimistic headlines involving Iran. Deep talks, the words the president used when he spoke on the phone with Axios. But indeed, we've got an S&P 500 down fractionally here, 20 points. The NASDAQ is off about 0.5%, even with WTI down to $82 today, and Brent back below 89. Interesting moment we're in as the president approaches his destination in Michigan, where he's going to be talking about affordability today, and lower oil prices would certainly fulfill this idea and this concern, but gas prices keep rising. We're at $4.11. The reason why we're watching the markets respond is because of the pause. There's been no strikes since Friday. And interesting reporting from Axios, aforementioned. It was Admiral Cooper, the top U.S. military commander in the Middle East, Brad Cooper, who recommended stopping what had been 13 straight nights of bombing around the Strait of Hormuz because it's reached the limit of its effectiveness, which calls into question exactly what options we have right now. And that's where we begin our conversation with Heather Conley, who's back with us from the American Enterprise Institute, senior fellow, former Deputy Assistant Secretary of State for the Bureau of European and Eurasian Affairs in the George W. Bush administration. Great to see you. Welcome back. As you consider that conversation with the Admiral, what does the president see as options we have right now, if not diplomacy?
So the president does not have great options moving forward militarily, Joe. You have reports of the chairman of the Joint Staff, General Kane, being very concerned about stockpiles. Now, the president just said, I think on Air Force One, he counteracted that. He said mid-range munitions are fine. I'd like more. You have Admiral Cooper saying, we can go back and keep hitting these things over and over again. It's not working. We need a new strategy. The air campaign is just not going to produce those results. But the president has really bad choices. He doesn't want to do a ground campaign. He doesn't want to introduce land forces. Our munition stocks are critical. And the diplomacy part, you're certainly hearing the president talk about talks. You're hearing the Iranians saying there are no talks. There are exchanges of messages. But I think the Iranians are going to hold out and wait for that price of energy to go up to make those options more unappealing, and then forcing the president to acquiesce to additional Iranian demands. I hate that we're in that position, but that's where it feels like we're heading.
Well, is it because Iran is simply so effective at hiding its missile stockpiles, for instance, and its drones were repeatedly hitting the same targets because they're digging them out and pulling launchers back out from underground. Is that the essence of this?
I think there's two parts.
Yeah.
Definitely the underground, and these are fast boats. These are small things. They're very hard to target. I think the other thing is the Iranians are able to reconstitute these cheaper, faster, effective drones and missiles. And this is the problem that we're facing. Our reconstitution times, particularly with our high-end munitions, they can take 2 to 4 years, 5 to 7 years. This is why there's sort of panic in the ranks here. The air defense capabilities, the Patriot missiles, the THAAD, that long range, it takes so long to replace them. There's now a global shortage. And that really puts to question, you know, could we protect against attack in the Pacific theater, in the European theater, now in the Middle East? So this is why this is such a bad position strategically.
Enter Ukraine. I don't know what to make of this. I know that President Zelensky will be in town for Lindsey Graham's funeral tomorrow. But to learn that Ukraine fired on an Iranian commercial vessel in the Caspian Sea is quite remarkable. Iran says this killed a sailor. Iran has summoned a Ukrainian diplomat to register protest here. Did Ukraine just get involved in the war with Iran, or where was this boat going?
Well, Iran has been involved in the Ukraine war for many, many years.
Supplying Russia.
100%.
Okay.
So, and this is where, first of all, I think this attack, a couple of things. It continues to demonstrate Ukraine is really developing impressive military capabilities.
No doubt.
It can reach there on its own. So huge gains there. I think on the eve before President Zelensky does come to Washington, he'll meet with President Trump, attend Senator Graham's funeral. You know, President Zelensky's saying, I have some cards to play here. I can be of assistance to you. Wow. And then the third is, honestly, as what Zelensky has been saying all along, the conflict in Ukraine is the demonstration of this axis of evil we were talking about before we came online. You have now suggestions that North Korea is going to introduce 30,000 troops on the Russian side to fight in the war in Ukraine. This vessel allegedly was carrying components and parts to go to Russia to help Russia build additional ballistic missiles to be used in Ukraine. You have China providing intelligence components potentially to Russia. So all of these are interconnected. You cannot separate one theater out. So this was a really, I think, it hit all of those themes of Ukraine's really producing some serious weaponry that we, I think, hopefully can gain access to. Mentioning that this is a part of Ukraine helping the United States out with this alignment. Amazing. Yeah.
Were you in the Bush administration for the Axis of Evil speech?
I think I was in the first term.
Wow.
Yes.
History is rhyming or something for you here.
Like that,
okay. This is brilliant politics on Zelensky's part, right? He can come here and say, hey, NATO's not helping you out, but I am. Yeah. Does the president say thank you?
Will he ask the president to say thank you? Back to that infamous Oval Office scene. No, I think what President Zelensky is doing, and you had, of course, this extraordinary moment over the weekend with Laura Loomer, influencer for the Republican. She's just transformed her view on Ukraine. You have, you know, the U.S. Army co-production of Ukrainian drones, the license for the Patriot missiles, the meeting that happened at the NATO summit. You are seeing a change. We are shifting into a much more supportive role. And I think, again, President Zelensky's here to honor Senator Graham, who was a huge advocate for Ukraine, fighting Russia, the Graham-Blumenthal bill. So in some ways, it is absolutely fitting that President Zelensky honor that. But this relationship is changing, and I hope the White House really gets on the side of Ukraine to support.
Are you about to tell me the war in Ukraine is going to end before the war with Iran?
No, both are going to continue to endure. And they're similar because both sides are in really for survival mode. I mean, we have to watch Russia's escalation. Putin, you're starting to now see that Putin is feeling the effects of both the Ukrainian strikes. If the sanction bill goes into place, it's more of a tariff bill than a sanctions bill, but that could add additional pressure. there's some movement there that I think we need to watch. And Russia and Iran are similar. They also want to press huge advantage right now and are helping each other do that. So I think, unfortunately, I think both are going to continue on for the foreseeable future. Hope not, but that's the way it feels.
Pretty interesting to see the president's posts on Truth Social from over the weekend. To your point, he indicated that we were in deep talks with Iran. They've suggested otherwise. The imagery he's posting on social media would not indicate someone who's advancing to the peace table. There was one AI-generated image, one that portrayed a strike on Karg, as it said. A different image showed the president on the helm of a naval ship wearing a hat that says FAFO. Another, he's on board an Iranian oil tanker with the American flag, and it says, "It's our oil tanker now." Does this stuff resonate, the bravado resonate in Tehran?
No, I don't believe it does. I think they interpret this as continuing their actions or continuing to get under the president's skin.
Okay. So they think they're winning when they see that.
Well, I think they're going to continue to press their advantage. Yeah. Look, they too, the inflation is running very high in Iran. It's not that they aren't feeling the effects of a 5-month conflict, but they feel that they have the leverage. They still control the Straits of Hormuz. Now their proxy in Yemen, the Houthis, are squeezing the Red Sea. This is putting massive pressure on Saudi Arabia. Even though we've had this 2-day pause, which we're thankful for that pause, you have Iranian proxies in Iraq now attacking Saudi Arabia, Jordan. And so this isn't stopping, and they're targeting energy infrastructure. So they know the pain point is the price of energy. They know the pain point. If they can hang on longer, they believe that they can, get more concessions from the U.S. It's just we're not in a good strategic place, and Iran's going to continue to press advantage.
So what does this new front in the Red Sea mean? You made reference here. We've got Iranian proxies bombing Saudi Arabia now.
Yep.
This is escalation, and if we have another choke point, where does it leave the U.S.?
So this is where really the last 5 months, when the Strait really closed down, you saw a diversification of trying to ship out by land, pipe it across to get to the Red Sea, even northern pipelines up through the Mediterranean. And it has helped. But the Saudis, by diverting to the Red Sea, created another pinch point. And the conflict in Yemen for many years, and if you recall, even in the Biden administration, the Houthis were taking action in the Red Sea from 23, 24. Our naval, we couldn't stop them. We reached a pause. But this is now, the Saudis are getting this on both sides. And it will continue to really challenge. What I'm worried about is some of the drone attacks on some of these major refineries and points. It's product, it's diesel, it's jet fuel. That's going to really feel the pinch now. So this squeeze play is ratcheting up the price for the United States and our allies.
Yeah. President Trump has made his way to Michigan to a GM vehicle testing facility where he's just shaking some hands and talking with, looks like Mary Barra from, at least where I'm sitting from across the room. He'll be speaking to the issue of affordability with some GM workers a little bit later on here. Indeed, spending some time with the CEO of General Motors, which had a stronger than expected beat and raise quarter last week, and the stock has been chugging higher. This attention from the president today might well help the president in his effort to convince folks that affordability is the issue on his mind. As we consider the impact here, you're talking about the pipelines, Heather Connolly, across Saudi Arabia. I think it was Javier Blas who tweeted over the weekend, they need a bypass for the bypass now. I don't know if you can pipe around now 2 choke points. And so as we look at $4.11, these prices could keep going higher.
Absolutely. And again, China, and Javier's been doing amazing reporting. China's still pretty off the market. They have, if they begin to increase, that's really going to drive price up. I think, Joe, we also want to keep our eye on the future. As Europe, United States drains its strategic petroleum reserves, Europe is going to be at an all-time low in their storage capacity before they enter winter. You're watching, obviously, these wildfires in Europe, drought, hydropower now is gone. This could really set up a huge challenge in the fall. Food insecurity. insecurity, water insecurity, energy at lows. We better buckle in. This is going to be a massive challenge.
Sounds like the start of a Mad Max movie, Heather Conley. I don't know how we're going to get out of this, but at least she's still smiling, right? American Enterprise Institute, Heather Conley is with us every week here on Balance of Power to help us understand what's taking place. And on Mondays, it's always a job picking through everything from the weekend, right? The Truth Social posts, all the rhetoric, and we're going to get a lot more when the president speaks a short time from now. Heather, thank you for being with us.
Great to be with you.
With us live on Bloomberg TV and radio, live from Washington, and I'll meet you back here on the late edition of Balance of Power with much more to follow. Thanks to Hakeem Jeffries for joining us, our great panel, and Heather Conley as well. I'm Joe Matthew in the nation's capital. Stay with us here with much more to follow. Bloomberg Business Week Daily will be coming up next, and we'll get a check on the markets for you from Charlie Pellet. I'll meet you back here at 5 p.m. Eastern, only on Bloomberg TV and radio.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, and Bloomberg Originals.
And a very good afternoon, everybody. Yes, indeed. We are across Bloomberg platforms, radio, TV, YouTube, Bloomberg Originals. It is Monday, July 27th, 2026. Man,
that's it. That's good. This is it. This is it.
I was sitting
Summer's over.
I was in the makeup room this morning. I'm just like, summer's over.
Yeah.
I can feel fall. I
it's
hate to
not
do
quite.
that.
It's,
I know.
You know, but look, there's a Fed meeting this week.
Yeah.
Can't forget about that.
No, you're right.
Jackson Hole next month.
Right.
Kind of signifies the end of summer in my book, I think, for a lot of people.
I feel like that's the last hurrah.
And I think a lot of
Fed
people on
bankers.
Wall Street kind of go places in August.
You're going places, I'm going places, right? Like, I just kind of can feel
We're
it.
in Midtown, though.
Yeah.
We're not on Wall Street.
That's so true. That's so true. So, all right. So what's on our mind? We do have a market that is definitely lower off our worst levels of the session. Check out something like the Philadelphia Semiconductor Index, the SOX, down another 3.5%. I mean, kind of slippery little sucker because up it goes and down it goes.
Yeah, it's actually down more than 20% from that high. That was just about a month ago on June 22nd. We've got a lot to talk about in a week that's packed with the Mag 7 and AI-related names that are reporting this week.
Yeah, and so this hour, what are we going to do? NVIDIA's $750 billion in deals, reigniting that circular AI fears, and I think rightfully so. There's a great chart. We put it out there from our Bloomberg team. We're going to bring it out again. So we're going to get into that with Ed Ludlow, who actually caught up with Jensen.
Yeah, looking forward to that conversation in just a few minutes. Plus, let's give peace a chance, or so it seems, as President Trump pauses U.S. strikes on Iran. We did see some market action that was indicating a little bit of a reprieve, but that kind of went away a little later in the morning. The S&P down a little more than 0.1%.
Trying to get to the reality of it all. Hey, also AI and workers. We don't get another monthly jobs report until a week this Friday. Having said that, when it comes to AI and workers, there are so many workers who are fearful about what it means for their jobs. Apparently, according to a new survey and something written up to in the Harvard Business Review, there's a certain way of interacting as a worker with AI that might give you some job security. So
Don't call it a clinker.
Don't call it a clinker. Yeah. All right, folks, let's get you going on this Monday. We've just got a couple of hours to go. Here is Charlie.
All right, thank you very much. I'm keeping an eye on crude oil because crude right now is tumbling below $89 a barrel on Brent, 88.56, down 8.5%. West Texas Intermediate crude, 82.40 a barrel, lower now by 7.7%. Very often when we see oil decline, we see stocks rally. Not the case today. We've got the S&P right at 7,400, down 12 right now, down 0.2%. NASDAQ is down 0.4%. The NASDAQ 100 index down 0.6%. But interestingly, the Russell 2000 index of small cap shares up 0.4%. All of this with the Dow up 0.3 and a 10-year that's currently yielding 4.64%, the 2-year 4.31%, and the 30-year 5.13% on the 30-year. Gold up $24 the ounce to $4,073, up 0.6%. West Texas Intermediate crude, as we mentioned, down 7.7% right now, 82.40 a barrel. A lot of big tech names moving lower today. As I mentioned, chip stocks lower, but earnings will be very much in focus. Specifically, we got 4 of the Mag 7 names coming up this week. The A's, Amazon, Apple, they report on Thursday. The M's, Microsoft, Meta, they report on Wednesday. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. Carol and Tim, happy Monday. That's a Bloomberg Business Flash.
All right, good stuff. Charlie, thank you so much. We're going to come back to Charlie certainly throughout the hour, the next 3 hours really on Bloomberg Business Week Daily. All right, feels like we've been here before, and yet to be fair, bringing war to an end is complicated even if you started it like President Trump in the United States did. And on that, President Trump said he decided to pause strikes on Iran to give negotiations another chance, minimizing the prospect of a potential military escalation of the war. Said earlier on Air Force One, too, that he's got plenty of time and that they are having good talks with Iran.
So the question that a lot of us are asking right now, is this real progress? Is it different this time around from past pauses? And proclamations when it comes to these so-called peace deals?
Yeah, a lot of questions for us, and I think for everybody who's out there. Hey, Bloomberg Economics, economic statecraft lead, Chris Kennedy back with us, tracking it all. He is in the Bloomberg News Washington, D.C. bureau. Hey, Chris, good to have you here. I know we always give you a tough task to, make sense of what is going on. President Trump said very deep talks are taking place with the Islamic Republic, and if they don't work out, we will go back to very strong military action. Iran's foreign ministry spokesman said no formal negotiations are currently taking place despite what we got from President Trump. What's the reality here? What's the intel? Do we really ever really know what's going on here?
Well, yeah, that's a great question.
We always give you a tough task.
We don't ever know
and yet it keeps coming
what's
back.
going on. Yeah. So looking at the markets, we saw a big drop in oil prices today and last night when markets opened. I think that those markets are pricing in a sort of tactical pause. But as you mentioned, equity markets are not necessarily responding in kind right now. And so I would interpret that as the markets don't think that this is a real sea change, but we do expect there to be a pause for a few days at least. Trump is hosting Israeli Prime Minister Benjamin Netanyahu this week. There's a lot of other things happening, but we do expect it'll be very difficult to get to a place where, for instance, the Strait of Hormuz reopens for traffic. The U.S. is still imposing its blockade. It's still turning away ships, and Iran is still targeting ships that don't abide by its rules for transit through the strait. So getting to that level where we're back in a place where you basically have free movement like we saw after the MOU was signed, that's going to be more challenging.
Chris, the equity market's not buying this, but the oil market seems to be buying a little bit. We're seeing Brent down a little over 8% right now, WTI down 7.7%. Both of these, though, above $80 a barrel. Brent's closer to 90 a barrel than $80 a barrel. Why is in your view, the oil market reacting, but the equity market's not?
I think the equity markets are just being swamped by the other things happening this week. We've got some big earnings. We have the Fed decision on Wednesday, and right now I think that's just dominating. Given that there hasn't been sort of a definitive answer to what's happening with the war, it makes sense that we're seeing a retreat in oil prices. But as you mentioned, we're still up, right, compared to where we were prior to the resumption of hostilities.
Yeah, I put some gas in the old car this past week, and it wasn't cheap. I'm just gonna say. Now, mind you, I was near a big highway, and you always get, but nonetheless.
Did you get to pump your own, though?
I did.
You did, okay.
I was not in New Jersey,
Okay.
which is always a bummer. So Israel, Chris, we've got to ask you, I always feel like we have to factor this in. As you mentioned, Israeli Prime Minister Benjamin Netanyahu will be in town meeting with President Trump. That's happening tomorrow. The president says he plans to press, or I should say, Benjamin Netanyahu plans to press U.S. leaders on keeping a constant watch on Iran's nuclear program, one of the many issues kind of now in limbo, as we know, following kind of the back and forth here. So I feel like even on Air Force One earlier today, President Trump made some comments. I have a little difference on Iran when it comes to Prime Minister Benjamin Netanyahu. Israelis' roles, Israelis' actions have to be considered in all of this, yes?
I think so, and I think a lot of people are observing, the president over the past few months. They recognize that he's getting very frustrated with the pace of this war, the failure to achieve objectives, and Israel certainly wants to make sure that the U.S. doesn't just back away to, in response to oil markets, in response to potential, equity market shocks, et cetera. I think the concern for both sides is to make sure that they stay on the same page, at least when it comes to the Iran theater. There's the other issue, which is that as we've been writing about, my colleague Becca Wasser, about the lack of munitions, the lack of the ability to continue intercepting ballistic missiles. Israel has been notably spared over the past week or so from some of Iran's attacks prior to this pause that happened over the weekend. But of course, if hostilities resume, then we get into additional pressure on these interceptors. And, other Gulf countries are still, they're also looking at their ability to defend against these attacks as well. So
I'm glad you went to
I'm
glad you went to magazine depth, Chris, because I have a different question about resources or U.S. assets, and this has to do with human beings. The president, as Carol mentioned, said on Air Force One that he's got plenty of time when it comes to this conflict. I think some folks who may have family members in the region who've been there for months at this time might might argue otherwise. And I'm wondering when this part of the conflict begins to take a toll even more so on the folks who are there and then the folks who are home here.
Yeah, well, it's really unfortunate that we haven't been able to get clear and consistent information out of the U.S. government on the service members who have been harmed as part of this conflict. It seems like they've revised the way in which they're reporting that. But of course, this was a major concern over the weekend. I was speaking with somebody who has a family member over there, and they're very concerned about what's going on. And, the longer this goes on, the more casualties the U.S. Experiences from this conflict, the more pressure there's going to be to wrap it up.
All right, we're going to leave it on that note. Hey, listen, Chris, always do appreciate the updates you give to us out of the White House and what's going on, certainly with this war. He is, of course, our Chris Kennedy. He's Bloomberg Economic Statecraft lead, joining us from our D.C. bureau. We're going to stay on news out of D.C. In the meantime, though, we do also want to mention that President Trump has made his way to Michigan. We are just tracking some events that are happening on the ground there. He is expected to make some comments later on this hour in Milford, Michigan, talking about affordability and tariffs. Our expectations in terms of his comments. Keep in mind, we're counting down to those midterms, so some of that has got to be top of mind for him. In the meantime, I think he was viewing an auto drag race. I don't know if that happened yet, or whether
he was speaking
to
to executives from General Motors earlier as well.
Yeah. So.
Yeah, it says that this is the proving grounds for General Motors. Where's Matt Miller when you need him? He spent a lot of time in those parts. The question I think a lot of Americans have, and I think a lot of Republicans too, have heading into the midterms is, to what extent can the president get that message about affordability across to Americans who may not actually feel like they are in an environment that is more affordable than it was 2 years ago?
That's a really good point, right? Amid all this also, continuing ongoing backdrop of the war, like we just talked about with Chris Kennedy. Hey, we do want to get to one of the co-hosts of Balance of Power, Joe Matthew. He's just off an interview with House Democratic leader Hakeem Jeffries around Democratic priorities in the 99 days until the midterm elections. Before we get to Joe, though, here's what House Democratic leader Jeffries had to say to Joe about the U.S. war in Iran.
Well, we're going to continue to aggressively push the effort to push back against this reckless war of choice. It's deeply unpopular with the American people, and we have to sustain the intensity. Donald Trump has unfortunately got us involved in this situation without any plan, any objective, any clear exit strategy, and now the American people are clearly paying the price. One of the things we have to take a look at is the amount of taxpayer dollars that are being spent to fund Donald Trump's reckless war machine and effort in the Middle East. It's clear to us that the American people would much rather their taxpayer dollars being spent to make their life more affordable.
All right, that, of course, was House Democratic leader Hakeem Jeffries earlier today with Joe.
I want to bring in Joe Matthew of Balance of Power here on a Bloomberg Business Week Daily. Joe, it's always good to get some time with you, fresh off your conversation. I want to start with what Jeffries had to say about the U.S. war in Iran. We just talked about the segment before you, the president's pause when it comes to U.S. attacks in Iran. This, of course, comes ahead of, very close at this point, to midterm elections. What did you hear from him about the way that Democrats are positioning themselves amidst this conflict?
Well, it just all comes down really to one issue. I mean, we talked around the war powers issue to an extent, but this is a story of affordability. As Hakeem Jeffries is concerned, he was in Pennsylvania yesterday on what, by the way, was 100 days, guys. You can start your watches until the midterm elections. Today is 99 days.
Amazing.
And so they're really trying to crystallize their messaging, and it's affordability, which is, I guess, ironic, because that's exactly what the president's talking about today in Michigan. By the way, they did the drag race already. He's out there at this GM testing facility with Mary Barra, and Secretary Duffy is with him. They did a drag race for about 7 minutes, which is not why he's there. He's going to be talking about the issue of affordability with $4.11 today, the average price for a gallon of gas, and that's because of, we all know what's happening in Iran. So yes, this is the opportunity for Jeffries and other Democrats to seize on the same issue that Republicans ran against Joe Biden on.
So what are the Democrats then putting out as an alternative? I always feel like everybody, Joe, is like, yep, affordability. But what are you going to do specifically? Because, yes, there's the war and the impact on energy prices, but it's not just energy prices.
Yeah, and you're getting to the big question, which is, what are you for? Can you win by just running as someone who opposes Donald Trump?
Right.
We got into that in our interview, and we'll play some of that on the late edition of Balance of Power. Jeffries does have an answer to it, beginning with repealing, and this is a pretty tall order, what the president calls his big, beautiful bill. They want to extend affordable care tax credits. Remember, there was a huge debate over that at the time. But going back and cracking open that can of worms with what could still be a very, even if they do win, slim majority, might be very difficult for Democrats to pull off. And if they don't have the Senate and if they don't have the White House, that would potentially be impossible. I asked him about suspending the federal gas tax, for instance. He didn't even touch that in his first answer because they see this as really just one answer, and that's ending the war.
Yeah, I guess, too, Joe, I think a lot about what comes in January once there is a new class and we do potentially see some new faces in the House and the Senate and what that means for President Trump's agenda.
Yep, that's for sure. Look, everything is kind of on ice until the election. The big question right now is, can they fund the government? The House passed a continuing resolution last week. Now it's up to the Senate. Can you imagine, guys, we're in such a world of dysfunction that in August, we're throwing in the towel. The government doesn't have a funding deadline until September 30th. But they said, because of the election, we're just never going to be able to figure this out. So let's do it. We'll kick the can right now until a date past November. And that's exactly what they've done. Now it's up to the Senate to codify that and get it done as well. That is the dysfunction that's informing both parties as they go into this election.
Yeah, I tried that on my bosses. I just can't figure out the answers, Joe, and I'm just not going to get to it.
Let me know how you get it.
It doesn't work. I'm here and I'm doing it. No, I'm just kidding. I do think about, though, in terms of, I want to just go in a weird, but campaign financing. Money coming in to back the midterms. I thought I was seeing things where Republicans, lots of money coming in. What do we know?
This is a big deal, and we talked about this quite a bit as well. So, Democrats have history on their side. They say it's a midterm cycle with the majority party owning both ends of Pennsylvania Avenue, so that would tend to lead itself to a Democratic advantage in this election. But Republicans do have the financial advantage, at least on the party level. The RNC has about $30 million more than the DNC. It also doesn't have any debt. The other side to that coin is that on the campaign level, if you talk to the DCCC, they'll tell you that their candidates are in many cases outraising their Republican counterparts. When you put that together with what could be an historical advantage, Democrats feel pretty good about that. But look, if you believe, as history shows us, that money is the mother's milk of politics, this is an issue. And that's why there has been a bit of a circular firing squad when it comes to leadership at the DNC, namely Ken Martin, and that's something that we talked about with Jeffries as well. It's just different. When you look at the party level versus the candidate level, there's a big disparity in money as well.
So, Joe, just 30 seconds left here. 99 days until the midterms. That means 100 days until you're talking every day about 2028 in the election there. Who are the three names we're going to be talking about then?
Yeah, 99 bottles of beer on the wall. I think it's probably the same names that we keep talking about. Hakeem Jeffries was with one of them yesterday, and Josh Shapiro. Gavin Newsom wants to be invited to that party. Pete Buttigieg. We're still waiting to hear if Kamala Harris has ambitions. But, I'll tell you what, this early in the cycle, we always look back at that conversation and say, wow, we weren't even close.
That's what makes it so interesting, and you guys cover it all. Joe Matthew, thank you. Co-host of Balance of Power. Catch him again coming back at 5 p.m. Wall Street time right here on Bloomberg. Hey, coming up, the latest move by NVIDIA reigniting the circular AI fears. We get into that next.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We've got the Dow higher, the S&P, NASDAQ, and the NASDAQ 100 index all declining. This is crude slumps. West Texas Intermediate crude now down almost 8%, 82.23 a barrel on WTI. Brent 88.05 barrel of Brent crude now down by 9%. A sell-off in chip makers sending stocks falling, overshadowing that decline in oil prices. Very often we do see oil decline, stocks move higher. Not the case today. The S&P is now at 73.96, back below 7,400, down 16 points, a drop of 0.2%, with the Dow up 129. Dow Industrial is up 0.2%. The NASDAQ 100 index down 0.8%, and the SOX, the Philadelphia Stock Exchange's semiconductor index, down 3.7%. A Fed decision coming up on Wednesday with a 2-year currently yielding 4.32%, the 10-year 4.64%, and the 30-year 5.12%. Gold is up $22 the ounce to $4,075. That is a gain now of 0.5%. Cracker Barrel CEO is stepping down nearly a year after an attempted rebrand of the chain led to a fierce customer backlash. Cracker Barrel says CEO Julie Masino will be stepping down next month, but will remain with the company until October 9th in an advisory capacity. You recall even President Trump weighed in on the rebrand saga, calling on the company to restore its old image as other critics accused it of erasing elements of traditional Southern culture. Cracker Barrel shares down now by 2.9%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Carol and Tim, that is the Bloomberg Business Flash.
All right, Charlie, thanks so much. Hey, it's a big week for tech earnings in the AI story. Meta, Microsoft, Amazon, and Apple all reporting results this week.
And then there's the NVIDIA news that started coming down late on Friday. Heads up on it from Bloomberg's Ian King. Ed Ludlow all over it, too. He also caught up with Jensen Huang on Friday in an exclusive interview. This after Jensen attended Korean AI Summit and met with South Korea's president.
This is the golden ages for Korea, as you know. Their semiconductor business is booming. Their industrial business is booming. You know, this is a country that has the ability to help the world build out the AI infrastructure. That they're incredibly adept at adopting new technologies, and is a really technologically forward-leaning society. And they love using AI. AI has really diffused throughout their society and their industry. My guess is that the semiconductor industry is probably going to have to be 10 times larger than it is today over the next decade or so. And so working with our partners in Korea and around the world to scale up the supply chain of semiconductors so that we're prepared for this AI future is really important.
All right, that, of course, was Jensen Huang of NVIDIA, along with our Bloomberg Tech Bloomberg Tech host, Ed Ludlow, who was working into the wee hours, it seems like, on Friday. Ed Ludlow, I don't even know when you sleep anymore. He's, of course, host of Bloomberg Tech on Bloomberg TV. Catch them at 11 a.m. Every Monday through Friday on Bloomberg TV. Hey, Ed, there's a lot of stuff going on with NVIDIA. There's the $500 billion deal with SK Hynix, the memory chip giant, to build, more than 2 gigawatts of AI data centers on the Korean Peninsula. They're investing $1 billion in Naver Corporation to help finance an AI data center under construction in South Korea. And then there's NVIDIA in talks to financially back and help an OpenAI lease a $500 billion data center project. As I said, it's a lot. Make sense of it all for you, for us.
Yeah, they're all feeding into concern in the market. Like the stock's down 5%, right? And the conversation around circular financing is back. But let's take the SK case study first, right? $500 billion. I asked Jensen, what does that mean, $500 billion? Remember, SK Group is a conglomerate. So what it literally means, in his explanation, is that represents some of it NVIDIA buying memory chips from SK Hynix. SK Hynix has 60% market share in high bandwidth memory, the memory chips that goes into data centers. But SK Group also has SK Telecom, a telecoms company that has its own ambitions to be an AI data center play. They buy NVIDIA chips from NVIDIA. So there is some more specifics to what the 500 billion represents, or $500 billion, as Jensen likes to frame it. But the concern around the circular financing as it relates to that case study is, which proportion is going in which direction? What's contractual and what's not? What's the timeline for it? It's a many multi-year agreement. So the market's kind of taking a beat here and saying, what is that?
Is this why NVIDIA's under pressure?
I think the circular financing is feeding into it in the market today. You know, people I've spoken to on the NVIDIA side would acknowledge that. What Bloomberg's reporting and many other outlets reporting on OpenAI is something very different. First of all, because it's reporting based on anonymous sources. NVIDIA and the companies involved have not commented on it at all. But there's two parts to it. NVIDIA becomes a financial backstop for a data center in Ohio, according to our reporting, where it says, OpenAI, you want to lease this data center capacity. We will be a guarantor of your finances up to $250 billion. At the same time, in the reporting, NVIDIA is saying they will finance themselves OpenAI being able to buy $350 billion of chips from NVIDIA. That's a much more explicitly circular arrangement. None of the companies have commented on this publicly, but it's another reason why we woke up this morning and the world was like circular financing, and we're worried about it.
Ed Ludlow, I'm just going to say it. You're super smart. You follow this stuff, the ins and outs.
You want the truth?
No, I don't. I know the truth. I mean, the circular AI concerns, it feels rather legit here. No?
On the OpenAI side, you know, again, if you were just to put it in one sentence, it is NVIDIA giving financial support to the companies buying its technology. Right. Now, there are many in the markets that see that as completely constructive, because the environment is demand vastly outpaces supply. And as Jensen explained in that clip that you played as part of the interview, to their mind, they're greasing the wheels. They are allowing for this infrastructure in the real world to get built faster. You know, they don't want money or capital to get in the way of it. They don't want their customers needing to pay their invoices to stop the projects getting in the way. And there is certainly an acceptance from some in markets that that's the case. The concern, very explicitly, is that it is artificially, pardon the expression, inflating values, and that it is artificially propping up something, that the real terms financing or demand isn't there.
Well, Ed, this is sort of a philosophical question, but it also has a lot to do with what we've heard. I mean, I think it's fair to say over the last 2 years from Jensen about what the world will look like. But in order to justify all of this CapEx and this investment, what does our world look like in 2, 3, 5 years from now?
Well, the overall expectation is that capital expenditures will be much higher in 2 years' time than they are today. You know, and the idea that in aggregate, those 4 key hyperscalers and throw Oracle in there too, between them account for way over $1 trillion of CapEx annually. You know, that is the expectation at this standpoint. What's different this week, so we get some major technology earnings Wednesday and Thursday after the bell, is that it used to be the case that the hyperscalers would raise CapEx and then show top-line growth, and the next day the stocks would be higher. You know, that was really cheered by Wall Street. There is now much more scrutiny, which is maybe why this circular financing story has kind of come up this morning, where just showing top-line growth overall isn't good enough, that they want much more different types of evidence that raising CapEx is because there is multiple facets of demand out there for whatever the AI technology is they're working on. You know, we went over this last week with Mandeep, right? Alphabet gave many metrics: Gemini use, enterprise use, tokens per minute, all these different data points, and the stock still fell 7% because the bar was really high in this environment.
I'm not going to get this right, but you brought up something on our call today. But is this like steelmakers owning the railroads, right? You know, so that the railroads can move stuff around.
Yeah.
I don't know,
well,
but we needed the railroads.
That's a good one.
Like, mean, that was a good thing.
So it's highly analogous if you go back to the SK case study. NVIDIA is supply constrained for memory chips. They need SK Hynix, already their biggest supplier of HBM, to produce even more HBM. They need SK Hynix to get going on that. And what NVIDIA is saying is that within this $500 billion figure, which is a very large number, a chunk of that is them placing in advance lots of orders for current and future generations of high bandwidth memory so that SK has the confidence to invest into the capacity. You know, that's a part of it. bringing it back to the worry in the market today in circular financing, how much of it is that? How much is that part? Like, we just don't know proportionately what's binding, what's not binding, what's just a sort of letter of intent. You know, now the burden of proof on these companies is higher. People just want more information.
So then let's take what we learned from Alphabet last week and push ahead to what we're going to hear this week from Meta, Microsoft, Amazon, and Apple. Apple is I think it's fair to say, Ed, at this point, Apple is in a league of its own. And it's been like that for many years and at many different points. It's fair to say that. But in terms of the way that it's returned for shareholders this year compared to some of these other companies, Meta's down, Apple's up more than 20% so far this year. How does it set us up for what we're going to hear from these other four of the Mag 7?
I'm just looking on my Bloomberg as well, because I think the trade today literally means that Apple is once again the world's most valuable company. 4.9 trillion, because Nvidia's come down so much to 4.7 trillion. Apple's the outlier, right? It doesn't have a capital expense.
Higher this year.
Yeah, it's been the outperformer, but the market, I think we covered this really well in the last earnings cycle. Like, they started to get credit for being the non-capex story. So for a long time, the market was frustrated with Apple because it was behind on its AI story, but they kind of were like, you have all this cash, like, what are you doing with it? Like, you know, are you aggressively investing into talent? Now that the stock's been insulated because it doesn't have the capex story, it still comes down to the installed base of devices, the iPhone, their strength in markets like China, while they kind of feed through their plans for Apple Intelligence and the Apple version of Siri. Again, that's kind of what earnings will come down to for them. Higher memory costs is the bit that's common to all of them. Because why are memory prices higher? Supply is tight. There's competition between the data centers and the consumer electronics names to get hold of it. And Apple is like the master of managing the bottom line, but they're still dealing with the same macro environment everyone else is.
Right.
So how well they perform is really a big story.
Hey, speaking of memory, what do we know about CXMT? Debuting in Shanghai, company's now China's largest, the world's fourth largest manufacturer of DRAM chips. Is this a company to be taken seriously? What do we know?
Yeah, I mean, it's now the fourth largest maker, but quite far behind the other three. They're like quite big. You know, the milestone is extraordinary that in this IPO, this debut, it's become China's most valuable company in mainland China, mainland listed as opposed to Hong Kong listed. You know, they are the poster child for through the memory chip context of China wanting its own domestic industry and its own domestic champions. And, you know, there are lots of different Bloomberg stories out there on the terminal and on the website today. Read as many of them as you can. But the interesting part is that, and part of this is our reporting about Apple, right? Apple wanting to diversify its memory supply. CXMT has some evidence that it's been able to do business internationally.
Interesting.
And so, you know, that's where Micron, SK, and Samsung would be more looking over their shoulder, potentially.
It's a reminder, right? Demand gets out there, more supply comes on the market, prices come down, like hence the semiconductor cycle eventually.
Yeah, and in an IPO, you generate proceeds, use them to build capacity. Pretty simple.
Or pay your workers, as the CEO apparparently is doing.
Bonus.
But there's a little pressure from the government there. You are smart. I told you. I got it right. Ed Ludlow, host of Bloomberg Tech. Catch him on Bloomberg TV. We're going to talk workers and AI when we come back.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. After initial gains out of the gate this morning, we're looking at a down day now for the S&P 500 index. You run the GIP screen on the Bloomberg, and we are very close to session lows on the S&P right now, trading below 7,400, 73.90 now, down by about 0.3%. NASDAQ and the NASDAQ 100 index are moving lower. Chip makers being hit hard today. Right now, the NASDAQ 100 index is down 0.9%. The SOX, the Philadelphia Stock Exchange Semiconductor Index, down now by 4%. All of this with a 2-year, 4.32%. The 10-year ahead of the Fed decision on Wednesday, 4.64%. And the 30-year currently yielding 5.13%. Gold is up $20 the ounce to $4,073, up by about 0.5%. Major move to the downside for crude. Very often we see crude sell off, stocks rise. Not the case today. We've got WTI down 7.5% right now at 82.63 a barrel. Barrel of Brent, 88.41. Brent crude down by 8.9%. Shares of meat packers Tyson Foods and JBS are surging. This after the United States said it would resume cattle shipments from Mexico, easing a domestic shortage that has led to higher costs for their animals. Tyson up now by 6.6%. JBS up by 9.9%. Monthly ridership on the Long Island Railroad, which is the nation's busiest commuter rail line, has now surpassed pre-pandemic levels for the first time. This is a hectic and fun New York City summer boost to trips. Carol and Tim, that's a Bloomberg Business Flash.
All right, interesting. Wow, that took a while, right? If you think about it.
We'll see if it's permanent.
Yeah, no, but I mean, right.
Yeah, it did take a while.
But it took a while if you think about, 6 years ago, 5 years ago? We don't want to go back there. All right, we're going to get an update on how U.S. central bankers see the labor market inflation picture in the U.S. That's thanks to the Fed decision that comes on Wednesday. And we'll see whether Fed Chair Kevin Warsh makes some commentary.
They're sharpening their pencils in Washington, D.C.
Do you think they have like...
Booting up the Bloomberg terminals.
Like in that...
Oh, they're ready. They're ready. Yeah.
They're ready. And I'm curious in the commentary whether we hear about AI impact on the workforce and also on inflation.
Look, I'm not a betting man, but I'm going to say yes and yes. Those questions will be brought up, or at least some answer will be given that relates somehow to that. And we heard that from the Fed chair just a few weeks ago when he was in front of Congress talking.
Right, and all those task forces, like the things that they're going to be looking at. Hey, ahead of that, there's some research out from KPMG and UT Austin's McCombs School. It was published in the Harvard Business Review. And the research found that workers don't all need to be nervous over AI taking their jobs. There are some thoughts, some caveats, though, to it. Here to explain...
Did AI write it?
Hey,
don't worry.
Hey, don't worry.
We got this.
I'm good.
Yeah, we got this.
AI, good person. Rasan Shears is AI Enterprise Transformation Leader at KPMG US. She joins us from Atlanta. Rasan, nice to have you here with Tim and me here on Bloomberg Business Week Daily. Briefly tell us what you guys looked at, how this study and research was conducted, and what were some of the key findings.
Absolutely. We started with a look at over 500 of our early career professionals, those who had been working less than 18 months. And we really broke apart the work that they needed to do between planning, integrating, and monitoring work, and then set out to study really what makes you most impactful and effective in working with AI. Particularly for this demographic, because their work is more disrupted by AI than maybe other segments of the industry. But we wanted to understand how we could continue to drive value in this segment of our workforce. What we found in this study with the University of Texas is that our participants fell into 3 categories. Amplifiers, those who really know how to achieve an outcome that exceeds the AI baseline. Delegators, those who hand off their work and really only receive whatever the A slide does and perform at the AI baseline. And apprentices, those who, in fact, have the same base skills, if you think critical thinking, knowledge of industry, knowledge of subject matter as the amplifiers, but lack the ability or the understanding of how to apply that to the AI, which put them in the apprentice category. The thing that was the real unlock, the aha, is that it wasn't the core skills alone. It was really the connection to how those skills are applied to the AI that really delivered the most value, showing in our view and with the UT study that learning is possible to help everyone move.
So I want to break in. You're sitting down with your best buddy at a bar or not, having a non-alcoholic or an alcoholic beverage, and they say, is AI going to take on my jobs? You're going to just say briefly what?
I'm going to say no. Those who get the most out of AI are going to take the jobs. And that's why helping more people learn how to use AI as a thought partner and really exceed what the AI baseline can do is where we want to get more people to. And the earlier you learn that in your career and apply that, the better off that you're going to be.
So this is relevant for people in July of 2026, but we've seen the pace of how quickly things move here. And in a world where everybody's trying to achieve artificial general intelligence, I wonder how relevant this research will be in just a couple of years. How future-proof do you think it is?
You know, it's a great perspective. We looked at this research with ever increasing capacity in the AI. And what we found in each case is that the human effect, really the human using AI to provide additional context to it, using it as a thought partner, continue to exceed the AI baseline, showing clear evidence that as much as the AI advances, the human difference continues to make a huge impact in how you achieve value.
So there's a bunch of kids coming out of college or getting ready to figure out what to study and just saying, what do I do? What do I do? So first of all, how does academia or all kinds of learning institutions have to adapt? Do we even need 4 years anymore because AI is going to be taking over a lot of skills? Or what do we need? And how should the next generation be getting ready for the workforce?
What I think is really exciting that this research found and what our colleagues at the University of Texas are continuing to advance is that teaching students and those who are going back to up their skills how to use AI as a thought partner, as a tool to get more, to do more, and to expand your capability, but providing the opportunity to really immerse yourself in exercises and learning that allow you to advance your skill of challenging, using your critical thinking to frame how you question and interrogate the AI is what makes the difference.
Well, it's so funny
those things can be taught.
It was so funny. There was something my husband and I were talking about, and he was like, I'm going to just ask AI. I'm going to ask ChatGPT or something. And he did this very in-depth question. I'm like, that's actually how you need to ask AI questions.
Was it right?
I can't.
What was this about? I need to know more about this.
I can't remember.
All right.
Is that crazy?
Well,
But that was definitely amplifier behavior and not a delegator, because he didn't just ask a simple question. You talked about the fact that he asked a very in-depth, intentional question.
Yes.
And that positions you to get the most out of AI.
It had to do with putting a stove fan in a historic district on a really old home.
That's cool.
But it kind of went through all these different parameters and what you need in terms of airflow and da-da-da. But he went through it, and I'm like, that's how you ask a question on AI. So we're going to...
So then when you bring the plans to the city, they're going to say, this is wrong. This isn't going to work.
ChatGPT.
That's where he needs to provide additional context and make sure that instruction is in the context of what you have to take to the city.
So... are people going to still learn all those critical skills we learn in our first year? I think about my first couple of years in this industry. Learning curve was steep. I got yelled at a couple times in a control room, but I learned so much. Are people going to have that experience still, which I think is kind of important?
Absolutely. It's how they will learn it will change. So instead of maybe being stuck in that moment, you're going to be included in some immersive training that's going to simulate that for you so you can develop those same muscles, learn the same techniques, and also actually prepare you to then take that and challenge AI with it to extend the value that you're able to deliver earlier in your career. So yes, those skills are really important.
Yeah.
But what is becoming more important is your ability to take that and translate it to how you work with AI.
Rasan, really interesting stuff. Thank you so much for dropping by. Rasan Shears, she is AI Enterprise Transformation Leader over at KPMG US, joining us from Atlanta. I think about your kids, because much younger, obviously, than my daughter, but a lot can happen between now and then. In terms of AI and, right?
Yeah,
this stuff.
they're actually. I mean, the eldest is like he'll see something and ask if it's AI or say like that's AI. So there's like this baseline knowledge that didn't exist for any of us as children, that they at least recognize the technology. But
kind of growing up within it.
Yeah,
right?
but cabin in the woods. That's my plan.
Cabin in the woods. Deal. Hey, listen, don't go anywhere. When we come back, a check on trading and stocks on the move. You're listening and watching Bloomberg.